Hey guys, welcome to the Wednesday edition of Forex Focus. I'm Pete Momat, joined by Glenn Freiber. How are you, my friend?
Good morning, Pete. I'm doing well. How about yourself? How is it
You
over
look
there?
good, bright and chipper. It's great. It's actually, it's so, it's again, we're 7 hours ahead,
Right.
so it's really, it's interesting getting used to that. I don't even know. It's 1:30 here, so I'm torn between this is the start of my day and my Krakow day actually crossing the mid-tier mark. But stuff's good. Are you keeping again? We left you in control of the car. Are
I
you
know.
driving the bus well?
It's hard. Yeah, it's tough. You got a lot of moving parts, a lot of people running away, like herding cats.
People
So
running away.
I'm sorry. I'll be more empathetic going forward. But yeah, things are good here. Everyone's behaving. Scouts honor.
Yeah. The video camera images I have prove differently, but we'll trust you for the next couple of days
You have
that
another
you're
one?
running the
We
ship.
put a little garden gnome in front of the one we knew you had.
Yeah, well,
So
that was the decoy cam. So you guys would focus on the wrong thing. So
yeah,
absolutely, it's the latest in employee management techniques. So
textbook.
it's quite effective. So it's Wednesday. You're obviously already in like weekend mode. Um,
Who told you that?
what do
Man, you do have good intel. Yeah,
what do you have
Friday.
planned for the rest? I mean, Thursday's a blur, Friday's a rounding error, and we started Wednesday night.
You're already rolling. Yeah. Well, the week's been a little weird. Frank and I went to a concert on Monday, so that was a rough start. He obviously had to do the show yesterday, so I felt bad about that. I got a
Yeah,
little more sleep, but yeah,
can you
we
do
don't let.
me can you do me a favor and like purchase him a razor and some other things because he's running on the ragged edge. Okay,
Yeah, no, I
so
think the hat.
no,
He's good at the
he's got that
hat.
hobo. He's got the hobo look going now. Now maybe that's the look he's after, but maybe that's not as he calls the public look. That's the edge. But I don't
Exactly.
think the new edge is hobo, and he needs to stick with the little bandana tied up on it. He's got that look rocking right now, and I don't think that's the right look.
I think you're starting to understand. It's not it's edgy. It's forward. Everyone is doing clean shaven now, so obviously you got to
He's got to go
change
the
it
other
up a
way
little
around.
bit. Exactly. It's provocative. It
Yeah,
evokes emotion, a response. It's avant-garde, if you will. So please
yeah. He,
allow
he
him.
again, hobo, and was it Vicuna he wanted the pullover? A
Yeah,
hobo in
and in
yes,
alpaca.
but alpaca. That's what it
Yeah.
was, not Vicuna.
Just wait.
Alpaca.
I don't know what the
Yes.
shipping time is, but if you see in the future Frank in a very white, very fluffy garb, just know it's alpaca. And
It's just not an ordinary fiber. It's alpaca. Yeah. So, all right. Well, let's get into it, my friend, because we're seeing some markets that are moving today, which is really interesting. And I know you put together some interesting stats for us to take a look at from a market perspective. Dollar stronger across the board. 150 held in yen until it didn't. Um, we're pressing north of 153 as we speak right now. Yen, irrespective of U.S. equities, bonds a little bit softer this morning. Equities a little bit softer. Now, again, Nasdaq's down a little bit. Um, so some weak earnings yesterday. I don't know if you followed this. McDonald's was hit really hard after the close on some
mm,
listeria outbreak or something, but
yeah,
stock's a little bit softer this morning. Metal's still on a tear. Gold and new lifetime highs. Silver up a little
silver.
bit. We're seeing the rotation. Silver after 11% isn't continuing to rally. Gold's actually putting in a little bit more higher marks here. But we're seeing the interest rate story definitely impacting yen, euro, and cable and sterling. That yen trade at 153. These are levels we haven't seen. 150 was kind of a bound, not because it's a big round number. It kind of held. We're getting back through all that congestion. we're halfway back to those 164 highs. So interesting to see that carry aspect continuing to play through again a little bit. Bank of Japan not saying much. U.S. rates trading a little bit higher.
I was going to ask because earlier this week, it's been a rate story of U.S. yields ripping, and we kind of saw that, and that's kind of what I attributed this to. But man, this morning, still just going at it, and I feel like now, looking across yen pairs, it's kind of seeping into everything else. Can we still attribute that to U.S. rates, or what's leading to this yen softness across the board now? You said no news?
No specific news, but I think you're absolutely right. We're seeing it play through. So actually, the yen underperforming the other currency pairs.
Yep.
This is a case where it's not necessarily a dollar story, although we're seeing the dollar higher. Again, the dollar higher means euro lower, sterling lower, but that rate piece continuing with bonds plumbing 118 and yields continuing to rally a little bit. It's going to be most impactful against the yen, and we're seeing that play through. So, and we talk about we're outside the range from the last 3-4 months, above that 150.30 level. The market's going to get a little bit more elastic now. We're starting to see the ranges expand, volatility is expanding a little bit in the yen because we're going into, when I say a new range, a new area, obviously 6 months ago, this was considered cheap when we were at 164.
Yeah,
but
right back here.
Think about traders ebbing and flowing with a series of opinions when we get out of that congestion of those lows post carry unwind and bouncing back between 150 and that. Now are we in a new range, or are we just putting some stress on dollar shorts?
And yeah, we've definitely seen both in recent months. I mean, just looking back at the last time we were up here, we have gone just on a week of up moves and then immediately erasing it. And then we have also just been continuing higher and even getting above 160 in the summer. So yeah, definitely want to keep an eye on. But it is interesting when this is moving so fast to one side without some speculative BOJ rhetoric, because that's a mover a lot of times of changing expectations.
Yeah, absolutely. And when we traded through 150, the Bank of Japan came out and said that, again, their standards, they don't like fast currency movements. We've heard that out of them 100 times. And I think that was almost the market saying, okay, so that's a perfunctory statement. There's nothing getting in the way of, again, testing the resolve of anybody who's short dollar yen right now, or long yen, so to speak, because when you're short dollar yen, you're long yen. So it'll be interesting to see if we continue the momentum. Any of the currency pairs, yen, we talked about this yesterday with Frankie and Aussie. Once we do get into those new trading ranges, it tends to be a little bit more elastic. So if you're a contrarian looking for opportunities to fade a move like this to the upside, which is pretty, on a percentage basis, this is a pretty big move in the last 14 trading days or 12 trading days. So it's something you could take a look at. I tend to look at these momentum plays as I'd like to give them. If I'm looking to fade this, I would look to do so incrementally a little bit, and rather than figuring that, I'm going to miss the inevitable pullback, because there tends to be a little bit more energy in these moves. And I would really want to see bonds hold that 118 level and not necessarily fall back, to see the yen revert a little bit.
But I was going to ask, it's interesting now, given your time zone, you were able to, see this while awake, right when it started moving, and it's just keep moving higher. Me on the other hand, just waking up and going, oh, look at that.
I see. The funny thing, I would think at 2:30, 3 o'clock in the morning, you're just rolling home.
I know, but I'm on the app I'm on is Uber.
Again,
So we don't yet have, the tickers in Uber yet.
Is it the focusing piece that's harder at that point in the evening cycle?
Yeah, that and the brightness,
Yeah, just too much going on.
Real
I
uphill
gotcha.
battle.
Let's take a look at Aussie. Take a look at the commodity currencies, see where they sit. Is this we talk about what are the impacts, what are the drivers, and again, here we still have a strong metals market, but we have a very strong dollar and a higher interest rate environment. The tug and play of metals and interest rates. Who's winning this battle in the world of Aussie right now? It's interest rates and the overall dollar bullishness. Where we look at, we haven't. This is a different story of we're at the bottom end of the range. We haven't traded through it like the yen. Yen, a different animal right now. It is materially underperforming against its pairs. If we looked at, and don't jump to it, but if we looked at Aussie yen as a pair, we'd see a different dynamic there. That Aussie outperforming the yen right now.
Yeah.
When we look at tradable opportunities. So Aussie at an interesting inflection point. Why is this holding in relative to the others? It's a little bit of the mix of interest rates, not a whole story here, but a little bit of some of the other pieces playing through right now. But let's take a look at, Glenn, you always bring together some great stats and some great information. Let's key that up and take a look at that right now.
Awesome. Yeah. Quick ones from me today, but it's a great day to go over some of this stuff. We're looking at daily scalping ranges in the major pairs. For me, already waking up, spoiler, the yen's already through it. So
yes.
We've got a lot to look at. But first, I just wanted to give, I was looking through it, and of course want your color on why these trading ranges are important on a daily basis. Obviously, to identify opportunities, kind of set expectations for what you're looking at day in, day out. We take this historical volatility, and that's definitely subject to change. But we do see a lot of trends. So just knowing kind of where those bounds are gives you an opportunity to develop strategy as well. We've talked about how currencies especially are mean reverting historically. And so looking at these ranges can really give you an opportunity to say, this might be a trending market. It's a higher volatility environment. This might have more juice in it to just keep going. Or if you do think it's one of those mean reverting, range bound tradable opportunities. And then kind of we touched on with your time zone and my time zone, timing is very important, especially in these Forex markets that are open 24/5. When is the liquidity going to be in these markets? And has the range, if you're looking at it, hopefully from a consistent close to close, are you observing the extremes in these ranges early on in the day, or is it just a continuous throughout either the U.S. session, the London session, or some of these other markets?
Actually, and there's a great point. The trade timing, I think, again, I shouldn't say we all, anyone who's traded for a long period of time has tried to stay up all night to trade. It never ends well. So,
yeah.
We accept my wife has woken me up with my hand on the mouse, and it's never because I've been killing it. So I think that means that we love the fact markets are open 24 hours and we can get our product when we want. It doesn't mean we're compelled to have to do that.
Right.
So when we look at trade timing and the fact of we're going to look at statistics now and just probabilities around these trading ranges are statistically driven. We're not drawing lines on a chart. We're just taking a look at the math and probabilities around ranges. As we look to implement these, again, it's almost like setup for a binary event. I take a look at that. If I wake up and it's already through that 1 standard deviation level, I may look at the 2 standard deviation level, or I may just put that opportunity didn't fit with the trade timing I have and the amount of timing I have to devote to the markets today and move on. Don't look at it as a missed opportunity. There's always more opportunities coming down the pipe. So it is, again, part of what we're trying to do is a build a consistent way of evaluating opportunity around scalping, around trading back and forth in markets. This is one way to do it. If a chart works, if a moving average crossover works for you, or some stochastic, whatever works for you that empowers you to make decisions and doesn't make decisions on your behalf, that's good. For us, we like to live in the world of math, and that's where the statistics come in. So it gives us context around determining where we get in and, most importantly, where we get out. And remember, where we get out, both on the upside and the downside, are important questions. Best answered before we make the trade than after. That maintains structure, and that's what we're looking at here. So within this doesn't come a recommendation. It becomes just another set of tools. And everybody's got to try and find a sense of tools that works with them, is comfortable, fits within their risk tolerance, and fits within the products that they're looking at. So what do we have, Glenn, in terms of looking at ranges? And this is really interesting because what I love about standard deviations and using is one standard deviation, 30-day trading range. It is a dynamic number. So it's not like markets will give you more at certain times and less in others. So what I mean by that, when I mean by giving you more is with higher volatility, you'll get a bigger range to trade. Now, a year ago, we were looking at a euro daily range north of 55 to 60 pips.
Right.
We're in at 33 pips right now. Now, what that means is, what's realistic? Well, the one standard deviation is going back percent of the time trading range for the last 30 days. Remember, that means 32% of the time it's can trade beyond that. So it's not rails that the market is strapped to. It's what's the market's general, what is the opportunity that's presented to you. So if you're looking, well, I'm looking to pull 50 pips out of this trade, euro right now may not be the right market for you because there is not enough elasticity or volatility in that. What this does is it helps you scale down expectations. What can I expect reasonably on a day, the range to be, and where within that can then I find levels of entry and exit. This is what it is. There's no magic here of I buy and sell at these points. This is a dynamic way to look at reasonably what the market is giving you in terms of opportunity. And it is just one way to look at context here. So when we go through this, 36 points in Aussie, 33 points in Swiss, those are tight ranges. It's a low vol environment. So I either lower my expectations or I wait. And that's every trader's decision to make. You look at yen, there you're seeing, as we saw from the chart in the movement, you're getting a little bit more movement, you're getting a little bit more vol, a little bit more elasticity. So if you're looking for a bigger range to trade, the yen is serving that up to you at this moment with these stats. If you're looking for a little bit more constrained trade where you can have a little bit tighter guide rails around it, doesn't mean the euro is not interesting.
Right.
It's just realize the opportunity that's there. And I think that's where the context of this lies. And we're going to be working on it. Again, this is not a recommendation. This is just providing you statistical math that gives you a little bit of, again, 68% of the time the markets sit within this range right now over the last 30 days. That's valuable in terms of context. I accept that it's not a hard limit because 32% of the time it could trade elsewhere, as we've seen in the yen. Yen's already through the 97 pips today, well through it. So it doesn't always hold, but it's context. And that's what we want to deliver is context that lets you better make decisions. And as a trader, and every trader is unique, the right product for the right risk profile and the right risk tolerance. And again, I remember I started my career trading Swiss franc, which was the Wild West. and it was way too volatile a product for the kind of trader I was, new to markets. And
That's funny.
somebody, a kind guy came over to me and said, Pete, come here. He says, listen, maybe the D-mark's a better place for you. And the Swiss would move 150 pips a day. D-marks would move 30. And for a new guy, that was a perfect place to start. It was a more comfortable place to go. So there's no right or wrong.
To that?
You know what? He could see that because I'm watching these guys swing 100 lots in this market. And these guys were all fantastic traders, cowboys. It wasn't the right fit. And I was grateful. And I still, this gentleman is 90 plus years old now. I still talk to him a couple of times a year.
That's awesome.
I always call him on his birthday to thank him for that advice because it was great advice. But all right, let's jump ahead one, Glenn.
Yeah, so this is all we got.
Was that it? Okay, perfect.
Just daily
That's
ranges.
Great.
But yeah, I think you nailed it on the context here is that it is just one tool you can use to kind of adjust your mindset. And the reason why I like looking at just the past 30 days here is because that's not a lot of individual data points. It's enough to get more of an estimation. But you know, these economic market conditions are changing a lot, and especially wanted to highlight this this pound right here. That looks elevated when we're just looking at this, but then you can go into it. You can go into. You're only looking at 30 days, and you can see that one day had 100 pip move, and that was the outlier, and so then you can adjust the data accordingly. It's just as long as you know exactly what these numbers are giving you, and it's not blind faith. Then these can really help set expectations on a daily basis.
And that's an interesting call out and an observation is that traditionally the sterling range is a little bit smaller than the euro range. Mm-hmm. What does that tell me? Euro vol is really compressed. The range is really compressed. It's realistic expectations around movement. That's what's really important here. All right, let's just jump back to the platform. Let's check in on our election trade. Take a look at dollar peso because we saw some good movement there. Clear of 20 peso to the dollar.
And also this morning we got a Bank of Canada meeting coming up as well. So.
That's right. So 8:15, I believe, we have a BOC announcement.
Yeah,
they're looking. 8:45. Okay, and they're looking to cut 50 basis points, I believe.
Yep.
So it'll be interesting to see if we get a little bit movement. So peso starting to clear again. Strong dollar strength. A little bit of the election play continuing to play through on this. It'll be interesting to see if we actually we're again, we built a lot of energy. We haven't quite taken out those highs, but I wouldn't. It'll be interesting to see in the next 12 days if we convincingly get above those highs. But this is an interesting one to take a look at and a walk through.
Especially the timing as well is for me is really difficult because obviously people have identified this might be a possible election trade. But we're gearing up to that. We're getting ever closer. But then you have a bunch of these kind of seemingly random swings. I mean, yesterday alone, it looked like that trade was completely gone. Switching to the hourly chart here, we had it dip all the way back down near 19.8, and then wake up today and we're already
challenge it right back up. Right, and is it an election trade? You can go through all the reasons. Whatever the market perceives, it's setting up that way right now. Be mindful that depending on the outcome, it doesn't mean we print 24 or back to 16. Right. The market will do what the market does, but we accept what's driving it as an interesting aside in terms of tradable opportunity.
Definitely.
But with that, we've covered a lot. Good call out BOC. So look at Canada. Scalping range there was
34 pips. 34, 36.
Okay, very tight trading range. So it'll be interesting to see if BOC not delivering on the 50 basis points challenges that. So a little bit of context to go into the numbers to look for tradable opportunity. Glenn, fantastic as always. Love doing the show with you. Guys, thanks for tuning in. Coming up next, Tom Sosnoff, Tony Batista, and Banana
Thanks, guys.
Stay tuned. Have a great day.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
It's the 40 years in between that are mostly a blur. When asked what they would do differently, most people confidently say, nothing. I have no regrets. As much as I want to believe them, I know better. I believe there's one common regret virtually everyone chooses not to remember. It's the taboo topic of not taking as much risk as possible every chance you get. Remember, the genesis behind tastylive was to encourage risk-taking. What were we thinking? Imagine the risk of building a business designed to encourage people to take risks. One of the things I've learned about taking risk, it's not personal. You can't let your ego dictate your decision-making. Unless, of course, you're the richest person in the world, then it's a death trade. Another a parent, success will not be easy. The great thing about the world of finance is that success does not require genius. In my opinion, the model for success, without a lot of complex math, is relatively straightforward. It's risk times longevity. Between academia and financial media, we have overly complicated embracing the paradox of risk. It's finally time to simplify the model behind success to risk-taking times duration. This definition should give everyone hope and a reason to hang in there.
90% goes to S&P index funds.
You got to double your
10%
initial
straight to
investment.
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Got the need for speed? No problem. On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. tastytrade, make your move.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Happy Wednesday to you both.
Hello.
Hola.
How's it going?
I'm actually all fired up this morning. I don't know why. I've been up since really early, and
Well, I've had to listen to you make 6 phone calls about bread.
Hey, he's doing that on his own time. It's okay.
one phone call.
I'm just kidding. I kid.
Woody and
I'm not going to be able to make a living. I'm not going to be able to retire on the amount of bread you're buying right now. I'm just going to tell you that right now.
I know.
And yet still, I am breadless. Like, where...
Want a loaf of bread?
I want, like, cinnamon raisin bread. Ooh.
Can't help you.
Darn it.
We don't offer different kinds of bread. But
he's so customer friendly. Can't help you. I'd like a loaf of bread. Can't help you.
Woody and I used to have conversations about, software that we were building. Now we're having conversations about the width of the slicer.
Okay, that's... we all evolve. And
Evolving.
Yeah, we get into different things.
We're evolving.
Soon you're gonna have conversations about the width of your walker. That's gonna be the next thing.
Possible. I'm not quite there yet.
Oh,
Did run into your friend Linda this morning, and she'll be stopping by this weekend for her first toast adventure.
Oh, that's wonderful. Yeah, she lives in the neighborhood.
Yeah, she's a neighborhood girl.
Yeah.
Yeah.
But she's here. She works here on the weekends. Like, she's here all the time.
Oh, don't be.
Those are just facts.
Shilling for your friend.
Those are just facts. She's the hardest working woman in the business. She's here Saturdays, Sundays, man.
Don't be shilling.
Maybe she'll stop in your little shop, but on the way to work.
Put her outside lollygagging around the competitor's coffee shop.
Shenanigans. What'd you get up to last night then?
Oof, I was all around. I was out. I was shopping. I was doing stuff. I didn't get home till late.
Did you go to Trader Joe's?
I did not make it to Trader Joe's, but I did a little pumpkin shop. I got 2 pumpkins.
You got your pumpkins. Bat, did you get your pumpkins?
I got 3 pumpkins. The squirrels are enjoying them immensely.
I got 2 pumpkins. I put them out in front of my house.
Did you get white ones or just orange ones or?
White ones are too bushy. Only people.
Oh, I love white pumpkins.
Only Tony like people.
I got a white one.
Of course you did.
I got a white one. I got a gray one, and I got an orange one.
Of course.
Oh, I love that.
That's bougie.
A little bale of hay.
Oh, nice. So autumnal.
Thank you. Very demure.
Yeah, I could have bought a bale of hay, but I decided,
You decided what?
No, you couldn't.
So I walked out of my house this morning to see if the pumpkins were still there.
Yes.
Because I live on the street level, and
no one wants your pumpkins.
No one wanted my pumpkins.
Right, yeah, not the coyotes that you claim are roaming your neighborhood.
2 for $11 at Mariano's.
That's not bad.
No, 2 big ones. And
have you ever carved a pumpkin from scratch?
Sure.
Like scooped it out?
Yeah, sure.
Really? When?
Lindsay and I did a couple years ago. Don't you remember? We have a video of it.
Oh yeah.
Yeah.
Okay.
Yeah, I did a pumpkin carving competition. We came in first place.
Okay, that's... Bat, when's the last time you carved a pumpkin, like, from scratch?
Come on. I've got a teenager. Well, I mean, he just turned teenager a few years ago. I mean, I've been carving pumpkin for years.
Yeah, remember the contest we had, the pumpkin carving contest?
I mean, it was like there was an office jack-o'-lantern contest, yes.
Yeah, so, and I won.
Again.
Yes, me lord. Yes, me lord. Yes, me lord. You won.
Again,
yes,
the
lord.
Recollection is a little fuzzy, but okay.
Did you make the pumpkin that was throwing up, or was that Lindsay?
I don't.
Lindsay somebody made a big mouth one, and it had all the seeds coming out.
No,
like
that was Doreen. That was Doreen, and then
Doreen.
The throw up, it was just like guacamole. She did it like for the party, and that was like the dip.
That was good.
Very cute.
That was Doreen won. You lost, Sus.
Yeah.
Sorry.
Doreen is the goat.
She was not allowed to participate because she's too professional.
Oh, she's like at Martha Stewart level.
Yeah.
Like
she's professional.
She's an icon. We stand Doreen.
She's a blue collar Martha Stewart.
First of all, how dare you? Doreen is very fancy.
Would it be your the brother from another mother?
unless you consider be a brother from another mother. Sure, I'm bringing down Francis from the YouTube chat with me tomorrow.
Yeah.
And he's bringing me a Kringle. We've already coordinated it. He already told me this morning, he's like, no cinnamon toast. He said, no cinnamon bread, but a Kringle will have to do. Thank you, Frankie.
Don't get the pumpkin Kringle, though. I heard it's not very good.
I don't care what. I'm not going to look a gift Kringle in the mouth. I don't care what flavor it is. It's just very kind of him to bring me a Kringle from up north, the North Woods there.
It's funny, but depending on where you are in Wisconsin, Kringles are more of like a southern Wisconsin thing.
Okay. Well, we're the closest to southern Wisconsin.
I understand that, but it's more of like a Racine, Wisconsin, which is right over the Illinois border. It's not like a, backwoods, God's country type thing.
You can get Kringles in Door County.
Not really.
Yes, you can.
No, it's a lot of coffee cake and, no.
You're just saying
Swedish pastries.
Yeah, it's not really a Kringle territory. I'm telling you, the rest of Wisconsin is not Kringleville.
Okay.
Kringles are a Racine, Wisconsin, that's
fine. I'll take it.
Yeah.
I hadn't had such goodness until I moved here, but it's so good.
I never had a Kringle until I got to Chicago.
Yeah.
Yeah. Now Trader Joe's has taken them all over. You can buy a Kringle in Maine.
Yeah. Frankie says Kringles are sold all over the state.
Frankie doesn't know anything about Wisconsin. He just lives there.
He says they're Racine Kringles, but they are sold all over the state.
I know what he says, but he lives like in a little enclave.
Okay.
He lives in a.
That helped me.
He lives in a gated community, and he's going to need permission to leave. Okay. I'm surprised he got permission to leave.
Okay. I don't.
Yeah.
Yeah.
He's probably, he probably has to leave his passport at the door to get out there. Yeah. You better be careful, Bat.
I got nothing.
Yes.
Bat, what did you get up to last night then?
Ooh, last night was sushi night. That's right, sushi night.
Ooh, I had sushi too.
Yeah. Wow. I want to be just like you, Tom. That's what I've always aspired to be, like my
sushi.
older.
Okay, wait. Where was your sushi from?
It was from a Japanese restaurant.
Oh, because you normally do like gas station.
Oh wait,
sushi.
was it from an Italian restaurant?
It wasn't from a gas station sushi, and it wasn't Costco sushi.
Okay, when it wasn't Mariano's sushi.
No.
I get that sometimes. Like
I like Mariano's sushi.
I like Mariano's. I mean, I can afford it, so I like it.
Yeah. No, I was at a Mariano's yesterday, and yeah.
So wait, Bat, where was your sushi from?
A place called Bluefish. I'm not under witness protection program. I can actually say where I went, unlike Tom.
One fish, two fish, red fish, blue fish.
How come you didn't tweet that out? How come you're not mad about exorbitant sushi prices? You're real mad about pizza prices.
Because one hits at home, the other one is just like a once in a lifetime kind of thing.
Yeah,
don't do it all the time.
I see. Okay.
Yeah.
Yep.
Yeah.
Bat, what's your sushi order? Like, are you a crab? Are you like a salmon? Are you?
I can tell you right now.
Is your name Bat? I was talking
His
to Bat.
palate is too sophisticated for artificial crab. I hate artificial crab.
But this Bluefish place sounds fancy. I don't think it would be artificial at this fancy place.
California roll's a California roll, no matter where you go. I mean, that's
is that what you get? You just get a California roll?
No. But I'm just saying that's
gas station sushi.
Crab.
Okay. Oh yeah. Yeah, but what's your favorite, Bat? Like, what do you like in your sushi?
They make something called like an ocean drive, which actually has fresh pieces of. I'm not a salmon guy, so it's mostly the whiter fishes that they have, and it has a little bit of chili oil on it and a little bit of lemon. It's quite good.
Ooh, that does sound good. Okay, what is your sushi? Or like, what do you like in your sushi?
I like eel or tuna.
Unagi.
That's like Vinny. Vinny's all about the dragon roll. He likes a nice freshwater eel on top of his.
Yeah, I like eel. I like tuna, eel, but I can eat. The only thing I don't like is artificial crab, and I don't really do a lot of salmon.
Okay. Oh, I love salmon, and I like it when they do like little like tempura pieces, like a little bit of crunchiness and I like a spicy.
Probably like a.
I don't think we asked you, Vanetta.
Soft shell crab roll or something like that.
I like salmon. Yeah, I like salmon. I like tuna. I like crab. Like give it all to me. Like I love it. Hey, speaking of which, I don't know if you've been following along, but Mikey Butler has been in Japan for 2 weeks.
I know.
And his photos look amazing. I think he's back finally now.
Oh.
Maybe.
Yeah, I saw his Instagram stuff.
Yeah. I'm so jealous. I really want to go to Japan, but you can't just go for like 3 days. Like he's doing it the right way. Like you should stay there for weeks and weeks. Like you should make it. I mean, if you're gonna
I got invited to go to Japan. I just don't think I'm gonna go.
Why? No take backs. We could get rid of you. Why wouldn't you go? It's on my bucket list.
I got invited to go to the Cubs game there next year.
You should definitely do that.
I don't know.
I bet
I'm
Scott
busy, Tom,
would go.
but thank you.
I bet Scott's gonna go.
Maybe. I don't know if I want to go just for a Cubs game.
That would be amazing. On the Cubs plane?
No, not on the Cubs plane.
Oh, okay.
I don't know what. No, I don't think so.
I was gonna say.
Maybe, but I don't think so.
Okay. I mean, that would be nice. I mean, you've been on the Cubs plane, though.
The Cubs plane is called United Airlines.
Well, I've never been on a plane.
The Cubs have
a bunch of baseball players.
The Cubs they charter United Airlines. That's how they get around.
Sure, yeah. All the professional teams they charter with.
Oh, some teams. I think there are a few teams that have their own plane. But
I think like the Patriots. I think the Patriots have their own.
But most teams charter, local, whatever.
Sure.
Yeah.
Sure. All right. Well, that's good. Well, now I'm hungry for sushi. So that's fun. Hey, I saw this in the news. This is funny. There's a nightclub in New York City, and they're not letting some people in, but it's based on their zodiac sign. If you're an Aries, you're just straight not allowed in.
Oh my God, that's great.
And Geminis get overcharged.
That's great.
People in the comments are so mad.
That is great. Love it.
It's called Zamboni NYC, and the club is thriving because Aries.
Oh, that's awesome.
Aries, the god of war. Aries are causing. My dad's an Aries, but Aries causing trouble. Geminis are just gonna do a Gemini thing. To be fair, Bat is the canceriest Cancer I've ever met in my life.
kind, considerate,
emotional.
An emotional wreck.
That is great.
I just thought it was funny. So and you can't get around it because it's on your ID. So like they know what you are. Like
I'm surprised they.
It's fun. It's PR. Like it's a fun little shtick. But I thought it was funny. What'd you say, Pat?
You really think I'm emotional?
Well, you were crying yesterday when they were out of guacamole.
I will rephrase that, Pat. You're not emotional. You're passionate.
I'm passionate. Thank you.
Yes.
Thank you. Appreciate that.
God.
He's such a Cancer, though. He's such a Cancer.
Did you say
but Aquarius and Cancer get along.
Did you say I'm passionate?
You are special.
You're a PETA, is what they call you, Tom.
Hey, well, no matter what your sign is, we're going to have a great show for you here on Tasty Live. It is a wonderful Wednesday here, and that means a lot of good content, especially because it's an Assume the Position Wednesday. Hey, at the top of the 8 o'clock hour, we're going to do an options jive. Probability of a touch, touch me, puts and calls. We're going to be breaking that down at 8 o'clock. And then we got What's Your Assumption? This is where viewers write in with an underlying and a directional bias. Tom and Bat try to do as many viewer-submitted trades as possible. It's really interesting because everyone or everything is very close to earning. But our viewers are very smart. So we'll see what trade ideas they come up with. And then 9 o'clock, we got a Skinny on Options Math, Jacob in the house, and it just says autocorrelation.
Yes.
What is autocorrelation? Everything's just automatically correlated?
Not exactly.
Okay.
It's actually a really good piece that he put together. I think you'll like it.
Okay, that's going to be at 9 o'clock. And then 9:30, we got live from the trade desk, big boy Scotty S. Scott Sheridan. I think Scott's a Leo. I'm not sure. But he's August,
At the
right?
end of August.
Yeah. Oh, at the end of August, he might be Virgo then. I'm not sure. I have to look. But
I never asked him what his sign was. I never really cared, but
Well, Leos are attractive, so it fits that he is a Leo. But if he's a Virgo, Virgos are very like analytical, so that he could be a Virgo. I'd have to get his chart. But Mr. Leo / Virgo, Scott Sheridan is going to be in at 9:30, and then my personal favorite, your son, who's a Taurus, Nikki Bat's going to be in for Johnny Trades. That's also going to be at around 9:45. So that's a packed show, and what everyone's waiting for today: truth or skepticism. Tom and Dylan, what are you talking about today?
Well, we're arguing over a topic for today because there's some people that want us to talk about the what's happening right now with interest rates and the deficit and all this kind of stuff, but we don't really want to.
Okay. Well, okay.
I'm trying to change the topic.
All right. Well, maybe you will be inspired by my daily dose and won't give me credit for something that you will steal. Well, who's to say?
We're going to save our big political discussion for next week, a week from the election, before we piss everybody off.
Well, Tom and Dylan are going to talk about something that's going to be live here at tastylive.com, but also on the Tasty Live YouTube channel. We would love to have you over on our YouTube. We have wonderful stuff like Bat's Podcast, Option Trades Today. We've got some other pieces that Tom has done. Just a bunch of great content that we've clipped for YouTube. So hit that like and subscribe button on YouTube. Make sure you follow and that bell notification so you never miss any Tasty Live content. But hey, in the meantime, in between time, you guys want your daily dose? Yeah, I got a lot of news for today, so hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Jump in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's October the 23rd. It's part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
Mr. Bat, any earnings?
We had Boeing last night. It looks like it's down small, about $1.10 right now. Today, you've got a plethora of stocks, but I'll just name a few. Tesla's going to be the big one. You got IBM, Las Vegas Sands, Love, UPS, but there are many, many stocks that have earnings today.
Yeah, I think 114 companies in the S&P report this week. So,
Yep.
I mean, last night we traded a little ENPH. It's outside the range to the downside.
Oh no. In phase? Is that what that is?
Yeah.
Okay.
And
it's down $13. It was only a $90 stock. So yeah, that's a outside the expected move, well over 10%.
Yeah, these earnings plays have been. I mean, Boeing looks like it'll be a winner. That's about first one. The big move overnight was probably McDonald's, but
well, I'll get to that.
Trying to kill people with a quarter pounder.
Hey, just give me literally. I have one job. Just let me.
That's why I always get a double cheeseburger.
That's why.
That's why I always get a McChicken. Hey, let me get to my first headline, you yentas. I'm gonna get to this.
That's why I always get a breakfast burrito.
Give me 10 minutes. First headline though: traders' enthusiasm for stocks returns to a level seen just before a 10% drop last year. Strategists at Citi are concerned about the possibility of a repeat. Let me tell you what I'm talking about. Net long positions in the S&P 500 reached their highest level since July of 2023. That's according to the Citi team. And then back then, that heavily slanted bullish positioning then preceded a punishing 3-month sell-off during which the S&P fell 10%. We had our first back-to-back down days. Is it all over but the shouting?
I would not consider the last 2 days back-to-back down days, considering
Were they not back-to-back down days?
Not in the NASDAQ. I think they were up both days.
Okay, well, in the S&P.
I don't even know if the S&P...
You are right, Vanetta. I will give it to you.
Thank you.
I'm not even sure the S&P was down yesterday.
It was. But is this indicative, or does this portend anything to come, that the net long futures positions in the S&P are at the highest level since July 2023?
I mean, sure. I think that's probably a pretty bearish red flag. I also think the fact that the skew has come down from 160 to about 145, 146-ish is also getting a little more bearish, because people are taking they're taking some of the protection off.
Okay.
So I think that a combination of, all this bullishness and taking some of the protection off the table, I think it all matters.
Paul Tudor Jones says the market reckoning on spending is coming after the election. We are going to be broke. He says he plans to not own fixed income and will be betting against the longer dated part of the bond market. Maybe this is sort of like what you and Dylan were going to get into, but he had this whole big interview and it kind of blew up yesterday. Yeah. What are your thoughts? Just high level.
My thoughts are it's Paul Tudor Jones.
Okay, well.
The last time he was right was 1982.
Shots fired. Oh, the shade, honey.
I'm not even sure why he's still relevant.
Oh, the shade, honey.
I mean, listening to Paul Tudor Jones is no different than listening to anybody else. You might as well listen to Chris Vecchio.
Okay, so don't shoot the messenger, but let's talk about the message, and that's the deficit.
I understand the deficit's been there for 15 years. I mean,
But is it like this big matzo ball that's hanging out there until after the election, regardless of who wins? Like that he's right, that we're going to have a market reckoning?
Every single time the market goes down, people talk about the deficit. But the reality is the market just keeps going up and the deficit really doesn't seem to matter much. So.
Wait a minute, the market goes down, we're at record highs.
Yeah, exactly. I'm just saying, and when the market goes down, people go, oh my God, the deficit. But the reality is we're at record highs.
Are bond yields pricing in like a red wave, do you think? Or because I saw that headline yesterday too.
I mean, that's what, if that's the reason they're saying, sure. But I don't think it's that. I mean, bond yields the Fed is not going to be able to lower rates anymore from here. That's for sure.
I mean, they're going to try.
Bonds are under 118, 117, 31.
Oh, no.
Yeah, I just bought some at 31.
What are you doing in bonds? You're just buying?
I'm just buying them.
Okay.
He's choking right now.
All right.
Choking.
Look on that. We'll see how that goes. Bat, what's volatility doing this morning?
/VX is up about 12 cents. Market's a little bit lower, so it makes sense. But volatility is just hanging in there at 18.5.
Goldman Sachs sees oil prices holding around $76 a barrel in 2025 on an ample supply. Overall, we still see the medium-term risks to our 70 to 85 a barrel range as two-sided, but skewed moderately to the downside. We're getting to the end of the year. People are pushing out their future forecasts for 2025. Do you think spot on here? The call by Goldman.
Okay. I mean, whether it's Goldman or Paul Tudor Jones or anybody else, the difference between somebody saying what they think crude oil is going to do for the next year is beyond ridiculous because they have no idea.
Okay.
So, I mean, Goldman can say whatever they want. 76 is as good a guess as
anyone can say whatever they want.
Tony, ask Vinny what he thinks crude oil is going to do next year. It's the same guess.
But I'll give you a little bit of a bone here. There's an $8 expected move till the end of the year. We're around $70, $71 right now. We're 70.5. So they're inside the expected move. They're taking the upside. I mean, it's anybody's crapshoot.
What's the expected move for the entire year next year? If we're giving out 12 months.
Yeah, if you go out around 12 months, it's closer to about
$12. 10. I'm just guessing.
More like 15-ish, a little bit more, 17-ish.
Okay.
So the range then is, let's just call it 55 to 85. Or they probably skew a little to the upside. So let's say 60 to 82. Then saying 76 is almost like, I'm just showing you the statistical chance of crude oil hitting 76 next year is 100%.
How do I get a job?
So that's why those analyst numbers are so just patently stupid.
How has your personal trading in oil been for the year, if you had to summarize?
Well, I was going to say quite good, but now I'm going to say, give me 1 second and I'll tell you.
Okay.
Oil volatility has been quite high, especially the last half of the year since about the summertime on. Volatility is Ivy rank of 72. It warrants a trade.
Yeah.
For the year in crude oil, wow. We traded it. What month are we in?
It's October.
This would be October. Yes, thank you. That's why we were talking about Halloween earlier.
So we've traded crude oil for 9 months this year. It's the 10th month now. We're up in 5 and down in 4.
God, you stink.
Yeah.
Okay.
I probably do. I don't know if any of these were spread off or anything.
Right.
There's not really any. Yeah, it's not.
I was just curious.
Not as good as I thought we had. We've done okay recently, but we basically split the year. We're 5-4 right now.
How about for you, Bat? Is that sort of track the same, or you don't? Really...
I've been pretty selective in oil. I'm not a great commodity trader, as I've coined myself the world's worst commodity trader. But I have a good P&L in oil. I've been trading it from the short side on big rallies, and I'm talking about rallies when it gets back up into the 75, 80 handle. So I've been selling a little bit of skew. It's worked out.
Okay, I just thought, see, that was interesting. That was more interesting than. Okay.
I'm a little bit more interesting because I'm a Cancer. A little bit more emotional, passionate.
Ryan Choi, an associate of U.S. short seller Andrew Left of Citron Research, has agreed to pay $1.8 million to settle an SEC charge relating to 2 of Citron's stock recommendations. The SEC accused Choi and Citron of negligently engaging in a scheme to defraud readers of Citron Research in connection with 2 social media posts the company issued recommending readers buy stock in 2 U.S. listed companies, a blow to the noted short selling firm that really are just a bunch of trolls and like to stir up stuff on the internet.
Yeah, I don't know much about this case. It doesn't sound good.
Okay. Well, I mean,
I don't know much about it either, but why? Why do you got to defraud? I mean, you got the world by the testicles.
I understand. I'm the only reason I'm holding back from saying it because I don't know the details of the case.
Sure.
And a lot of times,
when does that ever stop you? I listen to all your stories. You never have the details.
A lot of times in these kind of cases, the SEC comes after you and basically says, listen, we're going to ruin your life, or just say this.
Yeah.
I mean, I'm not sure if that's what the case is here.
Sure. Yeah. Again, these were social media posts that were strongly worded to recommend that people buy these certain stocks, and then that's what the SEC.
That's what the SEC says.
Okay.
I'm just telling you. I've been on both sides of this, and
Sure.
I don't necessarily believe what the SEC says all the time.
Sure, but you're familiar with what Citron does.
Yeah, sure.
Yeah. Okay. Hey, back to Goldman Sachs. Goldman Sachs is facing a fine in the tens of millions of dollars range from the U.S. Consumer Financial Protection Bureau over its credit card business. The Consumer Watchdog's enforcement action is tied into an investigation to Goldman's customer service operations with a focus on the partnership between Goldman Sachs and the Apple credit card. It's expected to come this week. And the total penalties, including customer reimbursements, could be over $50 million.
That's a big nut.
Yeah. GS, Bat, Goldman.
That's a big nut, Tom said. Is that what he said?
Yeah.
Goldman Sachs, $518, just about $10, $15 off of its highs. It's got a good IV rank of 37. No earnings are looming. I actually just put a trade on there yesterday in the December month. That's correct.
That's right. You did. You were looking at strangles in Goldman and JP Morgan.
That's right. Every Tuesday and Thursday. See you tomorrow.
Hey, option traders are increasing bets that Bitcoin will reach a record high of 80,000 by the end of November, no matter who wins the election. What say you? The implied volatility for Bitcoin options coming due around Election Day is elevated, and wagers are skewed towards call options, and everyone really likes that 80,000 sort of strike, and it seems regardless of who wins.
Seems to me that
it seems like Bitcoin option traders are long some options that are out of the money and need to sell them. That's what it seems like to me.
That could also be true.
That's what it seems like to me, too.
That's how I see it.
That seems like a very biased statement. Yes.
What are you guys doing in digital assets, crypto, and we'll throw Coinbase in there?
I mean, we're long Bitcoin, but not very big. We're just sitting. We don't even trade it. We just sit here, watch it.
Okay.
Coin, the stock is down around $5 to 206 or so, just under 206, and Bitcoin futures are down around 1,000 or so.
Oh no.
Down around the lower end of the range.
Well, maybe if you have been trading crypto, that bumped you up into a new tax bracket. Tom, did you see the new tax brackets came out?
No.
You're at the top. That's it. That's the news. That's the tweet. No, the IRS has unveiled higher federal tax brackets for 2025, and they're tying these to be adjusted for inflation. So they're using a rate. I think it's 2.8%. Don't super do or 2.3% or 2.8%. Don't super duper quote me. But the standard deduction increases to $30,000 for married couples filing together and $15,000 for single payers. There are also changes to the long-term capital gains brackets, the estate tax exemption, and child tax eligibility, and more. I put up the chart here, and of course, it's a graduated tax bracket. So your first amount that you pay is at the lower, and then it gets higher and higher. But as you can see, you and Bat are at the top end there. Yeah. So it's 37% of any amount over $626,000. So that's you guys.
I'm gonna pull a Sosnoff and say I don't know.
That's for single filers. So it's 37% over $751,000. Tom, do you and your wife file jointly? I don't know. I don't know if Corinne has like a LLC. I don't know. I don't know what she's doing over there. I'm like, get it, girl.
I know she has a non-compete. I know that.
Anyway, you can find out more about the new 2025 tax bracket. You go to irs.gov. So do that.
Amazing.
Hey, here's something interesting. Maybe you and Dylan can talk about this. More U.S. firms are leaning on retired and veteran leaders to steady the ship in a choppy economy. CVS fired their CEO and named a CEO last week who was a tried and tested company veteran. They hired David Joyner to replace Karen Lynch, who during her 3.5-year tenure, the stock fell 11%. Nike hired its former senior executive Elliot Hill to turn things around. Boeing is looking to an aerospace industry veteran named Kelly Ortberg to help turn things around at Boeing. They reported earnings. What are your thoughts about companies that are doing so bad that they got to call in the lefty, you got to call in the people who are retired?
I mean, it really depends on the company itself.
But it also goes to a larger question about, like, we talked about also like company succession plans, like Disney, like JP Morgan. Like, it seems companies are just sort of scattering, and instead of trying to move forward with things, they're just like, hey, let's just call the old guy we've always done things with.
I'm not so sure that that's really what's happening.
That's totally what's happening.
Okay, I'm not so sure that's correct.
But it's important.
I think you're cherry picking a couple of cases.
No, but there really is not a definitive succession plan for JP Morgan. Like,
I mean, you don't know that. You're just speaking.
Oh no, I'm in the meetings.
Yeah. I mean, you're just making that statement. Nobody.
I'm just saying it. Bat, what are you doing in CVS? That stock is a PIG pig.
It is a PIG pig.
It's actually the only one of the pharmacy companies that have actually stayed up there.
Yeah.
What are you comparing it to Walgreens?
Yeah.
I mean, Walgreens is on its butt and CVS is on its butt. I mean, they're both lower.
Yeah. Not good.
Where's CVS headquartered?
That I do not know. I know Walgreens is headquartered here, but
in Deerfield.
Yes.
I'm not sure where CVS is headquartered.
Deerfield, Illinois, Rhode Island.
Woonsocket, Rhode Island.
Woonsocket, Rhode Island.
That's
a good name.
Woonsocket.
Yeah.
Okay, that's cool.
Yeah.
I've never been to Rhode Island.
Well,
it's a very small state.
Yes.
But Providence is really nice.
He went there. You went to Boys Town in Rhode Island, didn't you? What's that little area called?
P-Town? P-Town?
Yeah, P-Town.
That's not Rhode Island. That's Massachusetts.
Oh, okay.
But,
same thing.
But I have flown into Rhode Island a bunch of times, and I've been to Brown.
Oh, okay.
Yeah.
Interesting.
It's really pretty.
Oh, did you dedicate a wing there or something like that, Brown?
I visited friends, but it's a really pretty campus. Providence is nice.
All right. Well,
I haven't been to many other places.
It's on my list.
The beach is nice.
Hey, getting to a couple of chip stock stories here. Can Intel
for being there? Wait a minute. For being there one time, you sure did a lot in that day. I mean, you can't get you to move out of your shuffle zone here in Chicago. Come out for a slice of pizza.
State's small. I've been there more than one time. Thank you for your help.
Hey, can Intel be rescued? Analysts review the embattled tech stock before earnings. Intel once soared in the tech world, propelled by groundbreaking innovations. Now it seems to be a laggard amongst its peers in the chip space. Not sure when Intel's earnings are, but they're soon.
Yeah, October 31st, they're going to scare everybody. Intel's on its butt, really hasn't caught a bid at all. IB rank of 92 is quite high. Taking a look at some of the option markets, they're quite good, 2-3 cents wide. Intel's in play.
Do you have an Intel position, Tom?
I do.
Okay.
I'm leaning a little tiny bit long, like everybody else. Everybody in the world's choking a little bit on Intel.
Okay. Amazon-backed Anthropic is debuting new AI agents that can do complex tasks. Racing against OpenAI, Microsoft, and Google, AI agents are built for productivity and to complete multi-step complex tasks on the user's behalf. Anthropic is the company behind Claude, and Amazon is the company behind Anthropic. What are you doing in Amazon?
Nothing.
Okay.
Amazon down 62 cents, $189. It too has earnings October 31st. Amazon been on a little bit of a tear to the upside.
Yeah, we don't have any. I mean, our position there is small.
Okay. A couple of retail stories here. Walmart is going to start delivering prescriptions to customers' doorsteps as CVS and Walgreens struggled. We just talked about how the pharmacy chains are doing, and Walmart says, here, hold my insulin. They're going to start delivering prescriptions to customers' doorsteps. The discounter will start the program in 6 states, but plans to offer prescription delivery in 49 states by the end of January.
Sadnov, when was the last time you were in a Walmart?
I love Walmart. Go every day. I shop there every day.
I was actually in one this weekend, Sadnov. Picked up my candy bars. That's correct. 200 full-size candy bars if you come to the Bat House.
That's a lot.
Why didn't you go to Costco?
I was near Walmart. I just walked in. Is that a bad thing to do?
No, I just wanted.
I like to spread my wealth around, Sadnov.
Yeah, I actually just wanted you to tell the truth, but you couldn't.
What was it? What was it? I went there for the fried chicken. Why? What's the truth?
The truth is, you can't get your Costco card back.
Oh yeah, your wife has it.
My wife wasn't with me, so I had to go to Walmart. You're 100%
I know
correct,
exactly.
That is the truth.
I busted you.
That is the truth. Walmart, the stock. What are you doing?
Walmart's on its highs. IB rank is 71.
Ooh, that's pretty good.
I do not have a Walmart position on.
When are their earnings?
Yeah. The 31st. I'm sorry. November 19th.
Yeah, because normally they're later than, because they're retail. So, staying in the retail sphere, Target, TJT. Target is lowering prices on 2,000 items ahead of the holiday season. See, this is how you know everything is a scam. They could have been lowered these prices like weeks ago. Target, I see you and your collusion. Your cartel, your racketeering. But Target says, oh, hey, guess what, girl? We can magically now lower the price of 2,000 items. Gougers. The items range from snacks to toys to cold medicine in an effort to attract bargain hunting shoppers during the holiday season. The price reductions will be across national brands and Target's own private brands. It's a scam. TGT.
Scam, I agree with you. Earnings November 20th. Target's been going sideways. What seems like forever, at least since March.
Okay, but a nice IV in there.
76. You're 100% correct. Yes, it does. November options are tight too, about 5 cents wide.
Not too shabby. Hey, one more retail story. Peloton is partnering with Costco to sell their Bike Plus as they look to reach more young and wealthy customers. They're partnering with Costco to start selling the Bike Plus in stores and on Costco.com between November 1st and February 15th. Costco will offer Peloton's Bike Plus in 300 of its U.S. stores for $1,999 and on Costco.com for $21.99. That's compared to the typical price of $24.95.
Sounds very reasonable.
Costco recommends.
How am I going to sell mine for $2,200 on the black market if they're going to sell theirs for $2,100?
I mean, you can get them for like $500 on Facebook Marketplace. Nah, no cap.
Darn.
What are you doing in Costco and Peloton? We don't talk about Peloton literally ever.
I haven't traded Peloton in a couple of years.
Yeah.
There's nothing to talk about Peloton, $5.50 stock. It does have earnings coming on October 31st, but it's had a nice rally if you can consider that from $3 to $5 the last month or two.
What about Costco?
Ooh, Costco is completely the other side of the coin. Costco seems to be able to do no wrong. Costco is an $893 stock. Sadnov, does Costco ever split? They haven't split in about 20 some odd years.
Oh.
I don't remember Costco ever splitting, but that's just me.
I just told you they haven't split in 20 some odd years.
So like 2005, 2004?
Something like that. I looked a few days ago.
I don't remember.
Okay. All right, good to know. Hey,
do they split is what I'm trying to say.
Do they split? I don't know.
I mean, these stocks seem to get up to $1,000, $800 to $1,000, and they seem to split.
That would be nice.
And last time it split, it was around $900 in 2000.
It wouldn't.
Can you make our stock go up to $1,000 and then split?
It would make it more accessible.
Sure. I'll do the best I can.
Frontier Airlines is exploring a renewed bid for Spirit Airlines. The two budget carriers have had recent discussions, but Spirit is in the process of restructuring its debt. And if the deal between Spirit and Frontier is reached, it would likely happen as part of Spirit restructuring its debt and other liabilities in bankruptcy. Save. SAVE. It had a 46% increase. I talked about it yesterday where the stock went up 46%, but it was down around 6% yesterday.
It's up 60 cents today. Doesn't sound like a lot, but it's only a $2.70 stock, so that's a good move for a small stock.
I mean, yeah, Frontier is like, oh, I see you just broke up with your boyfriend. Like swoops in there.
Let me slide in your DM.
Hey, McDonald's shares fall, took in a real hit after the CDC says an E. coli outbreak has been linked to the Quarter Pounders. The shares fell in extended trading after the outbreak has led to 10 hospitalizations and sadly even one death. I think it was in Colorado. The restaurant chain said initial findings from the investigation shows that some of the illnesses may be linked to the onions that were used on the Quarter Pounder. Of course, it has the unfortunate timing of the story coming out when the former president was also at McDonald's. So it's just not good. It's not good for McDonald's. But they don't have anything to do with each other. I'm not saying that. I'm just saying the timing.
It's a long time since I've had a Quarter Pounder with cheese.
In France, they call it Le Big Mac.
Royale
with cheese. Yeah.
That's right.
Yeah, I haven't had a Quarter Pounder with cheese in a long time.
Well, they got the metric system. They don't know what the heck a Quarter Pounder is. Bat, what's McDonald's doing?
It was down about $30 overnight. It's down around $21 right now, $2.93 and change. Now, you got to remember something. McDonald's was languishing, back in the summertime. It's had quite a rally without a downtick from around 250 to 300. It's backed off by $20 today.
Okay. Hey, in other news, Starbucks shares also on the slide yesterday after the coffee chain says sales fell again, and they suspended their outlook. So they basically had to throw out their whole outlook for 2025 and go back to the drawing board. The same-store sales slid for the third consecutive quarter, fueled by a 10% tumble in traffic in North American stores. Oh, Starbucks. Is this because bad coffee opened?
That's right. They see competition. They see headwinds in the coming years.
What are you doing in Starbucks?
Wouldn't want to be Starbucks today.
Okay. All right. You calm down.
Starbucks.
Vanetta, you came up with the greatest idea. Tom will probably do it in about a year with naming all the different sizes at Bad Coffee of cups of coffee. Now you'll get no royalty for that. Right?
Yeah. Are you going to change the names for your sizes? Because it should be fun.
Like to what?
To bad, terrible, and worst. Because right now it's like, oh, do you want 12, 14, or 16? No, he's like bad, terrible, or worse. That's what the sizes should be. Because like that's how much coffee you need. Like, how's your day going?
Well, I understood it the first
Okay.
I'll be
Well,
making
you're staring at her with that dumb look that you look at me with
I'll be
sometimes.
making the
understand you
business
understood.
decisions here.
Hey, I want to thank a couple of people sent this to me yesterday, and I see you and I appreciate you, but I also saw this. Bat, if you could look up Royal Caribbean for me, RCL, because Monday, Taylor Swift fans are hitting the high seas. A cruise full of Swifties on a Royal Caribbean boat set sail from Florida to the Bahamas. The Taylor-themed cruise will have friendship bracelet making sessions, karaoke, and the fans are saying, I'm in my cruise era. They're going to have Taylor trivia, dance parties, door decorating contests, and the like. The Royal Caribbean Allure of the Seas is the vessel. Swifties will land in Nassau, and then also Wednesday they're going to take over the Royal Caribbean's private island in the Bahamas, Coco Key.
I can't wait till those Bahamian men get a hold of them Swifties. It's going to be fun.
Swifties are shelling out $1,500 for double occupancy rooms, still cheaper than trying to get Eras tickets. But look, I am a Swiftie, and I'm insufferable.
Why don't you go on this?
And because I'm insufferable. I can't imagine being with 2,000 of other of me, like on a cruise ship, like because I'm an introvert also. But
yeah, but here you can just scream.
I introverted, but willing to talk about Taylor Swift. But
all I know is when this company was about a $20 billion company. I'm talking about back in January of 2024 when Tom said it was gonna crash and burn and go bankrupt. It's now a $51 billion company at its highs.
That is true. You were super wrong on the cruise industry, Tom.
How anybody can go on a cruise, beyond me.
You know, I've never been on a cruise. Like, so for me, like, I want to go on like an adventure cruise. Like, I want to go to Antarctica, but those are like really expensive.
They are really expensive.
Yeah.
Hard to get on.
And I talked to a viewer. We had some viewers here, Mike and
Vanetta, why would you want to be strapped into your bed literally to get to Antarctica?
No, we had viewers that came in last week, and I think they'd gone. One of them had gone to Antarctica. That sounds cool.
Scott wanted to go. He said they were sold out.
Yeah, he's a good rich guy. Like, yeah, Scott should do it because it's.
I'm gonna take Scott in my 24-footer. My boat. I'm gonna take him to Antarctica.
But like, I could like pet a penguin.
Hey! You want to pet a penguin? I'll bring one in tomorrow for you.
And give it penguin cuddles. Hey, congratulations to the Boston Celtics. They raised their banner and they got their championship rings. I have it. You want to take a look here? I put it up on the screen. I don't know. Can you see it?
It's a pretty cool ring.
Yeah, it has a really cool bezel. It consists of 15 carats of white diamonds to represent the 15 teams in the Eastern Conference. It's got, of course, lovely emeralds and a shamrock and a nice little bezel there. So
that looks like it's an expensive ring.
Yeah. It looks
very good looking.
I watched a little of the Celtic game last night. They destroyed the Knicks, first of all. But
poor Chris Vecchio cannot catch a break.
They destroyed the Knicks, but they couldn't miss. They were making...
Oh, they look good, you're saying.
They were making raining threes the whole game. It was... I don't think I've ever seen a shooting like that.
Yeah.
I mean, I don't know if you watch it...
Sadnov played junior high school basketball.
Since our last Nerf basketball company. I don't think I've seen shooting like that. It was unbelievable.
Since the last time Tom threw his teacup into the garbage can on the first try, have I seen that kind of stuff?
It was lights out.
It was unbelievable.
Okay, well.
They tied the all-time record for threes yesterday, Sadnov.
I know, and with 4 minutes to go, all they needed was one more, and the guy they
missed the last 12 to break the record. They had 12 shots at it.
Because they had the end of the bench in because they were up by like 30 something, and those guys missed 12 in a row, and the fans were screaming. It was good.
Have you ever been to the Garden?
Yes.
You have?
Yes.
In Boston?
Yes.
Yeah, okay. I didn't know. Bat, have you ever been to the Garden?
I have not. No.
Have you ever seen a basketball game in Boston?
Hold it. I was at the old. Is it the same one?
That I just know they play at TD Garden.
And now
I just like to say Garden.
Well, it used to be, though. I wasn't there when it was TD Garden. I was there one before that.
Okay, well,
I forgot what it was called.
I mean, you're super old, so is this like when Paul Revere was there? Like, like when was this? Anyway, hey, finally today for my viral video of the day. Bat, you have kids, I think for a specific reason, and that's to do yard work. I know that's why my parents had kids. But as the fall leaves start to fall, keeping up with your yard work, you know, raking and bagging and getting all the leaves out can be a hassle. But what if you take one of my favorite things and put it together? What do I love more than anything? Robots. But check out this yard bot. Check this out. Watch this.
A yard bot?
Oh, I saw this.
I don't hate it. You know, work smarter, not harder. That's cool.
Oh my God.
So he straps a DeWalt leaf blower onto a robot.
I know what he did. I'm just saying.
It's working. All right, thank you, John.
Yeah, then the thing pulls out a semi-automatic and shoots you.
Okay, well that took a turn. Hey, Bat, what's coming up next?
We're going to take another turn and take a quick 90-second break and come back with Confirm and Send. We'll be back in 90 seconds with Tasty Live. Goodbye for now.
Bye for
now. Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is down 21. They've been weak for most of the night session. NASDAQ down 90, Russell down 14, and the Dow down 260. They're all down around the same volatility. Tight range in volatility of 20 cents. It's at its highs, up 20 cents. That's a 1% move. Bonds traded under 118 by a skosh, by about 3 ticks or so. It's now at 118, down 15 ticks. Bonds can't find a bid at the moment. Bitcoin down around 1,000 to 66 and change, almost 67 on the Bitcoin futures. Oil down $1.15. Sadler, if you see a pattern here, everything down. Call the plunge protection team. Gold down $4.50. Relatively small move when you look at oil. That's down over 1.5%. Movers last night, you had some earnings. You had Boeing down $1.40 for earnings. And McDonald's, which had a little problem with some E. coli, down just about 22. That'll bring the Dow lower, which it has. That's all I got.
Let's do it. Emails that came into us overnight. We're running a little late. Let's move it. Wednesday, October 23rd. So I've been hearing a lot of opinions about what the market will do next. I'm wondering if stagflation, I always love when that comes back into play. I'm wondering if stagflation does hit the U.S. economy again. Is that good for option traders, since selling strangles or iron condors will most likely be profitable? Are there strategies that work better in different economic environments?
Well, what's stagflation? It's high inflation, low economic growth, right? High unemployment or something like that. I believe that's the term for stagflation. Again, you can check me if I'm wrong. I think that's what it is. I think I got it pretty good. Anyway, this is the season. You got October, November. People start talking about what's going to happen next year and quickly go away by February or March, when the real market tells you what's going on, because there's no way to predict anything else. I have no idea. I leave this for the economists who always tell me what's been happening in the past, what I went through in my life. For me, this is a non-event. Like I can't predict it.
One of the things that we try to impress upon people here at Tasty is that, I guess a year or 2 years, just like Tony said, a year, 2 years, 3 years from now, they'll tell us if we were trading in a period of stagflation and what that actually meant. But when the things are happening, there's no way to look at the economic environment and really, it's absolutely impossible to separate what your views are of an economic environment with a strategic trading and investing. It's just it's not possible. Opportunity presents itself on a case by case basis, not on a macro picture. I don't think there are strategies that would work better. There are strategies that work better for different implied volatility environments. I don't think there are strategies that work better for different economic environments, because you don't even know what the environment is until after the fact. Mm-hmm. Let's go next slide. A number of big tech companies have earnings next week. Apple, Google, Meta, Microsoft, etc. Instead of trading them individually, could I trade an ETF instead? And if so, which one makes the most sense?
I mean, they're all NASDAQ stocks. I mean, they're all in just about every ETF also. So, I mean, the Qs would probably be my first play. I think SPY could be a play for there too. I think that's one of the reasons why volatility has been staying bid over the last couple of days too, no matter what the market does. So yeah, I think it warrants a good IV rank in some of the ETFs. Yeah, sure. Qs, SPY.
Yeah, I mean these Apple, Google, Meta, Microsoft, etc. are all big tech stocks. They're all in the NASDAQ. They make up the majority of the NASDAQ 100. I mean, there are sector ETFs like tech sector ETFs, XLK and things like that, but I don't like those as trading vehicles. This is easy. This is QQQ. If you want to trade the options, you could trade the futures options in / NQ. They're okay. They're a little less liquid than the Qs, but you could trade / NQ if you wanted futures options. Just don't give up too much off the mid price, and then you could easily trade QQQ, and that's what we will trade in addition to some of these stocks. But we'll definitely trade QQQ.
You could even go if you wanted to, in the 1 day SPX on the day after, the day of these earnings, going to the next day, use the 1 day options. I think those will move quite correlated with Apple and Microsoft after they have earnings too. Google.
Yeah. Let's go next slide. I find markets super irrational this month, and I think it's due to the elections. I've lowered my size considerably and also my trading frequency until we take a clear direction and everything makes sense. VIX-wise, skew, put-call ratio, etc. I have 2 questions. Am I doing it right, or am I missing out on something? Is there such a thing as an uncorrelated tradable asset to the U.S. elections?
I mean, you're doing it because it makes you comfortable. If it makes you comfortable, I think that'll make you more of a successful trader, because I think fear is something that drives the unsuccessful traders' woes. So for me, I think you're doing everything that's good for you. Now, somebody else might look at it and see a big opportunity here and actually ramp up their size. So there's no wrong answer here. You got to do what's right for you. Reducing size for a short period of time has never been a bad thing, especially when you're uncomfortable.
Yeah, I mean, that's the answer. This is not the market pricing in elections through volatility, clearly volumes have been down a little bit, and yesterday was a slow day in the futures and the options, things like that, the last couple of days. And so I don't really think that the markets are any more or less rational than they ever are, but there's definitely times that personally we think, hey, you know what, I'm just a little bit cold now, or I'm a little less comfortable right now, so I'm going to reduce my size and trade less frequency, of course, less frequently, of course. And there's no issue with that at all. I mean, am I doing it right? I can't answer that for you. You'll have to figure that on your own. I mean, if it makes you more comfortable, you're doing it right. But we rarely sit it out. Let's put it that way. Very, very rarely will we sit out trading. We like it.
We reduce size.
Yeah, we'll reduce size, and we like it when things are a little more crazy and wacko.
Well, the unknown brings higher volatility typically.
Yeah. Let's go next slide. I've accumulated a large stock position because of splits over the years. As a result, I think my portfolio is too heavily weighted in one stock. Is this something I should worry about, given the fact that the position size is a result of splits, not me actually adding capital to the position?
Well, you are. I mean, because it's become a larger notional part of your overall portfolio. Now, that doesn't mean it's a bad thing. It just means you are overweighted there. Obviously, you like this company, or you would have done something to reduce your size in it. You could certainly sell a call that's closer to at the money to reduce your amount of delta and size that you have in that stock that's been splitting that you've been keeping. That's probably the place I would look to mitigate some of it. If it's not a tax issue, there are other things you could do, by selling the stock and maybe selling a put below the market. If that's something you're interested in doing, I think the easiest thing is to sell a call that's close to that, the money, to reduce your size.
Yeah, I mean, I think Tony's right. You've accumulated a large position because of splits over the years, but the reality is you've accumulated a large position and you're heavily weighted in one stock. The fact that it's worked is awesome. But the reality is, even though you haven't added more money, it's still your money. Is it something to worry about? Well, you haven't worried about it yet. It's worked out okay. But I think, eventually it is something to not worry about. It's something to address. So,
agree.
I would address it. I wouldn't worry about it. I would address it. Let's go to the next slide. I recently heard someone say that during the overnight session, markets tends to be up or flat 80 to 90% of the time. Is that true? And if so, why not sell one DTE straddle every day at the close and then close it the next morning on the opening?
All right, try it. I mean, that's the only way I can answer this. Try it. I mean, if that's what you heard from somebody that you trust and love with your financial future, then give it a shot.
Well, what I would say here is I don't think the 80 to 90% number is correct. At night, I think it's much more like 55-45. 60-40, I don't think it's 80 to 90 or anywhere close to that. And why not sell a one DT straddle every night at the close? Well, let me tell you something. If you think that's easy, Godspeed, because it's not. And those straddles are priced to perfection. And I find those quite difficult, actually. But you can try it. I mean, it's fair, it's one tick wide. So it's a fair market. You buy it or sell it. I mean, I don't like that approach. It's not the way I trade, but you can certainly try it and give it a shot. There's nothing wrong with it. Let's go next slide. And the last one. I see on the watch list IVR and IVX, which is the IVR is implied volatility rank, and IVX is the VIX style implied volatility. And I know what those are. But I also see IB percentile. Exactly what is that? And John, okay. So to keep it, I just put up the kind of the Investopedia answer here, just so you can see this. Or I took this off our website. I forgot where we got it from. But implied volatility percentile compares the current implied volatility to its historical values over a specific time period, which is a year, and expresses it as a percentile. Instead of a rank, it's a percentile. So, for example, if the current IV for a stock is in the 75th percentile, it means that 75% of the time in the past, whatever that duration is, and we use a year, the implied volatility was lower than its current level. And that's implied volatility percentile. We've done a lot of studies on implied volatility percentile versus implied volatility rank. We default to implied volatility rank because we feel like it's a little bit better of a trading indicator, but use whatever you want. Again,
sure.
We just optimize everything to IV rank, but we have IV percentile there for those that want it.
Very good. Very good. Let's get a quick 90-second break and come back. We've got more Tasty Live after this with an option jive. We'll be back in 90 seconds.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when like you're in a pit back in the day that had like 1 or 2 market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, I'm gonna buy your book, what did you mean?
If you're gonna buy the book, that means you're gonna buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
If you have any questions, feel free to toss them in the chat.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
It's option jive.
That's right, Sadnoff. It is time for an option jive. Give it to me. Even the S&P is down 21. They really haven't moved for most of the morning.
Yeah, they've been drifting like a little bit lower, right? A little bit.
Yeah, but they've been down somewhere between 19 and 22 for the last hour.
Yeah. I'm looking at just different stocks to see what's moved this morning since I got up. Let me tell you something.
It's moving.
They killed a couple things today. The U.S. dollar went up. That surprised me. The U.S. dollar
continues its rally, correct?
Dollar continues its rally. Yes.
Apple's down almost $2. Netflix is down $1.75. Nvidia's down $1.25. ENPH, which you had for earnings, that's the big mover to the downside with McDonald's. ENPH down 15. McDonald's down 20.
Yeah, but
Apple down 2.
There's definitely some stuff going on this morning. I mean, the euro's down under 108. It's the first time it's traded here in a long time. I'm short some 106.5 puts. I really want to sell more, but I'm not. The yen.
Yeah, look at this move in the euro. It's getting crushed.
I know. Look at the move in the yen. The yen's back to an area that's really interesting. I have not sold any more yen puts, but it's under 66. It was just 73. Crazy move in there. Let's see. Yeah, they're taking some of this stuff out to little bit woodsheddy-ish. Anyway, I just thought I'd bring it up. It's just interesting. I'm going to see what, and even gold turned around. It was up. It was kind of up this morning. Pretty good. Not anymore.
Which one?
Gold.
Oh yeah, gold. Yeah, gold turned red. It's down $7 and change. But you're right. It was about $20 higher this morning, continuing its rally very early in the day.
Yep. No bueno. And looking around to see if there's anything else. Yeah, bonds still look like dog duty, and that's it. All right, let's do it. This is a piece of research that we have we put together for you. I think you're going to like it. It's called probability of a touch, puts and calls. Probability of a touch, puts and calls. Now, as you can probably guess, probability of a touch just means it's like 2 times delta or 2 times the probability of expiring. But as you can probably guess, probability of touching on the call side is much better than the probability of touching on the put side because the market just has always been going up for the last 15 years. So this study is going to be a little bit skewed based on all the stuff that's been happening. But let's see. So the probability of a touch indicates the chance that an options price will reach its strike price before it expires. That means just touch it. It's useful for premium sellers focusing on price movements because what it does is it gives you an indication of what the statistical chances you're going to be challenged. It doesn't mean you're going to lose money, it just means you're going to be challenged. So it's generally about twice the probability of the option being in the money. So if there's a 20% of a chance of an option finishing in the money, there's a 40% chance of it touching. I wish I knew this when I was a floor trader because I didn't learn this until Tom Preston taught it to me about 25 years ago. And I never even knew there was such a thing as probability of a touch. When I finally discovered it on the first time, like literally 24 years ago when we were building Thinkorswim, I said, how come I never knew about this before? And he looks at me and he goes, and he just shook his head like you pedestrian.
You Neanderthal.
Yeah, you Neanderthal, you knuckle dragger. You know, like who doesn't know this? And I swear no floor trader ever knew this. Let's go to the next slide. I wish I had known this. We've known that probability of profit often overstates the realized success rate. Is the theoretical pot or probability of a touch similarly overstated? So to find this out, we analyzed 45-day 10 delta puts and 10 delta calls from the following underlines: SPY, Qs, Apple, Amazon, Microsoft. All positions were held to expiration. The probability of a touch on these 10 delta options should be roughly 20%. I mean, why did we pick 10 delta? Well, we could have picked any delta. We just started off with 10. There's no reason. Let's go to the next slide. We found that the actual probability of a touch for these puts is much lower than expected. Of course, because all we do is go up. But it's only half of the theoretical probability of a touch. So remember, 10 delta puts, the probability of a touch should have been 20% of the time it happened. It really only happened 9% of the time in these stocks, over a 10-year period. That's pretty good.
Yes.
Obviously, this is the whole argument for puts or schmutz, and all you should ever do is sell puts. There's your argument right there.
It's so easy.
It never even went over 9%. Should be 20%. But let's go to the next slide. There's a big but. But. The actual probability of touch on the call side with the same delta was much higher, almost double what we observed on the put side. The strong bull market in recent years is the primary reason making calls more likely to be breached than puts. However, the average actual pot is still consistent with the theoretical numbers suggested. So this came out to about 19% touched. And as you can see here, SPY's Qs were the biggest, 25%. Apple, Amazon, and Microsoft. Nothing got blown out of the water over 10 years, but this is a very interesting study because, the average was 19%, supposed to be 20. It's pretty damn close.
Yeah, right. The numbers work out.
Yeah, making a strong argument for selling puts and calls, of course, but let's go to
At market high, it's hard to talk about selling calls.
I know. Let's go next slide. So lastly, we analyzed the win rate of these positions after the strikes were touched. Next slide, please. So on the put side, the variation in win rates is slightly higher than on the call side. On the call side, the rates across all underlyings were very similar. With rates on the put side, while win rates on the put side are significantly higher by 21% compared to the call side due to the strong market and quick rebounds from market bottoms. So the 10 delta puts, they averaged in the success rate, at expiration, 60%, 50%, 60%, pretty much across the board, pretty close to 60% except for Apple. On the call side, it was much lower. I don't know really. If you looked at this, you'd say, well, why should I ever sell a call?
Exactly the point I was making a moment ago. That's correct.
But you don't always know that the market's only going to go higher. Okay, trust me on this.
That is correct.
Let's go to the next slide.
Although it might feel that way.
Yeah, I mean, it definitely does feel that way at times, but it's not the way it works. Puts have a lower actual probability of a touch than calls. The actual probability of touch on the put side is roughly half of the theoretical probability of touch, whereas the actual probability of touch on the call side aligns with the theoretical number. The win rates after the positions were tested is also higher on the put side than the call side, meaning, this is a master of the obvious that puts worked out better than calls in the last decade, but things can change in the next decade. That's it.
Good job by the team. And I know something? We're going to make the opening bell here, even though the evening S&Ps are selling off by a couple more points out of. They're down 24 right now. We'll take a quick 90-second break and come back. We got more Tasty Live right after this with the opening bell.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
If you missed the live show, here's our cherry on top weekly recap. Look where I'm sitting today.
Crying out loud. You big dog, you.
I hope I've had my tetanus and hepatitis shots.
I was driving home.
Yes.
Pouring rain.
Yes.
I stopped somewhere in Bucktown, and I got drenched.
Oh, no.
I know. Not happy.
No.
And then,
Did your extensions get wet?
what'd you cook?
Pasta with a lemon zest cream sauce.
Lemon cream sauce? Would you put cream in there, or would you put milk? What do you put?
He puts.
Whipping.
He does more of a butter.
I did a whipping cream.
You should use cottage cheese.
I already eat too much cottage
I'd rather do ricotta cheese.
You eat cottage cheese?
every day.
Oh my God, please tell me you don't eat cottage cheese with cling peaches?
I do. I love cottage cheese.
Oh my God, how old are you?
In LA, I don't know where I'm going to dinner on Saturday night.
So how do you know what clothes to bring? Like if you don't know where you're going to eat?
Oh, wait a minute. You gotta be kidding me. You think there's an attire, an outfit for where he's going? He's wearing what he wears on a plane. He's wearing what he wears to the show.
Wait, it's still pool weather out there. You bringing a bathing suit?
I might go in the hot tub if there's a hot tub.
So are you, well, how are you gonna go in the hot tub?
Bathing suit. Do you wear that under the pants on the plane? That would be good.
Over these days. Yeah, all the kids are doing it. Pearl necklace and over the pants.
Get the full scoop by checking out the archives at tastylive.com.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Tomas, we are back, my friend, and I have some breaking news for you. My friend, Taiwanese source from Texas, who I have gotten a lot of good information from, he just ran the numbers for you, Sadnov. From the close to open, since 2010, the SPX is higher overnight by what percentage from 2010 to present? Remember the confirm and send set had just 80%. What do you think the actual number is?
61.
53%. But in 2024, what do you think the number is?
67%.
65%. That is correct, Sosnoff. You were spot on. You were spot on there. So not 80%. But
yeah, I didn't think that. I said before I thought it was 55 or 60, whatever. I mean, I knew it wasn't that high, right?
Closer to 65%. So take that with a grain of salt. And thank you.
Just this year though, but you can't take this year out of context. Whatever.
I just broke it down from 2010. It's basically a 50-50 shot with the positive drift of 53% that we talk about all the time. And in 2024, you've had a move where it's been 65%. So it makes sense at all-time highs.
Yep.
Now remember, if we sell off for the rest of the year, it'll be back down to 53%.
Yep.
Even the S&P is set to open down around $23.50 out of NASDAQ 109. Russell down 11, and the Dow down 267 on the heels of McDonald's lower by about $20. Boeing is down only 33 cents, enough. Closer to my down 5 than your up 5, but I'll take the win.
Well, I have a nice Boeing could be my only winner today. We are short the 145 puts and the 177.5 calls. Is that possible? Yeah.
I would like to take that position off your hands, knowing what Boeing is doing right now this morning.
I'd like to make $2 on that position right now. So I am putting in, it closed at 339. I'm putting in a 139 bid. And I need a miracle here because that's what I need to buy this back for. So make it happen.
Well, your first opportunity just started, Sosnoff, with that opening bell.
And Boeing is up 11 cents. That is amazing on a, what was the expected move in there?
Ooh, Boeing was closer to I think it was $8, didn't we say?
I don't know. I don't remember.
I believe so.
ENPH,
well, there's your Boeing up.
ENPH is down $15, and my 1/3 ratio spread did not work.
I wouldn't think it would. Down 14 now. On the upside, you got GE up $4 and change. UNH helping the Dow up 360 and change. Microsoft up 250. Costco up 2 and change. On the downside, Sadnov, you are right with ENPH leading the group down 14. ARM down $6 and change. That's a decent sized move in ARM. It doesn't have earnings until next month on the 6th. Coin down $2.67.
Yeah, I'm looking at GE.
Apple down $1.60. Baidu down 60 cents. Nvidia down almost $2.
Markets in GE are not very good.
Well, give it it's only been at 60 seconds. Give it a moment.
Yeah, let's take a look. Did we get let's get this Bowen going. Now it's down $3.
There you go. There's a good Boeing. There you go. Closer to my 5 than your 3. That's all I care about.
Did they open the options there yet?
You can tell by looking at the option series, Sadnov. If they're green and red, then those options are open. They look a little bit wide right now. Yes, they are open.
Yep, they look a little wide. All right, so we will back off that one. Back off, buddy. And let's take a look. Well, I didn't make what I thought I was going to make. The $2 did not come out to be $2.
You can have that position.
Obviously, that's what it looks like. All right, let's see. Again, earnings, no bueno.
Yeah, earnings have been a disappointment, much like Sadnov on a Saturday night.
Yeah, earnings have been definitely a disappointment. Let's see what we got here. Well, I'm going to see if I have to make an adjustment in Boeing. Now they don't like the Boeing. They don't like the Boeing numbers very much.
Down $4.40 as foretold.
As foretold. If it was a bullish market, it'd be up $4.40.
We have a bullish market. There's just no bullish market in Boeing.
I'm going to roll down some calls in Boeing. Took my 77.5s down to 70s. Give myself a little more neutral stuff.
Little room for growth.
Little room for being correct. Let's see what else. Let's go to ENPH for a quick second, see where we are there. Stock's down $12. Now we should be getting closer to potentially breaking even here.
It's a sea of red out there, Sadnov. Silver down 80 cents, gold down $7 and change, oil only down 60 cents now. I say only because it was down about 60 cents more than that a moment ago. Volatility is the only thing that's green, hanging in there, up 18 cents. Even the S&P down 22.
Yeah, I'm looking to see if we have any problem children. And on the opening, I would say Baidu.
Baidu down $1.35. Baba down small.
Yeah. Russell doing a little better than the NASDAQ, but nothing much there. Good night, NVIDIA. I need NVIDIA to crap out here.
NVIDIA down almost $3, $2.80 NVIDIA.
Yeah. I need Apple to really do some
damage to the downside. Apple down $1.65. I mean, these stocks are just a skosh off their highs.
Yeah, Apple down $1.65.
This looks like a continuation of yesterday's opening, Sadnov, where we made our lows, sat, and then we just kind of crept for the rest of the day.
Yeah, I'm taking a look to see where we have problem children right now. I thought Coinbase would be a problem child, but it's not really.
Volatility is nice and high in there, helping you out a little bit.
You know what I hate about Coinbase, though? Every time I go in there and I make an adjustment, I get
it comes back to bite you in the arse.
Slapped like an hour later. I'm like, how's Coinbase up on the day?
I get that.
Yeah. Every single time. Let's see.
Your Chinese stinks. Your Chinese stock stinks, Osnoff. Baidu continues to be lower. Not Apple, but Apple down $1.67. Baba is also down by about 60 cents.
Oh, I think the Chinese stocks look horrible.
PDD, which caught a small bid yesterday, down 66 cents today. I say small bid because it was up significantly higher during the day, only to sell off later on.
I know IBM has earnings. We have a small IBM position on. We're going to have to probably tweak it at some point later today.
The mighty IBM, just a skosh off its highs, down $1.60 and change. Tesla is the other stock that you'll probably be looking at today for earnings. Tesla down 11 cents, 217, but it's been going sideways the last couple of days. I know we've traded Las Vegas Sands in the past. I don't know if you'll do anything in there today. It has a good IB rank, but it's been going sideways.
Starbucks opened a lot lower last night in the post market, and it's kind of rallied back a little bit. I don't know.
Yeah, Starbucks traded down at 93 and change, even in this market, down 2 right now, but $1 higher.
Yes, I'm going to roll some calls down in Starbucks. We have the 93, 97 strangle on in there. And let's see, what else do we got on? Well, what is your thought process here after the first few minutes of the day?
It looks a lot like yesterday, Sosnoff. So I'm going to, if we don't sell off, which doesn't look like we have a lot of velocity to any movement right here on one way or the other, we're going to creep up.
Oh, no, you're not another up creeper.
I'm just realistic. I mean, you see any velocity to this movement? It almost looks like it's closed. I mean, even the S&Ps aren't even ticking.
They sure aren't that interesting. Let's put it that way. I mean, I'm shocked that this can all be election related. I just don't see it.
I think it's earnings related more than election related. You got Tesla coming out today. You've got the other big ones coming out later next week.
I know, but I can't make any money in earnings, so I've lost all.
For earnings.
I've lost all interest. Yeah.
Understood.
So I'm trying to decide here. How would you play Boeing?
Oof. How would you play Boeing?
It's a small winner, but the premium hasn't,
With your assumption of being a little bit bullish, I think you sit. It made a low earlier today, right, of a 154 and change. It's 157 and change right now. I think you sit. Show some intestinal fortitude, for crying out loud. Act like you've been here for 40 years.
Thank you so much. That you make me you just warm my heart.
Beautiful.
Yeah. Anyway, all right, what else we got?
That's it. Let's take a quick 90-second break, Sazov. You know why? We got What's Your Assumption coming up next. We've got 10 trades that our viewers have sent you assumptions on. You can tell them how good they are, do what they want to do, finally be profitable, and then move on to the next trade.
Beautiful.
We'll be back in 90 seconds. It's Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means? Time for a little bit of what's your assumption?
I'm ready for a little bit of what's your assumption? Down.
Even the S&P is down 24.
Yeah, you got any?
No.
Yeah, me neither. I'm trying to think if there's something here that jumping off my screen. Not really, I don't think.
That grabs you by the short hairs.
Yeah, I don't see.
They're not even coming for the pigs. I don't know if they're just doing nothing.
No, I agree. All right. I'm Tom Sosnoff. He's Tony Batista. It's 8:44. It's sometime in the middle of October. I don't even know what date. What's the date?
23, Sosnoff. Michael Jordan.
October 23rd. It's October 23rd. I've not put the heat on yet.
Heat on? It was 80 degrees yesterday.
I know. Saying I haven't put my heat on. It's October, middle of October. Carlos, your boy, is he owes me. So I owe him money and he owes me stuff. So he's supposed to come out and fix my heating. It's going to be I got a feeling it's going to be one of those winters.
Gonna be wearing your vest indoors.
You go to Costco and have to buy some space heaters. I'm going to be one of the wealthiest people in the world that lives in a house full of space heaters. There you go.
Don't do that. Don't do that. Those cause fires unless you got the oil-based one, Sosno, if that's what you need.
Oil?
Yes. It's a much more of like a radiant heat, like you would have in the old buildings that had steam heat. It looks just like that. It looks like a radiator, like an old-time radiator, and it warms up and it heats you. The ones with the coils that you like to use that blow heat on you, those are fire hazards.
I like those. Yeah, the ones I don't like are the ones that look like radiators.
You know what? This is how you're going to be today until bonds rally. I get it. I can wait. I can outwait you.
I just sold some bonds. I just sold some bonds at 03.
Ooh, look at you. You took 3-4 ticks like nobody's business on your low tranche.
5
on your low tranche.
5. Yeah.
Mm-hmm.
Now I'm offering some more at 7. I'm going to keep trading these things and scalping them around until that one day I'm going to wake up and they're going to go, boom. Anyway, let's see what we got. John. Trades from trade assumptions from people all over America and beyond. Dave S. from Cleveland, Ohio is neutral on Amazon. His time frame is 1 week. He says, what about a $2.50 wide iron condor? I'm interested in holding this until before earnings. These prices and pops are from Monday. Have a great day, guys. You're the best. All right, Dave, you want to do a small, narrow $2.50 wide iron condor in November, 1 week out. Right? I'm reading this right?
You are reading it out. Yes, you are correct.
But, he wants to do 1 week out.
Because of earnings that are looming in Amazon. He's trying to be smart here. October 31st. I give him a lot of credit.
Okay. So when you say 1 week out then, so I'm going to do this on November 1st?
Well, that would put you in for earnings.
Yeah, but what's
the only
my
thing you do is the two-day options.
What's my choice?
October 25th, 2-day options.
That's okay, fine. October 25th. Tough guy. Where are we right now? We're at 188. Okay, so I'd sell. I'm going to do just what Dave from Cleveland, Ohio wants to do. All right, I'm going to do a tight iron condor right at the money. My options here, Dave, are very limited. To do what you want to do, I've got to sell the 190, 192 call spread and the 187.5, 185 put spread. And this is very narrow, very short term. I'm going to try for 141. That's mid price. 140 is mid price right now. Yeah, this is going to be a tough one.
And look, if you bought him at 731 and you sold him at 803, how is that 5 or 6 ticks?
740. I got filled. Oh, I'm sorry, 140. I got filled. Which one? What'd you say? I thought I paid 1730. No?
1731 I have as your last.
Oh, I apologize. I thought I paid 1730. 1731, yes. Even 1, 2, 3.
4 ticks, like the bat said, right?
4 ticks. Okay,
yeah,
well
that's it.
Then I'm gonna have to buy. Then I'm gonna have to buy these back, like the bat said. All right.
Nice trade in Amazon, Sosnoff. You finally got a winning trade on your hands.
I don't know if I do or not, but we'll see if Dave. Dave, I filled that trade at $1.40. It's a 2-day trade, right?
Yes, sir.
Okay, let's see.
Sir, yes, sir.
We'll take a trade. My guess is, Dave, I'd be shooting to try and make
ooh, look at you buying it back at 30, you big dog.
Okay, now we'll see what happens. Let's go next slide. Joe from Oklahoma City. Gold's trading at a new high, but I'm not bearish yet. What's the play? Strangle, Iron Condor, maybe a Jade Lizard? I don't think it's a Jade Lizard, Joe. But Tony, what's the play?
Ooh, yeah, Jade.
Gold's had a nice little two-sided trade today.
Right.
Our GLD
A
position.
Jade Lizard has a naked put as the heavy part of it. That would be more of a bullish strategy in my mind. I get it. It does have a high probability of success.
I don't like it. I don't like the Jade Lizard here. 23 days to go. Should we do Dees?
I would.
Yeah.
You're going to roll it on Friday. I mean.
Right. Let's do some Dees. We have no Dees position on. Yeah, I'll do a strangle out here, Joe. I'm going to do a strangle. This is my buddy Joe from Oklahoma City. I'm gonna go to the 20 deltas, 270s.
Taking a page out of the back playbook. That's right. I did the same thing in Goldman Sachs around the 20 delta. Sadnov, you must be watching my Option Trades Today podcast, whenever you find your podcast.
No, because no.
Say something nice about your friend of 40 years. Go ahead.
GLD, I'm working the 241, 270 strangle, like Joe suggested here, at 37. Well, I'm not working anymore. Filled at 375. Let's go to the next slide.
Next slide we go.
Blake from Oshkosh, Wisconsin. We're just talking about Oshkosh, Wisconsin. Oshkosh begosh. The ZS soybeans. What do we got here? Let me just check my soybean position really quick.
Soybeans, good IV rank of 43. They're up $1.25. That's a decent sized move off of the lows the last 2 or 3 days.
Yeah, we are currently in the Nove expiration cycle. We are short the 970, 1030 strangle. IV rank is 41. With most of Tasty already having positions on in gold oil bonds, let's diversify some softs, maybe a simple bet in soybeans to catch a bid, either a short put or a put spread. Okay, because I'm slightly, by the way, soybeans are kind of on their butts. Mm-hmm. If we go out to November with 30 days left, which is where I'd be in here, yeah, you want to sell a put or a put. Yeah, I'm fine with it. A put or a put spread. The 950 puts are 6 1/8, and the 940 puts are 4 1/2. Filled on the 940 puts at 4 1/2. I just was trying to see whatever one I could fill at mid price. Mm-hmm, so the 940 puts at 4 1/2. It's a small trade. They're 14 deltas. I'm already a little bit long soybeans, so Blake, so we just added to the position. Let's go to the next slide. Jack from Philly, UPS. I think UPS has earnings this week, don't they? I saw that.
UPS has earnings today, Sosnoff.
Oh, earnings trade. I believe the upside potential is greater than the downside risk given the price is already near a multi-year low. What would you do for an earnings trade? Okay, that's fair. Where is the stock?
If I go from their customer service, I would say the stock is going lower because their customer service stinks.
Earnings trade, November. So I'll look at a couple things here. Volume, very light, Jack. So be careful in here. November volume. IV rank is super high. That's cool. Number of shares traded so far today in the first 25 minutes of the day, only 200,000. Number of options traded, extremely light, like all 1s and 2 lots. So be careful here. You're bullish. So you want to skew this a little bit to the upside. So what we're going to do is we're going to look at the expected move. And the expected move in November is $10, right?
Yep.
$9.59, whatever, $10, let's just say. So we're currently trading at 131. So we're going to go down to the 120 puts just as a starting point because they don't have 122 puts. And to the upside, he thinks it's going to be a big number, right? That's
yeah.
The play here is just to sell the 120 puts, Jack. If you think it's going to be, or you could sell a put spread, but I just like selling the 120 puts. Keep your size small. They're going to trade around $1.20 ish.
Mm-hmm.
I don't know. I'm doing a little price discovery. We'll leave it in for a sec. See if we get filled. Do a little price discovery. Let's go next slide. Giovanni from Miami looking at NDX neutral. What about an iron condor? Let it settle to cash. Well, we usually cover Giovanni at 21 DT, but we'll do an NDX trade. We haven't done one in a while. With 22 days to go, we'll go to December. We'll go to the expected move here, which is 1,300 points. All right, what does that take us to, Tony? 1,300 points takes us to the
NDX. I know you like trading. I mean, I know you've traded NDX in the past. I mean, if you look at the volume there's really no volume.
Yeah, I know. UPS filled. So
yeah,
if
$1.20.
If I go down, let's do the 2,000, which is the expected move to the downside, and then to the upside. What I say, 1,300 points, right? So that would take us to 20.
The expected move. Are you doing the 0 day or the 1 day?
No, 57 day.
Okay.
Oh, he wanted to do. I'm sorry. I take it back. Giovanni wanted to do the 0 day.
That's right.
Oh.
You know why, Sadov? Because it's been working.
Oh. I didn't see that. He wanted to do the 0 day. Where's the VIX 1 day?
VIX
777. No, I'm not doing it. No. I don't like the 0 day in here, but I would do an iron condor at the expected move for December. Just because I haven't done an NDX trade. What'd I say? 1,300 points times 21,600. 21,500. Oh, they only have $100 strikes?
Yes, sir.
All right, this is very confusing.
Where are you looking?
NDX.
Yeah, you got to look at you looking at NDX AM indies?
Yes.
Right. So above 2,100, they go to $100 wide strikes. Below that, they're quarter.
Oh.
I don't know why you want to trade NDX. I'm going to go back to that.
I don't know.
Okay, good. That's a good answer.
Just to have some fun.
Okay. Now we're about having fun.
Yeah. I'm trying to have some fun here, okay?
Is that what we're doing?
37 deltas, 39 deltas, 37. Yeah, this could be okay. 38 deltas, 37 deltas. So a $25 wide spread trades for an $18 credit. I don't know. I haven't done a trade in here in a long time. So Giovanni got me all fired up to do something in the in NDX, but I can't tell you where these things should trade. So I got to do a little price discovery.
Uh-huh.
I want to just see if it works, Pat.
Understood. We're having fun.
So I'm working this iron condor at $18, which is way too high because I would never normally do that. So just give me a second here.
Don't worry. We own the network. Take your time.
Where did I
1788.
Let's see what happens. 1788 is, I can make, on each one lot, I can make $360, right?
No, 1,700 and...
Oh, in the NDX, what am I thinking? I thought I was doing the, I know what I did. I did NDX. I meant to do NASDAQ futures.
Oh, okay. You did NDX. It's 1,700 bucks, right?
Yeah, sure. 1,700 bucks. Yep.
$1,785.
Yep. All right, let's go next slide. Yeah, I don't trade NDX very often, so it's something. Abhishek wants to do San Mateo Dollar Tree. Oof, not a fan. DLTR. I've tried to trade this many, many, many times, and I have not had a tremendous amount of success. I have battled my arse off in this stock. What do you want to do here? Bullish. Stock's on its butt. This stock has been crushed. Dollar Tree. Going to December, high IVR without earnings. I'm slightly bullish, so selling puts or a Jade Lizard. Which one is better? For something that doesn't trade, which this stock hardly trades, Abhishek, stay really small, and I'd be fine with a put spread. Mark, just so you know in here, like this is a hard stock. The IB rank is huge, 81, but it's only traded 200,000 shares, and the markets are $1 wide. Or the at the money markets are 40 and 50 cents wide. They're 40 and 50 cents wide. What would you do, Bat?
Let's take a look at Dollar Tree, DLTR. A tough one here, Saznov. A good IB rank of 81. Earnings are coming DC1. I probably would still trade December options because I'm going to roll in November with their assumption of being bullish in Dollar Tree, which I think the way Dollar Tree has behaved fits your assumption. I might do a Jade Lizard in here.
What Jade Lizard?
Like a 75.80 and the 60 put for just under $5, maybe 490 or 485 if you can get filled there.
Yeah, no interest for me. I'm going to pass on this one, Abhishek. I don't like this stock. I've never had any luck getting decent fills in here, and I've never had any luck with this particular stock. Markets are too wide. I'm not a fan. Let's go next slide. I don't like to trade stuff that's not liquid. Bernardo from Buenos Aires. Let's do a little TLT. We haven't traded it in a while. 40 days out, he's bullish. Do I need more reasons than the current price? No, you don't. Stock's down to 91. This has been a literal, can I say shit show in there? You got to sell some December puts. I agree. I think you go right at the money and sell sell the 90s for 190. And I just did. I like that trade. It's liquid. Already 5 million shares have traded today. It's more my kind of trade. Thank you, Bernardo. Let's go next slide.
Beautiful.
Dave from New York City. Your boy, Dave is back. EEM, haven't traded it in a while. 45 days out, appears to be mirroring the performance of the Chinese ETF. EEM's had a nice little rally in there. It is mirroring the performance of FCX. It might be a better choice. What do you think? Neutral. Yeah. It's traded 3 million shares today. The volume in there is, the option volume is not good. What happened here? EM used to be good. Oh, I'm looking at December. Maybe there's more trading in November. Not really. Tony, you traded EM in a while? I haven't.
No, I have not.
I kind of feel like this is a small strangle play to me, and at the money strangle, but I would do it really small and just stay right at the money, Dave. I don't like the volume in here. It is not pretty. I don't think you can trade it very big. There's 0 options of traded in December. I'm going to offer like an at the money strangle and see what happens, but so far, no bueno. SPOO's down 27, little ugly.
Yes, sir.
Let's go to and just looking to see if there's anything jumping off the screen at anybody. ENPH, we're back to even. Shocking. Tony, anything else jumping off screens at you?
Oof, no, sir.
Okay. Just looking at a couple of my positions, just making sure that we keep our short deltas in line.
You still got Apple down $1.30 and change. Microsoft, well, you got Nvidia down 4 and change. You got Microsoft that was the leader yesterday, still holding us up by $1.50. Vol hasn't really moved; it's up 25 cents. Nasdaq's the weakest of the group by far, 2 to 1 margin at least.
Yeah, I'm gonna just push out a few short deltas here just to make sure that we stay on top of this thing in case it gets away from us.
They're definitely not coming for the pigs either. Those stocks that have been lower are still lower.
Yeah. So this is from John. No golf after the hurricane in the villages. He's looking at Tesla. And I agree with you. Hold on one second. We're just going to roll down some calls in SMH because I don't want to let that little sucker get in front of me. John, what do you want to do here? 45 days to go to expiration, bearish with earnings season so puzzled me. Not sure to keep the pain going. Short Tesla earnings, the dismal move, maybe a put calendar for the least is the least uninteresting play. Yeah, I don't love anything about Tesla.
It does have earnings like we've talked about after the close.
Yeah, I have no position on in there right now. What would you do?
It's been going sideways. The earnings plays have not been great. Tesla does have a good IV rank of 51. Maybe go to December instead of November, Sosnoff.
I mean,
December volatility is 54. It doesn't look like it's going to move too much for the earnings. November volatility is 61.
Listen, wherever you go to, that's not kind of my point is, what strategy are you going to use in here? Neither of us like this move.
Then it's got to be an iron condor if you're thinking about that. And since Tesla is a pretty high price stock, $200, I'd go $20 wide on it.
John wants to do a calendar spread in here.
You could do a calendar spread. You're going to have to do it. Well, I mean, a calendar spread, you could use it as a delta play. I think you do have to be a little bit more delta play to it. Maybe like
I think you do. I don't mind a put calendar spread below the market. I'm not very.
That would make you bearish on Tesla.
I know. I'm
just saying, if you're doing a put calendar below, it's bearish. You do a call calendar above, it's bearish, bullish. That's all.
How about the 200 put calendar for 380?
Okie dokie.
It doesn't sound crazy to me.
Well, you've got high implied volatility in November by a couple of percentage points, so it definitely fits the narrative. You just have to get the direction correct.
Yeah, I also have to get a fill.
And you have to get a fill.
So far, no bueno.
So far, no bueno.
So far, no bueno at all. That's weird. Yeah, I paid up, John, $384 just to get it on because I don't have a Tesla position on, so I just paid up a little bit. I don't know. Give it a shot.
Got a hunch, bet a bunch.
Got a hunch, bet a little. I might do more later on. We'll see how it goes. Let's take a look at the next slide. Another earnings play, Justin from, I think it's supposed to be Houston, Texas, but it says Huston, Texas. I don't know. Weekly options, IBM earnings after the close. I'm thinking about an upside call ratio, but love to hear Tom's opinion. You know, it's funny. I don't I don't really. Okay, so let me tell you what my IBM position is right now. I'm short the 225, 240 strangle. I don't like it, obviously. I just haven't adjusted it. I was waiting for today. It's unchanged today. So I'm going to go wide with it. I'm going to go wide. Where would you go to? What's the expected move in here in November? $16? It's
yes,
currently,
sir.
that takes you up to 250. I'm
Yes,
going to go
sir.
a little outside that move, 255. And on the downside, I'm going to go to, I don't know. What would you do, Bat?
I mean, IBM, you like to play it with a little bit of bullish delta to it, don't you?
I do.
IBM is up 47 cents, trading near its highs. It seems like a hard bullish play for you to do. I mean, can you abstain?
Can I abstain?
I mean, from weekly options, you go to November or December. Oh, you went to November. Oh no, what are you doing here?
I got a kind of a very complex position on, so
very, very complex. Oh, is this what they would call a complex option strategy, where it's more than one leg?
Yes, but I'm going to be putting my.
I mean, you roll down calls and then did a 1x2. I mean,
I'll tell you what I'm doing.
Complex.
210.
You're so deep in complex, Sosnov.
210, 255.
You're so deep in complex.
Thank you so much. 210, 255.
210, 255. Okay, good. Good for you.
Thank you. Next, please.
I mean, you
Justin,
struggled through this one. I'm not.
That's what I did, Justin. 210, 255. All right, let's do a little bit of a recap here. Amazon, we did a very tight iron condor. GLD, we did a December strangle. ZS, we sold a naked put. Those are soybeans. UPS, we sold a naked put, which is weird for earnings. I don't usually do that, but I did it. NDX, we sold a December iron condor. Dollar Tree, I passed on. TLT, we sold a naked put. EM, John, no fill. Okay, that's an X. We just didn't get filled at EM. Tesla, we did a put calendar spread. And IBM, we did a earnings strangle, 210, 255. All right, 8 out of 10.
Good job out of you, Sadnov. I'm going to take a quick 90-second break. I'm going to bring my friend Jacob on with the skinny on options math immediately following these messages from our sponsor. We'll be back in 90 seconds.
We have a sponsor?
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap. Look where I'm sitting today.
Crying out loud. You big dog, you.
I hope I've had my tetanus and hepatitis shots.
I was driving home.
Yes.
Pouring rain.
Yes.
I stopped somewhere in Bucktown, and I got drenched.
Oh, no.
I know. Not happy.
No.
And then...
Did your extensions get wet?
What'd you cook?
Pasta with a lemon zest cream sauce.
Lemon cream sauce? Would you put cream in there, or would you put milk? What do you put?
He puts. He does more of a butter.
I did whipping cream.
You should use cottage cheese.
I already eat too much cottage cheese.
I'd rather do ricotta cheese.
You eat cottage cheese?
Every day.
Oh my God, please tell me you don't eat cottage cheese with cling peaches?
I do. I love cottage cheese.
Oh my God, how old are you?
In LA, I don't know where I'm going to dinner on Saturday night.
So how do you know what clothes to bring? Like if you don't know where you're going to eat?
Oh, because wait a minute.
You gotta be kidding me. You think there's an attire and outfit for where he's going? He's wearing what he wears on a plane. He's wearing what he wears to the show.
Wait, it's still cool weather out there. You bring a bathing suit?
I might go in the hot tub if there's a hot tub.
So are you? Well, how are you gonna go in the hot tub?
Bathing suit. Do you wear that under the pants on the plane? That would be good.
Over these days. Yeah, all the kids are doing it. Pearl necklace and over the pants.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tomas, we're back, my friend. You know what that means? Time for more of this. That's right, the skinny and options math with my man Jacob. Jacob, you got to help me because Sadnov fumbled through the last one. What's your assumption? I know you were watching in the wings. Boy, was he boring.
Oh no, Tony, you're really mixing it up. The change up this morning. Your whole rhythm is a little bit different. It threw me.
Thank you. I try to keep you on your toes.
Yeah. Don't bite me.
Look, I get no help from him. Look at him over there.
Yeah.
Look at him.
He's answering.
Give him another Quaalude in the morning. He'll love me. What movie, Sadnov?
Say it again. I didn't hear you.
Give him another Quaalude he'll love me in the morning.
Yeah, that's Al Pacino.
Scarface. Yeah.
Yeah.
I said Al Pacino.
It's Al Pacino for an
That's
Italian
not a
man
movie.
pretending
That's
to
a
be
character.
Colombian.
It's an actor.
Oh, you said movie? Sorry.
All right, Jacob, save me over here, please.
All
Bonds
right.
don't go higher.
Let's-
By the way, Thomas, really nice 4 or 5 tick scalp on those bonds.
Jealousy will get you nowhere.
Just patience, patience. Wait it out.
I'm trying.
All right. So today I want to talk about sort of a relatively fundamental concept, which again, I'm sort of caught up in this new backtesting software that we put out there, and I think people are really enjoying. And we've got hundreds of thousands of backtests going on, and I just want to be out there and really try to clarify for people how much faith and trust to put into these things, because it can be a little bit tricky to see something, right? If you see something that's in your back test as an 85% winner and it's being priced today like it's only an 82% winner, have you found the arbitrage? Should you just be going all in on this or not? And so today I want to sort of work out about how many occurrences you really want to have this sort of confidence and about how believable probabilities can be. So we're talking about the believability of probabilities. Yeah.
I like it.
So an important thing here that comes up is that there sort of are two very natural ways to talk about random events. There's ones that probabilists like me are more used to, which is to talk about things in terms of probabilities, right? To say that this is an 84% pop trade or a 79% pop trade, right? Which means that if you did 100 of them, you'd expect about 84 or 79 of them, right? What percentage of all of the trials does this thing happen in? But when it comes to pricing, there's sort of a more natural way, which is more how gamblers often think about probabilities, or is to think of them in terms of odds, which is rather than thinking about the percentages, to think of them as a ratio of, for every A successful trades, there's going to be B non-successful trades. And so, right, like if you have two things with different odds, right, a 4-to-1 odds versus a 5-to-1 odds, that's a pretty substantial difference in odds, right? In terms of a fair market price, that'd be about 20% difference in how much you would pay for things that paid out the same in case of winning, but one was a 4-to-1 probability, one was a 5-to-1 probability, or odds. But in terms of probabilities, 4-to-1 is just 1 in 5, so that's 20%. And 5-to-1 is 1 in 6, so that's like 16 2/3%. So the difference there is only like a little bit over 3%, right? So in terms of probabilities, it's a pretty small number of percentage points. But in terms of pricing, we're going to need people to distinguish between an 80% pop trade and an 83% pop trade, because in terms of a fair price, there's a 20% difference in their fair prices. So how many back tests are necessary? Oh, hello, kitten. That's not right now. How many back tests are necessary in order to distinguish between them? So let's take a look at some of the math that goes on here. So the key thing here is that we're trying to estimate a true probability, right? We assume that if we made a lot of trades with very similar parameters, right? Same underlying, same IV, same, strike distance in terms of expected moves, these sort of things, then we can expect them to sort of be independent if they're over disjoint time spans and of roughly identical probabilities of success. Well, then if you did n of them, right, if they're probably p and you did n of them, the standard deviation for the number of winners, right, there's a binomial distribution fact, is going to be the square root of n times the probability and the reciprocal probability, right, p and 1 minus p. And that bounds above when p is a half, right? That's where you get the most variation, is when you're doing 50-50 type things. So we're going to get rid of the p and 1 minus p here. We'll put them both at p at a half, 1 minus p is also a half, comes out the square root, just a half out in front. And now instead of looking at that's for the number of successes. Now that's the standard deviation of the number of successes. The actual proportion of winners is going to be divide that by n. And so we get that the sample probability is bounded above by 1 over 2 the square root of n, right? So that's the standard deviation for the standard, for what the percentage of winning trades in your backtests are if the actual true probability is p, right? That's how much away from the true probability we expect our backtest probability to be, right? That's our standard deviation. So how big does n need to be for this to be a nice and helpful bound? Well, one thing that happens to a lot of people when they take sort of college courses in social sciences or psychology is that they don't understand a lot of the math that gets thrown at them, and they come away with the statement from the professor that n equals 30 is a statistically significant study. So let's look on the next slide to see how well that plays out. The answer is unfortunately not very good. Right? Is 30 good enough for significance? So the technical reason that this is the number that gets thrown out there is because when we use the central limit theorem, we're just sort of doing a high number of occurrences limit. In a reality of a low number of occurrences, there's a better distribution for the number of successes, and it's called the student's t distribution. It was invented by Guinness long ago to try to do quality control on their barley. But the key here is that the difference between a student's t distribution will goes to the normal distribution as the number of samples gets really big, and on low samples it looks like a sort of a more spread out version. And at sample size 29 is where the total difference in probability between any two events is at most 5%. And so that's why when social scientists are setting up their experiments, they often think that n equals 30 is good enough, because at n equals 30, they're allowed to use normal distributions instead of student t's, which are perhaps more tricky to use, without getting more than 5% different in results. But that's not actually good enough for our purposes, because we don't just want to say, oh, this is a statistically significant result that, undergraduate students perform better on tests when they eat Fritos before their exam. Right, that's the sort of study that n equals 30 is used for. We want to price options and make sure that we're paying fair amounts. And at n equals 30, our bound from before, our 1/2 square root of n, well, that's only 9%, which means that we have a standard deviation of 9%, meaning that if we were trading 80% pop trades and we did 30 of them, we're within one standard deviation if we wind up with 71% or 89% winners, right? And so neither of those two say that the probability wasn't really 80%, right? Even if we sometimes do better and sometimes do worse, right, in a realized result, right, until we get out there. So how many what size n do we actually need in order to be able to like distinguish what our prices want to be given different probabilities? We can roll forward one. If we want to be confident in our probabilities, then we need to be able to, then one thing is probably one standard deviation is not a good choice, right? We often come out one standard deviation to either side of true result. Maybe we want to be 2 standard deviations. Really, maybe we want to be 3, but we'll do 2, right? That gets us to our 5% probability, right? 1 in 20 kind of thing to be outside of there. As that means that we want 1 square root of n, right? That 2 has gone away because we're now looking for 2 standard deviations to be smaller than the difference in probabilities we're trying to distinguish. So, right, again, our difference between 4-to-1 odds and 5-to-1 odds is about a 3% difference in probability. So if we want to be able to do that with confidence, right, to be within to have that be a 2 standard deviation difference, we need 1,000 occurrences, or like 1,100 occurrences, really, right? The 33 squared occurrences, which is a lot, right? It's very hard to get that many occurrences in anything sort of other than 0 DTEs, where you can do a trade every day, right? If you have to do a trade every 45 days or every 24 days because you're managing at 21, it's going to take you many years to get out to actually 1,000 occurrences in any particular underlying. And this is why I think the main takeaway for today is that we really want to trust market prices rather than say that they're wrong because they disagree with our back test, right? More likely is that our back test is just not over enough samples. And so sometimes it comes out a little bit better and a little bit worse. And just the difference in probabilities can be very small and still come up with a big difference in odds, especially when you get to sort of these 4-to-1 odds, 5-to-1 odds, 7-to-1 odds, right? When we do these very high probability plays, we start needing more occurrences in order to distinguish prices between them if we want to do that, which is to say that shouldn't be our goal, right? Our goal shouldn't be to try to find mispriced options. Our goal should be to try to find options that are appealing to us, either because we have directional assumptions on the underlying or because they represent an amount of risk that we want to get paid for taking on, right? Retail option trading is much more about finding how much risk is appropriate for you and then trying to put that on in a way and then diversifying, right? Rather than looking for sure things or fair or unfair pricings or arbitrages, right? Which is a very tempting thing, right? Especially now that everyone has these back tests available to them. It's very tempting to start looking for arbitrages because you can keep throwing things in your back tests and see stuff comes out and go, oh, look, this one is priced like it's an 85% winner, but in my back test, it's a 90% winner. So I should be buying it a lot. But that's not true, right? I think it's probably better to think to yourself that the 90% winners in your back test is just some variation because your back test is only over a couple hundred occurrences. And so there's some variability there. And the 85% winner that it's priced as is probably more trustworthy than that back test, right? Remember, the current market prices are going to be the forward-looking way to evaluate these things. And that's all I really wanted to say today is to note that you need a really large number of occurrences in order to try to say that any option is mispriced, and that more realistically, we should be trusting in the market prices and sort of allocating our risk in a manner that's appropriate for us, and looking at back tests for more things like our condition value at risk, right? What are our big losers look like? Is this generally a high probability trade or a low probability trade, right? We like things that are in the 68 to 85% probability more than we like things in the 40 to 50% probability range. And those are pretty easy to distinguish between. But we don't want to try to say something like pretty minute, like that an 83% versus an 80% trade, right? That's a pretty fine-toothed thing, and we don't want to come to false conclusions. Is my main thing for today. Yeah, that's it. How you doing, Tom?
I think that fits our, what we've always said basically is trust the prices and don't think you're really discovering something that's not there. Just make sure that what you're testing or what you're back testing or what you're, what you're trying to prove is proves concept, not edge type thing.
Yes, exactly. Right. Don't come out of the back tester and think you've found the edge and broken the market and you're an arbitrage master. That's really the point of today, is to say that it's very easy to like come up with something that's going to look a little bit too good or a little bit too bad, right? And if it looks a little bit too bad, then the other side's too good, and you should just be shorting it. But no, don't do that either, right? Really, the current market prices are trustworthy. The back tester is to give you more context and expectations and reasonable sort of scope and pricing, and how big you want to go into a trade can be helpful for the back testing. But don't come out of the back tester and think to yourself that you've found an arbitrage and have broken the market open, because that's a dangerous conclusion to reach. We've put this very powerful tool into people's hands, and I really am excited to have people using it. But they also, I want to be careful and remind everyone to use it responsibly.
You use it for good, not for evil.
Exactly. Well, right, it's the worst kind of evil. It's the evil that's only going to hurt yourself.
Self-inflicted evil.
Self-inflicted evil. Avoid self-inflicted evil. Oh, that should have been on my takeaway slides. All right. So backtested probabilities have substantial variability around real probabilities until we get out towards like 1,000 occurrences, which, if you're willing to be sort of more generalized, right? If you're looking at SPY strangles and Q strangles and IWM strangles, right? And you might be able to build up your backtest over, a couple of different underlyings and a long time span till you get out to about there. But if you don't get out to like 1,000 occurrences, really try to take all of the probability of profit percentages with a grain of salt. Right? Don't think that just because something has performed better than its market price would dictate in the past that it's mispriced, right? The current pricing is more likely correct. And that responsible retail trading is about getting paid for taking on acceptable levels of risk, not about looking for places where you know better than the market, right? So the backtester is a really nice tool for contextualizing your risk and figuring out how much you can put into a given position and how much you're really putting at risk, not for looking for this option is too cheap or too expensive. What a great opportunity.
I mean, what I can tell you from a lot of our own experience, and Tony is the same way, because Tony and I have both invested money throughout the years in different market-making firms, including our own firms back, and still, throughout the years, into prop firms that try to find mispriced options. It is, you're talking about finding a needle in a haystack.
You're talking about finding the Holy Grail, is what you're doing, and not just one time. It's not like you find.
Yeah, and even if you find something, I think what people don't understand is even if you found something that happened to have been mispriced, just for whatever reason, somebody who's getting out of something, whatever it is, you still can't do anything with that.
Right.
Like, you have to spread it off against something else and hope you can unwind it later to realize that profit. Like, it's not like you sell it at $5 and it's offered at $2 around the corner somewhere else, Yeah, if there is something that's mispriced, it's usually mispriced because there's way too much to buy or way too much to sell. But there's whatever you're going to hedge that with, it's also mispriced. Like, there's no edge anywhere. And so firms that do that kind of stuff, you're holding those positions forever. Like, you're not like getting out of it, locking in. There's no buy New York, sell Chicago, and lock up $2. That does not exist.
No, that's the fantasy. It's a dream, but we're better off living reality and doing the things we can do, which is allocate our risk, figure out how much buying power we want to commit to positions. Looking for good volatility environments. These sort of things are much more reliable than trying to think that you've cracked it all and have a wonderful winning position.
Agreed.
Right.
Thank you, Jacob. Appreciate your time. Hey, don't look now, Sad enough. The plunge protection team is coming on. Volatility is only up 10 cents, but that doesn't mean anything right now. We're going to take a quick 90-second break and come back. We got more Tasty Live with, oh joy, your friend and mine, Mr. Scott Sheridan, followed by Johnny Trades. We'll be back in 90 seconds. It was Tasty Live. Thank you.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand. which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
All right. Perfect. I would like to buy Park Place.
No,
What?
there is no Park Place in this game.
Yes, there is. I'm looking at it.
No,
I
this
will
is mine.
take
It's
it.
mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly. This is the mayor, and I am overturning everything, and
You're
I'm
in over
allowed
your
to buy.
head.
Excuse me?
You're in over your cute little head.
Don't
right.
patronize me.
You
This
don't
is a
come
board game.
down to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads. And what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue. A beautiful car worth 10 times more than your dog who is gone. Cut a deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, you're back, my friend. You know what that means. Time for a little bit more Tasty Live with this man. Tasty Trade World Headquarters, your friend of mine, the very popular, very handsome, very kind, Mr. Scott Sheridan. Tasty Trade World Headquarters from the Scott Sheridan Studios.
I appreciate it. I have to say, it's nice. It's a little crowded with 4 people, even though you're just virtual. But I like it.
I'm a big presence.
You are. The voice. I'm looking around. I'm like, where's that voice coming from?
Mm-hmm.
Right? Okay.
Correct.
So I had dinner at Francesca's on Chestnut last night.
Okay, never been there.
You couldn't get a table. And it's a huge restaurant. I'm like, what is going on a Tuesday night?
What's going on?
No idea.
Do they know who you are?
Did you tell them who you are?
Of course, the 6 did. I don't have to say anything. The 6 takes care of that. So when we walked in, they're like, "Oh, frequent guests of the Clark Street location."
Oh yeah,
right.
Okay. You can get in there now.
Of the Clark Street Sheridans.
Right.
You can get into the Clark Street
I
location.
thought it was fair, like fair at best.
Yeah.
But I could not.
Last time I went to Clark Street, I thought it was actually good, but the time before that, it wasn't even edible.
Yeah, mine was fair, but I think part of it was I ordered the wrong thing, so I accept responsibility. But I just couldn't believe how many people were in that restaurant last night. Like, well, I mean, jammed on a Tuesday night. Like, what did you do last night? Expired scallops?
Kind of semi-expired sushi.
Expired sushi. Now, I do have to say, full disclosure, I was at Costco over the weekend, and I did a double take on their sushi.
No, their sushi's great.
It looked good.
It's really good.
I couldn't bring myself to buy it, but it looked.
It's just too much. unless you have like
Costco,
No. They sell the
$12
little.
on the Sheridan recommendation.
No, they sell like a individual port, like it's a nice size portion.
It's five. It's
like 10 pieces, isn't it?
No. It's 20 pieces.
20?
They're 25 pieces.
I didn't think it was that big. It looked like it was about this
20 or 25 pieces.
Look good.
You can eat it easily in 1 or 2 settings.
Yeah. Okay.
Or you just leave it rot.
I thought it would be like the big like
No.
like party platter.
And it's actually this, but you got to get the spicy one because the other one, the spicy one kills all the bad flavors. So,
see, now that's being honest. See, if you get the spicy one, you can eat it for like a week.
Yeah. Oh yeah.
They have the fried scallions, which is good on top too. They give it to you there, so it's good. I would get that sushi.
All right, I'll try.
Because my critic,
the spicy is like when you get like a ceviche and it like sort of like cooks.
They just put some spicy mayo in it. But my biggest critic case, was like, I'm not eating Costco.
And she ate it. She said it was pretty good.
And then the first time she ate the whole thing.
So my guy from Kai, Dan, he opened a spot over here. I'll share it with you.
Ooh.
It looks great.
Where is it?
It's Washington, just east of the highway.
What's it called? I didn't go there.
I got to get the name. The Japanese names messed me up. It's I'll get you the name, but it looks great, and he's
how close are you with him? Can I get like a residency
whatever you need.
A residency? What do you mean?
Like I like to do
whatever you need.
Sushi date nights are nice.
Yeah, no problem.
Oh, and you want to be a big schmucker? Like you want to have him come?
Yeah, like give me like a spot in the back,
this is my spot.
Yeah, like a residency. Yeah.
Okay, it's called. I'm gonna spell it. Could you bring this up on the computer?
I can't. I gotta let the remote work.
Oh, Mr. Remote, can you bring this up? TEN.
What would you like to see?
TENGOKU. That's the first word. Second one is ABURIYA.
Oh, Tony can pronounce that.
It's a sister restaurant to a Michelin-starred Japanese.
There's no way he got that. By the way,
no freaking way.
He's still typing T. He's typing T.
John, you can do that, John. Producer of the stars.
Should I say it again?
Never been to that place.
I think it just opened. Is somebody listening?
Yeah.
No?
Yes.
No.
TENGOKU.
Okay.
Yeah, we heard you the first time.
Well, no, he didn't. ABUR.
I got it. Washington Boulevard. I got it.
There you go. This is a spot. Is it like fancy, or is it?
I mean, I don't know. I haven't been, so I can't tell you. We were going to go last night. We kind of a little bit of an outtrade.
Could be a good spot.
Could be.
Yeah.
He's really
a Michelin-starred. Chef.
Yeah.
The sister restaurant of a Michelin-starred chef, but they
scratching today, so it's cheaper to go to Japan.
See, there we
go.
Or
Mikey Butler is.
Mikey Butler's in Japan right now?
Yes.
I'm watching his Instagram.
He was just with
Elizabeth
and Hong.
All three were together.
Yeah.
Come on.
A little meeting of the minds in
Kyoto, really?
They were having a little tasty meeting out there.
Yeah.
Oh, that's amazing. I thought Hong was going to Vietnam. I didn't realize he was going to Japan.
It's like him.
Wait a minute. 5 pieces of sushi for $36.
Ooh, I'm gonna need employee discount. I'm gonna need.
Okay, sorry.
I'm gonna need some sort of. I thought I could roll with the Sheridan suggestion. This is. I don't have the yank.
$7 a piece.
Chef choice 9 pieces, For $84?
Oh, $10 a piece.
What am I
Tax and
looking? What am I
Oh,
made out of money?
that's Nobu prices.
Yeah.
Can I tell you, I went to Nobu.
And?
So bad.
Yeah, I ate it here.
Here.
I ate a Nobu, didn't get it at all. At all. It was so expensive.
Well, it's a scene. You pay for the scene.
It was just bad, but it wasn't a scene.
It was. I agree. It was not a
The
scene.
Nobu?
There were
What,
people.
did you go on like a Wednesday night or a Tuesday night? I mean, yeah, like Tuesday night, they open it for the old guys like you. You go to Nobu on a Friday or Saturday night, it's a scene.
It was a Saturday night, and I was on
Sold. I sell that. I think you.
I'm with you. I'm selling.
I don't think you.
I think.
Saturday.
I think
You don't go to Nobu on Saturday night.
Anyway, hey Tony.
You're on the roof on a Saturday night.
Yeah.
That's what I'm saying.
I'll take you if you want to go.
I'm telling you, it was Johnnyville.
Yeah, I'm not impressed. Anyway, I haven't been.
Oh, did you go to Soho afterwards?
I was not
Lord.
impressed with the food.
I will tell you, I had lunch the other day. Hands down, my favorite sandwich in Chicago, Green Street Meats, their pastrami sandwiches. It is really
Although I like their brisket better.
I think I like their brisket. I think their pastrami is the best. Although now I have to go to Katz's. I'm going to go to Katz's this weekend because I got to get the pastrami. I got to compare it.
Oh, there's no comparison.
You know what place is blowing up, D'Amato
Okay.
style?
What?
Rico Benny's.
Well, it should. It's great.
It's starting to get like the.
It's coming back.
No, it's still there, but it's
Yeah, but
starting to
Rico
get
Benny's-
like the
It should.
TikTok hype.
It should because it's great.
Yeah,
Rico Benny's-
I've never been. I gotta go.
Well, they
Oh, have you never been to Rico Benny's?
They used to have
You know, I don't know.
What's wrong with your parents?
Well, you know,
You have to
they
ask.
got remarried.
You have to ask.
Things happen.
What?
You have to ask what's wrong.
Yeah, I'm just saying.
That's it, Nikki. Tomorrow road trip, Rico Benny's.
So
All right,
do they
perfect.
still
We're
do?
gonna go.
Do
We're
they
gonna go
still
for
do the
lunch.
trucks?
Yeah, but you can't get the truck. You got to get
You gotta
it.
get it there.
They have a truck? Where?
They used to have food trucks. They come by the exchange and you go grab
Oh,
your.
really?
Go
Yeah.
grab your go grab
Don't be fooled by the chicken Vesuvio sandwich. Just go straight for the breaded steak.
I'm gonna get them both.
No,
I'm gonna try them both.
Don't, Tanya.
No,
Yeah.
don't waste my money.
Don't waste the calories. Don't waste the calories on the chicken Vesuvio one. It's good.
See, your dad says don't waste the money. Tom says don't waste the calories. See, it shows you where
No,
their
I
minds
say
are.
don't waste my money. My money.
I have a friend of the family that said the chicken Vesuvio is actually very, very good. So
It is good, but it's not in the same league. Like there's good, and then there's
he's a TikTok famous chef, so I'm gonna
There's
take
iconic.
his word for it that it's pretty good.
TikTok famous chef. What does that mean?
Omnivorous Adam.
What?
That's his TikTok handle. 400,000 people.
I don't know.
Who is this?
His name is Omnivorous Adam.
That's gonna be Bride Daddy's future son-in-law.
Son-in-law.
Oh my God.
Brian who's?
Bry.
Oh, the
Bride
Formerly
Daddy?
Bry. It's Barry now.
Wait, Brian?
your first cousin's getting married to this guy.
Yeah.
Oh my God.
Yeah.
I forgot. Hold on. Wait a minute. I forgot.
He did a whole video. He was there, did a whole video.
Oh my God.
What?
I forgot you were related.
I know.
Uncle Barry.
Not blood, though. Not to Barry. Not to Barry. I don't share any blood with Barry.
Yeah, but I mean,
You're his nephew.
I know, but we
no,
don't
but not
share
with
blood.
Barry
We're
because
not
it's the sister.
You're his nephew.
Yeah, you're the
I
nephew.
know, but I'm not of his same lineage.
You don't know what happened back.
That's true.
I'm just saying.
I know.
There was a lot of confusion.
No one happened to Barry back in the day.
The bodies were flying. You know.
I know.
I'm not.
Oof. All right, we better pull this one back.
I don't know whose kids who.
All right.
Yeah.
Okay. All right. We're
Yeah,
gonna.
well, that's the ultimate. They say you can always be sure about your mother. You're not sure about your father. You
right.
Could be
That's
anybody. Could be anybody. Never know.
Well, in your case,
Mother can't fake it.
in your case, we know because the two of you, fell from the same tree.
All right. Should we do some business?
Sure.
There we go. All right. Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you, number 15, DJT at an 84. For everybody else, NVIDIA at a 54. ENPH at a 55. Tesla at a 50. McDonald's at a 106. Boeing at a 67. MSTR at a 60. Amazon at a 66. TLT at a 78, GLD at a 77, Costco at a 35, AMD at a 71, a Meta at a 58, Starbucks at a 68, Netflix at a 15, and number 15 for Tom, DJT at an 84, rounding out the next 10, Microsoft at a 61, SLV at a 93, TXN at a 47, Apple at a 41, Coin at a 73, MU at a 41, Coke at a 54, PLTR at a 71, SMH at a 54, and T at a 44. By the way, in case you didn't see the news, Peloton just partnered up with Costco.
Vanetta already covered it this morning. You got to watch the show.
What's the stock?
She was out ahead of that.
Now?
The stock was 5. Where is it now?
5.
The Peloton's up like 60 cents to, at least it was
5,
pre-market.
550, 560.
Ooh, it's unchanged now at 567, but Costco is up $12 on that news.
See?
Wow.
Smart
and
move.
the idea that sushi at Costco might be edible.
It's better than edible.
Okay, fair enough. Are we doing Johnny Trades today?
We sure are.
That's why I'm here.
Well, I thought you were just here
course,
because
yeah,
we
no.
brought in the real talent.
Well, I
Then-
didn't want to step on your toes. You're the main act. I'm just like, the side piece once a week. You know?
You're called a fluffer.
The fluffer. I'm the Gumata once a week.
All right. I will exit stage left.
Thank you.
Enjoy.
Thank you for coming.
Let's play some music, John.
Johnny Trades. All right. You want to make some money? I'm going to help you. I'm going to help you with this one. I know the bonds are killing you. These will probably help you a little bit.
What?
Johnny Trades. I got a couple trades for you.
Okay.
I got two kind of somewhat boring, and then one that's a little spicy. First trade. Let's do it. Coinbase, you got a position? Skew off the charts here. I mean, they're 2x the price on the upside. Calls here. Doing an iron condor here, but if you want to play it, strangle, something like that. I did it in December.
Coinbase? I have lots of Coinbase positions on.
Figure. Volatility's high.
It's our biggest winner today.
Yeah.
We're a little bit long.
All right, perfect. Well, I'm doing the 160, 150 put spread, 290, 300 call spread. I did it at $3. I did it in December. $10 wide for $3. Yeah.
No, I
know. I'm Johnny. I'm a Johnny, though.
I got so many strangles on in there. I don't need any more.
Big mocker. I can't do the strangle.
Big mocker.
I know. I can't do them.
Okay.
All right.
What's next?
McDonald's, you got a position?
No.
You're ready to get some long delta here.
And stock's already rallied like $20.
Well, it's still down $20.
Yeah, well,
it's down like 30. It's rallied like 10 from the low.
No,
you don't like it?
It's
I like it.
It's up to 300, isn't it?
Yeah.
I mean, the stock is 300. It was 280 last night. And
it was 370 the day before, or 317 the day before.
And they're killing people left and right, dropping dead from eating cheeseburgers. One more guy drops from a cheeseburger, that stock will be 250. No,
it's a very low volatility underlying that has very high volatility relative to itself right
it's not. It's not a great trading vehicle either. Maybe it's better today, but it's not a great trading.
For the Johnnies out there, I bought the 300 strike call in December. Yeah. I sold the 310 in November. If you want to get spicy, do like a 300, 315, 330 crab trade. December, November. I'm speaking to like the traders out there.
Yeah, no, I don't
want to make a couple bucks. This is a pretty cheap way to make a couple bucks on a small move in McDonald's. But it's up $10.
I like it.
It's up $10 from the lows
last night. Yep.
I don't like it.
Up $10.
You know, like. I'm going to pass on McDonald's.
0 for 2.
What do you got? Third one.
It was just SPX.
Ugh. No, I'm already in it. I got lots.
$15 wide iron condor. Volatility is relatively high.
I'm locked and loaded already.
Into the end of the year. 0 for 3.
I'm locked.
All right, Johnnies. That was it for me. I'll see you guys next week.
I'm locked and loaded.
Welcome to my world, son.
It's a tough day.
No. That's not like it's a bad.
I want the bonds to go flat on the day just so you're a little nicer.
No, I'm always nice. I'm having a good day. In spite of the bonds, I'm having a good day. I need the because I'm a little short. But
yeah.
Let me see I'm plenty short.
All right.
So I'm fine. But I need the bonds to ride, but I haven't really done much in the bonds today. I'm more interested in the I'm about to load up on notes Oof. There you go.
You're gonna make Victor very mad tomorrow if you load up on notes today. Victor Jones is gonna come at you.
Why? He doesn't like the notes?
I would not do that until after Victor's segment.
Tomorrow? I gotta wait for after his segment when he's gonna try to scare me because he listened
The
to
sky
Paul.
is falling.
He listened to Paul Tudor Jones for 15 minutes? No.
Yep, the sky is falling.
No.
The sky is falling.
No. I'm gonna teach you guys how to
All
trade.
right.
There you go.
Don't
Good
listen.
job out of you, son.
Don't listen to nobody.
You went 0 for 3.
0 for 3. I failed. That is a fail. That's a fail.
Even the S&P down 28, NASDAQ down 130, Russell down 15, and the Dow down 288. Volatility down, up 30 cents. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. A piece.
From the floor of the SIBO.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
I'm on the road for work quite a bit. In fact, I've been on the road crisscrossing the country for much of the last 25 years. Yeah, I've logged a lot of miles and met a crazy number of people along the way. Strangely, I remember emails and trades better than names and faces. So when walking through another airport this past weekend, someone with a familiar face stopped me to say, "Hi." He said he was a longtime Tasty fan who met me years ago at a Traders Expo. Before I could say, "You look familiar," he told me his email address, and it was like we were old friends. I even remembered the last trade he emailed me about over 3 years ago. I'm not sure if it's a feature or a bug, but my brain is just wired differently. At Tasty, we have worked really hard to make finance fun and engaging for our clients and our employees. Much of our success has come from turning a generally perceived negative industry into a positive and challenging experience. So why does it seem that nowadays everyone is so angry and so negative? And it's not just in the financial world. People are angry everywhere, whether it's social media, politics, sports, news, entertainment, and even travel. People are mad about something. I always wonder why more people and more companies don't try to use more kindness, humor, and smarts. It's not that complicated. People think angry sells, but it really doesn't. Nasty is not a feature. What I've learned from years of traveling is that angry doesn't make you smart or rich. Angry just makes you into an insecure fool. Contrary to the mistaken old adage, nice people do finish first, and that is our lifeblood at Tasty.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking, the beautiful brunette. To the left of me is Jenny Andrews, and it's our favorite day of the week, Jenny.
Oh, favorite day of the week. We are live from the SIBO and happy to be back. Last week we had a week off. They were busy on the road. Lots of events going on for the SIBO. And we're back. We're back Wednesday this week. Next week, we'll be here on Tuesday.
Yeah, we like to switch it up, so keeping everybody on their toes and what day of the week we're going to be here, but next week we will be Tuesday. But Jenny, today we have a very, 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 very special thing because we have a Market Measures that is sponsored by the SIBO.
I'm excited. Market Measures sponsored by the SIBO. Jacob, our genius from University of Chicago, it made this study for us, and it is really good. Really
Okay,
good.
so, I mean, I should bring in the intro that I gave to Jacob for Geeks on Parade because he is our original geek. He's the reason for Geeks on the Parade. Do you remember when he first came to the show, Sneak and the Geek?
Yes.
That's how we met Jacob. Sneak and the Geek. He's the OG geek at Tasty.
Any other information you have on Jacob, since you did intro him at one of the geek events?
So I don't have my note. You know what? I'll pull up my notes.
Pull it up.
I'm gonna see if I got it.
For those of you who don't know, Geeks on Parade happens once a year. I believe they're still having it once a year, where they bring the smartest people together to give talks. I was lucky enough to attend one of them, and that one was at IAT, at one of their beautiful new buildings. How many geeks have you been to? Maybe I've been to 2 geeks. I don't know.
I intro them.
The funniest
So
thing,
I go to all of them because I'm the MC in between on the geeks.
The funniest, absolute funniest was there is a geek email going around with all the, and I use the word geek lovingly, all the smartest people on the email, and Liz included in that email. And someone on the email, I think it was Dr. Jim, said, Liz, what are you doing on the geek?
And then I said, settle down, Dr. Jim. I'm just the MC. He's like, okay, that makes a lot more sense.
That was funny. Okay, did you find it?
I did. Do you want the intro?
I'd love to hear it.
Okay. Here we
Love
go.
to hear it.
I'm going to read it because I don't have it memorized yet, okay? Jacob Perlman, the original. He's the OG geek at Tasty Live, and he's the godfather of this tour and the reason behind the name. I first met Jacob 13 years ago when he was on a little show called Sneak and the Geek. The premise of the show was that you were asked questions, and if you wanted to know the answer to anything, and I mean anything, we would turn Jacob around in his chair, and he would answer it. That's how smart he is. I once heard this analogy, and I thought it was perfect for Jacob. He's teaching Tasty Live Nation to be grand masters at chess and at a high level, while the rest of the world is still learning checkers. There's more. He's raising us all up to his level. And a very random fact about this genius is that he never misses a Burning Man. Ladies and gentlemen, you're going to have to watch this segment 5 times before it sinks in. Jacob Perlman discussing, and then I won't give you his presentation, but that was my intro.
All right, Jacob. So we are really thrilled to be getting SPX pieces from Jacob every week now.
Yep.
I had to fight Tom for them.
She arm wrestled him yesterday.
I had to fight Tom to get these pieces. We have them. Very, very exciting to be getting Jacob's pieces every week.
Yes.
So we have an exciting SPX study, brand new. That's coming up.
We do. So I'm going to give a run of show just so everybody's well aware of what's happening because it is a long hour. So if you need to go grab a tea or do whatever. We've got, number 1, we're going to go through the SPX study. And that's very, very good. Then we're going to put on the Jajun trade
at 10:30.
At 10:30 because yesterday it filled after the show. And we'll take a look at that. And then it is a wacky Wednesday. So we've got What's Your Assumption and a handful of major earnings.
It's a really busy day. And I have some exciting news for you, Liz. Can we jump,
Set me up with it.
Can we jump into the platform? Can we jump into the platform?
All right, let's take a look.
Here we are. McDonald's.
E. coli. Was it E. coli?
Okay, we have been holding on to a bearish McDonald's position for a long time. We put this bearish diagonal on in McDonald's, I think September 20th, so over a month. I say long time, I guess a month isn't too long. So
I didn't know we had a McDonald's position on still.
I knew we had a bearish McDonald's diagonal on. I wasn't sure if it all rolled off. I heard the news, saw McDonald's was down $15, and I thought we better still be in that trade.
I can't believe we still have it. So what do we have in McDonald's, Jenny, and how is it saving our lives today?
All right. Well, our long here has made a roaring comeback, is up $618 today, made a roaring comeback, and I know what this says, it's net down, but it was a diagonal coupled with another trade, so finally this diagonal has come back.
Okay, that's a golden nugget miracle, and that is luck. That is luck at its finest, and I will take it. Close that trade.
No, I don't know. I don't know. I'm not sure if I'm going to close it because we have the November.
Oh, it's in November.
Yes, and it was a bearish trade in McDonald's. So if we want to keep it going, we could do one of two things. So we're up on this diagonal. We could turn it into a put spread and take in a decent credit.
Okay, what would we sell? So we're long the 300 put in November with 23 days. What about the 285?
I was going to say 285, 290. We could take in 465 and have this put spread on.
Do it.
We could. Or, I guess there is a lot of extrinsic value in our long. We could sell it out and just do something else. We could sell it out, and if we wanted to keep a bearish trade going, give ourselves more room, just put on a call spread.
I mean, heck, I don't care if you just sell the 297 or 295. Get a lot of extrinsic value for it. We've got a little bit more profit potential. You get $5 more in profit potential.
Or we could go into shorter term, do a 9-day, 297. Hold on.
Do it.
Please. 9-day 297 gives us 610, and if it keeps going down, great.
Love it.
Right?
Yeah. 9 days, 1 day before my birthday. I'm just letting everybody know that.
Okay. Liz's birthday is right around the corner, November 2nd.
In 10 days, because if November 1st is 9 days, November 2nd is 10 days away.
What are your plans for your birthday?
Oh, I'm very excited.
I'd love
I'm going to high school plays all weekend.
Oh, I knew that. Otherwise, I'm still shopping for Indianapolis Taylor Swift tickets. I'm watching StubHub every day, every hour. I might be there on your birthday.
I hope you are. I hate to rub it in. I've been there 5 times.
I've been there 0 times.
You need to see it once.
I know, it's just...
You need to see it once. Okay, well, let's get to this, because we've got a lot of stuff today. So,
all right,
Jenny,
let's keep the dream alive.
I like it.
I'm going to sell the 9-day 297 for 615, and then hope to sell another week, and another week, and another week.
Because we didn't hold it for this long just to scratch it.
No, it's a winner, but I didn't hold it for this long just to make a couple $100.
Very little winner, but yes.
Yeah.
It's $75 or something.
Well, I don't know. What was...
Oh, I looked.
I can look back. I can look back to see what we paid. All right, going back in
That's
time.
okay. I mean, it's okay. Our year-to-date P&L in McDonald's is $75.
We paid $7 for this, and now it's worth... $8.27. So $130 winner. Hey, you were really... 70 wasn't...
It was 70 when I looked.
70.
It was 70 when I looked before the show.
I didn't hold it for a month to make $130. Now we're keeping the dream alive with that diagonal. Spoo's down 31.
More profit potential in it. Yes, Spoo's are down 31. So let's, it is now 10:07. I love that I've got a clock with a second hand right there too, Jenny. So let's jump right into the study, don't you think?
Sure.
Because we have some stuff to manage. We want to get through this study, then we'll manage everything after we put on the Jajun trade.
Okay, jumping into the study. This is a market measures sponsored by the SIBO.
Yes, it is. Market measure sponsored by the SIBO.
Okay.
I need you to read it first.
Recovery rates for 0 DTE strangles. Everyone's trading the 0 DTEs. This is a great study on if they go against you, what's the chance of it recovering? How long should you hold this on? When should you cry uncle and just close the trade?
And honestly, he digs pretty deep into it. So let's get into the first slide. I like this. Okay. The 0 DTE option markets are some of the fastest and most liquid available for retail option traders. So far, our research has been encouraging for the approaches based on selling premium and capturing profits aggressively.
But, Liz, how should we handle the losers?
I don't know yet.
When a 0 DTE short premium position is looking bad, what have been the costs and benefits of holding on and hoping for improvement versus closing out and accepting defeat? And you know, I'll happily accept defeat. I am not against closing losers.
No, we're not. We call Uncle pretty easy.
Yeah.
I mean, if my assumption changes, we will. But when it's neutral like this, it's pretty interesting. And it's 0 DTE. It's 0 DTE, so the risk is off at the end of the day.
At the end of the day, this trade has 1 day.
And we're using SPX. We're using these people behind us. Okay. The study is using 18 months of data in SPX 0 DTE options collected every 10 minutes. Considered selling 0 DTE strangles at market open and using 35, 25, and 15 delta strikes. We checked in with these positions at 10 a.m., so right about now, noon, and 2 p.m., all Central Times.
I'm glad he clarified that, since we had such a problem with one of them not knowing it was Eastern Time or Central.
It was the Jajun trade.
We isolated those trades that were down, and those down by at least 10% or 25% of initial credit. Examined how those losing trades performed between when they were inspected and the close. Was it better to exit a loser or give it a chance to turn around? All trades were assumed to exercise at mid-price. Now this is looking at at strangles. Many of us do iron condors. I think you can
extrapolate that. You can take some liberties and say, if I'm not putting all this capital at use, it's going to be look
And if
pretty
you
similar.
want to look and compare it apples to apples, when you're selling your iron condor instead of the strangle, if your deltas are 25 or 30, or if 35, 25, 15, you can just look at your shorts and monitor those to really follow this study instead of adding on your longs.
Well, the zero DTEs are pretty interesting because you can define your risk because it's gone after the day.
Right.
So you'll notice it's easy to get an iron. You can create an iron condor for little.
Sure.
Yeah.
We both put iron condors on this morning.
Yep. Yes, we did.
Okay.
Okay.
Recovery rates for zero DTEs.
Now this is, just the top corner. We're going to go through these slides. There's a lot of slides and there's a lot of information. This will all be posted after the fact.
I mean, 3 of 12.
Yeah.
So we're going to...
And Jacob, I did have to read this 5 times before I understood exactly what you were saying. So we're going to give our interpretation as well.
I love Jacob. Okay, go ahead.
So this one is 10 a.m. So we're looking at these strangles at 10 a.m. And you've got greater than 25% initial credit.
So if you sold the strangle for $10, 25% would be $12.50.
Yeah, $12.50. Yeah. So you're looking at a 25% loss.
Loss.
Yes. And so if it's 10 o'clock and you look at this, you can see that if you leave it for the rest of the day and you've got 35, 25, and 15 delta strangles, your P&L actually gets better. And your improvement rate goes up,
right.
61, 55, and 66.
We see no negative P&Ls, no problems. So 10 a.m., 25% loss, I wouldn't be doing anything.
You sit on it. You sit on it, Johnny.
Johnny. Okay, now we're looking at greater than 10% initial credit. So you still see negative numbers.
But in that example, it would be, if you're selling it for $10, it's now worth $11. Yes.
$11.
Yes.
I wouldn't sweat that.
No.
Would you?
No.
10 a.m., lie down $100.
10 a.m., drink your coffee, watch our show, and leave it.
Yeah, I wouldn't worry about that.
Yeah.
Okay. 10 a.m., losers any amount. Now...
This is where it starts to get a little dicey.
Right, because you could have a really big loss.
Yeah.
And that's where you could have, and it could be, this is only 18 months of data, so it could be one big loss that's skewing I don't want to say skewing the results, but you could have one big loss in there that's throwing everything off.
Correct.
And there are people, we know plenty of people who will either set up a stop loss for these, or in their mind they're watching it and they're thinking, if it gets to a certain point, I'm going to close this. And we've heard a lot of people say 4 times loss, 3 times loss, 4 times loss, and that I won't put in a stop loss, but I will watch it, and I might.
And those are bigger numbers than what we were looking at. We were looking at 10% and 25%.
Because these are strangles.
They're strangles, yeah.
So there are people who will, in their mind, I would rather in my mind have a stop loss than have that stop loss order it.
Yes. Oh, I agree. Especially because I don't know how to put them in.
All right, Liz.
But that's when you'll see when everything kind of shifted, right? So then, what number are you on?
So for 10 a.m., I would say seeing a loss at 10 a.m., I'm not going to worry about it too much, unless in my mind I have said, okay, if it gets to 4 times loss, I'm closing it. Now this is just looking at 25% loss or 10% loss. I wouldn't worry too much at 10 a.m.
No, I wouldn't at 10. But you'll notice, and we're going to kind of go through these because he gives you all the information, and please feel free to dive deep down. Mm-hmm. But then you see the shift. So at noon. And we're going to go at noon, 25% initial credit. You can see that the P&L change, your improvement is slight, but at the end of the day, your P&L change is negative.
Right, so this is saying you have greater than 25% loss, and if you hold it till the end of the day, the average P&L is negative.
Yeah.
So my takeaway from this, if I have greater than 25% loss at noon, I'm going to close the trade. That's my takeaway from
Correct.
this slide.
And keep going, because you'll see it kind of builds on each other then. So number 7.
Even with a 10%.
What number are you
Greater 10, I'm in slide 7.
7, yes. Yes.
So even with just a greater than 10% initial credit loss, at the end of the day, the average P&L is losers.
So you know what I'm learning from this? If you're not out by noon, get out.
Yeah, if you put this on the open and you're not out by noon, get out of it.
Get out of it. Yeah. And I'm going to look at that. I'm going to extrapolate this and use the NASDAQ that I put on at 8:30, and I'm going to get out of it by noon. No matter what is happening.
Right? That's not a bad...
Well, let's finish. We'll get to the takeaways, too.
Okay, so any loss at noon, average P&L, all negative, improvement, less than 50%. So Thanks, Jacob. I love when people give us the mechanics. Here's my mechanic taken from all this material. At noon, like you said,
close it.
Close it.
And
It's either a winner or I'm out.
And you can keep going through because then it goes to the 2 p.m.s and it gets even worse. So if you think it's going to come back at noon, I think when you're selling on the open like that, it should be managed because it's one day. When you think about it, that's like your 21 days till expiration almost. If you're taking a day, and say you usually put them on at 45 days and you close it at 21 days till expiration, that's probably noon.
Right, that's probably noon. Now, we do know people who say, I don't close these. I don't want the fees of closing these. I want to just leave them. I'm putting them on. I'm leaving them till expiration. They cash settle. And that's fine. And this study's not looking at winners. This study isn't looking at, what if it's a winner at noon? Leave it for more of a winner.
No.
What if it's a winner at 2? Leave it for more. It's not looking at winners. It's looking at losers.
It's looking at losers. So should we jump to...
I will. So 2 p.m., there's no good scenario at 2 p.m. if you're still losing. None. I just flipped through these charts.
We regret to inform you that if you're losing at 2 p.m.
It's not looking good.
It's not looking good.
It's not looking like it's going to turn around.
But what I love what he did, Jenny, with this study is, and we'll get to those in 1 second, but what he did with this study is, okay, talked about, I like giving the 3 different times. And you notice it's not like, oh, if you can withstand it at noon, it'll come back at 2 o'clock. The results were, at 10 o'clock, you're on easy street. By high noon,
right, and I didn't mean to blow through all those charts because Jacob put a lot of time and effort into this study. But Tom and Tony are going to take a deeper dive into this tomorrow.
Yeah, they are. No, and I love it. And I love that it's all up, and we super appreciate all this stuff.
Yes. So takeaways: just as aggressively capturing winners has generally been the key to success in zero DTEs, it has also not paid to be too patient with your losers.
It's true. One more?
Sure.
At 50%.
Trades that were down early in the day recovered reasonably well, but losses at noon or later were better off locked in than waiting and hoping they would improve. Effects were reasonably consistent across the strikes, and a lot of people have a hard time taking a loss, closing trade for a loss. It's something to get over, I think.
Yeah, but it gets easier.
Yeah, after you've taken 100 losses, it doesn't matter anymore.
After you take 3,000, it's fine. Okay, but rapid management of zero DTE positions also has an advantage of freeing up buying power, meaning that if you're losing, redeploy your buying power somewhere else.
Especially if you have a naked strangle in SPX.
Yeah, no kidding. Right. Zero DTE option markets are incredibly fast-paced, as you can see behind us, and if you want to participate in them, be ready to stay attentive and active throughout the day.
Love it. Love it, Jacob. Great piece. Thank you so much for putting this together for us. Again, Tom and Tony will be taking a deeper dive into this tomorrow. So
Jenny arm wrestled Tom. We won. We get to study on Wednesdays. Everything's right with the world.
Booze down 42.
Woo! Close out watertight doors.
It's 10:17. What if you put this on? So this morning's booze were down about 22 on the open. So if you put something on an SPX in the morning, I remember my strikes. You remember your strike. Let's take a look at how that's faring right now.
The SPOOs are at 58.50. I can actually see those markets better than I can see this.
I want to say your short strike was 5,800, which is trading about 580 now, which would be at least a 2 times loss.
At least a 2 times loss. Now, mine I try to wait till a 4 times loss, but I'd be sweating it.
My strike was I took in a little less credit. I was at the 57.90 strike, and maybe right around 2 times loss. Right now.
Yeah.
But we would still be holding, and it's only 10:18. We should
hold
till noon.
So I love having the timing, and Jacob, thank you very much for this, but I love having the timing of things being timed during our show.
Yeah, I do love it.
I know.
I do love it. Now, I want to look, just while we're here in NSPX, we were talking about this at the lunch table yesterday. I needed about 100 SPOO points down. We need about 100 SPOO points down before October 31st.
You got 44?
Got 44 today. We had maybe 6 yesterday. Let's take a look at our October 31st trade that we have been in. We have been in this since we put it on a Wednesday at the SIBO 35 days ago, the day they lowered interest rates.
We are only the short call spread is the 57.40, 57.50.
We are
under 57.40 is we do not lose any money.
60 points away. We are 60 points away from it getting back into the middle of that call spread.
That's a
high five.
That's a non-loss though. What we need to make money is 56.15.
But you know what? If that call spread ends up out of the money, I'll be happy as a clam.
It's trading right now for 7.30. The entire package.
Our put spread was right around the 56. Oh, we still have it here. Here it is.
Yeah.
56.25. So that option is still. I mean, that spread's not worth much.
That spread's worth nothing.
But the individual option's worth $7. So there's still value in it. I know it has a 10 delta. There's a low probability of it getting down to that. But I'll just be happy if that call spread ends up out of the money.
Well, the other thing, too, is like I said, it's trading for $7. We still have $300 left to lose here. 8 days. What could possibly go wrong?
There's the call spread trading for $7?
The whole package is trading for $7.10.
Booze down 44. We are on our way. Tick by tick, we're gonna be counting down, looking for about 60 ticks between now and the 31st. Now and Halloween. What are we gonna do? What kind of celebration are we gonna have? If we are down below this call spread,
You're not gonna.
October
You know what?
31st,
You know what this reminds me of? When my son was little and he wouldn't eat anything, and then he ate a donut, and my in-laws are like, "You did it! You ate!" I was like, "Do not praise him for eating a donut."
You're not gonna praise me if we get down to the lower call spread?
No, because we didn't make any money. We held this on
Hey, we didn't
for
lose any money.
$35 to scratch a trade.
Well, this trade, a Delta Buster, you buy a put spread. We bought a $10 put spread. And
I'll tell you where to
we paid for
celebrate.
it with the $10 call spread, $1,000 in risk. We're very darn close to that $1,000.
I'll tell you when I will celebrate, and I will get you a confetti cannon if you can get it under 56.15.
If we're under 56.15, I'm gonna bring the cash cannon in, and I'm gonna shoot.
And I would just like to
say,
say, I'm going to state for the record. Hold on. I'm going to state for the record why Jenny is so excited. She's talking her book. She sold out the lawn.
Don't even talk. Don't worry about my position. Just worry about our.
That's
show
why
account.
she's so excited.
No, So we do have a cash cannon. Who bought us cash cannons? Tony from Mexico.
Tony from Mexico.
We have cash cannons. You load the bills in. It's battery powered. It shoots the bills all over the place.
We
brought them on the road.
I think they got the concept of a cash cannon.
We brought them on the road, brought them on tour, tried to shoot money into the audience, and only the first 2 rows got it.
One person in the first 2 rows got shot cash at. It was pretty funny.
But that was fun.
All right,
That was
so
fun.
it was super fun. Okay, let's keep moving forward only because I want to keep an eye on this. We've got about 8 minutes left. Now,
Okay.
Jenny.
And not 8 minutes left in the show.
Oh, 8 minutes till the
Yeah,
Jajun
complete.
trade. I got it up. 8 minutes until the Jajun trade. We got to keep the show moving. So, is there anything else we want to manage before we get into Jajun? Boeing had earnings.
Boeing had earnings, and Boeing's been all over the place. It was up an hour ago. Now it's down 550. We are short the 45 put. Now we have nothing to do but sit on that put until we want to roll it out to December.
So it opened at 160. Its high was 161.47, and it's now 154.
I know.
What the heck?
Market's down.
Yeah.
So what are we going to do? We have to leave it. There's nothing to do but leave that.
I mean, we just have a put. We could roll it out in time.
I will. So this morning, there are quite a few things that were up and are not anymore. OKLO this morning was up to 22.40. And now it's down.
What's happening with nuclear? Call your brother.
I better hope that Save didn't turn around, because Save up 80 cents on news that
Frontier
might be interested in helping.
They're reorganizing their debt, and so Frontier said, "Ooh, I'll reorganize with you. Maybe I'll take some of it on."
And look at these little jumps Spirit has had.
I mean, that's a huge move for a $2 product.
Hey, Spirit was $1.40 last.
Yeah, well, that's what I'm saying. Percentage-wise, what is it up? 45% in one day?
It's almost up 100% since last week.
Yeah.
From
True.
$1.40 to $2.90.
Yeah.
Sure.
For sure.
What do we want to do with our Spirit position?
Well, we're just long shares. What are you going to do?
Yeah, we'll just leave it. We just leave our shares.
Yeah, there's nothing you
want to
can
sell
do.
any calls against it?
No. Because what are you going to get for the calls? Let's look.
You can probably get something now that is in play.
44 cents on the
23
3.
calls. Yeah. 44. Look at this. Hey, 87 cents on a strangle. You can get the 2.5, 3 strangle, 87 cents. Let's sell 1 strangle against. We have 200 shares. Let's sell 1 strangle.
Are you the 2.5, 3?
Yeah.
You can get $1.50 if you go to Nove.
I'm in Nove.
I'm sorry, December.
That's a long time.
It's $1.50. We have 200 shares. Sell one of them.
I mean, that's crazy. $1.50.
Yeah. Sell a strangle around 100 shares, not 2.
Do you want 90 cents in Nove or $1.50 in D's?
I kind of want. I don't care. I'm good with either. It's dealer's choice. You get to pick. Honestly, those are great choices.
I we could get $1.50 in D's, I guess. Sell a strangle in D's, so we're getting 87. And think about that. If I'm not in save and I'm looking at 2.5 foot, 87 cents for the 2.5 foot takes your break even right back down to 1.5.
I mean, it could go out of business, Jenny. That's what these markets are
Well,
saying.
I think the news is all breaking in. Well, they had until like X amount of time to reorganize their
Till
debt.
December.
We better stick with Nove.
I know it is.
We better stick with Nove.
It was till December.
Yeah.
That's why there's so much juice in it.
So we're going to sell the 2.5 foot and the 3 call in Nove and take in 87 cents, which is really, you talk about chipping away at your cost basis. Heck, we're almost going to own Spirit Airlines for free.
Like your enthusiasm.
Okay.
It is true.
Anything else jumping out at us?
Okay, so
SLV. I mean, SLV is a bigger winner for us today.
SLV.
Today.
Yeah, because SLV is down today. We have a bearish position on in there. What do we have? We have the 1x3.
We have both sides. We have a ratio spread to the downside and to the upside.
We have a 1x3 to the downside that's making money today.
No, I think we took off. We had a ratio spread on both sides. We took off the downside. So
No, we have the 30-32 calls. That's the 1x3.
And then we have a short call spread, 28-31. I think we had other sides, and when SLV had run up, we'd taken off all the puts.
So, yeah, no, I think we just have bearish in.
Okay.
That's what I'm saying. And the one that's winning today is the 1x3 in the 37-day.
Sure. Got it. I think we just leave all of that. We'll leave all of that.
No, because we're not up on it yet. It's just kind of where it was when we put it on.
Now, we're getting a slight pullback in SLV, which, if I were listening correctly to Tim Knight last night, that's what he's looking for. Slight pullback to get back in. To get back in.
I know.
Slight pullback to get back in.
I know.
So I'm actually going to, I want to pop out the side and see what we bought those puts back for. Because you can see
let me see. I'll go to
what
the
was part of that other spread. We took in $1.30. And this was like a big lizard. Okay, it's still worth $1.04.
It's fine. Yeah, we're going to leave
all
that.
Do you see anything in our account that you think needs management?
No, I think we're actually doing pretty good. Do you want to do me a favor, though? So in SPX, can you pop out the side? I want to show
yes.
I want to show the Jajun trade from yesterday. So at about 10:35 yesterday, we put on an at-the-money, wrapped around the at-the-money debit spread, an SPX 0 DTE, and we put a GTC order in to close it for $50. Now, we really love screaming Jajun's name during our show. It was not during our show.
1201. Here you can see. We sold this for $260 at 10:33. Bought it back for we bought it for $260. It was the debit spread.
Yeah,
sold it for $310 at 1201. So
little over an hour and a half. Under an hour and a half.
But after our show, so it never got pushed out on the follow page.
Yeah, we'll push it out after the show today.
Today?
I'll push it out today. Right?
I guess so.
It's in there. Yeah.
Sure.
Yeah, I'll do that right now.
Okay, so we're 3 minutes away. Should we put it in?
Well, we can take a look at it. I think it's wrapped around, so it's fine because we do have all the earnings, tweets, and what's your assumption to get to.
So the Jajun trade, which he's so sweet, and we were teamsing with him. Is that what you were saying?
Teamsing? I guess.
We were in a little chat with him on Teams yesterday.
There you go. I think that sounds better.
He's
a chat
away
on
at
Teams.
school, but from his study, we came up with throw this $5 wide on in SPX for about $250, $260, and just try to take $50 out of it.
And honestly, this is our interpretation of a study that said there's more 5-minute bars after 10 o'clock, but we weren't sure what time, if it was Eastern or Center, after 10 o'clock than there are
bullish.
before.
You mean bullish periods. More
5-minute
bullish
bars.
periods in the afternoon. In the morning, more bearish 5-minute periods.
That's why we're saying, and it says we're just scalping it. So if we put in this wrapped around the at-the-money debit spread, which you have pulled up, you're trading, you're going to spend $275, and if we get a little bit of a pop in SPX.
I think it just popped down to like $260. So $270.
Oh, yeah, you got filled.
$270, we bought it. I'm going to put in a GTC right now. Well, all we did was buy a $5 wide SPX call spread for half the width of the spread.
Yeah.
And I'm going to put in a GTC to close that for $310. Or what did we? No, $320.
Yeah, you got to go $320 for $50.
$320. So we're just trying to take $50 out of it. We've been on a roll. Been on a roll with these. Can we have a loser? Sure. Have we had a loser? Yes.
Okay, so let's take a guess. Spoos are down 46.50 right now. What do we need in order to get filled on that? I think we need to be down
like 39.
42? 40?
Yeah, 40.
We'll keep an eye on that. What we need, just a pop up. We need to have both if both of those things are in the money at all, like if we can get that 5810 in the money,
A little bit of a pop-up.
He gone.
And if you'll know it if we get filled, we'll be chanting Jajun's name.
Jajun.
All right, Liz, what's next on the list? Oh, Twitter?
Yes, so we have Twitter, we have What's Your Assumption, and we have a lot of earnings. We only have a couple earnings in What's Your Assumption, though. There's only one.
Okay, so we are taking live tweets. Send us a tweet and include the hashtag LACJNY. Love the SIBO, and they know how to do it. Here, live from the SIBO, hashtag LACJNY. They have the hashtag on there. We are looking at every tweet that has the hashtag LACJNY. We have, so you mentioned lots of earnings. Bob on Fire sent in today's earnings, and there are a lot of big ones. Tesla.
They're getting angry back there.
Yeah. It's rough back there today.
They're getting angry back there.
Tesla, IBM. I don't know what CLS is. Newmont Mining? Is NEM Newmont Mining?
Newmont Mining.
Now, TMUS, LBF, Las Vegas Sands, American Airlines, UPS, Southwest Airlines. Lots of earnings, a busy day.
They're in fuego. Okay, we're still down 46.
There's only a 96. We're going to talk about most active.
Way to make
today.
it exciting, though.
Yeah, we're going to talk about most active today, and there are mostly, I think, today's options. Most active, what I saw, today's options.
So our 0DTEs.
Yes.
Yes. I mean, honestly, those I think they're very, very active. Yeah. Now, I do think there is some other things that are trading, and a lot of times they're rolls or big things like that, but there's been some activity.
Okay.
Now, of these, what do we have a position in? I think, do we have airlines? Do we have AAL or LUV?
No, I don't think we have any airlines right now. I don't think we have a Tesla.
I don't think we have anything.
No, I don't think we have Tesla.
LRCX, CLS, Newmont Mining. I think we're good.
I don't think we have any of these. So there are a lot of earnings to look at. Before we get into earnings, I did want to show Hella Vestella because I heard today on the news, Vanetta talking about the Taylor Swift cruise.
It left. It's already out. You can't get on. I mean, they're on the high seas right now.
So fun.
All the Swifties are pulling into Nassau here in a couple days.
Because they were at the Hearst concert in Miami, got on the ship in Miami, on their Taylor Swift cruise. But the breaking news was Vanetta has never, ever been on a cruise.
What?
So and Hella Stella says now she's on a mission to get Vanetta on a cruise.
She wanted to do like an adventurous cruise where you can go, because Vanetta's very adventurous.
Okay, Stella, I'm with you, and I don't ever turn down a cruise. I will happily go on a cruise if we get Vanetta on a cruise.
And then Tom and Tony were going crazy about who gets on a cruise, who would ever do that. Fun people.
Yeah. So we will go. If we can get Vanetta on a cruise, I'm in.
People that have fun. Yes.
Yeah. Oh, Frank. Here's Frank the Great. He's out there. If you're on YouTube, Frank's on YouTube. If you post something on YouTube, Frank will share it with us on Twitter. Frank, we just talked to your nephew a few minutes before the show.
Frank, he says he'll never get on a cruise. I just saw that. Don't be like them. Frank's fun.
Who said that? Frank said that?
But that being said, okay, your nephew is here. He's off tomorrow. Talk him into coming in the studios. Frank's going to be in studios, in the Tasty Live studios tomorrow. We unfortunately will not be there, though.
I also wanted to show Uncle B2. Okay, now, number one, Reacher got a lot of love. Everyone loves the series. There are only 2 series. When I thought I was on season 3, I was really on season 2.
She's been lying to me for 2 years, not 3.
So, Uncle B2, I have to tell you, my husband loved this last night. Talks about Reacher, action-packed show about industrial electronic equipment devices like spectrum analyzers, oscilloscopes, and the exciting edge of your seat episode on signal generators. So funny. He was showing all of his little buddies last night.
So, Punished Pixel said this. The books are better than the movies. So I think I'm going to I'll read the books first.
If you want to wait
The books are better than the series. I like books. I like to walk in.
I need a new book.
Reacher, you love it so much.
I've already watched it. All right, what do we have going on today? What earnings do you want to get into?
So let's do What's Your Assumption, then we'll go backwards into earnings, because there's nothing that I'm dying to get into. I know there was one in there.
I'm going to avert your eyes. I'm going to scroll really fast, and I'm going to go top down on Twitter. So I scrolled. I didn't want to make anyone dizzy from all that scrolling.
Okay.
All right, MKSA, for the 10:30 a.m. trade, if I use one ES, then there won't be a day trade issue, correct?
I don't know. The pattern day trading rule, be careful, Call your brokerage firm. Get someone who knows the answer to this, because it's not us.
If you are under 25,000 in your account and you can't get in and out of more than X amount of trades in a certain period of time, call the brokerage firm to find that out.
Yeah.
How I have heard of people
Getting around it?
creating
the spread. You sell the other option.
Creating a butterfly. So how we put on that call spread, they will sell the next call spread, and instead of taking that off, turn it into a butterfly for a credit.
Yes.
So if you pay $2.50 for one $5 wide SPX spread, but then you sell the next spread for more than $2.50, then you've locked in a credit and have on a butterfly.
And then everything cash settles.
But
no,
that's
an SPX.
That's an SPX, and that's just one way we've heard of people, trading these who have the handcuffs of that pattern day trading world.
But I would 100% call people that know what they're talking about. Call the brokerage firm. They will answer it lickety split for you.
I don't ever want to leave you and leave the show, but I think I think one day my calling is going to be to go.
I thought you meant right now. I was like, where are you going?
I think I want to
I'll grab Anita. If you get up and leave, I'll grab Anita. She's right there.
Okay, she'll take over. I really think I do want to be a lobbyist and fight for these causes.
For the pattern day trading? I was like, what is she lobbying for? Hey, I'll get up there with you. I'll go straight to Capitol Hill.
Let's go. They don't know what's going to hit them when we show up.
Yeah, that's right.
All right. What's your assumption?
Okay.
Do we get our theme music?
We can't hear it. Maybe they're playing it right now. Okay, what's your assumption? First up is EEM neutral, 45 days. And this is Dave from New York.
Okay.
EEM appears to be closely mirroring the performance of the Chinese ETF FXI. Given that EEM has a less direct exposure to Chinese stocks, it might be a better choice. What do you think?
What do we think? Let's take a look at EEM.
So EEM, 45 days neutral. We haven't been in EEM in a while.
EEM, 45 days. So we have November with 23 days or December with 58 days. This would be I think our first December trade.
Oh, is it really? Are we at Christmas already?
It's the end of the year. We're going to be trading December and the year is over. Are you happy with the way things turned out in 2024?
I had a great year.
Yeah.
I did.
I guess 2024 was a good year.
Yeah, it was a great year.
Time is flying.
Yeah. Great year.
Not quite 50 yet.
All right. Let's keep moving forward.
That's my point. What do you want? November or December?
Oh, he said December.
Oh. Well, he said 45 days. I thought we're kind of in the middle of there.
You can't really put. I guess you could, Jenny. Okay, to that point.
No, but
point.
Okay, looking at these prices, EEM probably won't have enough premium in November. So let's just stick with
I think when we were looking at it, we were going to December.
Here we are in December, $45 product. I'm not really going to look at deltas. I'm going to look for 50 cents and 50 cents. I don't know about you, but that's what I would do.
So we could look at, if we're out that far, we could look at 50 cents and 50 cents, or we could look at Jade Lizard.
Okay, I will compare the two.
Yeah.
50 cents on the 42.5 put, 50 cents on the 47.5 call. Here's $106 on the strangle using just under $700.
That's not bad.
It's not bad.
That's not bad at all.
It's not bad.
Okay, now, hold on
I'm just going to show you the chart so you can see. We're at the top of its range.
Ish.
Here.
Yeah.
Yeah,
I'm fine with that.
Which is why he says it kind of similar to the Chinese stocks.
So this will bring,
markets.
and this will bring your break even to the downside. I was just looking at the break even to the downside on a Jade Lizard versus this. I don't mind both sides. It's not that much capital. A lot of times we'll shy away from December trades if it's a lot of capital being held up.
It's not a lot of capital. So to say, I don't mind using $700 to make 100, that's not bad. Sometimes you'll see us not want to put on trades that are using $2,000, $3,000 all the way on December.
Right. Yeah, because you're holding on to it for so long.
All right. And what about the Jade? If you compare it to a Jade Lizard?
So you can take a look at just the 75-cent put. So you'd be $1 underneath there. It's not too different.
No, you take your call spread goes down your call spread has to go in a full point.
Yeah, let's. I don't mind the strangle.
I kind of think the strangle. I mean, either one they're not bad, but I kind of.
I'm just keeping an eye on the Jajun trade. We're down 40.
Oh. I am listening. I'm listening for the ding.
We are 10 cents away from our GTC right now.
Okay.
It's going to happen.
I'm going to get $1.06 on this strangle. $1.06. It might even... Is EEM liquid enough? There's enough open interest.
I mean, EEM has 7.95 million shares, so I mean, I feel like it'd be liquid.
And it is, let's look up here, EEM, 4-star in the liquidity meter.
Scott loves it. He gave it 4 stars.
Okay.
Okay.
All right, we got that. Next up on Twitter.
Next up on Twitter.
What's your assumption is NDX, neutral, NDX, 0 DTE. What about an iron condor? Let it settle to cash.
Let's take a look.
It would be totally different now from earlier because we're down 40 and not down 20. I will take a look at this. NDX, iron condor, let it settle to cash, 0 DTE. Sometimes these markets are a little bit wide.
Okay, Frank's now just bragging because he just said his vertical got filled at 310. We're waiting for 320.
Frank the Great?
Frank the Great.
He did it. He did the...
He just texted me.
All right. I'm going to go to the expected move.
And so we looked at this on the open, right? The NDX Iron Condor. I'm going to look at mine.
It's $10 wide. That's as narrow as you can make it. $10 wide, as narrow as you can make it. I'd be getting $430, risking $570. If we let this expire...
How much are you risking?
Risking $570 to make $430.
Okay. That's not bad. It's not bad.
It's not bad. I mean, it's not a 50-50 trade. You're giving yourself room. I'm at a 24 delta on the puts, 23 delta on the calls. It's not bad.
It's not bad. I don't think that these are that liquid.
Well, no, the markets are a little wider. You can see at the bottom, $240 credit at $6 credit. These are wide markets.
They are wide.
That's why I kind of stick with SPX, but if you want to do NDX, sure, they're just a little bit wider markets.
Yeah, honestly, I would probably stick with SPX. It's just my opinion. I tried putting the NDX in today at the open.
Yeah.
And, it works, but the markets are pretty wide.
Well, and you saw how it was marking crazy.
It was marking crazy.
The markets are
yes.
wide. I personally usually stick with SPX just because they're tighter markets.
Yes, 100%.
And in SPX, I am selling the iron condors, but in the morning. You are in the morning.
I sell the put spread in the morning. I don't do the iron condors.
I usually do it at 10:40.
Iron condors are tricky at this time. So it's weird. We have kind of times and places for trades, too, especially in the 0 DTE. Because from that perspective, I know we kind of said this during Jacob's piece, but if you're premium selling and you're putting it on at 45 days till expiration, would you put an iron condor on with 10 days till expiration or, where you have 20 days left? Probably not. You're not getting enough.
This is Giovanni from Miami. I have a feeling Giovanni put this on the open and then hopped on the Taylor Swift cruise.
Oh.
Next up, UPS bullish earnings trade, Jack from Philly. I believe the upside potential is greater than the downside risk. Given the price is already near multi-year low, what would you do for an earnings trade in UPS?
Okay, so we're going to take a look at this with UPS. And usually with earnings trades, we want to stay very, very near term, right? So we're going to look at the 3-day option, the 2-day option, whatever they have.
Okay, so pulling up UPS here, we have about an $8 expected move in the 2-day. You go all the way out to November, and it only goes to $9.60. So here's a situation where I would definitely stick with the 2-day. What were we looking at the other day, which had almost double the expected move between here and November?
Yeah, when you see that, a lot of times we're going to go farther out in time. We don't necessarily have to do that here. Now, UPS holds up quite a bit of capital, too, and we were looking at a diagonal. Do you want to stick with the diagonal, or do you want to sell puts?
So they were, I believe, bullish. Let's see. Bullish earnings trade.
Yes.
So, yeah, you can sell puts, sure. There's a 94 range. You can. But whatever you collect on the put is all you're going to make if you're right and UPS goes up.
And it's quite a bit of capital, too. So even if you're taking a look at this, you could do a Jade Lizard. You've got, in the 2 days, you can go to the 121s. We've seen, like, Enphase Energy. Wasn't it Enphase Energy that gapped down wildly today?
Right. Big
Boeing
down
is up
move today.
Yeah. So,
when looking at selling these puts, it's using $2,000. Hopefully it's only an overnight play, but if it's not, it's got to be something we'd be willing to carry and keep rolling.
Yeah.
It does use a lot of buying power, and if we do a Jade Lizard and it blows through the call spread,
we don't make any money.
Anything.
Diagonal it is, Jenny Andrews. Let's keep it pretty tight, though, meaning, 2-day, 9-day, 2-day, don't go too far out in time.
Okay, let's
because that'll keep it cheaper.
If I buy the money in the, let's see, you want me to go 9-day. If I go to the 9-day and buy the at the money.
Well, let's just start there. We can always make it more expensive.
And then go to the 2-day. It's the 131. If I want to make it 131, 139, that's $8 wide, and I'm paying $3.39 for it.
That's pretty good.
Yeah, that's not bad. It's not bad.
Now, this is a bullish earnings trade. If it goes down, you're going to lose, but not that crazy.
You could lose $3.39. If we want to make it cheaper, we could narrow it. We could narrow the diagonal. Only $3.14. If I do the 131, 138, then we have $7 wide. We're paying $3.14. Are
Done.
you okay risking $3.14?
I am.
I'm okay risking $3.14.
I am. Let's do it.
I mean, we'll be mad tomorrow if we lost 314.
Yes, we will. But yes.
Because we don't have much room to be wrong. So it was only down 41. They were
Down
only
41.
down like 40 and change. I keep waiting to get hit on that.
Well, I'm waiting. We haven't gotten hit yet.
All
I've
right,
got it pulled up. I don't mind that, though.
Bullish diagonal in UPS. Honestly, with the whole market down, SPOO's down 40, UPS is only down 34 cents.
Yeah, that's not
We're
bad.
hoping for some good news.
But honestly, so you look at this. You had some things that were up. You have some things that are down. Earnings aren't, I mean, a lot of times, I'm very gun-shy to trade earnings on a super crash of a market because a lot of times it kind of follows the market. If the market's down, good news is bad news and bad news is bad news.
Although I hesitate. I know they say they're bullish on UPS. I'm a little hesitant because Jajun, we're out. SPX trade, we're out. Jajun, SPO's down 38.
Jajun!
We got that little bounce up and out of the trade.
Woohoo!
I hesitate on this UPS because I told you my UPS, I can no longer take my Amazon returns there.
That's crazy.
Without like packaging them myself for most of them.
Oh.
I have to go to Staples instead. So that makes me think.
That's weird because I can still take it to the 2 UPSs by me. Just give me your stuff. I'll take it. I'm there all the time.
I don't know. That's why I hesitate a little. Put $300 into this UPS trade.
This is their assumption, not ours. Fair enough?
Okay. Can I change it to risk less?
Sure.
Can I just do like?
You could.
I'm gonna do.
Talk me through what you're doing.
Can I do a baby put spread, risking $146 to make 54?
Sure. That's their assumption
Because
too.
I don't want to walk in tomorrow and be down $316 in UPS.
Yeah.
If it goes up, we'll only make 54. I get it. I get what you're saying. It's their assumption.
It's okay though.
I'll go nuts. I'll do the diagonal.
I don't think it matters. We're just putting in a bullish trade in there. Okay.
138.
No, I don't mind the other one.
I got it. 131, 138, 316, 317.
We've lost worse.
Yeah, if we're out $317, we're out.
Jack from Philly. Just kidding.
We made $600 back in McDonald's today.
Okay, next, let's go back to what's your assumption.
Okay.
We've got a couple more to hit before we get to those earnings trades. Next up is from Blake from Oshkosh, Wisconsin. With most of Tasty already having positions in gold, oil, bonds, and dollars, let's diversify with some simple softs. Maybe a simple bet that soybeans catch a bid with either a short put or put spread.
Okay, so we only have
wheat.
We only have wheat.
Yeah, we only have wheat.
So I don't mind putting in a soybeans trade. Let's take a look at soybeans. ZS, soybean futures. I don't know if they set a time frame.
So the time frame, they said January 2025.
All right, so you can see these futures. We got October, November, December, February. I think I would stick with the 65-day December.
Yeah, I think you would, for sure. Especially if they said January 2025, because I don't want to go out to February.
No.
To sell a put.
No, I would stick with this December. Okay, if I sell a put spread, they're bullish. So if I sell a $10 wide put spread, getting $137, risking $362. It's $10 wide, but it has a 50% multiplier. So cut it in half.
Yes, cut that in half.
So $10 wide is like a $5 wide. What do you think of that?
I put my seal of approval on it because I would rather risk less. I know we kind of talked about this. I don't know. Sometimes with these softs, they can move in the same direction that they're going in. I'd rather risk less, but make a little bit of money if it goes in our direction.
Sure. And if we wanted to collect a little more, I could bring it up. I could bring it up to take in 156, risking 343. 156?
Yeah.
Okay. I'm going to sell this 970, 960 put spread in soybeans. We're out to December. Another December trade.
It's Christmas already. Get your lights up.
Start shopping. Okay.
Get your lights up.
We are on our last what's your assumption for the day? GLD
which is
neutral.
Good.
This is from Joe from Oklahoma. December neutral gold. Gold is still trading at new high, but I'm not bearish yet. What's the play? Strangler, Iron Condor. So he just wants to sell some premium. Strangle, Iron Condor, Jade Lizard, sell some premium. The IVR is high.
The time frame is December for this too. Just keeping that in mind.
GLD.
And GLD, thank you. I would like to say thank you, Joe, for not saying you're bearish yet, because I don't mind selling premium in gold.
No, it has a high rank. We have plenty of premium selling positions on in SLV, but we don't have any on in gold.
No, we do not. We have nothing in gold right now.
So 78 rank. Yes, I can see it's at the top of his range. He's not bearish yet. He just wants to sell premium. What do you think? Iron Fly, Iron Condor?
So you're in December, right? You're in December.
Yep.
So Iron Fly is going to be pretty aggressive. You could do an Iron Condor. That seems to be the way to go. And I would go probably $5 wide. Let's go to the expected move-ish. So maybe keep it round numbers, 240, 235.
That's what I pulled up. 240, 235 on the downside.
260, 265.
260, 265
Yeah, that's
on
not
the
bad.
upside. $5 wide, we're taking a $211.
It's close to a chicken.
What chicken? A chicken is when you're like risking one to make one. We're on a $5 wide. You're collecting $250 to make $250.
That's pretty good.
Yeah,
Two,
that's not
210.
bad. That's not bad at all.
That's pretty good.
Okay, I'll ship that.
Okay. And so that's neutral.
I'll take
and
it
gold.
down a tick to 210. Hopefully we'll get filled. I don't know how, and we're filled immediately. I didn't know how active December would be. Sometimes I thought we might have to like give up a tick or two to get into December. But gold's hot.
Yeah, gold is, that's a very good point. Gold is hot right now. It's in fuego.
Yeah.
It's
So-
gold, Jerry.
All right, so we're in with an iron condor in gold. I'm going to just make sure we got to all the tweets.
Yeah, if you go top down, there's some tweets that are coming
and then
in.
we'll get to earnings.
Yeah. That's what I'm saying. There's a bunch of tweets that were coming in.
Okay, Frank Walsh, and he mentions Herb who came in. We've got
got
both
it.
here. Liz, you're at the open SPX trade. You sell put spread for $200 credit. Do you take $50 or $100 profit, and do you have a stop loss?
So, Herb, I've been doing it every day on the open, except for when I go to the Tasty Live studios, because contrary to popular belief, I'm in the car at that point, so we can't do it. So every day I've been doing it, I take 50%, so $100.
If you're collecting $2, you take it up, put in a GTC for $100. Now, she'll get filled pretty quickly if the market has a bounce up. I sell both sides, so I sell both sides. I have to wait. I'm in that trade longer. I'm usually in that trade until about 11 o'clock.
Until about 11, yeah.
Yeah, 10:30, 11.
Today was the first day you were out before me.
Oh, only because the market was moving and dropping, I took only $50 out of it, and I just closed it for a $50 win, thinking like, I'll just take a $50 win out of this because I was getting a little nervous about the downside.
Okay, I see what you're saying there.
Yeah.
But no, Herb, I've been mechanically on the open, and here's what I find fascinating about it. Now, once again, I'm not Jacob. I don't have millions and millions of under my belt. I probably have, what have we been doing this for, a couple weeks?
Couple weeks.
Yeah, just a couple weeks now. I find it fascinating because the earlier you get in, it's almost as if it's an earnings trade where the volatility is a little bit higher right on the open.
On the
I'm
open,
talking like
or-
8:30, 15 seconds. It's crazy.
We have our platforms up. We are ready. As soon as we hear the ding, 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 we are setting it up and going.
And so, And so I will say, every day except for today, I got great fills. I threw in a market order this morning, and I got it for like $40 under where I wanted to put it in.
Lesson learned, don't put in a market order.
Yep.
I always put in limit orders. Don't put in
I just wanted to get it in so fast because we were on the train, and I put in a market order, and I got filled. I got a bad. It's not a bad fill because it's a fill. It's the prices were there.
Yeah.
So
Now-
I'm not gonna blame these guys.
I will, just from doing this, I will usually put my order in. Let's say the mid-market of my spread is $1.75. I'll usually put my order in a nickel lower, $1.70, because I know every second that ticks by, these tend to get cheaper and cheaper and cheaper.
And they will.
So right on the open, if I've got it lined up and I'm getting $1.75, I'll put it in for a nickel lower, sell it for $1.70, and I usually don't have a problem getting filled. If I put it in for that, right where mid-market is, then sometimes I never get it.
And sometimes you never get it.
Yes.
And I think that's why I just threw a market order in because I wasn't getting filled, and I canceled replaced for a market order. Now I'm already out. I will tell you that. So today, and it was lucky because I got out before the show, and then we went down a lot. We were at my short strike. So
I don't know. I think you took less too than usual today.
I threw it because we were going down.
Because we were going down. So we both got out for less. What's going on back there? We both took less than we normally took because of the down move in the market.
Because of the down move in the market. And then do you have a stop loss? I do. In my head.
Yes. Yes. In her head.
In my head, I say if it gets to probably four times credit. That's what I'm thinking right now. So if I sell it for $2, when it becomes $8, I would exit stage left.
Now, these have been setting up now and working okay right now. Vol is high, VIX is high. I don't know that these will work forever. And I know there are people who do them no matter what, but when VIX gets really low and you can't get $2 or you're so close or you're right on top, you might not do it. It might be a day-to-day of maybe I'm not going to do it today.
Yes. I've been trying to be consistent.
Right. Oh, yes. But it's easy to be consistent when VIX is 18,
Yes.
19, 20.
Correct.
If VIX gets down to 12, it's going to be eye-opening to see how close it is.
And trades work until they don't.
Yeah.
You know what I mean? They totally work until they don't. Okay.
Okay, so here comes Stella. Let's plan now for a premium Tasty Group cruise 2026. Is this?
This is Princess Cruises.
Oh, I thought this was
I know.
Stella's own cruise line.
Stella runs a cruise line.
Premium and luxury travel.
Yeah, that sounds fun. Then there's one more underneath it. Kevin Stewart. Okay, what is the trade in the 0 DTE that you've been putting on at 2:30? I've been consistently doing this. This one I've been doing for a lot longer.
Yes, I have not put this in every day.
It's gone pretty well for me, but at 2:30, I buy the wrapped around the at the money debit spread and I leave it. Although yesterday I put a GTC in for 90% and it hit before the market went down.
By the end of the day, at some point we bounced up, but by the end of the day we dropped again. So it wouldn't have hit if you left it to the end of the day.
But I put it in for 90%.
Yeah.
Yeah.
So it's the same thing as the 10-30 trade where a $5 wide for $2.50. It's the same thing as that. The $5 wide for $2.50.
It is, but I'm looking at them different. I want to scalp in the middle of the day, and at the end of the day, my play is that they've been goosing them on the close.
We've seen that happen recently quite a bit. At the end of the day,
it's probably short coverings. I don't know why it's happening right now.
The market gets a little boost at the very end of the day, so that was the thought behind it.
Yes.
I talked to Dr. Data yesterday about looking at a study, looking at times.
Yes.
Are we seeing that more often than not? If you're seeing that, like, jump up at the end of the day more often than not, then if you're risking one to make one, if you're risking 250 to make 250, then that should work out over time.
It should.
Right now, we don't have the ability to test at a certain point in time.
No, we're doing it. We are actually
testing.
Being your litmus test right now, live on boots on the ground. And then Frank Walsh has one more tweet if you want to get to it.
Is there?
And then we'll see if there's anything we can do. It's from Scramble Everything.
Okay, and Scramble Everything on YouTube. Hello, thank you for sending it in.
Ooh, a Tesla trade.
Okay, Tasty, yeah, could be a good cheap play for Liz and Jenny. Maybe a $5 wide. Looking at 225, 230, 235 call fly in Tesla.
Let's take a look at it.
40 cents. It's a cheap way to make an earnings play.
And Tesla has earnings tonight.
230, 235.
Let's see, it's 40 cents. That is a pretty cheap way to make an earnings play. Now, you're going to have to leave that probably until Friday because it is a fly and they don't open up until the end, and tomorrow's Thursday.
I think it was 225.
225, 230, 235 call fly.
So it's a bullish trade, ends this week. You basically want Tesla to end up in the middle here at 230. It's a cheap way to get in on earnings and hope it goes up. I actually have a bearish trade on in Tesla for earnings. She has a bullish trade on in Tesla
but it's
for
by
earnings.
it's by chance, not by choice. Like, do you know what I mean? I put a 217 calendar in.
You're
and
left
forgot
with a
about
217
it.
call.
I'm left with a 217 call.
I put in that downside diagonal. I'm left with my residual long from my downside diagonal.
Yeah.
So I'm rooting for Tesla to go down. You're rooting for
I'm
Tesla
rooting for us to go up.
I don't mind throwing this in for 30.
Scramble Everything wants it to pin at 230, which is up.
Now, is Tesla going to take down the market if it has a big down move? Or rally the market if it has a big up move? Maybe.
Maybe.
Yeah, maybe. So
I don't mind throwing that in with it. We don't have anything. We don't have anything in this account with Tesla.
we don't have anything in.
Sure, Scramble Everything, we're in.
40 cents. Would you ever? I think they're pretty expensive. We always say calendars and butterflies are similar, but a calendar here is going to be very expensive.
Take a look at it. I mean, I would price it out.
Like, I'll just go up to his strike. I'll go to his 230 strike.
Yeah, because if you wanted to pin at 230, you can do the calendar instead of the butterfly.
So at the 230 strike, $1.75. It's not bad.
But it's not 40 cents.
No, it's not 40 cents.
That's what I was going to say. So there's a big difference between 40 cents and $1.75. Because if they lose, they'll both lose.
But this is not much different than us having put $315 into UPS.
It's not.
It's like our chance of winning and losing of that UPS diagonal or this 230 calendar.
Well, the calendar gives you more time to be right. So that UPS where we put it in, that was somebody else's assumption, keep in mind. But
right. Well, this is his assumption too. If he's trying to pin 230.
Yeah, but you also have more time on your side to pin 230 when you do the calendar. I prefer calendars over butterflies.
I prefer the calendar over butterfly because I don't know in Tesla. I think it's gonna be pretty impossible to pin that strike on a $5 wide on a $215 product.
Let's do the calendar.
Let's do the calendar.
Yeah.
If it's down, we're only out $175.
If it's down, you still have 9 days for it to rise like a phoenix from the ashes.
For it to come back.
Yeah.
Okay, that's it, Liz.
We are The fastest hour of the day is done and dusted, ladies and gentlemen.
Yes, everybody. Thank you so much for tuning in. We will be live on Tasty Live tomorrow,
And
but
we'll
not
be
live from the SIBO. We'll be at Tasty Live tomorrow.
And we'll be back here Tuesday next week. I know it gets confusing. We keep bobbing and weaving, but Tuesday next week, because we're doing an event with the SIBO afterwards.
You can find us on tastylive.com every day. Next Tuesday, we'll be live from the SIBO. Thank you so much for watching. Liz, great show today.
Thank you. Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you tomorrow, everybody.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
If you have any questions, feel free to toss them in the chat.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Thomas Westwater, with me in the house for our Westwater Wednesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day, my favorite hour of the day. I get to spend with my buddy, Thomas. How are you, sir?
Good. You know, I think this angle works better for me. I think it's a better angle.
It's a little tough on the. We had grand designs for the little bar area, but it is tough to be up there sometimes. You don't know where to look. But
it's a little hard. Yeah.
We're still a work in progress. But yes,
we'll get there.
Good to have this face to face, very intimate in here. So
yeah, definitely.
We're
definitely.
Here.
We'll play footsie, you know.
Thomas is very tall, so he could probably reach me. Me and Mike are a little shorter. Not that short, though. Everybody says we look taller in person than on the shows. We're, Mike and I are both about 6 feet tall. So it's perfect.
Mike's off frolicking around Japan right now. We're a little jealous.
Yes.
Yeah, but we'll live vicariously through all of his pictures and stories when he gets back. So I'm sure he'll have a few.
Yes, he'll be back next week. We'll be back to our full routine. I'll have Katie on the show tomorrow. I think she might be joining me Friday as well, so we'll get a special Katie and Nick episode to finish off the week, and then we'll have Mike back. We'll be back on our regular programming here. Before we get into it, the markets and stuff, how's the farm? The eggs were delicious. Anything new popping up?
I'm glad you liked them. No, just getting ready for the winter. I got to get a solar generator back there to keep their water from freezing.
You going with Tesla?
That's a little expensive. There's a couple cheaper options. It's not a matter of life and death for the chickens. I'll still be out there checking them. So I'm going to go with some Chinese-made products. So. Well, and you have to in this economy.
I feel you.
Yeah.
Have you put anything new in?
Nothing new. The wife's talking about turkeys already. I'm going to try pushing that back a couple of years.
Ooh.
Yeah, she's a fan of turkeys. But
that's got to be loud. That's got to be like a loud animal.
Yeah, they gobble. We already have the rooster. He's driving me crazy. I go and grab the knife. I walk out. My wife pulls me back. So.
But it's dinner, honey.
Yeah, right. But yeah, I have to apologize. I'm a little congested right now. My kid gave me something. They're all, like you said, petri dishes of various pathogens. So it is that time of year, though.
This is the time where the tasty strain starts to go around, where it's just like group by group. There's 2 or 3 people that start missing. It's just like the tasty strain of COVID or flu or whatever it is.
I was sitting on the train. You already hear all the coughs, the sniffles.
Oh yeah.
So it's good stuff. We'll get past it though. I'm upping my zinc. So
there you go.
We'll see if that works. But anyways, we got some kind of excitement in the market going on this weekend. Got some earnings. We got Tesla later today, so that's going to be an exciting one. I did put a Tesla earnings preview on the News and Insights page, so as always, you guys could head over there and check it out. It gives you a little rundown, what to expect, things to watch for, everything like that. So, of course, vehicles delivered, margins, all of that is going to be under the radar.
And I will get that up in the chat as well for everybody that wants to check that out. As always, just great stuff from the gang that posts all their content there. But yeah, it's the start of earnings season. We actually featured it in the cherry picks as well. So if you got the cherry picks from yesterday, you get like your little earnings cheat sheet that we do on a week-to-week basis. So everybody get ready for some wild moves. There's a lot happening with earnings, election, Fed decisions. I think isn't there a Fed decision like right before the election? I was asking Mikey about it. I think it's like on like the 3rd or the 4th or something.
Let's see, the countdown to FOMC. We have 15 days left.
Okay.
1 hour, 52 minutes, 44 seconds.
There you go.
There we go.
To be exact.
Yeah.
So there's a lot going on, and obviously, volatility baked into to the election as well. Be interesting to see if any of that comes out. I don't know if it will on either side.
And right now, 91% chance for a 25 basis point rate cut, 9.1% chance for the 50, or actually 9.1 for a hold. There's no chance for a 50 basis point cut. That's down from 53% just a month ago. 9.1% chance for a hold. That's up from 0% a month ago, up from 6.3% a week ago. So, of course, we're seeing this reflected in the bond market. Bonds selling off, yields going higher, dollar going higher. It's driving the rate differentials, dollars crushing the yen. So, we are in the throes of election season now. We also have an election this weekend in Japan. Hopefully Mike gets out there to vote. I'm going to text him and tell him to go vote.
He's going to voter fraud. You're going to tell him to commit some voter fraud.
A little bit of that, But yeah, the bond movement is pretty crazy, driving a lot of stuff. I think the equity markets could still tolerate these yields for a little bit. I think it's just pricing in some of the reflections we've had in rate cut bets. The market got a little bit ahead of itself going with the 50-50 back-to-back cut. I think that was a little aggressive. So, the people that had that view, if you were expressing that sentiment,
you'd be long bonds down, and you're
you'd be doing good right now.
Yeah, it's pretty interesting, and the market hasn't even. I mean, you get a little bit of a pullback just to run through what the market's doing right now. E-minis are down 46, pretty much the low of the day, I think, or just about the low. Got as low as 58.44. So we're basically at the lows of the day. Nasdaq down 245. You got the Dow down 390 and the Russell down almost 20 here. So Nasdaq being the weakest of the group today, even with Tesla earnings after the close, could either accelerate that or complete bounce back. I could see either one of those happening into Tesla earnings. Oil selling off a bit, but it had a monster day yesterday. It's down $1.21, basically back to the middle of where it traded yesterday, 70.54. Volatility futures up 55 ticks, almost at 19 here, so a little bit of a bid in volatility. Bonds are down 5 ticks. They have just been in free fall for the last 2 or 3 weeks here. Gold and silver have both been just absolutely screaming higher, giving it up a little bit today with gold down $26, silver reversing basically all of the last 2 sessions, kind of explosion to the upside here, down $1.13, a little over 3.25 or a little under 3.25%. And then Bitcoin down to 66,000, spots down 1,000. You got futures down 1,400. But it's interesting that the bond market volatility has been much more volatile than the actual equity market. I mean, the equity market for the last, I think we started like middle of or early last week, right around 5,800. And we've been bouncing between 58 and 5,900 on the backs of what has been, in the bonds, like what are they down? 15, 20%?
Yeah, it's a pretty big sell-off. The Bank of America's ICE Move Index, which measures bond market volatility, kind of like the VIX for the S&P 500, that is at the highest level since December 2023, and we're about to break that level into November 2023 levels. So lots of volatility in the bond market.
And that was when they were starting cuts.
Yeah.
2023 was when, starting to hike rates, I'm sorry.
Right. Yeah, so the beginning of this year, we had the 6-7 cuts priced in. Now we've come all the way down. Went back up a little bit. Now we've come down a bit. The economy, mostly labor market, inflation, it's kind of cooling the Fed rate cut bets. So, it's going to come down. I think we'll get the 25 basis point cut. The 9% chance that we hold, I'd be pretty surprised if we did hold, although I was wrong on the last one. I was one of the persons saying we'd get a 25 basis point cut. So my read on the Fed might not be the best right now. But, the volatility, it's expressing the view that the market's uncertain about what the Fed's going to do, even though these rate cut bets through Fed's funds futures, through things like overnight swaps, they're pricing in chances, right? But the bond pricing itself is saying that we are not certain.
Yeah.
So, I think you have to consider that in almost everything you're trading right now. Currencies drives rate differentials. Of course, the yields matter a lot for that. Equities, of course, yields going higher isn't necessarily good for equities, although I don't think we're at the point of panic yet. And I think, besides for today grinding higher, I think, it's telling you to buy regardless what the bond market is doing.
I know, isn't this like the perfect storm of like a strong dollar and rates remaining high? I mean, isn't that's like the opposite of what
right
Fed wants or slash whoever the next president is? They don't want either of those things.
Yeah, and then you have to consider it's a new administration either way. So, we're going from Biden to a new person either way. Yeah. So they're going to come in with their agenda. They both want a deficit spend.
Yeah.
They're doing it through different ways, but the deficit is still projected to go up. You could look at, there's several different organizations, CBO, I believe, other ones like that, Tax Policy Center, all predicting big deficit booms. So that is going to potentially drive inflation higher. That complicates the Fed's path, et cetera, et cetera. So we'll have to see. It's going to be interesting because you have to see how the Senate and Congress goes too. Because if you get Harris with a Republican Senate, and the prediction odds are looking like the Senate's going to be Republican again, that's going to really limit her agenda.
Yeah.
If Trump gets in, I think you're going to get less resistance on his agenda because I think no matter who wins, Republicans are going to take control of the House and the Senate. So a Trump win, I think, is potentially more deficit spending. A Harris win, she'd want to do deficit spending, but she'd be limited. And of course, there's the political camp where you say there's people who want a Democratic or Republican president with an opposing House because you get the need to reach some bipartisan middle ground. Of course, that's becoming harder and harder, but it still limits the progress either way.
And you think that's kind of reflected, that outcome of really either of them being kind of spending outcomes is being reflected in the market right now.
Yeah,
it's in some way with strong dollar, with rates high, even on the backs of like everything that we've heard of rates are coming down, they've stayed very, very high.
Market is saying that we're going to get some monetary based inflation or fiscal based inflation coming in the next couple of years. So it's an interesting time, it's exciting. Election night's going to be exciting for the markets. I know a lot of us will be getting little sleep that night. Results aren't going to come in. It seems like we're past the point where we get a declared winner on the night. Yeah. And it's to the point where we're going to be waiting days, perhaps weeks, to know who's going to be in office.
You think we'll see any even close to the volatility that we saw in the Trump election day, like of like
that
the
was
trading
interesting,
market,
right? Because
it ended basically flat,
right?
But
right.
if you
it dropped and then went up,
but it was limit down. I think it went limit down, maybe even like more than just 7%. I think it limited down and then it went another like 2 or 3%. Like it was like a 10% just in like a couple blinks of the eye, and then it was back to flat by the time we woke up in the morning.
Yeah, a lot of people got flushed out that night. So it's, it'll be interesting. I'm excited.
Yeah, that'll be crazy if that happens again. We'll see there. Before we jump into the content, I just wanted to throw in just a couple of the trades that I did this morning because speaking of the solar panels, I had an end phase position. I was just naked, the 85 strike put. Stock opened down, got as low as 76 here. So rather than roll it out into December, I just sold a call against it, the 90 strike call. I'm in this at, my credit is $5.78, so I'm out about $6 and change here into what it was a huge move to the downside. I can roll that out to December at some point in the next, couple days here or weeks. And then I got long some McDonald's here into what has been a massive move. I know there was a report on E. coli, and it seemed like there were I think it was 50 or 60 confirmed cases and one death. So it seems real.
Yeah, that's not good.
It seems to be something, but the stock was down 10%-ish in the overnight session. It rallied into the open, but I figured, why not try and catch a falling knife there? So I got into that in both my accounts. I also did a Coinbase trade and an SPX trade in my Johnny Trader account. You could watch that segment for my thoughts there. Tom poo-pooed both of them.
And Yum Brands owns other fast food chains, and they're going up today because people are going to drive past McDonald's and be like, ugh. They're going to see Taco Bell down the street and go, yeah.
I saw a tweet that was great. That was the McDonald's has been killing people for 30 years. This is just one E. coli. That's no big deal.
Yeah. What did Trump put in the food there?
That's been my favorite meme. Yeah, it's been a good one. I mean, it is the coincidences.
Yeah.
My tinfoil hat is getting bigger. I need to tinfoil my room now or something.
Right.
Watch out for the 5G.
Oh man, what show was that where he tinfoiled the whole house? It was the Breaking Bad spinoff. It was Better Call Saul. The guy just put tinfoil everywhere in his house. And his brother's like, "What are you doing, man? You gotta stop this." It's crazy.
That's next for us.
Yeah.
Anyway, if you want to come join us, we're on the YouTube channel. So shoot us your chat questions if you got anything for me on trades or whatnot, and if you want to talk about Japanese yen, which is what Thomas brought us today for our Wednesday, our Westwater Wednesday, which we do have some short premium in our oil position, which is really starting to come in today, which is very, very nice. That was, I think, the focus of the last discussion that we had,
Yeah,
which
it's
was 2 weeks
finally
ago.
paying off. Yeah,
Yes. It's okay. You know, it doesn't have to be so quick every time.
No, yeah.
You've given us the quick winners, but
Yeah, I mean, I was actually going to talk about something I usually don't talk about, which is lean hogs. Lean hogs have broken a pretty significant technical barrier, the April swing high.
Oh, wow.
So we're now pushing into yearly highs on it. It's been a blistering rally all the way from the July lows. So pork prices just going up and up.
What's the fundamental thing here? Like, what's the change? Is it just the weather, or is it like
the supply in the U.S. is smaller. The exports are higher. More people are buying pigs or the pork from us. Seasonally we actually go down at this time of year, but it's bucking the trend. Really strong move here. I didn't talk about because the data on all of it's a little harder to get than other commodities, but maybe next week I'll talk about probably at that point shorting it or. If it's taking a neutral trade, yeah. But there's practically no IV in the product, which is another reason I didn't bring it up.
Yeah,
IVR is at 0.7 right now in lean hogs, so you don't got too much to play with there if you're doing a.
And there's really no other way to trade it. I don't think if you could pull out a stock that has some sort of lean hog correlation, I would be very impressed by that.
Yeah,
I would think like some
food
producer, like my first thought was like Tyson, but that's chicken. But
yeah,
I
they
feel
do a lot of chicken. I think they do some pork, but I have to see. I don't know too many stocks that are too correlated. Tyson comes up.
Yeah, that's what I would think of. But that's chicken.
Right.
I don't know.
Seaboard Corporation, SEB.
SEB. Okay, let's see where these things are going. So SEB, I've never heard of this one. This one, it's at lows basically, but it trades.
Yeah,
it
there's
does
no
not
options
trade.
on it.
It's
so.
284 shares traded.
Yeah, it's nothing.
Smithfield Foods. I don't know.
Yeah. Yeah, but anyways, that's kind of why I didn't go with it.
It's a tough one, but I'm interested to see what sort of correlation you can pull for me to trade.
We'll see. We'll see if I can get anything. But yeah, anyways, the yen, like we were talking about, the yield differentials, the dollar strength, the yen is just getting hammered right now. Mm-hmm. Like I said, there's an election coming up in Japan this weekend. That's adding some, probably risk to it. People want to sell before we see, what kind of policymaker changes we'll get over there. But anyways, we'll go to the first slide. The short trade, the carry trade, kind of looks like it's coming back a little bit. The orange line right here is net speculator positioning. And of course, the big rally we had from July pushed a lot of shorts out of the market. So you see that net position going up into positive territory, meaning there's more longs than shorts. Mm-hmm. And now we are on the verge of crossing back into a net short position. So shorts are adding, longs are taking off, of course. The prices are going down, down, down. Not really at any great technical levels right here to carve out. So my trade idea is kind of capturing volatility, maybe going neutral on it.
Like an iron condor or something.
Yeah, something like that.
It's interesting to see that, and it makes sense because the yen has done nothing but go down. But there's one or 2 points where the net positioning has been long, even despite
because it's always been a carry trade. So.
Yeah, how long has the carry trade been a thing? Has it been like forever?
It's been pretty long, I think. Definitely before I got into markets.
It's amazing.
About 10 years ago. So it's been happening for quite a while. But yeah, I mean, the thing is, shorting it now after such a big move, I don't really like too much, even though, we're not at any great technical support levels, things like that. We got the July low, that's still ways off. But this move just keeps going down. So I think a neutral to slightly bearish trade is probably the best way handle this right now.
Okay.
Does
the election, I obviously don't, I'm not as well versed as you are.
So
is there a person that's more bullish or bearish in terms of the yen itself?
I have no idea.
That would, because if you gave me Japanese politics, then I would have to be like, okay, I retire. This is your
Nick. I can hardly wrap my head around U.S. politics.
It's fair.
For me to go into the depths of another country's politics is something I do not want to put on my mind.
I was not suggesting that I need that info from you, but I was going to be very impressed if you pulled that out of your hat.
Right. No. There is going to be some implications, but I'm going to gauge that on how the price reaction happens. The big thing here that I'm going at is I believe some volatility is going to come out as the risk of that election passes.
Okay.
That's kind of the angle I'm going at for this election.
That makes total sense. And I did a sort of similar thinking in SPX with an Iron Condor in December, just thinking, it might go up or down, but after the election, I would expect or hope to have some sort of contraction volatility. And that's that. Yeah. I feel you on that.
And the U.S. election, because the dollar is the biggest driver of the yen.
Yeah.
So we have two big risks coming off in the next few weeks. I think, what are we, 3 weeks out from three and a half,
election,
4?
Something like that.
Between 3 and 4 weeks between election. So as those risks pass, I believe that we're going to get volatility coming out of this product. Again, directionally, I don't want to be confident saying one way or the other, slightly biased to the downside. But again, not confident on that. Excuse me, I'm going to lose my voice by the time we hit Futures Powers Hour on this.
Don't worry, you just get give me a sign and I'll cut it.
We'll have to ask Mikey when he comes back. He'll be in tune with Japanese culture and politics.
Yeah.
So maybe he can give us some insights when he gets back next week.
So their election is right around the time of ours?
It's this Saturday.
Okay.
This Saturday or Sunday. It's this weekend.
Okay.
But it will. We'll get back to the markets on Monday, and we'll see the results and see how it's reacting. But anyways, let's go to the next slide. So I'm using a volatility measure called the average true range. It's a little different from implied volatility and things like that. It measures the absolute value, so the change from the current high and the previous close. It measures any gaps. It takes into account for that. But going back to, I believe I did to 2016, the chart doesn't go as far back as I calculated. But the average day that the average true range is above 0.00007, I don't know why it's measured into those decimal places like that. But anyways, the ATR stays above that mark on average for 32 days. We're currently above that mark for 60 days.
Okay.
So, just looking at historical performance, we should be reverting out of that, I guess you could say, for lack of a better term. Yeah. And the performance following the ATR crossing back below that threshold, which is kind of the median that I measured going back to 2016, where is volatility, where's the midpoint of that by the ATR. When we come below that, the 1 week performance is pretty much unchanged. It's like 0.00 something. 2 weeks after, you drop 1%. 3 weeks after, you're still down 1%. So you go slightly lower. But as you come out of that, the performance historically is pretty much unchanged, slightly down. And that feeds into my bias on the current direction.
That's like the perfect setup for a short premium on both sides, like Iron Condor or Strangle type position, where your expectation is you get a little bit of a vol contraction and a sideways move over, a couple weeks. That's beautiful.
Yeah, for sure. And, things like if we look at cross asset correlation with the yen, things like gold goes up, the yen goes down, things like that.
Well, that's certainly playing out.
That has played out.
Right now.
Gold and the yen was actually pretty highly correlated until recently, until I believe June or May. And then that correlation broke. And that was kind of the BOJ's policy diversion happening, where they said, we're going to start hiking rates. Now they've come back and they're still going to hike rates, but they're doing it in a very cautious way. They pretty much came out and said, we're not going to hike rates if market conditions are not,
how we want them to
supported.
be.
Yeah. So what they're saying is we're not going to cause market mayhem again. Now we're coming to the point where intervention levels have been triggered before. I don't think we're going to get close to intervention levels until we get near that July low. Now the BOJ and the Ministry of Finance, who actually coordinates the intervention, they're not so much looking at the absolute level of the yen, they're looking at the velocity of the moves. Because the velocity really messes up a lot of stuff in the Japanese economy, like balance sheets, pension rebalancing, et cetera.
So I imagine 1.2% today is not something that they like to see.
Yeah, no, it's not something that they like. And what they're going to do is they're going to yap their flappers for a while until they actually come out and do something. They're going to try to scare the market. And we've been seeing that already. And as the yen falls, they're going to get more aggressive in doing that. So the trade setup that we could look at, like you said, an iron condor works pretty well. The 44-day expiration is perfect right here because over the next 3 weeks brings us to halfway through that expiration, and the risk of the U.S. election comes off within that time frame.
I like it.
So fundamentally, the trade setup with this time is pretty good here, I think. Volatility is decent.
Where do you pick your spots?
If we look at the chart, I guess there's some levels you can look back in late April around 655 that you can kind of see. So maybe going a little bit under that with the short strike on the put side makes sense. Maybe the 30 delta. I think that's perhaps a good spot. And I think maybe you could extend it a little further out since our bias is kind of slightly more to the bearish side, but still neutral. So I think this trade is going to be work out pretty well. Of course, those are famous last words. So next week we could be looking at the yen falling at another 2% or something, and you guys could hang me over there in the corner.
No.
Stay
small, and it's no big deal.
Yeah.
All right. Well, I'm at like the 6.3 level and the 6.8 level on the upside. So a wide range to hit a very, very small trade, $400 or $500 in max risk here. Did it at $2 and change in total credit. Max loss at $4 and change. Just a little small, set it and forget it type trade. We'll revisit this in a couple weeks and see what happened. Margin, or the buying power, I should say, very, very reasonable. A couple $100. It can get bigger, obviously, but for me, that's kind of how I thought it would be the way to attack it.
Awesome. Well, we're all set up. Let's see how it goes, and we'll see Monday how the Japanese snap election turns out, and see if this volatility is actually coming out.
Yeah, I'll update everybody next week. I'll sit with Thomas. I'll have him, give me the breakdown of all the implications of the whoever wins in Japan, and we'll have a follow up for this.
Yeah, and I'll look into that a little bit. I think maybe next hour on Futures Power Hour, Vecchio probably knows a bit more about. I know he's tuned into global politics, so maybe he has. Maybe he'll want to opine on this.
Oh, good stuff. Well, thank you, Thomas. I know you're this is your flu game. This is your Jordan flu game.
Yeah,
we have
right.
Thomas here
we
slinging
go.
Trades, making slides for us. It's perfect. So it's
should have done the COVID thing. Put up like a glass panel here.
That's
for you.
true.
But I know you got a strong immune system, so
that's okay. So if you got any questions for Thomas, you can certainly shoot them in the chat. I'm going to start pulling off some questions here and just kind of going through them. So Aaron was asking about End Phase Energy. They've got a naked put, 100 strike put in December for $11 and change. So you're out about $1,000 on each of those. I'm not sure what to do. Too big a loss to close now. It doesn't make sense to roll to January, February. Totally agree. I don't think you can roll out to January, February just yet. It's a very long time. I think you got to just bite the bullet and sell a call. You've got about a 80 delta short put, so it's a pretty heavy delta put. It's pretty far in the money. I would look to sell like the 90 or the 95. Ideally, you want to cut your overall delta exposure by 25 to 50%. So selling the 95 strike call is going to drop your overall delta down to only long 50 deltas. So you're still leaning long. You still want that up move, but it'll cut down on the risk significantly. And it'll bring in a lot of premium. It'll make your break even, down to $85 to the upside. So that's how I would do it. I mean, that's kind of what I did with my November position. Rather than rolling it out to December, I just sold the call against it. It's a 30 delta call, 60 delta put, cut it in half. That was kind of the thinking there. So tough trade on an end phase, which just dropped out of bed here, basically down to lows.
Yeah, that's on earnings, right? Yesterday?
Yeah, they had earnings yesterday, and I think the expected move, it's a super volatile stock. I mean, you got 80% implied volatility in November, and that's after an earnings, so it's probably at near 100. But the stock was at, let's see, closed at 92 and change. So one of the ways you can just kind of ballpark what the expected move was yesterday is if you look at that straddle and just kind of see what the price was at that point. So this option has gained $5. So it was trading at, let's call it $8 yesterday. This has lost $5. So this was trading at 5-ish. So this was about a $13 expected move, which is where we're at right now, but was much lower. It got down to 76, which would be $3 or $4 lower, so it was definitely greater than the expected move.
This is, it's pushing some other solar stocks down, but Sunrun is holding up decently.
FSLR is the one that has kind of been the leader of the group. I think they got added to the NASDAQ. I don't think they got added to the S&P 500. They might have.
Okay, yeah.
Oh, they did?
I think I heard something about that. This is an ETF, right?
No, First Solar.
Oh, First Solar. Okay, I thought you were talking about SFLR.
I think it did get added to the to NASDAQ. I will find this out real quick. I thought I remember, but who knows? Anyway, with end phase, sell the call, and you'll allow you a little bit more flexibility moving forward. H. Montero asking about the Fed. Is the biggest threat the volatility in the bonds? If they're whipping back and forth, does that make it hard for the Fed to come up with a decision?
Yeah, I mean, if the market's working against them, I mean. It could, because the bond market could signal that the Fed's doing something wrong, right? If rates are going higher and higher and higher, and they're trying to cut, it's telling them that the market's saying that
you're wrong.
You're wrong. So, of course, there's thresholds for that. There's the Fed does tolerate a good amount of market movement before they allow it to impact their policy, and they don't come out and blatantly say the market's doing this, so we're not going to do it. But you can get that in their tone when Fed speakers speak.
I mean, they have to.
They try to gently guide the market to do what they want. But but yeah, that's definitely something you have to keep your eye on.
Well, because the market basically cut for them.
Right.
But the last time,
yeah.
I mean, they basically, bonds rallied.
They priced it in,
and rates came down, and it was an easy decision. You just, do your 50 and be done. But now they're saying, okay, that's it.
Yeah, yeah. And if you look at the last week when the bond prices have been going down and the yields have been going up, Fed speakers have been pulling back their rhetoric on the pace of rate cuts. They've been saying slower is the way now. So
data dependent.
Right. and that allows them room to maneuver, right? If you say you're data dependent and the data's changing,
rally, then they're,
right.
That was our data, but we can't say it was our data.
And the bond market's going to reflect the data sooner than the Fed is, because you only get a Fed decision every couple of months.
Yeah.
Bond market's trading every day, so.
Yeah. There you go. It does does influence in some way, but they won't say it.
Right. We're not in a fight the Fed moment yet.
Yeah.
But if it keeps going the way it's going, it might turn into that.
I don't know. I've learned over the last 4 years, you don't fight the
Right.
Fed. The
Yeah.
Fed,
We've got a lot of power.
they have a lot of power.
Yeah.
Rome asking about LRCX. They've got earnings after the close today. You had a couple chip names, not just chip names, but Texas Instruments had earnings after the close yesterday. I know that one's not as tradable as some of the other, bigger names in the space. You would think about like a Qualcomm, AMD, ARM, stuff like that. And then STX was another one that had earnings yesterday. That one's they've gone in opposite directions, so I don't know if there's a sympathy play there. LRCX, they did just do a split, so I think they had 100-to-1 split, or I'm sorry, a 10-to-1 split. So it was trading at like 700 and change, 800 and change. They just had a split. So if that influences your decision in any way. But looking at an earnings play here, so you're thinking crab or a broke wing butterfly, I think I could do something in that realm. I mean, so like the SMH is interesting and this space is interesting because you've had NVIDIA get up to like 145, I think this week was the high. 144 and change, 144.42. But SMH is still like not at highs, even though I think almost 30% of the ETF is weighted to NVIDIA. So if you think that, there's a little bit of a catch up there, you would think that like an LRCX or, Texas Instruments is an SMH as well. You would think that that would be sort of the trade to go to one of those names instead of like a NVIDIA. So I like that idea.
Yeah, TXN had pretty good earnings. I think they reported yesterday.
After the close, yeah, I think they beat on at least some of them. But
selling those calculators.
I know. the TI-80, the 84 was the one.
Oh, yes.
Or was it the 89?
Yeah, I think I had the 84, 83 or something.
The TI-83s were the one that they tell you to buy.
Mm-hmm.
The TI-84s had the computer plug-in that you could put the games.
Yeah.
Like you could get what's
Or
the
you
one
could-
with your like the
I know what you're talking about.
spaceship and you shoot
right,
the-
right, and you could do Pong and
Yeah.
you could write notes for your test in there.
Yeah, so I had that one. Just to get the best product, not to use notes on my tests.
Right.
All right, so let's play the upside. Let's do like a crab type setup here. So I'll go 75 in December, a couple dollars out of the money. Let's go into the weekly. So we could do that. We could do a pretty cheap diagonal spread if we wanted to get. I don't want to add the call spread here just because this isn't as wide as I need it to be to offset the risk to the upside. What I mean by that is if I did like, a call spread to set up this like crab trade here. And we go, I'm sorry, I need two of these. So you'd have risk to the upside if I did this sort of crab setup into the earnings event. So rather than do that, I would just stick to the diagonal spread. If you want to play into the 1 day or the 2 day expiration, which is the end of this week, I would do this sort of diagonal spread. And I know that you'll pay a little bit over the width of the diagonal, but even if we get a move to like 78, 79, you should be pretty fine. You really need that sort of tail event, which is what it's showing on this risk profile. If you wanted to do a crab type setup, you got to go to the November monthly expiration. I would go to like the 80 strike maybe. You do this 5 by 5, which will probably set you up at a similar total debit. So it's $2 and change debit on that sort of setup and give you a little bit more room to the upside. So both trades will benefit from an upside move, and I think that's what we're trying to get at here. So I'm gonna do the weekly to make it a little bit more instant pain or instant gain. We'll do it at 382. See if we get filled here. It's at the bottom, so of where it's been trading. Filled. Go 84. See if we get filled on this. Come on. 45. There we go. All right, I'm in. 75 long call in December, the 77 in the weekly, playing the upside, inside up sort of trade here. You play chess, Thomas?
I do. Yeah, I got that chess app on my phone. I do the 1 minute and 3 minute ones because I like the really quick. I just try to force someone. I try to control the center really quick, and then I'll just defend my king really well and let the time run out, and let them make stupid moves. It's all about defense.
Is it a person to person? Is it P to P?
Yeah. It's online. It's
wow.
It's online. If anyone wants to play me, I'll give you my chess handle on Twitter if you message me.
There you go.
I'm not that great. My rank is only I'm like a 400 or 500 or something. I just play for fun, but.
Okay, there you go. H. Montero might be throwing you a chat soon.
There we go. You could beat me. So.
Yeah. Oh my God, so good. So going through some of these chats. So Sergio's got a Coinbase position, $10 wide iron condor. We're looking at Coinbase. So you're looking at the 180 puts and the 220 calls. I have it in August rolling, collecting all this premium. Earnings in 7 days. Should I close it before earnings and take the loss? So you've got this in November, I imagine now, because August is past. Coinbase 180, 200 for your, 220. And you're doing this $10 wide. So you've got to be kind of sort of flat on this. If you did this so you've collected 325, currently down about 240. Yeah, makes sense with the trade at 575. I mean, you could take this, close this out, and roll it into December. Maybe go a little bit wider. You'll add a little bit more risk, but you'll still give yourself, enough time to be right on this. Volatility is still super high here. Earnings, obviously, in the middle of next week. So, that'll. If you roll out to December, it'll dull some of that exposure. You got to keep in mind with a spread like this that's inside the expected move, and you're with both of your positions, it's going to be a sub 50-50 shot. So you're likely to be tested, at least the market is projecting you're going to be tested on one of these sides at some point in the next 23 days. So I might consider closing it, rolling out to December. I did a opening trade in December in my Johnny Trader portfolio. So I think if you, are kind of looking to reduce your exposure, I would take that adjustment. Is Bitcoin on your radar for a trade into the elections? There's a lot of, I had Ryan on Monday, and we talked a lot about, the sentiment towards Trump in the crypto space, if that, almost like a binary type event for crypto.
Yeah.
If he were to be elected, because he's been a little bit nicer on the crypto sphere of influence. In Coinbase, MicroStrategy, those sort of things, and Bitcoin itself is just a super volatile asset. Is it something that's on your radar? Are you a crypto guy?
Yeah, I think if you get Gensler out of there, I think it's good either way.
But I think they're both kind of like ousting him, right?
Yeah, I think they both would.
That's another catalyst.
Yeah, he isn't. He obviously has something personal against the whole crypto thing. I think. It's the markets are saying they want it. He's been very resistant, so I think if you get him out there, it's good either way.
Yeah. So we're looking at Apple, big down move. I wouldn't say it that big of a down move. It's like a haircut from yesterday. $6 move. I guess it is pretty big. I was looking at this earlier. It was only $3. What happened here, guys? So Apple down $6 here. I don't know what happened. I was on the show. I was doing a couple other things too, so I do not know what happened here. But context. Big one-day move, $6, but we're right back to $2.30. We were here like a week ago, so not the craziest thing. I actually do have a position on in here. I wonder if it's coming. Yeah, I'm up about 90 cents on this. I think it might be just a close for this position because I had some short delta when we were trading at 240-ish. So I had this back from the first at $3.40. I'm going to try and close this and see if I can roll into something new for earnings. There we go. All right, well, thanks, Dave, because I didn't even notice that. Is anything else? I guess the NASDAQ is down.
There's a CFP PB, the Consumer Financial Protection Bureau, said they did something with credit cards that they weren't supposed to do with Goldman Sachs. They got to repay 118 million or something. That's like $1 out of my pocket compared to Apple. But
Come on, 118 million. That's nothing.
Yeah.
Oh man. So that's got to be it. Let's think about buying this dip, right? December. When do we have earnings coming out? So 31st, so middle of next week. We'll go into the weekly expiration. I mean, volatility is getting pumped in a little bit. Ivy rank at 46. Kind of an expensive one to go. Could play it back to basically highs here into earnings. This Apple can't be more than a one-day thing, right? We'll do this. Here, we'll go into look at November. All right, we'll do just a standard. We'll buy the dip here. We're going to buy the 230 in December, sell the 240 against it. We're going to do it at around $7. Just getting some long delta. It picks up about 24, 25 long deltas into this move. You got earnings next week, so ideally we get bailed out on that. But I think it's an interesting time. Let's see where McDonald's is right now. Pinned at 300. So it's had a nice little rally back here. So I don't know, maybe get the same thing there. All right, Manny, looking at Tesla. So we are looking for an earnings trade. Tesla earnings after the close today. Stock is at 214. It's come back to really the middle of where it's been trading. So thoughts on a broken wing butterfly. We're looking at the 25th expiration. So this weekly expiration. We want to do the 230, 235, 250, and the puts 205, 200, 185. So for me, in this weekly expiration, really what you want to happen is for it to go basically nowhere. So I would just do the iron condor as opposed to two butterflies. Two butterflies, it gets a little bit too much to deal with. You have to do them in two separate transactions, and you have to wait until right up to expiration for that $5 wide spread to come into any value. So if I was looking at that, like the shorts you'd have would be the same shorts that you're comfortable with now, or you can just move them $5 out of the money. But you'd have the 200 and then the 185, and you do the 235 and the 250, and you do this for you'd make more on this in a non-movement. Anything other than pinning your short strikes, you'd probably make more on this than you would on the double butterfly, on doing two broken wing butterflies on both sides. So that's how I would approach that trade that you had. Just do the iron condor, same sort of risk, probably a higher potential reward or a higher reasonable reward in just 2 days, as opposed to the butterflies, which will take too much time. Yeah, everybody's shouting for long delta and Apple. I wonder if we've been too conditioned to buy the dip on everything. That was my first thought. Was like, hey,
yeah, right.
100 million's nothing.
It's a little dip.
Yeah. Yeah. So biggest movers in the market today. You got Enphase after earnings. You have First Solar, PanW. A lot of the tech names, Nvidia, giving it back up a little bit, down below 140. On the upside, winners of today, kind of the indiscriminate names here. TXN is in there. You got GE in there, which was down like $20-ish yesterday on earnings. So that's had a little bit of a pullback.
You got Walmart breaking new all-time highs right now.
There we go.
That stock is crazy. It's like up 55% this year.
That's nuts. They had a split too. They did the 10-to-1, or did they do?
So yeah, something like that.
Some
5-to-1 maybe.
Yeah, Walmart, Costco are like the two. Seems up only every single day on these two. Costco, no earnings until December. Walmart has them the 19th.
Bless you.
Thank you. So you already gave it to me.
Yeah, right.
I need the wall up. Just kidding. Fine. right. Drone and looking at M-Phase 85 110 November short strangle down $100. How would you adjust? You could take that and roll it out, but I might just hold it, man. I'm holding my EMPH. Can't type. I'm holding my November position just because vol's so high. Like even this 85 strike in the money put, it's got $4 of extrinsic value. You have that same one. I mean, if you told me that you had the 85 110 strangle and the stock moved, and the stock was at close to 100 and it moved $20, you'd think you'd be out a lot more than $100 on this. That's just how high volatility was prior to this, but it's still very, very high. So you got, I might move down the call. If you want to stay in the November cycle, move to the 90 or the 95 if you want to lean a little bit more long, but I think you hold into this volatility because it's still very, very high. Oh, NVIDIA is probably coming into play too. I have an iron condor there too. Let's see. This one's only up 30 cents, so I'm going to hold this a little bit, but yeah, a little bit of a dip to buy across the market here. Volatility at the highs too, 1905 here. We broke through that level. Oof. All right, that's at the end of the chat. Should we call it a day early? I know
Yeah, we could do that.
Get you like a nice warm cup of tea or something before you get on with Vecchio. What are you guys talking about today? Do you have a
We go
plan?
through it all. I think the bonds, the equities, gold. I'm sure all that good stuff. So
beautiful. All right, good stuff. Well, thanks for joining us, peeps. If you want to battle Thomas in chess, you just send him a chat on Twitter. It's going to be FX Westwater. You got Mikey at Trader Mikey B, myself at Trader Nicky Bag. You can reach out to all of us there on Twitter. We're going to take a quick little 90-second break and come back with Thomas and Chris with a little bit of Futures Power Hour for you. So we'll be back in 90 seconds. You're listening to Tasty Live.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Are you tired of one-size-fits-all financial services? tastytrade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on tastytrade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the tastytrade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at tastylive.
How do you reach your goals of becoming a full-time trader?
I think the best way to do it is he has to start thinking in terms of what's a fair objective return-wise. You know, if you're actively trading and you're going for some number and you have $200,000, I mean, saying that, hey, I'm going to make $35,000 on this, which is an 18% return, is not an insane number. It's not ridiculous. It's 2 or 3 times a passive return, and it's 4 times a risk-free return. It's completely normal. So that's where I'd start, and then you try to build off from there.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Got the need for speed? No problem. On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. tastytrade, make your move.
How do you reach your goals of becoming a full-time trader?
I think the best way to do it is he has to start thinking in terms of what's a fair objective return-wise. You know, if you're actively trading and you're going for some number and you have $200,000, I mean, saying that, hey, I'm going to make $35,000 on this, which is an 18% return, is not an insane number. It's not ridiculous. It's 2 or 3 times a passive return, and it's 4 times a risk-free return. It's completely normal. So that's where I'd start, and then you try to build up from there.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a whipsawed.
We are back. It is Wednesday, October 23rd, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, good to see you in studio.
Good to see you. Yeah, I'm here 2 hours in a row, so it's a good time. Trying not to lose my voice right now. I got a little something, but I'll make it through.
Honey, lemon tea. It's the way to make your way through Westwater Wednesday.
Yes.
Thomas, I went to the dentist early this morning before work. Little did I know, people these days are being born with 2 to 3 wisdom teeth. Evolutionarily, the body's kind of figured out that we don't need that many anymore. This circus freak of a person was born with 6.
There you go.
So I'll be having my 5th and 6th wisdom teeth removed in a few weeks.
Sounds fun.
Delightful. Absolutely delightful.
Yeah, it's always a good time to get a tooth pulled.
Oh, yeah, can't wait. Well, it's another warm day here in New York. Maybe that's why energy prices are down, because who needs heating in the fall when it's 85 degrees outside? That's a lie. It's a brisk 77. Sorry for exaggerating.
That's perfect.
Yeah, perfect, right? Exactly the crisp October weather you look forward to when you live in the Northeast. In any event, outside of energy, we're seeing that rates are still in charge here. We can turn to the slides. I forgive everyone for groaning when they read the title here. Sometimes you're not really inspired. Other times you come up with gems, like the great rate speed, Thomas. That's what we're calling today's show.
I like it. It's a good play on words.
Not my finest work, but we can do better. And maybe we'll save the old man and the S&P for another show. Guys, let's talk about the carry trade here, though, as we start things off this Futures Power Hour. The carry trade is back, baby. And that's something that we've been talking about here for some time. The Japanese yen is getting slugged today. JPYX, which we don't necessarily have here on the platform, but if you look on, say, TradingView, it's going to be the Pepperstone Japanese Yen CFD Index. It's an amalgamation of the yen versus a number of different currencies. Think of it as the dollar basket equivalent for the yen to a certain extent. This is down 7.91% from its highs that we had at the start of August, when we were in the throes of the carry trade fears. And today's action now brings us back to prices where we were prior to the ISM manufacturing report release on July 31st. Just to jog people's memory, July 31st, 10 o'clock in the morning Eastern time, the ISM manufacturing report comes out and it shows that we could be heading into recession. The following Friday, what do we see? The non-farm payrolls report, slightly weaker than expected, but enough to keep the yen rally going. Of course, we have the August 5th blow off where Japanese markets are down 10% that Monday. C'est la vie. But we've now erased all that, Thomas. This is a pretty clear sign from within the market that if it's for energy or rates reasons, the yen is really not a concern. And the BOJ has more or less blessed people to use the yen as a funding currency once more.
Yeah, we were actually talking about this last hour, kind of a neutral trade idea, just slightly bearish iron condor thing. It's interesting. Yeah, the carry trade is definitely back on. Speculator, net speculator positioning is about to flip back short from long. It hardly ever goes long on the yen throughout decades. So we're getting a revision in some of that positioning there, which is interesting to see.
Yeah, the yen positioning right now has been, I would say, inconsequential facet of this market if you think about positioning being at a relative extreme. But because it's not at an extreme, there's ample room for people to pile back into the short yen trade, which when you look at positioning over the past 2 years, it took several months for it to build back to the place where it was when we were looking at what equivalent on the yen index would be 690. And we're halfway back to it right now. Thomas, we're going to make our way over to the currencies in a little bit here, but if the carry trade's back on, what does that mean for other asset classes on this Wednesday? Not really anything good. Perhaps the yen is weakening because of the general state of energy and rates, but that general state of energy and rates is proving to be an albatross around the neck of the S&P 500, the NASDAQ here. It's a little volume, though. It's not exactly a heavy trading day. We're at 785,000 contracts traded, Thomas. We like to benchmark 1 million by this point in time as our healthy trading session. If I wasn't putting much weight, so to speak, into the price action of the past 2 sessions, bullish or bearish because of the lack of participation, why would I look at today's any different?
Yeah, exactly. I mean, it's a dip. We've seen them before. They get bought up pretty quickly. No key technical levels are being breached. There hasn't been a dramatic shift in the fundamental picture. Rate cut bets have come in. Fed speakers over the past week have kind of aligned themselves with what the bond market's been telling us. 90% chance that we'll get a 25 basis point cut in about 20-something days here. The 50% chance cut is effectively off the table according to Fed funds futures. So it looks like, the 9% chance we get for a hold is small. The markets are saying it could happen, but it's still not to the percentage where it's a likely outcome.
No, it doesn't seem like we're going to be getting 50 basis points. And the way that the curve is shifting, the market seems to think the Fed is kind of stuck in the near term through 2024. And if there's going to be any adjustments to the rate path, it will come over the course of 2025. The question traders may be asking themselves on this Wednesday is whether or not this is a dip worth buying. Technically, you could make an argument that it very well would be the case. I suppose as someone who's already long, would this be a place where if I wasn't long, would I start looking at it on the long side? And I think that answer has to be yes here at first blush. When we see the consolidation that takes place at the end of September, the beginning of October, roughly speaking, 5830 defines resistance. And we're trading into that right now. Granted, we're overshooting it, which is why it's worth watching. But if this is going to prove to be former resistance as support, this is the place to do it. Likewise, the 1-month moving average, which in recent weeks served as support as we made our way through the beginning of October, that comes in today at 58.27 1/4. So a hold of these two levels through the end of the session would be a sign that, quite frankly, this is a small pullback and not necessarily the end of the rally. Failure here, Thomas, that presents several problems. Not only do you lose the former resistance turn support, the 1-month moving average, you also return to a consolidation that could yield a break of the uptrend from the August and September swing lows. Concurrently, that means we should be open to a return to 57.30 at a minimum. So the risk to reward here for getting long is pretty limited, right? If we see a close below these key levels today, close up shop, time to go home. But if it doesn't, and we see a little bit of a bounce, this is the place where you can actually start to scale in once more if you think the uptrend from the August and September lows is going to remain in place.
Yeah, and we are moving into a seasonal quarter of what's been typically a good quarter for equities, but you have to consider it's also an election season, so you got to bring that to the table too.
The election season seasonality is not bad. November and December tend to end the year on a bang, and just general seasonality. I think we shared this yesterday on Overtime, but we can pull it up here now. Great website, equityclock.com. Type in your ticker, equityclock.com. You'll get your seasonality chart for the past 20 years. Thomas, if we're looking at seasonality for the S&P, we're basically right here on the chart. So if someone is an adherent to seasonality, which for the past 2 years, 2023, 2024, it's basically been spot on. Buy through July, close shop until the middle of September, then start to get long again. There's really, for me, no reason to doubt this yet. So if the uptrend remains, knowing that the seasonals around the corner tend to be optimistic, I see it as enough reason to hang on at least to the long S&P side of my equity exposure here in the midst of a sizable, meaningful 1.15% pullback.
Yeah, definitely. Are people going to see this as a buying opportunity? I think some of that could depend on earnings coming out over, we are in the thick of earnings season. So we got Tesla today. Technology is a big loser today, driving a lot of losses. So if Tesla gets a good report, we could potentially look at some reversal of this sentiment today.
Technology doesn't look healthy here, Thomas. What's your take on the NASDAQ?
If I was getting long equities here, I wouldn't want to necessarily do it through the NASDAQ. I would stick with the S&P 500. I just think some of these high beta stocks are more susceptible to risk with the earnings here. But again, you get some good reports, and you could potentially, get a good setup going here with the sell-off today.
The NASDAQ is in a really fascinating spot insofar as it's losing the breakout condition that it had in place from the July high, September swing highs. Likewise, that August 22nd swing high, the bearish engulfing bar that marked the top as we made our way through September, that's being lost here today. Returning into the triangle begets a return to support, which may be closer to 19,975. And then below there, we start talking about losing the uptrend off of the September, August lows. So the NASDAQ here is in a difficult situation overall. It goes back to the whole idea of what's happening with rates, though. Yesterday at market close, the S&P 500's earnings yield was roughly 3.6%. When you look to the Treasury yields, you're seeing 4.2, 4.3 on the 10-year. One of the capital allocation decisions that investors or fund managers make is comparing the returns that you can get investing in stocks versus bonds. In theory, bonds are risk-free. So if you can get the same return in risk-free assets as you do in stocks, which are certainly not risk-free, well, why would you take the additional risk? So right now, with Treasury yields trading above the earnings yield for the S&P and certainly above the earnings yield for the NASDAQ, every dollar that's coming into the market, why would it go into stocks? This may be a headwind for the foreseeable future.
Yeah, definitely. It's probably a moment to take some pause, maybe wait. That's what I'm doing. I don't really want to get long right here. I would just kind of see how some of these earnings play out, see how the bond market continues to move. We got a couple events coming up shortly too that don't relate to earnings. You got an election in Japan, even though, like you said, the yen isn't necessarily driving too much volatility in the market, but the carry trade is if you look at people going back into the carry trade, that's kind of a positive for risk assets, right? If people are using the yen as a carry currency or funding currency, they're using it to fund something that they're trading, right? So potentially positive coming from there, but I think the risk reward, like you said, not the best to get long right now necessarily.
One trade that we've operated in previously, not on right now at the moment, but perhaps worth revisiting as it pertains to what's happening in the NASDAQ. Iron condors and SMH, isolating the semiconductors in particular, they're trading pretty close to their 50% mark of the high-low range that we've seen over the past several months, July high, August low. When the iron condors were put on back in the middle of August, it was a rocky trade, but ultimately it settled out nicely for each of the past 2 months. Perhaps this is going to be a third try, Thomas. But there's a lot of chop here. And if we're thinking about this relationship between volatility, which is up a little bit today, but it's still only a 34.2 IVR. We were looking at 40s at the start of the week. We think about the low trading volume. It feels like this is potentially the start of something more bearish. It also feels like tomorrow could be a day where we're right back up and we've learned absolutely nothing, because the market is in a distinct holding pattern up until November 5th.
Yeah, the semiconductors, TXN had a pretty good earnings yesterday, but of course, investors are using some of the more high beta names. SMH is weighted heavily to NVIDIA, so you got to really wait for some of those earnings. NVIDIA is a late reporter, so we're not going to see that for a while, but overall, the chips have been mixed, right? ASML, Taiwan Semiconductor, they've kind of canceled each other out, I guess you could say. So there's really some wait and see with where semis are going, especially with the AI story. I think long term, I'm still bullish on them. I think that's the right play, but I think it's time to reassess the shorter term trading strategies on it.
Are you thinking about placing any equity trades related to the election at all? Or as you're planning out, as you look to, say, the various expiries, are you looking beyond November 5th, November 7th when the Fed meets?
Either way, we're getting a new administration, right? And what the Fed's concerned about, what the bond market's concerned about is deficit spending. Either way, you're getting candidates that want a deficit spend. So it's for inflation, that's going to complicate the Fed's path, right? But from a fiscal policy standpoint, it could contribute to GDP. There's arguments that each individual policy will support or harm the economy, but at the end of the day, spending more money, fiscal deficits going up have been correlated with equity outperformance, the way I understand it. So I think, once the risk of the election passes, I think maybe we go into that seasonality that we were talking about and finish the year higher, S&P 6,100, 6,200, around there.
6,200 would be nice. It would certainly help those ESH5 calls I have. Thomas, before we turn the page here on stocks and move over to the Russell, just to go a little bit deeper into that earnings yield conversation to provide some numbers behind that. In the post-World War II era, U.S. equity markets, the S&P 500, including dividends, have returned 12.2% on average, compared to T-bills, which have returned 3.8% on average, and T-bonds, which have returned 5.23% on average. When we talk about the risk, the standard deviation of stock returns over that same time frame, 16.97% for the S&P 500, much higher than the bond market. T-bills, 3.05% standard deviation returns, and T-bonds, 8.74%. So, right, if you're thinking about the return profile of stocks moving forward through this earnings yield lens, why on earth would you take the double the risk effectively that stocks have over T-bonds, historically speaking, if T-bonds are offering the same or greater yield? We need to work through some things here in stocks, perhaps in the short term. It doesn't derail the seasonality, but it makes it a heck of a lot harder. Now, yesterday, Thomas, was the first day that we saw 2 consecutive red days in the S&P in 6 weeks. The Russell hasn't had that kind of benefit, as it were. And boy, am I kicking myself on how I handled my iron condor here recently, having exited it last week prior to the pullback towards the midpoint of this range. But alas, we're not going to get worked up about missed trades. The midpoint here is 2175, 2180. If we get back down there and the IVRs are in the mid 40s, as we previously explored, the raw volatility is on the same level as it was at the end of July, beginning of August, which is when we were getting IVRs that were 80, 90, 100. So if we get back down to 2175, Thomas, I'm going to jump back in with 2 feet. I know Jamal's doing it right now, and I'm going to get back in there with him. It's time to put back on the directionally neutral vol selling strategy here in RTY.
Yeah, I really like that. And, the IVR, it's a good point because the IVR is really good to just get a quick look and feel for the volatility of a product, but you do have to check the actual percentages of volatility in the actual options themselves. So it can be deceiving at times, right? Because if volatility has been extremely high at any point over the past year, and volatility is still high but not quite as high, it's going to show you a lower IVR, right? So it's always good to look deeper into that. But I love the IVR because it gives you pretty much a snapshot, something you could look at really quick to gauge volatility.
That's been my contention all year long with looking at the IVRs in gold and silver, because gold and silver are coming out of a period when volatility was exceptionally low for a good chunk of last year prior to what happened between Hamas and Israel on October 7th. And so when you see the IVRs that are like 60, 70, yes, it's a relatively elevated environment for where we are today compared to the past year. But when you zoom out and say, okay, where's gold or silver vol gone during 2020 or 2008 to 2011? Wow, we haven't even scraped the potential ceiling for volatility here. So knowing how much higher could actually go in raw terms, it's difficult to suggest this is the point in time in which you want to try to harvest that vol by selling call spreads, for example, in gold or silver. In the Russell, right, the raw volatility at 26.47, when we saw these back in middle of July, we go over this a lot, but it's worth revisiting. IWM.IVR here on the platform, you would have been seeing 90 or so IV ranks. So if we were at a 90 IV rank, Thomas, and we were sitting at the midpoint of the 6-month high-low range, would we be thinking about, where's the Russell? There you are. Would we be thinking about putting on a directionally neutral vol selling strategy? Yes. So I would contend that at 26 and change raw IV, we should be thinking about putting on those directionally neutral vol selling strategies.
Yeah, it makes perfect sense. I mean, it's just speaks to why you have to dig into volatility more, especially if you're trading these premium selling strategies. You always got to be cognizant of the relationship between the two. So it's really easy to look at the platform. So it's always, something you can take 10 seconds and pretty much, assess what's going on with that.
What's your favorite setup right now? S&P, NASDAQ, Russell. Suppose you could throw in the Dow Jones if you're a glutton for punishment.
I like the S&P 500 because if you get another, rotation between the sectors, you're fine there, right? Things are going to cancel each other out. You get a day where XLF is down, but XLE is up. You're getting, relative to the other, like IWM, which is weighted more towards financial and energy, NASDAQ, which is weighted more towards technology. I just like the kind of smoothing effect that the breadth of the sectors gives for the S&P 500.
Thomas, let's talk about why we are calling this episode the Great Rate Spee. Sorry. It's because bonds are the albatross around this market's neck. We see that ZNZB are part of a long procession of global bond yields everywhere, effectively, going up in concert in recent days. It's really helping the dollar. It's really hurting basically everything else. This has been a rough sledding. There's been attempts to pick off lows here with short put spreads. We hit the 50% retracement of the 6-month high-low range. That worked for maybe 2 days. Here we are at the 618 retracement, Thomas. It still feels like catching a falling knife, though. Momentum is deeply negative. MACD is turning lower, trending lower below its signal line. Stochastics are nestled in oversold territory. We still have a price below the 1-week moving average.
The
volatility is high, but
sorry,
go on.
Yeah,
No,
we
not
were
at
talking
all.
about this a couple weeks ago. I think playing long ZB at 120, and that idea fell apart pretty quick there. So
yeah,
it's you want to see this drop, and you want it kind of the trade tickles you to get long, and you could carve out some support levels where you could put these things in. But I think the bond market, you look at things like the Bank of America ICE Move Index, volatility is really elevated. What that's telling me, at least, is the market's kind of unsure about what exactly the Fed is going to do. Now, the bond market is telling the Fed, it's pushing yields higher. You could say that's a reflection of the deficit spending we're going to get with the new administration. You could say that's the expectations that inflation, even without deficit spending, we're moving into an era where you're not going to get this super low inflation structurally in the economy. You also have political themes like, the trade between countries is becoming more protectionist. All of these things contribute or can contribute to shocks in prices. So do we get a return to the ultra low rate monetary environment that we've been in for quite a while, almost a few decades here? I don't think we do. And, this is the time when the market is kind of deciding that, right? Because the Fed is moving into its cut cycle after the COVID shock, all of those things. And it's kind of a decisive moment with monetary policy, with inflation, with just the general theme of the global economy. So as a trader, especially trading bonds, how do you factor in all of these new elements that are potentially carving out the new dogma of the next 10, 20 years? I think it's a tough read to get on the bonds right now. Like I said, it's I'm itching to get a little long here, or at least sell a short put spread. But, I've been wrong a couple times on potential trades that I was going to take, and I would have gotten my butt handed to me. So I'm just going to kind of wait until we get a clearer signal here.
Speaking of unclear signals, we go over to ZB, soft by nearly 0.3% here today. We did have a 20-year auction at the top of the hour. Let's go to that 5-minute chart here. We're about 30 minutes removed from that 5-minute auction. Since then, it is a chart that has come back in. I would call it mixed, if not slightly weaker. There are some good signs, right? The bid to cover ratio is 2.59 versus the prior of 2.51. The high yield was 4.59% versus the pre-sale of 4.574. So we stopped this auction tails through by 1.6 basis point. The prior auction tailed by 2 basis points, so that's an improvement. But the 6-month average is a 0.6 basis point stop through. You want to stop through your auctions. You don't want to tail through. The fact that we've seen such a significant correction in rates in recent weeks, and the first opportunity that traders had to look at the 20-year bonds at auction, and they said, these yields might not be enough for us. That's not a great sign. It means that there's an expectation that perhaps yields are going higher. Why buy now if you think you can get them at a cheaper price in the future?
Yeah, what was the international demand like on that?
Primary dealers were 14.5% versus the prior of 18.6. Directs accepted were 17.6 versus 16.3 prior. Indirects were 67.9 versus 65.1 prior. And in terms of foreign, I guess we have our indirect bidders there, Thomas. Yeah, I need to go over the Treasury's website. Either way, though, this is not fantastic. The bond market, at least the people at the auction, are telling you that they want more compensation.
So the signal is higher rates or higher yields. And, is that the equity market reflecting that today? Because the equity market has brushed off the higher yields for quite some time. At what level do we does the equity market say, these higher yields are going to threaten things like earnings growth and et cetera? I think we might be seeing the start of that today.
It's a really good question, because if you really want to break it down, you have to think about the market in discounted cash flow terms to a certain extent, right? Cash flows over 1 plus the interest rate in a given period. And so if rates are going up, if the denominator is going up, the only way that higher rates won't bother you is if cash flows are increasing at a commensurate amount to offset the increase. The numerator needs to rise as well. There was probably a window here that we just went through where the market said, yeah, rates are going up, denominator is getting bigger, but the numerator is going to go up by much more than that. So we can actually justify higher rates, higher stock price. We're getting to the Rubicon, maybe it seems. We're crossing through 4.25% in the 10-year yield. Now it's like, okay, rates have moved up to such a point where does the risk outweigh the reward? Are the costs greater than the benefit for cash flows? And maybe the answer today is yes. We finally crossed that at 4.25% of the 10s.
It's something I'm going to keep my eye on. I think you got to be watching them. Excuse me, I'm losing my voice. I'm a little sick. I think it's something.
Get him honey and tea, production team.
Yeah. It's something you got to keep your eye on more than ever, right? The bond market. Some traders don't keep. You're not watching the bond pricings all day. I think you have to be watching it more closely if you're trading equities right now. If bonds continue to sell off hard here, like you said, that numerator is not going to catch up, and you're going to see some. You're going to start getting analyst downgrades on stocks. You're going to start seeing just sentiment overall weaken. That's going to affect the outlook long term, and long term expectations feed into short term expectations. So you could get kind of like a cataclysmic effect there.
I'm not sure the Fed is looking at the bond market and saying this is necessarily a problem, right? If we look to credit, for example, we can go to HYG or JNK, the high yield ETFs. Yes, they're down today. They're not having a good day, but they're only up by 0.3%. So in terms of the financial stress that's in the system as a result of these higher rates, you can't really make the suggestion that it's flaring up, so to speak. It is a minor correction in light volume. Now, bond yields, if they continue to rise, that's going to be hugely problematic. We've seen how metals today are kind of snapping back to reality a bit with the prolonged period of higher rates. We've also seen oil vol come off a little bit, so maybe the geopolitical risk premium flush is around the corner. But either way, Thomas, I think ZB here, we've long discussed the ways to play this. Directionally south may be the best bet. I have been long and wrong on bonds for the past several weeks, so my word should be taken with a distinct grain of salt. The iron condors that may be machinating by some, this is not a place where I would put them on. Right, the ideal sweet spot is wrapped around the 50% mark, somewhere between the 38.2 and the 618, and we are beyond the 618 now. So I would hope that people out there were staying short treasuries and not try to trade them directionally neutral or pick a bottom like I've been, because this has been this October sucks for my bond positions.
I don't think you're the only one, Chris.
No, I don't think I'm the only one, because I've convinced a fair number of other people that we were going up.
Well, don't come into the office for a while.
That's probably a good thing to do. Let's talk about silver sinking here on this Wednesday. Bond yields are up, the dollar's up, and those dollar-denominated commodities are taking it on the chin. $33.84 an ounce for silver. It's a big 3.48% move lower today. Granted, prices we were at on Monday, because that's how crazy this market's been. Where do we bounce? Right at the one-week moving average. Buyers coming at $33.66. The low for today, $33.61. I suppose it's difficult to get too bared up right now, as someone who's very bullish, unless we start to break below 33.5, because that would mean a failure below the May swing high, and that could put into question the veracity of this recent breakout attempt. So we're on a nice edge right now. Did you miss the silver breakout? Well, we're getting back to the place where this is the breakout point. So maybe second chance works out better for you. Maybe this was a false breakout and you've been trying to fade it. I don't know if I would short silver directly, particularly through the options market. But if we're talking about a retracement in price here, we can look to the high volatility, relatively speaking, to try to harvest some of that and do something directionally neutral. And because of the call skew in this market, we can actually go deeper out of the money when you look at longer term time horizons, not necessarily like 10 days to expiration, but go out 50, 75, and you'll see that you can sell deeper out of the money calls to compensate for perhaps even buying some puts.
Yeah, I like something like an iron condor here. The 33.5 was the level to break on the upside. We broke it. Some enthusiasm got into the market for a day or two. Now the dollar yields are coming into the picture. A lot of this, I think, is profit taking, especially when you look at the chart here. If the 33.5 holds, we get some consolidation. I think that'd be a signal to get long again, especially if you get a reversion in the dollar. I think you can see it rip higher. Silver is really interesting right now. But again, the bond market, the same question you asked for when it's going to affect equities, you have to ask when it's going to start affecting silver and gold. Now, silver and gold are also benefiting from the upcoming elections. You'd say safe haven buying, things like that. But overall yields or rates are going to come down. It's the question of how fast they're going to come down. But overall, it's still bullish for gold and silver, right? So I think this could give you a buying opportunity if you want to get long. If the 33.5 holds, I think, I'm actually going to play this trade or look at it closer. But this is a big drop, that said. So you got to be careful.
Thinking about this longer term, I don't see any reason why today I would be any less bullish than I was, say, 2 days ago or last week or for the past several months when I've been sitting here insisting that silver is going to go to 43. In the event that you get below 33.5, maybe we have to put those plans back in our pocket, right? Just like when we started to dip below like 27, there was perhaps a good night, sweet prince moment coming around the corner. Alas, we did hold up there at the start of August, so no reason to get too worried. But if we were to fail here, a return to the broader sideways consolidation would have bigger technical, we'll call them considerations in play. And then if we do see Israel respond to Iran in some sort of fashion, that if the Israel defense minister is correct today, he says the world will understand Israel's might. If that's what happens, but it leads to no further escalation, silver prices did get whacked April into May. That was not a small drop off. That was from about $31 an ounce down to about $27 an ounce. Is this the beginning of that? Maybe. But if it's not, then there could be another $4 or $5 lower. That's why the iron condor may be the best bet in the short term if this Israel-Iran issue is going to move off the foreground of our imagination.
Yeah, geopolitics, of course, the moves could be pretty quick. Things change really quick on that landscape. But yeah, I mean, Biden's making another push for a peace deal, but how many times have we gone over this now where they even say they're close and then it unravels at the last moment? In my opinion, they're always going to be talking, we're working towards a deal, but there doesn't seem to be some real appetite on either side for it right now. You could argue the merits of either position for probably forever, but it's just what I'm seeing. I think the market's telling us that too over the past few weeks, that there really isn't going to be a major de-escalation right now or in the immediate short term. So I think it's back on the table. I think you keep getting some volatility and expectations for a deal there, but I think we persist at least into next year with this.
What to do about gold here? On one hand, there could be a bearish engulfing bar key reversal at the high. That's probably not a good thing. We did move above yesterday's high. We could be closing below yesterday's low. On the other hand, we really haven't broken through that 1 week moving average yet. Thomas, in September when we started breaking out, we had this evening star candlestick cluster topping pattern. And I said, I'm not going to get out of my long goal position. I want to see it close below the 1 week to know that the momentum's dead. And the next day we had that big doji candle around the Fed meeting. Not exactly follow through if that's a topping pattern. And there was no close below the 1 week. And the patience and discipline was rewarded. So yes, today this is a topping candle, just in the way that this evening star candlestick cluster was a topping pattern. If we don't get a close below the 1 week moving average, unfortunately, I'm going to grit my tongue and bear down and just ride out the storm. But if we do get a close below the 1 week today, as soon as futures market reopens tonight, get rid of the gold longs. No reason to have them.
Yeah, gold is interesting. You got Newmont reporting after the bell today. They're one of the bigger miners, so they'll give their outlook and guidance on gold prices, their all-in costs, things like that. If you play the miners, I think miners are really hard to play on gold. I don't usually do it, but I'll be watching the report, at least seeing what the executives are saying. They're tuned into the market really well, of course. Geopolitics, it's been benefiting gold. The dollar's been going higher. Gold's been shrugging it off until now. So I'm not sure that that's the exact reason, or a reason that's going to continue to keep it held down. I don't know. I think you get some more upside in gold, just like silver. Over the medium term, I'm bullish. Over the short term, you gotta watch technical levels.
What are your thoughts on copper here, given the China story?
Copper, we're kind of in the middle of the range from the September low to that swing high at the beginning of October, I think it is.
Sure.
I'm directionally neutral on it right now. I think if you can do an iron condor, that makes sense. The China story is what drove copper higher, and then they're talking China's going to come out with fiscal stimulus packages to meet the monetary side. China's got a demand side problem, right? It's not a supply side problem. Supply side problem could be handled, but if the demand's not there in the economy, and the Chinese economy, of course, needs domestic demand to pick up right now. A lot of exports go to Europe. Europe market is weakening. I'm not too bullish on copper right here. I know there's some big players in the name right now. You got Stanley Druckenmiller made a really, really bullish call on copper earlier this year. Pretty sure he's up, fairly well in his position from where he got in. I forgot exactly where he got in, but I think it was, I want to say back in July maybe, or late July, August. Of course, it's a longer term play for him, but I think you stay neutral right here. We've been trading in a range over the past week. There's been really no good pushes to break outside of that, except for one day over the past week, and that was sold off right away. I don't know. I think you got to stay neutral here. China comes out with some, massive walk back in what they've said previously. I think it could rip higher, but I don't really see that happening right now. And of course, it's also worth to mention, with yields going higher in the U.S., that slightly complicates China's efforts if they do want to do stimulus, right? So you have to consider that too. They're going to look at
why though? Yields. Can you expand upon that for the audience?
Things like the yuan, their currency, their methods of funding, those monetary stimulus methods become more expensive. Yield differentials, of course, with the currency. Their currency, you could say it's dictated by markets, the onshore, or the offshore, the CHN. But they still have a lot of internal controls. They're not as capitalized or open to capitalism with their markets as we are. So they really need to find some way to invigorate domestic demand. I don't think they're going to do it to the the velocity that other people are saying or that was expected just a couple months ago. So I'm just not buying the copper story right now. I think it's kind of deflated, and I think it's going to stay a little deflated for a while.
There's this interesting dichotomy where the yuan is basically trading at the lowest level that we've seen since all the stimulus measures were announced in September. If you look at the dollar CNH exchange rate, you're effectively seeing all the gains that were built in after the Fed disappeared. We've since reversed. So while maybe copper and Chinese equities are holding on to some of their upward momentum, the yuan's sending you a clear signal here, right? Like, hey, you're flooding the zone with liquidity, whether it causes the economy to grow or not, we're going to be weaker. And if the yuan's weakening, what does that mean for regional competitors? What does it mean for Japan? Can they afford to have a strong yen? Probably not. Good for our 6J position, Thomas. But before we get over there, and we are wrapping up a little early today for Truth or Skepticism, let's make our way over to those energy inventories. Huge oil build this morning, Thomas. Oil prices are sunk. Obviously, we're still all waiting on tenterhooks for what's going to happen with Israel and Iran, but 65.1 IBR. This is the lowest reading that we've seen since prior to Iran's attack against Israel on October 1st. The vol is leaving this market. It's a hallmark of the geopolitical risk premium dissipating, is that oil prices start to slouch as the IVRs come in. It happened in April. It may be happening again right now. If geopolitical risk is leaving the market, that leaves long deltas in gold and silver imperiled, which is going to hurt. But it also means that if you are looking for, say, a vol dissipation event, we could be on the cusp of it here. Now, we're not quite back to the 50, but a little bit closer to that 50% mark here in CLZ4. You could see a really nice directionally neutral opportunity in the short term. Thomas, when you saw that inventory data this morning, did you read it as a sign of weakening demand, of a fact that the market's oversupplied? What do you say?
Yeah, I mean, globally, inventories are building, right? And that's happening in the U.S. Distillates were the only product to drop, but they didn't even drop as much as expectations. We were expecting a 2 million drop in distillates, which pretty much translates to diesel. It dropped, I believe, 1.1 million. Gasoline built, and like you said, the headline number, the crude stocks, we got a really big build there. It contrasts with what the API reported yesterday, the American Petroleum Institute, but the EIA's always had a little bit more market impact on crude prices. So this really isn't a good report. And we are on the cusp of OPEC bringing back some spare capacity in the market, rolling back those voluntary production cuts that they've had on. I believe they start that in December. Now, the bounce we had Monday and Tuesday, you could say that it was just, the market kind of reacted too harshly last week. There was some dip buying. Now that's gone. The 70 level, where do you trade this? You're in the middle of this September and October range, nearly, like you said. I don't want to take a direction one way or the other. There's some decent volatility here. I think like the other things we've talked about, Iron Condor is probably fine. China's refineries reported slightly better numbers for September from the month before, but they're still lower than where they were a year ago. So China weakness is still reflecting in the crude market. You got the U.S. economy potentially looking at a higher inflation environment that could dampen consumer spending, less people buying gasoline. We've gone from a really narrative bullish on oil from earlier this year, and the crude surplus is expected to come back, I believe Q1 or Q2 by most estimates. The EIA, the IEA, OPEC have all lowered their demand forecast over the year for 2025 demand growth. I don't want to say prices are heading back to 60 by the first quarter, but I think the trend is biased lower into the end of the year.
Yeah, it's difficult sledding for crude, right? China, unless they do something to stimulate demand, it's difficult to see how slouching Eurozone is going to lift up global growth. Crude here, possible catalyst at the end of the month related to China. They do have the National People's Congress coming up. You know, if they've announced all of these stimulus measures, let's just theme this out for a second. They do them at the end of September to see how the market responds for a few weeks. If it's clear that the market and the economy aren't going to pick up the changes that they've announced, then they can announce a new slate at the National People's Congress. If the economy has already started to respond, they can use that as a victory lap of sorts. We've already implemented some measures. We stand ready to do more. But right now we feel like the economy's gained momentum and yada, yada, yada. So I think that we actually should be on the lookout for another actually significant stimulus announcement, this time on the demand side, within the next, say, 8 days. And if it doesn't come within the next 8 days, then we very well may be looking at a market that says, you know what, China, we're going to take our ball and go home. Thomas, natural gas, as my temperature says, I need to be on wildfire alert today, which is totally normal for the Northeast in October. What do you think of natural gas here? It's down another 0.73% today.
Yeah, I mean, like you said, the temperatures, those heating demand days are going down. It's the start of the winter, and we are starting the winter with inventories that are above the 1-year average, above the 5-year average. Europe's inventories were built very well over the summer. So we're seeing on a pretty good amount of inventory and a mild start to the season, this withdrawal season. It could really set us up to keep prices lower. That said, this drop has been pretty big since the mid-October. So you get dip buyers coming in. It's a volatile product. Natural gas can make some wild moves. So you got to ask yourself, how do you trade it right here? I think I'm more prone to selling it rather than trying to buy it for the time being. And, you know, after the 2-day rally, Monday, Tuesday, is this a good time to sell? I think not yet, because you're seeing some selling, but there's no conviction in the direction right here, right? We're just taking a breather from the past 2 days. So where do you go? You get higher, you get around that nearly 2.95 level to 3, and you come up against former support from September. Is that where you sell? I think I'd be a lot more prone to sell it if we did get up there. So I'll be watching, you know, if we get up there, I'll be more inclined to sell it. If we move higher for the rest of the week, maybe get up to 2.88, something like that. I'll also look at maybe selling a call spread, something like that. Right now, I'm not touching it. I don't think this is a really good spot.
It's a doji day. It's an inside day. Maybe it was a turn. Maybe the momentum is broken to the downside, but does that mean there's going to be a bounce? I don't know. Thomas, a brief excursion to the world of FX before we wrap this up and make room for Sosnoff and Radigan. 6J here, slouching to the lowest level that we've seen going back to late July. Those 0064 puts, Thomas, there's still room. Time to get in. Look, the carry trade's back, right? The BOJ has made clear apologies for their actions. You've had politicians literally run on the platform of not letting the BOJ raise rates again. That candidate didn't win, but the guy who did, Ashiba, turns around and says, I don't think the BOJ should raise rates again. Come on. Carry trade's back. 60's doing terrible. The euro doing terrible. The pound doing terrible. Everything's terrible. This is 6E here on the chart. There's a lot of negative momentum right now, Thomas. A strong dollar, higher yields. This could be a problem for especially emerging market-related assets. EEM, HG, CL. Ugh. The great rate speed strikes again. That's just for James, our producer. What's next on the calendar? Whole bunch of things. Anything super important? No. Tomorrow, light day. Again, we have Tesla earnings after hours. That's probably more important for the NASDAQ than anything that you see here coming up tomorrow. As we wind down the show, brief bit of education. Today we're talking about contract size, notional, and tick values. Head over to tastylive.com, top banner, learn beginner futures to find this course by the fine folks on the Tasty Live research team, or click the link on the bottom of the slide. We need to make room, so read this yourself. on tastylive.com. We're out of here for today, Thomas. We'll be back tomorrow, same time, same place. Until then, good luck trading. So for Thomas Westwood, I've been Chris Vecchio. After a brief break, you have Sosnoff and Radigan. It's Wednesday. Time to figure out the truth or skepticism of it all.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Want to know what you're getting into before you dive in? When you trade options at tastytrade, you see your probability of profit and loss right where you need it. tastytrade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right.
I know it's on there. I know it's on there.
Warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's power?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Golf putt, Normal distribution. Reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Hello, everybody. We're back. I'm Tom Sosnoff. I'm here with Dylan Radigan. Mr. Radigan, how are you?
I'm a little shocked the Wednesdays really stack up on you. I don't know if I'm getting older. I feel like every day is a Wednesday around here. I mean, I just talked to you. I'm talking to you again. I'll talk to you again next Wednesday. It's very pleasant. I feel blessed to be talking to you all the time, but I can't believe it's always Wednesday.
If it's, what's the old movie? If it's Wednesday, it must be Belgium or something. If it's Tuesday, it must be Belgium. If it's Wednesday, it must be Radigan. Something like that.
That's right. Something like that.
Yeah. Anyway, it's we finally have a very kind of interesting day in the market here today. We haven't had a good old fashioned ass whooping in a while, and NASDAQ down 400, S&P's down 80. Dow down 600. Russell's the winner today, only down 20.
Couple percentage points. That's a real number on a day, any given day, any given Wednesday.
Yeah, 2% of the NASDAQ. No, it's a little ugly. You ugly. I'm just looking through everything right now. It's definitely a little ugly. Anyway.
A little ugly. How's my gold short that I didn't put on?
The gold short that you didn't put on was probably going to be a great trade because gold's down $31 and silver's down.
I've been saying that for weeks. See, it's like the house I didn't buy and didn't sell. But anyway,
it's like the girl I didn't marry. It's like everything. Blah blah blah. We got it. Could have been me.
It's good to be alive. It's good to be alive.
Anyway, I'm ready to go.
Well, do you read anything into the? You brought it up. Not that it's normal for us to talk about sort of in a given slice of life of the stock market, but does this mean anything to you? Little sell off. Everything. Let me put it this way. Everything. Right. I'm going to ask a question in a more interesting way because otherwise it's just profoundly boring. How much of the market's behavior, up, down, or otherwise, including today's sell-off, do you think occurs in the context of the upcoming presidential election, outside of our own desire to create meaning? Because obviously we're going to, no matter what, if it rallies, whatever happens, we're going to say, oh, well, before the presidential election, they were optimistic, they were pessimistic, they didn't know what to do. We're naturally going to make the association, no matter what the stock market does.
The great thing about a presidential election is that since the markets are making new highs now, they're selling off today. You can create whatever narrative you want, which is what I love about this. Yeah, it's the greatest thing in the world. If you're a Trump fan, you go, oh, the market's convinced Trump's going to win, so we're making new highs in the market. If you're a Kamala fan, you're thinking, well, Kamala's going to win, so the market's making new highs. You can say whatever you want.
Or you can flip it over. You're like, oh, it's selling off today because the market thinks Trump's going to win and these tariffs.
Yeah.
Or the selling off today because you go woke, go broke. Like you can.
No, that's my point.
Whatever you want to say, you can just say it.
Right. You can create any narrative you want. Like, the bonds are going down because Trump's going to win and everything he wants to do is inflation, and more inflation because he doesn't even understand what inflation is. And then the other,
he doesn't even know who he is or where he's located.
That's right. He's losing it. And then the other side of it is bonds are going down because Kamala's going to get elected and she's going to upset him.
She's never got a single vote in her life. She doesn't even know. She wouldn't know a currency policy if it was a $20 bill in her own pocket.
Exactly. So that's the beauty of this. That's the beauty of elections. You can create whatever narrative you want. I love the people that say, well, like there was, I can't remember who was listening. I think it was Stanley Druckenmiller, but I don't know who it was. But I think he was saying that
One of the big name talkers.
Yeah, it was one of the big name hedge fund guys. And he was going something like, and these guys just drive me crazy with their bullshit. It blows me away. But he's like, well, the market's kind of already, we're making new highs because it's assuming that Trump's going to win. Well, then what is it doing today? Like if that was the case,
No, that's
then what movie are they forgetting to watch? Did something change overnight? Nobody's even talking to like it's
new data in Michigan. New data in Michigan shows a Harris victory for selling off.
I mean, it's so freaking ridiculous.
No, but that's kind of why I asked you the question. It's in that spirit where it's like because so there's the pleasure. Whether you're a hedge fund manager, whether you're a tasty trader, whether you're a retiree in Carmel, California, you can look at the stock market, you can look at the presidential election, and you can connect any story you want that makes you feel good, up, down, or sideways.
Yeah, that's what I love about
my
it.
question to you as a veteran skeptic.
Yeah.
And both of us have some skepticism in us. How much of the stock market's actual behavior do you think is affected by the presidential election? Going back to my original question.
0. Less.
I want to say it's not 0. I want to believe that's not true.
Less than a couple of percent either way. Less than a couple of percent either way. I mean, for as much as people want to think, oh man, Democratic policies are so bad for the economy and so bad for wealth creation, but yet the stock market does significantly better under Democratic presidents. I mean, all this stuff is such garbage.
Trump is an unhinged super lunatic.
Well, he is, but beyond that, there's nothing,
But that doesn't mean the stock market is at risk.
Well, people rationalize it by saying that. That's how they rationalize it.
Oh God,
he's an unhinged lunatic, but it's all part of the act, you have to look past. I love
it's in the strategy. It's strategic unhinged lunacy.
Yeah. I was told that about somebody once. She's a lunatic, but you can get past that, Tom. So you never know.
Well, let me try this a different way, just for the pleasure of trying it. If I could tell you with certain, this is another great Sosnofian truism. If I could tell you with 100% certainty that either that Harris is going to win the presidential election, would you have any idea how to invest with that information? Could you take that as so-called inside information and put on a position and predict a financial outcome?
No. If you told me there's not a single.
And if I told you Trump was going to win, same question.
There's not a single election outcome that if I knew the results to ahead of time, I would know what to do. And I would bet a lot of money that everybody would be in that same situation. My gut said if we rallied up all the way up into the election, that it was going to be a very easy sale. If we sell off prior to the election, it's going to be incredibly difficult. And all along, I felt the path of least resistance is lower. So that to me is the easy trade. But if they sell off now before the election, like, today, tomorrow, the next couple of days, whatever, I will find it very difficult to have an election play, especially a downside election play. I think that'll be challenging.
So you're saying, if anything, you'd rather see the market not sell off like it is right now, and then basically anticipate a sell-off after the election, regardless of the outcome. And that's not a meaningful comment.
No, I don't think about things that way. So no, I don't actually want that. I'd rather see a sell-off now and a little pop in volatility now. I think it'll be better for trading. I don't think 2 weeks ahead, like this is what I want to happen. I think right now, I'd like to see today we got vol up right now, up over 6%. I like that. I kind of want to see a continuation of that. And so, no, I don't want to see us wait. Let's do it now.
Is there a volatility compression? Just how do I say this? So before XYZ Corporation reports earnings, there's sort of the tasty trade beginners trade, which is sell an iron condor on a highly liquid name before earnings, and you'll see what happens to volatility, and you can cover your iron condor the day after earnings. Does the election represent that? Can I do that? Can I sell volatility in the bond?
I don't think so. I mean,
and expect it to come in after the election.
I think we're at a couple of different market extremes here that are really interesting. Market extreme one, obviously the S&Ps. The reason I'm short S&Ps right now is because I thought that they would follow the bond market lower. And those two have been relatively, correlated as of late. And I felt that S&Ps would follow stocks lower. And I felt if they didn't, S&Ps would follow bonds lower. And if they didn't, S&Ps would sell off no matter who won the election. They might not wait. But there are lots of markets right now that are really interesting. But to get back to your original question, really interesting because they're at price extremes. But to get back to your original question, I don't feel like there is a real way to play the election unless you just flat out bet on the election.
Meaning predicted or polymarket, or you mean literally contracts on the outcome?
Yeah, the binary contracts on, election betting. Polymarkets is crypto only, not legal in the U.S. Predicted is a university site, but it only allows $800 max bet. And Kalshi is the only one that's CFTC approved and allows for you can do whatever you want, and that's probably the cleanest bet out there if you wanted to go that route. What's interesting to me, there's a couple of really interesting things about the betting markets to me. And I will tell you that in full disclosure, I spoke this week with all three CEOs of all three of those sites. So the CEO of Kalshi, the CEO of Predicted, and the CEO of Polymarkets. I'm friends with all of them. And so I talked, we were just bullshitting. And I feel like they're very interesting, and I'll tell you why. The Polymarket, not Polymarkets, the Predicted site's been up and running the longest, and they have a really real model, meaning that every bid and every offer is just another customer representing. There's no market making firms. So it's a true market with just customers on both sides. Bids and offers are just represented by customers because the max is small. The max you can bet is small, so it's pure customer representation. So I really appreciate that marketplace. I think it's the most accurate, I think. Kalshi, which is the newest, is CFTC regulated, and the primary market maker there is Susquehanna, which is, that's their business. They're market makers, and their business is, make markets. I mean, I always feel they're a little skewed because Jeff Yaz is one of the richest people in America, and also one of the largest Trump contributors after Elon Musk. So, but an incredibly brilliant trader, and runs
financial systems engineer, I would even say.
Yeah. I mean, he's a genius. Whatever you want to say. I mean, there's no other way to slice it up. I mean, I've watched him for 40 years. He's a legit rocket scientist. I mean, when it comes to market making, him, Ken Griffith, these guys are the best.
Next level.
Next level. Yep. And so that's who's making markets for primary market maker for Kalshi. And then
but he's also the cake is baked because he's a Trumper. So
hardcore. Yeah. Hardcore. And part of it's digital assets, part of it's, he made a lot of his money in TikTok. He really thinks Trump is the answer to TikTok not being, TikTok surviving.
He has policies that anyway. There's
Policies
a reason to potentially be.
Whatever.
It may be affecting the market. We don't know.
Polymarkets is interesting because they have converted what I consider to be dead money, which is like crypto money, into political betting and event-based betting, which is really interesting to me. That's why they have so much more money bet on their site. Their CEO's super young and crazy smart too. And they have the kind of the strongest odds. But I find their site to be really interesting too. It's just not really legal in the US, so it's a little more difficult to participate with. But anyway, I've been tracking all three markets for months now, and I find them all interesting. You cannot arb those markets, but I feel like they give you a really good taste of what the public sentiment is. And they went from Trump having a big lead a couple of months ago to Kamala having a huge lead after the convention, to Trump back taking over with a significant lead 2 weeks before the election right now. And that's kind of been
but that's true for all three markets.
It's true for all three markets. They're very different in the level of lead and percentage points, but it's true for all the markets. Sometimes they were mixed, but now they don't. Now they have Trump in the lead. All three markets do. So that's interesting. Now, all three markets had Clinton. Well, there wasn't three markets then. There was only predicted. Had Clinton in the lead, huge going into election night, just so you know, bigger than Trump's leading now. And in 2020, it was kind of a toss-up. So, anyway.
Meaning that the prediction markets, as much as we would all like to say, well, money talks and bullshit walks, that the financial prediction markets are no more reliable than a poll, based on anecdotes of 16 and 20.
We haven't had enough money bet in the past because it's been very limited betting. This will be the first year where there's, at least, let's call it $1 billion on the line. So you're not approaching Super Bowl-like numbers, but at least you're getting up there to public disclosures of whatever, close to $1 billion.
Sure. Okay, let's just start right here. The betting markets, which may be more credible than ever, albeit still developing.
Yeah, they're in their infancy.
Believe that Donald Trump will be the next president of the United States of America.
As of today, a lot can change. Yeah,
that's right. Last I saw, and again, this is a deeply easily manipulated data sets. The polling popular vote tends to sort of track 1 to 2% in Harris's favor.
Yes, she's still leading in the popular vote.
And then the gaming of the Electoral College, i.e. North Carolina, Michigan, Pennsylvania, Georgia, Arizona, sort of, I guess it's the big seven this year are the deciders.
Yeah.
Show momentum for Trump.
Yeah.
If you were to make a bet today, would you rather buy Trump at 60 cents unpredicted or buy Harris at 43 cents unpredicted?
Oh, I mean, I am biased. I am not.
But setting aside your buy, you're also a trader.
Yes, I am a trader.
Set aside your bias. Would you rather buy Trump at 60 or?
I can't.
Okay.
I can't.
Okay, but you don't have to buy Harris at 43.
I don't have to do it. I am going to, but I don't have to. But yes.
And you're doing that because of a personal preference, or because you actually think she's going to win, and it's a good financial decision?
Why would I ever do something if I didn't think it was a good financial decision? Like, I'm not.
People make all kinds of decisions all the times that are bad financial decisions.
They do if there's some other potential outcome that you're playing for. I don't have another. If I was going to bet on it, I would obviously do it because I would think that I'm going to get paid. But I do a lot of things.
So you think Harris is you basically you're taking Harris and the points as they would say.
I'm taking the home dog on a Monday night.
The Harris you're taking Harris and the points.
It's a home dog on a Tuesday.
And 7 points.
It's a home dog on a Tuesday night. Yes. That's exactly what I am, taking Harris and the points. But I'm also somebody that doesn't flip. Like I would never bet like when I play Baccarat, I only bet the bank. When I do certain things, I will never bet against the Bears. I don't bet against the family.
But you don't necessarily bet on the family if
You're
you
right.
think the family doesn't stand
That's
a
right.
chance.
If I don't
bet against the
if
family,
I don't like the bet, I will not
bet
make
on
it.
the family in this situation. Huh?
If I don't like the bet, I will not make it.
Right. And so you like Harris at 43.
I like Harris with the points. Yes. I mean, these are binary bets. There's not much to this. This is brain dead stuff. I mean, this is the stuff that they, this is flipping a coin. This is not.
And do you think that the stock market has as much conviction in a presidential outcome as the betting markets appear to have at this moment?
Let's put it this way. And I'm not this is not saying something crazy. I'm going to be willing to bet, I don't know. Let's say I bet $5,000 or $10,000 on the election total. I'm going to bet $500,000 to $1 million on the bond market. I'm going to do something. My bet is going to be.
You're saying, but on the bond market in the direction of Harris?
No, in the direction that I think it's going to go at post the election. It has nothing to do with Harris. It's not a bet on Harris or a bet on Trump. It's just, I think there are certain markets right now that have gone to such an extreme because the market is overplaying their card. If Trump wins or loses, I think the bond market's going higher. If Harris wins or loses, I think the bond market's going higher.
Your degree of confidence in the bond market directionally, regardless of the election, is a vastly more conviction than anything to do with the
Exactly. I think there are certain markets that have over discounted. They've gone to an extreme betting on a Trump win. One is the U.S. dollar, and the other is the bond market. And I think regardless of what happens, both of those markets are going to reverse the day after the election. And I'm going to be very well positioned there. I think the dollar had a ridiculous rally. It needs to be sold. I don't even know if it'll wait to the election. And I think the bond market's had a ridiculous sell-off and needs to be bought. And I'm not sure if I can wait to the election. But those are, regardless of who wins the election, that I'm not playing that as a bet for Harris or against Trump or any of that kind of stuff. Not at all.
Mm-hmm.
I just think the market gets this craziness, like what you recently saw what you recently saw in gold, is another example. And in silver, we got to a point of ridiculousness. It's coming back a little bit today. I think that that's totally normal.
How do you reconcile the opinion that the outcome of the election is relatively immaterial to the financial markets?
I don't. Why would that? Why do I have to reconcile that? I would have it no other way.
So you think that the winner of the presidential election has a meaningful impact on the financial markets in this particular instance?
No, I don't think the winner of the election has ever mattered.
Right, that's what I'm saying. So I'm saying that's the first part of the assumption. And then the second part is, with that said, after the election, I believe the bond market will rally substantially and the dollar will sell off. So on the one hand, who wins the presidential election does not matter. This is all hypothetical discussion.
Yeah.
And on the other hand, once the presidential election is behind us, you believe the bond market and the dollar will have material moves in November.
Yeah, and I think the stock market could have a material move too, but it depends where it is in 2 weeks. Like right now, if it continued to go higher, I would have thought it could have a material move to the downside. If it sells off now, then that bet's off the table. Like a lot of this stuff just, we have 2 weeks to go. I'm not so sure that everything doesn't change.
So it's more a function of where the market level is. It's the same as my non-existent short position in gold, which is not relevant to the election. It's relevant to the absurd nature of where gold has been. And you're saying the bond market is ridiculous. It's going to rally. Come on.
That's right. So I don't like the same way. I don't like all this crazy. I don't like all the craziness that surrounds all the speculation. That's why, we're doing an election special, I know, because you're participating in it. And I'm so excited about it because we're doing it the way that it should be done, which is having a little fun with it. Which is what everybody should do with the election. It's a very serious moment in history, but we should have some fun with the, speculating the outcome, because taking yourself too seriously with respect to that is just, it's nonsense. I hate it. It drives me crazy.
My friend Chris Vecchio, do you know who I'm talking about?
I've heard of him.
He's my friend.
Okay.
And he believes that there are specific securities that are related to Donald Trump.
Other than DJT, I'm not sure what he's referring to.
Again, I don't want to misrepresent his Trump portfolio, and I myself can't remember the names particularly, but it's some set of names, like McDonald's and like.
Oh, McDonald's is having other issues today. They're trying not to kill people from eating a quarter pounders with cheese. So
yeah,
I don't think
that's a conspiracy theory. Listen, I'm not a conspiracy theorist, but I actually think that the CDC E. coli situation is a direct political retribution for the Trump stunt. I think this is the Biden administration.
Somebody died, so I don't think so. Okay.
Whatever. People die all the time. Somebody that eats at McDonald's dies every day because so many people die and there's so many McDonald's. Okay. So to suddenly say because this person ate at McDonald's and they died, that I could say that any day.
That's a great thing. You never want to eat at McDonald's then ever again, because you don't want to be the guy when they say, well, he just had lunch at McDonald's and now he's dead. I wonder if he got E. coli or if he died of natural causes. I don't want to be that person. So yeah, you're right. Never eat at McDonald's again.
My point is, do you think there are specific stocks that are Harris stocks or Trump stocks other than DJT, obviously?
Obviously DJT, because it's a single point of
Setting
failure.
that aside, that's obvious.
I do think there are certain. I think Trump will be. I think the one place where everybody benefits from Trump will be. I hope he follows through with this if he wins, but changing up the SEC and getting rid of Gary Gensler. And so I think the one positive that I do see if Trump was to win is that it should tear down the crypto fences. I think he's committed to that space. He sounds like he's committed to that space of really opening it up, which I think would be really good. And I'm all in favor of that.
And it's also, I would say, very good for offshore passport holders.
Offshore passport? What does that mean?
Because the United States is the only country that taxes the passport regardless of your residency.
Oh, okay.
And Trump is going to eliminate taxes on the passport.
Yeah, because one of his friends was paying too much money in taxes.
Listen, he raised our taxes in New York because we didn't vote for him, okay? So this guy, that's not. Anyway, the question is, are there you say crypto, that crypto would rally on a Trump victory?
I think so.
Mm-hmm.
I think so. I think some of the, some of that space would rally, I think. But I don't know. It's already had a huge rally down today, but already had a huge rally. But I don't know. Like, I really don't know.
For sure. Who the hell knows? Would you rather be long Harris on predicted or poly market right now, or short DJT in the stock market?
No, I don't want to be short DJT, but not because I'm scared of DJT. It is very illiquid. It's hard to borrow, so you can't really be short it. And it's not really a tradable stock, so I don't trust that that stock. I don't even know what volatility. My guess is, and I have not looked at this stock in a year because I really don't trade it because of the liquidity issues. It's got an 81. It's got an 81 IV rank, which is fine, but it's got an implied volatility. Yeah, it has an implied volatility of 247 in November. I'm sorry, in December. So what that means is that this stock is priced. It's a $35 stock with a December expected move of $23. So they're expecting this stock over the course of the next year to go to 0 or 100 in a year. And
which makes sense.
Right. No, I understand that. It says 250% volatility means it can go up 2.5 times or down to 0. And with a $23 expected move in December alone, which means, basically the stock's either going to $10 or to 60. And so I don't like that risk reward at all. So no, it does have a lot of volume today, but I wouldn't trade it. So no, I'm not trading it.
But the point, but it's not about that's a structural critique. That's not a value critique.
Yeah,
it doesn't really. It's not really a meaningful answer.
No, it's a hard to borrow stock. I don't know what the. Let me see what the borrow rates are on this. Hard to borrow. It's not that bad. It looks like it's not. The borrow rates aren't that bad, but it's a hard to borrow stock, so you have to pay a little extra. It's not ridiculous. I haven't traded it in a year, so I don't really care.
Yeah, I understand. Who do you actually think is going to win the presidential election 2 weeks from now? Who do you want?
I think Harris is going to win.
I think so too.
I think
I think Trump might be better for the world.
Oh my God, never. But
just because I think Harris is extremely pro-war, and I think more war is not good for the world, and to have a president who likes lots of wars is not good for the world. That's my honest opinion.
Okay, we'll see. I don't agree with you, but we'll see.
You don't agree that Harris is more pro-war than Trump, you're saying?
No, I don't think so.
Listen, obviously I don't have no idea. I just have a fear.
I don't know. I don't know. I'm looking forward to this election. It'll be fun to watch.
It's kind of a fun matchup because they both have such fabulous. They both can be so offensive in their own way. So they both generate a tremendous amount of disdain. Like Biden was very boring. It was hard to hate Biden. It was just you were just befuddled as to how this was even happening. But Harris, is capable of provoking all sorts of animosity. And Trump, no one provokes more animosity than Donald Trump. That's his forte.
No, he does it. That's his.
He gets out of bed and he makes everybody nuts.
That's his calling card.
What he does.
That's his calling card. He loves it. That's his thing. He wants that. That's how that puts him on the. That's his front. That's his front page. That's his whole thing.
Now, interesting, because some people, they pick an issue, low taxes or whatever it is, right? You mentioned Jeff Yazd and TikTok. And then they basically put on blinders, and they're like, well, which of these, forget the candidates, which of these candidates represent policies that are in my self-interest? which is how you suggested Jeff Yaz might be behaving, or how whoever, various people. You yourself are of a very pro-crypto persuasion.
I'm pro-free markets. I don't really think about it as crypto. I'm pro-free markets.
Okay, that's just some. You're just playing games with words now, but that's
no. I'm not. I'm for less. I'm for. I don't like regulators getting involved in free markets. I don't like it at all. So I'm for less regulation and more free markets.
That's fine. Why not vote for Donald Trump simply because of his lower, his advocacy of a lesser regulatory state, considering that you yourself are a lesser regulatory advocate?
Because I don't vote for pathological liars.
Even if they advocate policies that you agree with?
Even if they gave me $100 million.
Really? So if Donald Trump offered you a wire transfer of $100 million in exchange for one small vote in the District of Illinois, you would not oblige?
No.
Mm-hmm. I mean, Donald Trump stole a fortune from my family, so if you want resentments for Donald Trump, I can line them up. I wouldn't vote.
I don't
for
want
him.
any resentments. I don't want anybody else's story. Just my own. I don't care. I mean, would you sell your vote for? Is there a number you'd sell your vote for? Is there? I'm just curious. Is there?
No, sir.
I mean, that's a serious question.
Discussion. I'd probably be more likely to. Yeah, I think I would sell my vote because I don't think voting really matters.
Right. A lot of people would. A lot of people.
I don't think America's really. I mean, if you want to know what I think the claim of America being a democracy is a fraudulent claim. It is a propagandist. It's not a democracy. You can buy my vote 10 ways. I'll sell it to you 50 times.
Well, you just changed. You just went from you would not sell your vote.
No, but I've changed my mind. I've changed my mind.
So now you'll sell your vote.
Just to be clear.
Okay.
Yeah, I'll sell my vote for $1.
I'll buy it.
Okay.
I'll buy it.
Sold to you.
I will buy your vote. Your next 10 birthday wishes. What else do you want to sell? I'll pay $1 for everything. I'll pay $10 for everything.
A lot more than my birthday wishes are worth. You can't. Those aren't for sale. My birthday wishes are worth a hell of a lot more than a vote in the U.S. in the gerrymandered uniparty American political system. And I'm trying to listen. I'm trying to withhold some of my personal views here for purposes of broader thought.
Then I'll buy.
I'd hate for you to.
I'll buy all your future votes from you. Just give me a number. Just because I just own it. Then you can't say another word ever. I want to buy.
I can say anything I want. My vote is worthless. You can have it. I'll give it to you. Okay. The whole system of voting is actually a mechanism to delude people into the belief that they're in some ways relevant to a corrupt system that's managed by a small number of financial interests who control both political parties, which is why most people don't even bother voting. What's the largest political party in America? People who don't vote. Why do they not vote?
I don't know
because they are aware of the fact that large financial interests control both political parties. Will result in the same healthcare policy, the same war policy, the same bank policy, blah, 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 blah.
That's a cop-out answer. 2/3 of America votes. 1/3 doesn't.
That's not true. That's not true.
Like 60-some-odd% of America will vote in this presidential election. And
I will bet you $100. We'll do over-under on participation. That's a nice bet. 60%. I'll take the under. You take the over. $100.
What number are we? Yeah, fine.
We'll go to like the Wall Street Journal or something. Like
fine.
We'll check the
I'll
Wall
take
Street
over.
Journal, like
I'll take the over.
The percent. We'll use the Wall Street Journal report for the percentage of registered voters that vote. And if it's more than 60, you win. And if it's less than 60, I win.
Okay, fine. Done.
I think that's a good bet. They should put that up on predicted and stuff like that.
Done.
An over under at 60.
Done. I'll take over. I don't even know what
it's going to end up being like 54% voter participation.
It could be. I'll still take over 60. I'll take my chances.
The thing is the thing that I appreciate about you, even though it's incorrect, is that you're such an optimist. You're such an optimist that you're willing to sort of believe that you're willing to believe. And I appreciate that. I find it to be endearing. But I find for such a cold-hearted master of the universe, billionaire next door that you are, that you have this sort of this strong belief. Come on. Anyway, there's a reason Donald Trump is so popular. It's not because people like him. It's because they're profoundly frustrated with what they perceive to be a corrupt political system that is non-functional, and they know that Donald Trump is it's like the ultimatum game. They would rather burn the house to the ground, even if it means that they die, than perpetuate the corrupt system. I'm not saying they're right, but people misunderstand. They're like, why do they love Donald Trump? They don't love Donald Trump. Some people might, but most people don't. But they are so frustrated with the legacy political system that they'd rather send the orange idiot destroyer than tolerate more of the bullshit.
They should be frustrated with themselves, not with the system. And it's just, yeah. I mean, listen.
Now you're speaking like the Portland, Maine librarian. Okay, that's something that she would say.
That's Trump's genius right there. He's an idiot, but that's his genius, is that he figured out. He figured it out. And whether he did it intentional or just, he backed into it. That's his genius. It's okay. I give him credit for that.
All right. I think he's going to lose, though. All jokes aside, I do think he loses this presidential election. I do, actually.
So do I. But anyway, plus I don't want Tom Preston to have to move to a different country.
I see he's saying he's going to another country. He can come to Italy. We've got an office here now.
No, he can't.
I've opened the Ernest Hemingway it's like MTV Unplugged. This is Tasty Trade unauthorized.
You can just move to Chicago. Chicago will be our own country. Chicago's just gonna,
You're gonna be a city state.
We'll be a city state. Yeah, Chicago will be a city state.
You'll bring him home.
Yeah, we'll be fine.
I mean, how can you be so anti-Trump and you live in Texas? I would think that's hard to reconcile.
I don't know.
Yeah, how can you be a Texas rancher who's a Harris voter? I need to get him on the phone.
I don't know. Not sure how that works. Yeah. But I never understood Texas, except I don't want to mess up the barbecue scene there, because we're going to Texas in a couple of weeks. I don't want the barbecue scene to be messed up. So I'm very excited.
Let's not do anything with that. Nobody make any sudden movements.
My last meal before the election is Texas barbecue, and I'm very much looking forward to it.
At least it's not a McDonald's, so we know you'll be alive on election day.
Well, we have created a rally in the market of about 20 handles while we're talking, which is good news. I'm Tom Sosnoff. He's Dylan Radigan. We went a little bit over today. Sorry about that. And thank you, Dylan. We will see you next Wednesday, and then the following Tuesday for the election special. We have a whole crew from both sides of the aisle, and lots of different speakers and lots of different games. You are not
from Asia, from Europe, globe. We have the whole earth covered.
We do have the whole earth covered, and we also have a bunch of games, and we're giving away a bunch of money. And the games are really hard. I don't think even a Dylan Radigan will know the answers.
Let's find out. I think I will know the answers. It's what I do.
We'll see everybody next week. Thanks so much, Dylan.
Bye, Tom.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 gross. grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you have any questions, feel free to toss them in the chat.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns, and in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns, and in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you have any questions, feel free to toss them in the chat.
What is going on, and welcome back to today's assignment. We're back in the classroom with Dr. Jim. Dr. Jim just got back from golfing. I don't know. He looks like he just got back. How we doing today, Dr. Jim?
Man, I'm good. I'm good. Hey man, you gotta ease up on all these short scalps. Cause look what you did to this market, man.
That's not me.
Like, you can't just be pushing around the little guys like us.
That's not me.
Like, you gotta take it easy on those MNQ scalps. You done sent the NASDAQ down 400, man. Look at what you're doing.
I don't know what buttons I hit, but the market is down on the day. But all I gotta say is the volatility index is close to 30, and we're making progress. It's
No, close to 30? What are you
It's gotta
talking
be.
about?
It's gotta be.
No,
close.
it's like 19.
19 is basically 20, 20 is basically 25. We round up a little bit. We're at 30, Dr. Jim.
I like it. All right, so
Let's
where
check
is it right now? Is it, okay, 19 and a half.
19 and a half. I mean, 20 and a half at its highs today. Election season, election day, 2 weeks away, a little less than 2 weeks. I think it's 2 weeks on the Tuesday. Volatility is increasing a little bit. Will it continue throughout the rest of the week, into next week, into election day? I don't know. We'll see. I'm happy about the increase in volatility. I do want to get on a position or two today, Dr. Jim. Don't really have much going on in the portfolio. It's been a little lackluster. It's been a little quiet, but for the overall market, what are your thoughts on today's sell-off? What was driving that?
Yeah,
absolutely.
I don't know what's driving it. Neither does anyone else. I mean, they're going to tell you after the fact, but
Yeah.
everybody and their brother and sister told me that long gold, long silver was the play. Long gold, long silver was easy money. And now look at this. You're getting absolutely clobbered on long gold or long silver. And so this is one of those days where, the research team has looked at this. We've talked about this for many, many years. You get these correlation equals one type of days where on the way down, it's not that uncommon for everything to just kind of move together. Like, there's nowhere to hide today. I mean, all the major indexes are down. The metals are down. You've got bonds even down. You've got oil down. I mean, there's nowhere to hide today. Nowhere to hide today. So I don't know what that means. I mean, it's, again, the market's been so incredibly strong. I mean, this is kind of overdue in my opinion. Not necessarily in this form or fashion, but some type of, retreat, some type of correction, whatever. Now, what's going to happen from here? I don't know. I mean, that's why they pay you the big bucks. You're going to tell me what's going to happen from here. But then the second thing is, as far as your positions are concerned, you, my friend, are in luck because you're looking for new trades, man. Let me present you with two earnings trades tonight, my friend. IBM and Tesla. Let's go. You're ready.
IBM, Tesla, Dr. Jim. It's the 23rd. We're almost into November. Do you remember what my New Year's resolution was?
I don't remember actually. You'll have to remind me.
The New Year's resolution was to not really take earnings trades this year. And I ended up taking two. So yeah, I wasn't as disciplined as I should have been, but I will say the last earnings trade we talked about worked out in my favor very well. I don't remember if was it NVIDIA? It was something really volatile, but I do remember we talked about it hot back on stream and it worked out. I'm 1 for 2 on the year, Dr. Jim, and you're really on my shoulder trying to nudge me over there like the devil on my shoulder and the angel. And I don't know if IBM or Tesla's going to be the move today, but I'm open to checking it out and looking at it. What is the intern saying about Tesla right now? What's the word?
Man, I mean, has Elon Musk ever let you down before? Like, let's think about this. Has Elon Musk ever done something, said something, tweeted something crazy that let you down? Of course not. Of course not. So in Elon, we trust. So Tesla to the upside, that's a slam dunk, man. That is a slam dunk. I'm like 50% sure of it.
Tesla to the upside. What if we did something in Tesla, but instead of an instant pain, instant gain, we do a little bit of extra time on the contracts if it's doable. Let's see what we got here.
I mean, I've got no issue with that. No issue with that whatsoever. You can give yourself as much time as you want, man. We can go into January 2025 if you want.
I'm thinking.
Yeah, there you go. Look at that leap option. Look at that.
No, typically, again, what is your kind of process?
Hold on a second. Go back to January 26th.
Okay.
Hold on.
I'm in there.
I'm just curious. Wow. Look at the expected move in the upper right-hand corner. Plus or minus $90. I kind of thought it might be more than that. But then it's like it's only a $200 stock. I mean, that's a 40% move either way in basically 14 months.
No, I did catch the $90 move. I thought I had clicked on the weeklies for a second, Apparently, that is the 2026. But no.
Wow. Okay.
You're right, though. That still does put things into perspective. 40% move either way, $200 stock. I mean, that's some volatility. I mean, even from like more of a longer time horizon, especially for some long-term investors. I see why that boat gets a little shaky sometimes. If I'm a long-term investor and I'm seeing a move of that significance to either side, those shareholders are definitely bought in, because that's a bumpy ride. Even if it works out, that is a bumpy ride with Tesla. But did the intern have any words on the day, Dr. Jim, before we go into these contracts and what we want to do for today?
Yeah, I mean, it's got to be, again, it's upside for obvious reasons that we just talked about. And I mean, expected move butterfly, man. Expected move butterfly, right? Because it's like, hey, you're not putting a lot of, capital at risk. If you happen to get paid off, it could be a really nice trade. It's a little difficult on like a Wednesday. Thursdays are a lot easier, but Wednesday is better than Monday or Tuesday. You go into the front week. So this would be, if you're going to do this type of trade, this would not be, you don't want duration. You want to do this now. You want to do this in this week.
That sounds nice with the butterfly. I know we did the butterfly last time, and the butterfly ended up landing into one of the best ranges on the curve that it could have possibly landed in. So I remember that worked out really well. But maybe a little bit more time on this, Dr. Jim. I know, 58 days out. What am I doing?
Here, no. Here, I got you, man. I got you.
Okay.
No. Go into the front week.
Okay.
No, I'm not going to let you slide out of this butterfly. Go into the front week. So look at the expected move, right? It goes up to 230. Right. Obviously, you're cool with playing Tesla to the upside, right?
I am.
Okay, beautiful. Excellent. So what we're going to do, try like a 12.5 point wide butterfly. Go 17.5, go 217.5, 230, and then 242.5. And just take a look. Let's see how much that is.
Okay, so I'll do 217.5, 217.5. How wide is
230. 230. Go right to the expected move.
Right.
And then 242.5.
242.5.
Now you got to flip all those around.
That's
You're buying the outsides and selling the inside.
There we go. 242, 242. There we go.
Now go double up on the right. Yep. There you go. 227, dude. Come on, man. Come on,
Let's check it out.
227. Like, you're giving up what? 10 Bo Nix jerseys. It's nothing. You don't even want one Bo Nix jersey.
10 Bo Nix jerseys.
I'm just saying, like, maybe you get like 3 or 4 Terrell Owens jerseys. Now maybe there you're giving something up. But Bo Nix, nah, man, this is not his time.
This is not his time. I mean, we did beat the Bucks. We got a couple confidence boosters under the belt here, and I do have a confidence booster. The last trade I think was NVIDIA. We did a butterfly. I'm feeling a little bit more comfortable. I think we made.
So hold on, but we're not done. We're not even done yet. No, we're not even done yet. No, we're not even done yet. Okay, so this is one part of the trade. So go ahead and delete all this. We'll come back to it in a second if we want to do it. So you want to do something. You've got a hankering to do something longer term. Hey, let's do it, man. Open up whatever you want to open up. 58 days, January 26th. Like, you do whatever you want to do. How far do you want to go out? Boom,
we'll
58
go out
days.
to 58 days. Yeah, December.
Let's hedge this upside butterfly with another bullish trade where you're selling a put spread.
Okay, so I could do something. Let's see how much we can collect.
Nah, you gotta go closer than that.
163. That's decent-ish. That's a little better. 185.
There it is, right there. There it is.
Both.
So look at that, man. $1.85, right? What could possibly go wrong? What could possibly backfire on this? The correct answer is everything. If Tesla goes down, you're going to get crushed on both. But it's not going to go down. We already know that. Okay. Like, we're 52% sure it's not going to go down. So you sell the put spread to pay for the butterfly. And if the market does rally, and again, in Elon we trust, then even if it doesn't land perfectly in your butterfly, you're in a good spot. I don't know what more I can do for you, man. Like, you can only lead a horse to water. You can't make him drink.
I'm not against the idea. And I even appreciate you bringing it up. But with that being said,
I appreciate you appreciating me.
I appreciate you appreciate me appreciating you. But with that being said, I think I do like the butterfly. I'm not against the butterfly. I mean, 200, just a little over $200 in buying power. So, I mean, worst case scenario, I mean, if I did want to get out of it a little early, if I see it's bust, I could do that. But worst case scenario, risking a little over 200 bucks in that trade. I mean, I'm risking more in this put spread if I were to sell it theoretically right now as we speak into the December cycle. So I'm not opposed. Before we do send this through, Dr. Jim, it's going to be IBM or Tesla. I probably won't do both. Do we want to look at IBM before we pull the trigger on Tesla, or is IBM kind of the back burner kind of earnings to take a look
That's
at?
going to be your call. That's going to be your call. I did them both. Okay. And, you know, I mean, I want to know, I mean, how do you, I mean, come on, man. Does your generation, do you guys talk about IBM? Do you even know IBM exists?
Give me a quick second. I got ChatGPT right here. No, yeah, of course we know IBM. There's no conversations. I would say there's more conversations with your peers as well, Dr. Jim. There's got to be more conversations about Tesla right now because of how relevant they are in general.
Of course, no, 100%.
Okay.
But my question to you is, do you guys ever talk about IBM? Do you ever buy or use an IBM product and think about it?
I would not say so.
Exactly.
But somebody is, because look at this stock price over the
I mean, look at that stock price, 232, man.
Somebody
I mean,
is.
actually pull up like a monthly chart and go back like 10 years. Like you think it's impressive for 1 year. Man, give it look at that.
Oh my goodness.
Look at that thing.
What is going on right now?
On the bottom 2009, you could have gotten some IBM shares for $60.
I know, what was I doing?
And now you got them at 230.
Yeah, I was at recess. What was I doing?
I was gonna say 2009. Time. You were what? You were like 6.
I was.
You know what I'm saying? You were trying to score some fruit snacks. You should have been buying IBM shares.
Fruit snacks. I think about 11 or 12, but I was still eating fruit snacks.
Of course, dude. When mom put the fruit snacks in the lunch, that was your day. Like knew, like I'm gonna make it happen today.
Good day. It's a good day. I knew. About to put on some Tesla. I think I'm gonna go with Tesla though, Dr. Jim. I do.
Okay.
I do like IBM. This one looks like it's going to be pretty volatile. Did not know IBM was doing these type of numbers over the last, decade. But I'm going to go with Tesla. As we put this on, though, what were your thoughts on that Tesla robot? I can't remember if I had asked you that last time, but what was your initial reaction to it? Did you see or hear anything about that?
Remind me again. Is this the bartending robot?
Yeah, the same one.
Okay. Yeah, but somebody was controlling him, right? He wasn't doing all that by himself.
No, my initial thoughts were it was doing it by itself, and then I was informed somebody was controlling the robot. But what's your initial reaction to something like that?
I mean, it has a long way to go. Okay. I mean, it's, and I'm not saying we're not going to get there, but it's a long way to go. If you've got somebody controlling them, I mean, it's impressive, don't get me wrong. But I mean, in terms of like Will Smith, iRobot, like they're taking over, we've got at least 6 months.
Yeah.
Probably at least 9. And then we'll be in trouble.
No, I agree. I think I'm gonna go with, and then we'll be in trouble. I'm going to your house, Dr.
No, we don't have any room in this house unless you want to bunk up with the, you'll be in with the other 3. We'll have all 4 of you in the same room.
You guys got through Helene and Milton. I feel safe over there.
No, dude, don't feel safe here. No, man. Roof's damaged, fences destroyed. No.
Hey, studio's still standing though.
Studio is still standing. That is true.
Studio's still standing.
So what are you gonna do? Are you gonna finance this bad boy or not? I mean, what are we trying to do, man? Are we trying to make money, or are we just chit chatting back and forth?
No, I think we're trying to do what we're trying to do. What are we trying to do though? I don't think
That's a great non-answer. You didn't answer either one of my questions. You were right in the middle.
I think I'm gonna go with I'm gonna put on the butterfly, but I don't think I'm gonna finance it. I don't think I'm gonna sell the December cycle. I think I'm okay with just going boom or bust on just that butterfly and seeing what happens into the next couple of days. I mean, I'm comfortable with the $200, a little over that of buying power, which again, my max risk is the credit or the debit that I'm going to pay for it. So I'm not against that, Dr. Jim. I'm also risking a little bit more on the December cycle. I know, I'm selling it. It's a little bit different, but I'm going to go with the butterfly. I do like that. I know we've sold the 217.5, bought the 230. Let me adjust this. There we go. 230, 217. How wide is that? That's
no.
12 and up. What's that?
You gotta I'll clear all that away. Clear all that away.
That?
That's a hot mess. You got all kinds of things down there. You gotta buy it. You gotta buy the 217.5. You gotta sell the 230.
Selling the 230.
And then buy the 242.5.
Buying the two. Oh my goodness.
Yeah, you got it. No, you got it. And then you got to go back in and double up. Now move the 240 to 242.5.
There we go.
You got to make it even on both sides. You don't have to, but I mean.
2.5.
So there you go. There it is. $2.30.
Not bad. 236, 234. I love that pop though. I just love a 26% pop. That's my favorite.
Now I don't know if you're being sarcastic, but it's backfiring a little bit because on a butterfly though, a lot of times you do butterflies, you'll have pops of like 10%, dude, like 12%. Yeah, no, they're low probability. You know, they're low probability because look at the payout, man.
No, of course.
You're risking one to make 5.
No, Dr. Jim, you showed me. I did see 8 payout last time. I think I was like a 3 or 4 hour trade. I made 3 or 4 times what I was risking on the trade on the butterflies. So I will give you that. You did kind of nudge me a little bit more to dip my toes into butterflies and get a little more experience with them, especially for the debit. So we'll send that through. We'll adjust by a penny. I'll pay an extra penny.
No, dude, do 2. Please do 2. Please do 2. Please do at least. Now the mid price is 237.
Oh, no,
please do at least.
Watch this.
No,
Watch
it's
this.
not going to get filled.
What? There we go, Doctor.
Whoa, look at you, man. You got
what my
special connections?
You know what my mom would tell me growing up all the time? Patience is a what, Dr. Jim?
It's something, man. I don't know.
Patience is a virtue.
Yeah,
that's what I heard my whole life.
Okay. All right. Well, shout out to Mama Coleman, dude. She raised you right. So here's what I want to know, though, in the final minutes. What you got for me on the E. coli breakout at McDonald's, bro? Like, what's going on with the new lunch routine? Like, are you still going to go in there? You're still going to try? I mean, because, the implied volatility rank of your lunch is now 100.
No, you're right.
So what are you going to do?
I will say I did change my diet up a couple weeks ago, so I am happy. Coincidentally, I changed up my diet, I was like, I'm going to start eating a little bit more healthy. I'm cooking way more healthy diets just a couple of weeks ago. So I didn't catch any E. coli breakout. So whatever McDonald's does at this point, it's their business. I'm not really eating there as much as I was, but it doesn't look like, the recovery. We sold off a lot, the recovery. I haven't heard much news on the E. coli breakout until then. I know Luis that I was streaming with brought it up, and then I turn on the news and I see it on the news and I'm like, is this thing such a big deal as they say it is, or not? But
pull up a daily chart because that's still a monthly chart.
Oh, right.
This happened last night. This just happened last night, and so you can see. That's that's a little something right there.
No, yeah, I thought
McDonald's dropped what 6%. That's a pretty big drop. Now the question is going to be what's going to happen, moving forward. I just remember when this happened to Chipotle, that was 5 or 6 years ago, I guess.
Oh.
It was bad. It was really bad. Chipotle got hammered.
I thought you were talking about.
Hammered.
I thought you were talking about when the CEO went to Starbucks, but you're talking
about
another type of breakout.
I'm talking about I'm talking about like the salmonella stuff. I'm talking about like people going in for the guac and like coming out with like shingles, right? And so it's like, man, that's not good. That's crazy. And so I don't know. Is McDonald's going to be a similar type of deal? I don't know.
We'll see. I don't know. I feel like Domino's. I feel like McDonald's is so dominant in terms of being the biggest restaurant chain out there. If anybody can recover from it, it's probably McDonald's. And if McDonald's doesn't recover from it, I think that's some good insight. If you're another food business in that industry, knowing if something like that happens to you, and McDonald's can't recover from it, you might take a hit. But no, as we close out here, though, let's take a quick look at Starbucks. I know Starbucks had earnings.
Yeah, they got hammered too, I think.
Okay, yeah. They got that McDonald's treatment. Oh, they recovered.
Look at that, man.
You can even tell.
Oh, wow. Yeah, look at that.
Yeah, you can even tell.
Wow, that's crazy. Yeah. That's unchanged.
Unchanged.
Man, look at that. They were down under 9. No, they were down to 88, it looks like.
Look at that. Yeah, that wick is all the way down there.
Man.
88 flat. 88 flat. Dr. Jim,
this is another good example, that if you knew the numbers beforehand, if you knew the numbers beforehand and got short and got out right on the bell, you would have been fine. But man, nobody saw that coming. Nobody saw that type of recovery. That's crazy to come all the way back unchanged.
And you see, if this was me in 2021, I was selling iron condors on almost everything earnings. This would have been a beauty if you sold an iron condor in there because, unchanged, unmoved. So that's going to pretty much do it for today. We'll see how this I can just trust Dr. Jim to get me into something watching the markets longer after the bell closes, as if I don't watch this market all day anyways. But
yeah, you're trying to put this on me when you and I both know that you got the MNQ machine oiled up. It's ready to go. Like, it's ready to go. It just needs you to push the button. As soon as this is over, you're going to be in there pushing this market even lower with your short MNQs.
Yeah, right. No, I mean, we'll see what Tesla does, Dr. Jim. It is kind of nice to partake in some of the earnings, especially you just feel more a part of the community sometimes when you're like actively involved. So we'll see what we get after the bell. Anything before we head on out of here today, though, Dr. Jim?
No, I love it. I love it. It's
Cool.
a pretty quiet week from a news standpoint, but obviously not quiet in the market. So,
Yeah.
we'll see how the week ends out. Then you've got next week, which is the last week before the election, but then you've got jobs. You've got all these other things happening next week at Halloween, of course. So, yeah, I mean, this could be the October surprise when the market kind of does something crazy when there isn't even any news to be the catalyst.
Yeah, I mean, I think you summed it all up pretty well, but that's going to wrap it up for today's assignment, Dr. Jim. We always appreciate having you in the professor seat over here, but that's going to do it for today's assignment. Thanks for taking the time to hang out with us today, and we'll catch you guys next time. Peace.
Peace.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Hello, everybody. Tim Knight, and we've got a red day for a change. No particular reason given. It's not like there was any big news or even little news. It just started selling off, which is pretty cool. My only disgruntlement yesterday was getting out of silver. I am not gruntled anymore. It's actually working out nicely because a couple of weeks ago when I got all hot and bothered about silver, my plan was to take on a medium-sized position, ride that first wave up, take profits, wait for it to fall, and then really get aggressively long. And those first two steps worked out fine. And in retrospect, they absolutely worked out fine. I missed the top by a day. But it's a good thing I sold on Monday after all. And I'm going to wait now. We're having some nice sinkage. And I'm glad to be standing at a discreet distance. I've got our symbols ready to go for you, so let's jump in and kind of catch up with one another during this increasingly exciting market. We start off with a spider, which is down for a change. We are exactly at the trend line. This is emphatically important. There's the trend line right there. It's anchored to the August 5th brokerage's failed bottom, and we tagged it again today. So we'll see if they let it break or not. It's kind of cool. We were at lifetime highs just a few days ago on the 17th, and each day it slipped a little and a little and a little. And today we're starting to get some push. Everybody's all hot and bothered now because we're down 1%. But it's the trend line break that counts. That's what to watch for. IWM also down a massive 1%, and it's basically undone days of shooting higher. So it's just this upside down V that we've got. Must be a little frustrating for our bullish friends out there. And the cubes down almost 2% also. And like I said yesterday, oftentimes when we look at the charts, I'm seeing them for the first time too. It's not like I rehearsed before we go on the air. So I didn't know the spider was exactly at the trend line, and I didn't know the cubes were exactly at the trend line. And so that makes sense given the fact that we've been bouncing the past half hour, but it makes it all the more important if those trend lines do break, because they have affirmed their importance by the fact that they stopped there. Now, mind you, 99.9% of people see this. They don't see nothing. It's helpful to have something as simple as a trend line to make sense out of this instead of just random squiggles and wiggles. As the days go on, more and more big stocks will be reporting that will inform whether those trend lines break or not. Here's Amazon, for example, down over 2.5%, about $5. And it's a mess. I'm not in it. I've got 15 short positions now. This is not one of them, although I wouldn't be too upset if it was one. It's not a bad chart on the short side, especially how lofty it is. But this is the kind of stock whose prospective drop could really get things rocking to the downside. It hasn't quite happened yet. We're at the trend line. I got to pound the table on that point. EFA is aping exactly what's going on with the ES and the RTY, down a little more than 1%. It's been a steady slipper. We peaked on this one last month. Down, 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 like so. Hasn't reached support yet, but it's been a nice grease on the way. And then FXI, China, is reversing away from its gap right there. We talked about this over and over again. Here's the resistance gap, here's the support gap, and here's the next support gap. Looking pretty good to the downside here. So stand put with our old friend PDD, which is down over 5% right now. Yay. First possible supports here. Very similar to what we saw with FXI, 2 levels of gap-based support, and the next one down there. If it managed to get all the way down there, absolutely, I would shake hands firmly and say, thank you, PDD, and get out. For the more daring among you, if you think this is the bottom, take a peek at Tiger. This is TIGR. This is, I'm almost certain, a Chinese-based stock also, but it's got a very interesting bullish base. It went exploding off of that, peaked at almost 15. It's worth about a third of that now. It just crashed all the way back down. So, but it's still an interesting chart, potentially on the long side. Little speculative to say the least, but I wanted to mention that so it's not all bearish stuff. One of the lesser known items, but during the kind of ramp up phase of earnings that did report, was NextEra, NEE. And it's kind of a mixed bag right there. Let's just put that like so. It's up 1.35%, not bad. It's close to its lifetime high. I went ahead and got out, pretty much a wash on that one. But I think that's probably just about it in terms, because this thing has ascended like mad based on the AI fad and the overall zeal for utilities. But they are out the door with their earnings as of this morning, and they are up from that. This one didn't report, but I just wanted to mention, I cited before that stocks express their personalities like people do with their actions. And the reason I was disinterested in taking advantage, in quotes, of this rounded top is that historically they don't matter with Costco. Like I've said before, this didn't work out, this didn't work out, and this clearly didn't work out either. So glad to have nothing to do with it. But, you know, this is a great example of a stock that it's chartable, it's clean, the patterns are there, but what's the result? And the result is disappointment. So, and a twisted way to look at that is if you're bullish to basically take advantage of the bearish outlook and just buy when it does that, because it just doesn't ever seem to slip below those rounded tops. I'll also mention, in terms of my bond bullishness, that's probably faded into the sunset at this point. Bonds are just too weak. I have not for months done anything with bonds. I've been watching the charts with great interest because this has been a multi-year bear market. I thought maybe it was over. Not so much. I mean, it's not necessarily a bear market still, but it's definitely not rallying off those patterns you might think. That's IEF and then TLT. down again. And we've absolutely broken this trend line, like so. And this is incidentally the kind of failure that I would like to see in the spider and in the cubes. But yeah, that is busted. Wait a second. Sorry, I just want to make sure this is, I'm not that fastidious about it, but I like these things to be colored to suggest what they're all about. NVIDIA is down, of all things, and this is a very interesting moment. Now, as I mentioned, NVIDIA is funny about their earnings because they have a very off-cycle earnings period. It's like a month after everybody else. So it's not like, as with most stocks, in the next few days, the cat will be out of the bag. But what is interesting from a charting perspective is a failed bullish breakout. This is the lifetime high, formerly. We beat it right here on Monday, and quite handily, and closed at the high. And it sort of just hung out there yesterday, closed a teeny bit higher, and that's gone now. Now, it's not the end of the world. Doesn't mean, oh, NVIDIA is going to crash now, but it's not great news for NVIDIA bulls because it's showing that the energy that this needs and what you would expect after a nice bullish breakout like this isn't happening yet. And the fact that it slipped below that level suggests it might not happen at all. So the jury's definitely out on that one. I stay far, far away from this thing, as I said yesterday, but worth noting. Over in precious metals land, as I mentioned, I stopped beating myself up about being out of silver this morning because things are definitely reversing. Lifetime high on GC in the past 24 hours, but we are down. Actually, the front month is down over $30 right now. GDX, the miners. I had mentioned this series of higher highs, like so, and I felt that we probably made another one. It seems that we have. Yesterday was the peak, and we're reversing away from that. And it could be weeks before we reach a meaningful bottom on this because it's been quite the ascent. Silver itself, which I'm most interested in, SI is down 3.54% on the front month, and we are the first level of medium-ish support would be where this blue square is. If it just keeps breaking down, I think a much more potent support level would be this dashed green line. If it slips below 30, that's not good at all. Not only is that a psychologically important level, but it's important from a charting perspective. So no position yet, watching like a hawk on that one. But the general thesis that I've had for eons now, which is be bullish precious and short equities, still is holding. And I'd like to take advantage of that by getting back into silver. SLV itself, I'd love to see back down at 29.20. And keep in mind, this is not a per ounce price. It just happens to be a similar price, but the SI is the value that I was mentioning. But in terms of those ratio charts, the general long-term idea is still absolutely holding. Here's gold divided by the dollar index, UUP. Looks quite bullish. So positive for gold. Here is the all world index divided by gold. Looks very bearish, like really bearish, more than here and more than here. This is a huge pattern. It's like 3 to 4 times as big as the other ones, both of which preceded big tumbles. And so here again, this is bearish equities, bullish on gold. And this is small caps, the RUT divided by GC, the long-term continuous gold contract. It's slipped out of its shell and is breaking down nicely. And so I expect that's bodes ill for equities. Over in energy land, looking good. XOP, the oil and gas exploration and production ETF, down nicely, almost 2%. Didn't even bother closing the gap. So this is slipping away. And so my old pals there doing fine. APA Corporation down about 3.5%. Schlumberger Curses is actually up 0.5%, not doing as well. And then Oxy, OXY, down 1 2/3%. So pretty good stuff. We are getting into the cool part of the earnings season starting tonight. This is the first really interesting night, I believe. Here's 3 big ones that I plucked out. One is LRCX, and I don't have positions in any of these, by the way. LRCX. This is Lamb Research. This is semi-related. As you can see, not that long ago, we tagged its lifetime trend line, and since then, it's been slipping away. And let's just draw in a little period area here. Oh, that's not too good. Let's stretch that down. Something like so. So we've been in this range for almost a year. We're at the lower end of it, and a failure below that would be pretty nasty because this is still, even after all that droopage, it's still pretty high in the long-term pattern. IBM, I find often inscrutable. It's been an exceptionally strong stock for years. I would just note, if we're looking for an analog, this consolidation period was followed by a massive rally, which without no one rung a bell, it just stopped and went into this multi-year bleh. Could happen again. I don't know. I'm not confident enough to do anything about it. It's not the strongest analog in the world, but it's worth noting that, sure, it's been exceptionally strong. This is a very exponential looking graph. So it would be the kind of failures I was talking about with the spider. It would help a lot if IBM fell tonight. So we'll see. And then finally, the big one, I believe, Tesla. We talk about pretty much daily here. As I said, no position. It's kind of in a no man's land right now because strong resistance is way up here in the 260 zone, this trio of fibs as well as the trend line. So that's just like a iron wall. And way down here is major support, not only this trio of fibs, but also the supporting trend line. So we're kind of smack dab in the middle of it all. It may well be that it's a bore fest. Could happen because right now we're in the middle of the middle. These three fibs, we are right at that line there. So I would not fall over backwards if this was like down 0.5% or something. Who knows? You know, it could have found its happy place of equilibrium and be properly priced. I don't know. I don't have a position. I don't have any strong feelings about it, except for those major support and resistance zone, which are miles apart. Okay, well, that's it from me. It's a good day. Let's have another one tomorrow, and I will see you then. Bye-bye.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at TastyLive.
90% goes to S&P index funds.
You got to double your
10% straight to
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
If you missed the live show, here's our cherry on top weekly recap. Look where I'm sitting today.
Crying out loud. You big dog, you.
I hope I've had my tetanus and hepatitis shots.
I was driving home.
Yes.
Pouring rain.
Yes.
I stopped somewhere in Bucktown, and I got drenched.
Oh, no.
I know. Not happy.
Oh.
And then...
Did your extensions get wet?
What'd you cook?
Pasta with a lemon zest cream sauce.
Lemon cream sauce? Would you put cream in there, or would you put milk? What do you put?
He puts
whipping.
He does more of a butter.
I did whipping cream.
You should use cottage cheese.
I already eat too much cottage cheese.
I'd rather do ricotta cheese.
You eat cottage cheese?
Every day.
Oh my God, please tell me you don't eat cottage cheese with cling peaches?
I do. I love cottage cheese.
Oh my God, how old are you?
In LA, I don't know where I'm going to dinner on Saturday night.
So how do you know what clothes to bring? Like if you don't know where you're going to eat?
Oh, because wait a minute. You gotta be kidding me. You think there's an attire, an outfit for where he's going? He's wearing what he wears on a plane. He's wearing what he wears to the show.
Wait, it's still pool weather out there. You bring a bathing suit?
I might go in the hot tub if there's a hot tub.
So are you? Well, how are you going to go in the hot tub?
Standing sit. Do you wear that under the pants on the plane? That would be good.
Over these days. Yeah, all the kids are doing it. Pearl necklace and over the pants.
Get the full scoop by checking out the archives at tastylive.com.
Golf putt, normal distribution, reduced speed, increased standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with the closing bell. It's been kind of a little bit of a wild day today, Sadnov. First time we've seen volatility up 5% in quite some time. Matter of fact, it was up significantly more than that this morning. 1980 is the high, 1925 right now. Volatility's been staying bid the last a couple of days. Even the S&P down 61, flirted with 5,800, Sadnov. We took out the last 8, 9, or 10 days in the market with this move of 60 to 80 handles lower. We're only 60 handles lower right now. NASDAQ down 360. That's the weakest of the group by 1.75%. Russell down 23. Even the S&P down 61, and the Dow down 454, all down around 1%. Bonds down 11 ticks. I know you scalped them quite a few times today, but they're on the low end of their range, almost warranting crash-like numbers. Bitcoin 66,000 and change after trading up to 68,070 just 2 or 3 days ago. It's back to 66 and change. Oil down 84 cents after catching a little bit of a bid this morning, up over 71, 72 is the high. It's 70.90 under 71. Gold down 29, Sadnov. Finally broke the back a little bit of gold here after having about a 10-day run to the upside. Gold finally had a little bit of a downtick, but really this was all about McDonald's, right? McDonald's started this sell-off. McDonald's down $16, was down $30 last night or after the market closes. But really on the downside, you got Meta down 17, Netflix down 16, Coin down 12 and change, ARM or ARM down 11. You've got Tesla for earnings tonight, Sosnoff. Tesla is down $4 and change. Good IV rank of 57. Not great for an earnings play, but good. You've got IBM also. I know you did a little bit in there earlier. IBM bucking the down move up 47 cents. Let me just look at the upside to see who's bucking this market, and I'll let you go. GE and Costco up $4 and $5. Everything else looks like a volatility type product, Sosnoff. Really pretty broad-based sell-off today.
Yeah, broad-based sell-off for sure. You doing anything in Tesla? All I did was a calendar spread this morning. I got no position on Tesla.
Nah, down near the bottom of the E-mini S&P, Sosnoff, you could see it here on the follow page. When the SPOOs were down around 85, the bat picked up a little long delta. You could see it right here on the follow page, Sosnoff. You could see it right there. Where was the SPX? Yeah, 57.72.
Nice. I don't like.
Didn't do anything in Tesla though.
All I did in Tesla.
So time out 1 second. If the market was unchanged to lower 20 handles like it was this morning, you could, I would think, you would say, okay, Tesla, you could play both sides, take a shot anywhere. With the market down the way it is today, do you think the upside in Tesla is a little bit capped?
Yeah. Yeah.
I agree.
What are you going to do? I got a downside put butterfly on. I think you sell junky options in there.
Well,
I don't think there's any money to be made selling anything. I think if you sell anything with meat, there's no money to be made.
Maybe we get aggressive tomorrow and do a post-earnings trade right after.
I think you go so far out of the money that you don't even care.
Tesla, IBM now, Las Vegas Sands, Honeywell, UPS.
I think we have a UPS position on.
You're selling the 55 to 155.
No, I'm not doing anything. I'm just layering in some junk around my long calendar spread just to have some extra premium so I can make some money.
Understood.
UPS, we're short a tiny trade. The Nove 20 puts, nothing. I didn't even count it. I think we did it this morning. Las Vegas Sands, we have no position on. IBM, we did nothing new. We just took our existing position and we widened it. 210, 255 strangle. Nothing in IBM that we put on new today. Earnings last night, ENPH, we broke even today. And I just sold a strangle in there post earnings. But my earnings trade in there was nothing. It was a zero, complete scratch. And my earnings trade in Boeing was a complete scratch. So Boeing, we were up this morning, but I very wonderfully traded it into a complete scratch. So
I've been there.
Yeah. So earnings for me this cycle have been an absolute zero. Like I haven't made or lost a dime. And I've traded about...
Yeah, you've talked about that today.
Yeah, I've traded about 10 of them so far. I haven't made or lost a dime. My Tesla position is minuscule, and all I have is a calendar spread and some junky, way out of the money premium. It should be nothing. And the other thing we did was IBM, which is not... We had a position on already. We've had it on for, almost a month in there.
Stop when you take a look across the board here, I'm just looking at the high option volume list, and I just clicked on the IDX 5-day change, the 5-day volatility change of each individual product. For the last couple of days, hasn't been a lot of names that you would recognize, but you've got Target up there today. You got Nvidia with an 11% move over the last 5 days. Palo Alto Networks with a 7% volatility move. Now, I know they have earnings coming in a month or so, but still volatility upticking. Snow is another one. Doesn't have earnings until December. Its volatility is up by 5% over the last 5 days. Qualcomm, Amazon, all names that we trade, volatility has gotten to be percolated pretty quickly in this market.
Yeah, that's fair. I'm actually surprised they just rallied S&P's 25 handles because they looked pretty damn ugly.
Mm-hmm.
And they were down about 85. Now they're only down 58. So I thought it was going to be a little uglier and, a little uglier on the close than it actually is.
Oh, okay. Well, I mean, listen, when was the last time you were right? So, I mean, not surprising.
No. I'm right now a little bit short. I've been adjusting all day. I'm going to tell you that I played for something a little bit ugly to happen on the close.
For today?
I played for an ugly close. Yes.
Got it.
And not happening right now, but I played for it.
So you're not happy with your fill right now, is what I'm trying to say.
No, I'm okay. I played for an ugly close today. I thought they might pull the plug. Hey,
well, you still got 20 minutes.
Yeah, but they're not going to pull the plug anymore. They might close them on the lower end of this thing, but they're not going to pull the plug. So let's talk about some of the markets that are kind of the ones that are most out of control, and then we'll get back to this. So first I'll tell you about winners and losers. Biggest winner for us today. Want to know what it is? Crazy. S&Ps versus Russell.
Yeah, that had to work out well for you today.
Yeah, that's the biggest winner. Biggest winner on the board, S&Ps versus Russell. Next biggest winner, Apple, because we're short Apple. The next biggest winner, Coinbase. And the next biggest winner are the Qs and the SPYs. I had a bunch of good positions on short premium. Biggest losers today, bonds, down 11, and they're well off their lows. And currencies, Japanese yen, British pound, euro. Also, crude oil turned out to be a loser. They must have pumped premium into crude oil. But Japanese yen's our biggest loser, down, and it rallied. It's down 700.
Wow.
That's a big move.
Yeah, look at this. This euro is ugly.
Euro? Ugly.
Yeah.
Yeah, I had orders in to sell. Yeah, it's ugly. There's no other way to slice it up, sugarcoat it, do whatever you want. The euro be ugly.
Where did it get down to last time? What is that? 107 and change?
Yeah, this is almost this is like a crash.
Yeah, it most certainly is. I mean, when you take a look at what's gone on here, I mean, I don't trade a lot of the euro, but man, this is a debacle.
Yeah, 106.5 puts is what I'm kind of short. I'm going to sell.
That's about 25 days of down movements out and off. I mean, you got two little green bars there, but who gives a hoot?
No. I think the euro, the yen, and the bonds are the most oversold instruments that there are. And it's really interesting if you wanted to America. If you wanted to step up and take a shot, that's your shot, Mr. Batista. Go do your thing.
do your thing. You know what to do. Maybe in my option trades today, every Tuesday and Thursday. So lucky for you, tomorrow's Thursday.
Lucky for me?
That's correct. That's what I said. Lucky for you.
So I got a bunch of different positions on going to the close here. Do you think you flatten out at all going into tomorrow, or do you think that this is just the tip of the iceberg?
Flatten out with your deltas?
Yeah, flatten out some deltas, or do you take?
I think with volatility percolating the way it has, you can afford to sell some options against your short delta.
Yeah, maybe a little bit. You know, there's I might just take in a tiny little bit. I don't know. A lot of trades today. Were you busy today? I was.
Yeah. Today was a good day.
Yeah.
Busy with emails, busy with trading, and today was a good day.
Yeah. Do you think that the futures volume picked up at all today?
Well, I mean, I'm looking at it, so I know it has. 1.22 is about 400,000 more than we had yesterday. 3 to 400,000.
That's right. They got a little bit more. They got a little bit more jumpy today.
Sure.
Which is a good thing.
Most certainly.
I'm hoping it stays like this. I'm hoping that they. Hang on. I'm hoping. I'm just gonna roll some stuff forward because tomorrow, is 22 days to expiration, and so you're going to have a lot of stuff to play around with in the next day or so. But do you think Do you think this is possibly the beginning of something to the downside, or no?
Sosnoff, I mean, each time we have a day 2, 3, or 4, look at this graph of any kind of sell-off, it's met with buying. You got to give me, 5-7% before you have this conversation with me. You can't have a conversation on a 1% move and say, is this the beginning of something? But if you are correct, that's the things that legends are made of, Sadnov. You could be a legend, so say it.
No, I want to see. I want to see. I think this stock market is going to follow the bond market a little bit. I do.
Oh, that would be the first time in about 10 years.
Not really. I think that's what's going to happen.
They've been running hand in hand with each other for some time, right? I mean,
I think the stock market's going to follow the bond market. And I think the stock market's had a really long time before it's had any kind of like a weird ass movement, or any kind of something that looks like it's extended. We haven't had any kind of extent. Nobody believes that there's going to be a down move for more than like an hour.
Well, because there hasn't been.
I understand that. Oh, and okay. That's what's so interesting. And I just think that that's why we're going to follow the bond market. It's going to be a little bit of a surprise that way.
Well, let's see what SKU does tomorrow when they print that tonight and see where SKU is. If SKU gets high again, maybe you can say, you know what, this down move has no legs to it. And if SKU stays where it is here or goes a little bit lower, maybe then if there's not people buying protection, then we can have a little bit more of an extended move.
I think we're getting very close. I think we're getting very close to a point where you're going to see an extended move in the S&Ps. I think we've been too complacent for too long, and there's been, no trouble, no signs of stress. Nobody's freaked out over any positions, and unless you're in a commodity position, it just hasn't happened in the stock market. I mean, there's been a few individual stocks, but E. coli could knock down McDonald's today. I mean, you can't. You get
down
these
$16, a big move. I know, but yeah.
No, I know, but you get these 1 and 2 point down days. That's it.
Right. Percent. I mean, yeah.
Yeah. I bought some notes today too. Sold some puts in the notes. Bought some 10-year notes. Added to the position that way a little bit.
I know you've been doing this for quite some time.
Yeah,
you got 190 companies coming out with earnings tomorrow. You got 130 companies coming out on Friday. You got some big ones like Google and Microsoft and Apple next week, Amazon all next week. This is just volatility from the earnings, Sadnov. And
you
you
think
want to know
so?
something?
There was no earnings last night that moved the market. I mean, what is Boeing? Unchanged?
Yeah.
It's
I don't
nothing.
think Boeing's a
Well, I don't think
market mover.
ENPH. I don't think ENPH moved the market last night. So what earnings moved the market today? I don't think it's anything.
No, I don't think any earnings move the market today. I'm just saying volatility expanding is all about these earnings looming. I mean, Microsoft's down $2. I mean, Apple is down today. It was down around $7, down 5 and change, but it's just off of highs. I mean,
I agree.
I don't know.
I agree. And
they haven't come for the pigs either, like Baidu and Baba and those stocks. Like when we start selling off the overall market, they start trying to put money in places where it doesn't belong. And they haven't had a bid in those stocks either. Baidu down another $1 or $2 today.
So speaking of markets where the stocks have gone to an extreme, you can argue that some of these Japanese stocks, Baba and Baidu being the two main players, of which are very tradable. I would argue this is maybe not an extreme, but it's a pretty.
I would argue Baidu's gone the way of the bonds. I think Baidu's following the bonds.
No, just because it's going down.
I'm just teasing.
But my point is the bond market and the currency markets are way uglier than Baidu and Baba and those stocks. That's for
especially
sure.
on a notional value for sure.
Yeah, way uglier. All right, let's see what else do we got here that's potentially interesting going into the.
I guess that one guy didn't drop from that cheeseburger, right? That's why McDonald's stayed bid.
It's been there. It hasn't moved all day. It had the big move.
I know.
The big move was after the close last night, and you had to. The hardest thing was I was watching it. I was here last night for a little bit watching McDonald's, and I wasn't trading it. I was watching it, and I'm thinking to myself, who's going to buy this here? And obviously the people that did, it worked out. But I did not like that buy. I could have bought it. I was watching it. It was trading like whatever that is, 280, 282, 283. I didn't like it. I didn't think there was 10 points of a rally in there.
Right. I agree.
I did not see that at all. What I did think was a better play today, which also didn't really work, was when they were down 70 or 80 and they didn't have an uptick all morning. I did not see them bouncing back. I thought they'd close in the lows of the day for the first time in a long time.
Yeah, they just walked them down too, right? And I mean, they didn't stop. It was pretty orderly to the downside.
Yep. They walked them down all day. They never had a single bounce. They didn't look good.
And then they just rallied 30 handles.
Yeah. Yep. Yep. Yeah, I think it was a good trading day for not for S&P futures, but for options. I think we're busy, and I think that's a good sign, for everything that we do. Futures options, the markets were tight. Listed options, the markets were really tight. And well, we'll see what happens in Tesla. Tesla comes out after the close, right? Not before the opening.
Tesla comes out. I will tell you right now, my friend.
Pretty sure it's after the close usually.
I believe you are to be correct. Yeah. You are correct, Sadnov. It comes out after the market closes.
Yeah. I mean, when they had the NASDAQ down about 450 points earlier, it's rallied about a little 120 or something. When they had down 450 by lunchtime, you got to think, You just can't play for a bounce. Sorry. Unbounceable. And it bounced.
Well, somebody right at that time did play for a little bit of a bounce. As a matter of fact, I placed that trade at 1:09 p.m. Central Standard Time. South. I think about 5 ticks off the lows.
I doubt
You can tell the time. You can tell the time, South, because it's right there on the follow page.
I doubt it, but that's okay.
Yeah. You're a beautiful man. Beautiful man. Beautiful man.
I doubt it.
And, I even put a little description here, Sadnov. I think I spelled nibble wrong at first and put 2 P's where the B's begin. But I said I nibbled with a little bit of a omnidirectional long delta here. It's a patent pending broken wing butterfly in SPX, Sadnov.
I don't like when you use the word nibble, to be honest with you. I'm going to agree with Beth on this one. I was
going to say neither does Beth.
Yeah, I'm going to agree with Beth. I don't like it.
And I spelled it wrong first, I think.
Please tell me you didn't write nipple.
I think I did.
Oh God. All right. Let's go to the boys. I can't take you.
All right, let's do it. We got my 3 amigos here. Yes, I do. Dylan, Ilya, and my friend Christopher. How are you, gentlemen?
Pretty good.
Doing well, Anthony.
Doing well, thank you.
All right, boys.
Ask them a question so they can speak.
It's not a bad day for those of us that have been skeptical about all things.
Yeah.
Oh, come on. You two watched it rally 250 handles. It goes down 50 handles, and now you're going to say it's not a bad day for those who aren't skeptical?
I mean, I've been sitting in these NASDAQ puts for 2 weeks. They're finally doing something.
Yeah, they perked their head up for a few minutes. That's all they did. Yeah.
Yeah, that's it. That's it.
Yeah. But
I actually got short Japan this week, and that's the one that's really been working because you get some dollar appreciation against the yen in there in the U.S. dollar-based ETF and the general weakness in.
How do you get short Japan? What? How do you get
sell a put in EWJ?
That's long.
Or you buy a put is what I mean.
You buy a put. Okay.
You buy a put or a vertical. I just bought the put itself. It was very cheap.
Yeah,
in EWJ.
Yeah, that's such
down
a hard stock to trade.
2% and some change today.
Yeah, because they myrtleized the Japanese yen today.
Yeah.
I bought some more yen.
It's dollar based.
Did you say they murderized?
You get some
myrtleized. It's myrtleized. Remember? Yes, I forgot that tiger's name, but Heavens to Murgatroyd guy. He's a myrtleizer.
Oh yeah, Heavens to Murgatroyd, I think it is. Wasn't it Murgatroyd?
Heavens to Murgatroyd. Yes. I think he used to use the word myrtleize.
Okay, I think you're right. Who was that guy? Anyway, that's for another day. But Tony? Can I ask you a question? Since
it's Snaggle.
I got
Snagglepuss.
An hour with these other
Snagglepuss. Yeah, Snagglepuss.
Snagglepuss. Go ahead. Yes, Dylan. What can I do for you?
If the stock market is up, they say the stock market is up because Trump's going to win. Does that mean if the stock market is down, it's because Trump's going to win?
No, don't go there, Dylan. Do not go here. This is a trick question.
You're gonna have to save this for.
You better save this for Tuesday night on election night. Don't be using your.
All these electoral.
If you're gonna butter your bread one way, don't you need to butter your bread the other way?
Don't be using trickery on my boy, the Batista. Don't on either Batista. Don't be trying your little.
Leave him out. Nobody asked you.
We're going to save this for when we have no electoral votes to count because there's going to be all these undecided states. We want to see what's going to go on when we declare the winner by majority vote, right, Sosnov?
We're going to call it.
We're going to call it by majority vote, right, Sosnov?
I didn't agree to that. I just said we're going to declare the winner.
A good Democrat. Sure, you're going to declare a winner.
Mail-in ballots. Mail-in. No voter ID.
Yeah. To answer your question, Dylan, 50 points does not make a down move off of all-time highs.
We're going to have five.
One day is.
In other words, yes.
In other words, the bonds are still weak. So yes.
Depends. Pick your market. Pick the hour of the day.
The dollar's still strong. So yes.
Thankfully.
Yes. Yes.
We're going to have 5 people doing the show for election night, but we're going to have 7 votes to determine who wins, just so you know.
What, you get a few?
You got 3 votes?
I didn't say that. I just said we might have 7.
Well, is Trump the front runner right now? Just so I can understand what's happening.
It depends where you're counting. There's lots of different on our network. I don't know.
Well, can I answer this? Can I answer this for you? Can I answer this
I
for
would
you?
be grateful.
Okay.
Please.
According to my friends, my other 3 friends that I have here on the show, not including yourself, 60-40 is the new 50-50. So yes, it's still a coin flip.
So Trump, but if I was to go to the editorial, hey, Vecchio is he's the king of the citations. He's the only one who lives in New York. The rest of us, we don't know. You guys live in a cornfield.
Vecchio's the only one that actually knows. Yeah.
Yeah, you live all you two live in a cornfield. Ilya lives in La La Land in a fog bank and a hill in California. I live in a bowl of pasta with a big rosemary bush. Vecchio lives at the center of the known universe. He's the only one who knows anything that's happening. So what's going on?
Give it to us, Vecchio.
Who's winning?
Trump's winning, probably. But if you look at the election odds today, there's been a lot of big movers. Like Trump's odds in Michigan on Polymarket are down 7% overnight. What's really changed? I don't know if you could point to anything, but overall, his odds for winning are down 2.5% today. It's interesting timing, right? Trump goes to McDonald's, people are dead.
That's the M&M effect.
I bought the dip today at McDonald's for my personal account. Why not? I like to give Victor a hard time. I eat McDonald's once a week. How could you not? It's American staple.
How can you eat at McDonald's knowing that every time you eat a triple quarter pounder with cheese, you're probably going to die?
With or without
I'm an options trader, Tom. You think I don't know how to take a little bit of risk? Come on.
I mean, how's that possible? I can't die yet. I have to try the pizza that Tony's been yakking about for 10 years tomorrow night.
And you need to come over and check out the unauthorized Tasty Trade Studio.
That's right. That's right.
In Milan.
Do that.
Yes.
In Milan. I call it Ernest Hemingway Studios.
Is there a cot? Is there a cot in there for me, Dylan? That's all I need to know.
There's a cot. Because, Hemingway at one point, he wanted to lead like a battalion in the war, but they refused to let him do it. So he just found a bunch of soldiers that were unemployed and just decided that he was part of the U.S. military. But he had like equipment and they would invade places. Like he would do things.
That's good. He was
that's kind of what I'm doing with Tasty Trade.
I like it.
So Trump's the front runner. Trump's winning right now, Chris.
Probably.
All right, my friends, listen, let's take a quick 90-second break. We're waiting for Tesla earnings to come out. Nothing as of yet that I see. Sadnov, any movement in, do we watch the NASDAQ future to see what Tesla's doing?
Yeah, I guess so. But, what's the expected move right now? I'm just curious, just at the end of the day.
In Tesla?
Yeah.
About $16 for the next 2 days. So let's call it 12 to 14 bucks.
14. Yeah. Okay.
All right, my friend, we'll take a quick.
All right, let's get your last word, Tony. What, up or down, Tesla?
Sure.
Up or down?
Up, muted by about $3 or $4 bucks.
Up $3 or $4? Vecchio, Tesla, up or down?
Down. They continue to disappoint.
How much down? Expected move or more or less?
With it less than the expected move, but lower. We'll test 208.
Ilya?
Down and probably within the expected move. So 207, 208.
Oh, he's price rating me, Tom. Don't let that happen.
I don't know.
That's total bullshit.
That's what the chart is.
Crap. That is crap, Ilya.
Oh, come on.
That's
Dylan.
It's already been. It's up.
I didn't do it.
If Trump is going to win, Elon Musk is going to be the next president by proxy. First of all, second of all, it's already been blasted because of the robo taxi debacle. This thing's going higher.
Smart man, Dylan. I'm glad I took you under my wing.
So
let's take a.
Thank you.
We have 2 ups and 2 downs, and you're
all right, Sosnoff. Go ahead.
And you're all inside the expected move.
What do you
Get
think?
the final 3 votes. Right, there's 7 votes for you.
Yeah, right.
7 votes. What are the other 3 votes, Tom?
I really don't like Tesla here. I'm thinking down $14, the expected move. Right down to.
Never felt more confident in my entire life.
Right down to 200, but they just rallied the NASDAQ 40 handle, so the number must be out.
And they just printed Tesla. You know what it's up, Sosnoff? $5.
It's
Thank
up.
you, Dylan. Listen, one day maybe you and I will do a show. We're going to take a quick 90-second break. We'll show the people what real trading is like. We'll be back in 90 seconds. We got more Tasty Live after this with the overtime crew and these guys.
Tesla's up $8.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure. I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick.
Retweet.
Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got a million customizable backgrounds.
You're so totally boring.
My card's on the table, hash mark. Facebook is disabled.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Rock, paper,
scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Stocks go down. So do bonds and metals, and basically everything else was read today too. On this Wednesday, October 23rd, 2024, this is Overtime. I'm your host, Chris Vecchio, here in New York. Ilya Spivak in San Francisco. That's Dylan Radigan. He's in Milan. We're here to take you through the next hour as we work our way through the futures close. And a red day indeed. NASDAQ off 1.35% now. Perhaps Tesla's earnings are saving us after the bell here, which I suppose is a good place to start. They do beat expectations on their EPS. They do beat expectations ultimately on the gross margins, which are pretty impressive. The revenue is a little bit weaker than anticipated, but the market is liking what they're seeing. We're up at 230 here after hours, closed in at 213.65 on the day. We'll keep an eye on that, obviously, as the session goes on, but it takes some of the ugliness off of a NASDAQ that otherwise was trading heavy throughout the entire session. Tech stocks, semiconductors really taking it on the chin here today. Interest rates continue to push up. Guys, it's a little bit more of an unwind and deleveraging heading into the last 2 weeks of the election cycle. Guys, is this the start of the downtrend, or is it just more sideways posturing and a low volume day once again? Ilya, let's go to you first.
I think that depends on which index you're talking about. If you're talking about the NASDAQ, the situation looks pretty dire. Zoom in to a 4-hour chart and you start to see why. So you get this sharp move lower, but it's got a wick on it. So you can see that it's been lower over the course of the day and has bounced. But when you look at the actual structure of the decline, you see that it has punched through the recent range, which has held on a 4-hour closing and even swing low basis. This move down has actually closed at a lower 4-hour low than the low of the range. Never mind its closing levels. And what we see subsequently is correction to retest those levels that isn't making headway back over. Now, we'll see if it does. It's unclear, but this is significant technical damage. It's a different story when you look at the S&P, where that same breakout did not occur. You're holding former highs as support. And if you look at a 4-hour chart here, you can see a similar range kind of situation, but you are sitting squarely at support at this point. So I would say this looks more consolidative. The NASDAQ looks weaker, but of course, the S&P has long since overcome its July highs, and NASDAQ is struggling with August's highs. Never mind July. So it has been generally weaker. That rotation dynamic out of tech leadership into other things seems to have been a story now for over 3 months, and that seems to continue here. But I don't think either one of them looks like this is the start of a downtrend or some such thing. No kind of damage that's that aggressive has been confirmed here, but the NASDAQ near term looks like it's on soft footing relative to elsewhere.
I have the full Tesla numbers in front of me here, Dylan. It looks like you are ultimately going to be the one who is correct here with a 4.97% gain after hours. So inside the expected move thus far, so to speak. But we have here the adjusted EPS 72 cents versus 60 cents estimated. Revenue was $25.18 billion. The estimate was $25.43 billion. That's the only blemish. Everything else is good. Gross margin up to 19.8% from an estimate of 16.8. Operating income $2.72 billion versus an estimate of $1.96 billion. Free cash flow $2.74 billion versus an estimate of $1.61 billion. Capital expenditure $3.51 billion versus an estimate of $2.56. This is a healthy set of numbers. It's hard to disagree with that. Yeah, the revenues weren't pristine, but everything else is looking great. So Tesla's getting a little bit of a bounce here right now. Whether or not they hold on to it is another story. The top article on CNBC about this earnings call that's coming up is Tesla investors have a lot of questions for Musk about Trump, which I suppose we can transition into the conversation we were having at the end of last call there. Dylan, you seem to think that there's a two-way street narrative here. If the market was going up because Trump's odds are going up, then perhaps today with the market going down, then does that mean the market is fearful of Trump? But I think it's worth pointing out on Polymarket today, there are some big movers. And we're seeing here overall from where we started the session, Trump is down 2.5% today. He entered the day at 65.6%. He's now down to 63.1%. That's a material shift. And on a state-by-state level in places like Wisconsin or even in North Carolina to an extent, you're seeing that the market is peaking out and it's starting to pull back in some more here. So perhaps the market today, Dylan, is reacting negatively because Trump odds are actually falling. Is that then a consistent
I mean,
narrative
that's
that the
kind of what I
market
was
is going
getting at with Tony, because obviously, you know, if this market's up because of Trump, then is the market down? Like if Trump is if Trump's election odds are the marginal influence of financial market prices at the moment, which I don't believe is the case, but if they are, then by definition, well, it doesn't look so good for Trump today. Full stop. I just don't think I don't think that I don't think that's what's going on. But you hear all these idiot Trumpers blathering about how the stock market's strength is anticipation of a Trump victory. You know, the whole thing is just ridiculous. Honestly, it's just it's peak stupidity in my opinion. I hate.
I mean, if that were the case, like let's just take that at face value for a second. If that were the case, then you would essentially say, okay, that's also what's going on in the bonds. That's also what's going on in the dollar. This is going to be tax cuts, deregulation, reflation, maybe higher rates, but certainly a higher dollar. And if you don't get in the Fed's way, and getting in the Fed's way is difficult institutionally, then fewer rate cuts, maybe even hikes. Okay, we can at least see some confirmation there, but stocks haven't gone anywhere in a week. So they should be surging with bonds sinking and the dollars soaring if that were the case. But the highs are back last week, almost 10 days ago now. So at this point, that's a difficult thing to paint. If on the flip side, you said, oh, well, his odds are coming down, then the dollar should be weaker, bonds should be stronger because the reflation trade will have weakened, and with that, stocks are down. Well, that's not what's going on. The dollar is up, and bonds are a little bit lower. Granted, they're kind of less convinced of that, at least at the long end here today, still bumping around the same support and yesterday's lows. But nevertheless, there's not conviction. So to tie any of this to that kind of a narrative, Dylan, I couldn't agree more. It makes no sense. The evidence is just not there.
But it also, I think, goes to show how idiotic the narrative is, because the people that would cling to financial market performance when it's to their advantage as a validation of their preferred political candidate are the first ones to go silent or run away when markets reverse.
Well,
only proving that the absurdity of the entire construct.
I mean, when your argument is that the U.S. economy is doing poorly, when in fact it is doing stellar relative to every other one, as we're about to see in PMI data released later today, you get a sense for what economic and market reality is, and the markets, of course, care about economic reality first and foremost, what that is relative to what the rhetoric is.
The dollar run today is quite remarkable because, yes, it occurs alongside a move higher in yields, but it's not exactly an explosive move higher in yields. The defining feature, of course, is what's going on with the Japanese yen here. There's a really fascinating dynamic going on right now where the carry trade seems to be back in vogue. Those 0064 out-of-the-money yen puts, Dylan, for the madman trade are looking less of a madman and more of like a prescient sage thing to have purchased several weeks back. But that's why they're a madman, because they look crazy at the time. This is a significant problem. The yen is now about 8% lower than where it was at its highs overall, not just against the dollar, but a basket of major currencies from early August. It seems like after Ashiba was elected, Ilya, when he said that he is not going to, or he's going to say maybe this isn't the time for the BOJ to hike rates again, it felt like the market arrived at the conclusion that the BOJ's streak of independence in this particular cycle is over. They're not going to be able to do anything else much more moving forward. So how much of the recent move in the yen is about rates versus a domestic situation in Japan, where now you have a prime minister who wants to keep interest rates pointed lower? And moreover, you have a Chinese economy where the dollar yuan exchange rate is pushing multi-week highs. If the yuan is weakening and the yen's weakening, it becomes a competition who can effectively devalue their currency more in a game of chicken, because they don't want to lose a manufacturing edge in an era when their economies are growing sluggishly. So why
I'm
is
going to
the yen
disagree
doing
with
what
all
it's
of
doing?
that.
Okay, go for it.
I'm going to disagree
going
with
on
that one by one by one.
Break it down.
So, number one, before the current Japanese PM was elected by the ruling LDP party to take the place of the outgoing one who resigned amid horrendous popularity levels, before that, the BOJ was priced for an additional 10 basis points in hikes at some point next year, and that's it. There is not a moving target here. There is not a central bank that's rushing to hike, and all of a sudden the elevation of this prime minister has changed the calculus. It's just not the case. He's changed nothing. The markets were not expecting any more BOJ tightening in the near term, and the tightening they were expecting through the end of next year was a pittance. One more move. That's it. So, and that hasn't changed. So when you look at what's actually occurred, nothing has. Now, as far as the move in yen, it makes all the sense in the world that the carry trade would be back when U.S. yields are surging and when that is bidding up interest rates everywhere around the world, because the dollar, despite what the BRICS summit might pretend to argue as they meet in Russia this week, the dollar is dominant to an extent that is overwhelming in global commerce. Almost every single monetary transaction is settled in dollars because, for one thing, the dollar is so liquid that sometimes it is cheaper for countries that aren't the U.S. to transact between each other through dollars than it is to just bilaterally exchange their own currencies. The spreads on their own currencies are wider because they're so illiquid. So the situation here is when the Fed is expected to cut less because of all this U.S. economic strength that we've been seeing, and we get the steepening of the curve to the steepest in almost 2 years, the long end is crashing, yields are surging, all of that bids up interest rates everywhere. Not surprisingly, the yen looks awful by comparison because you can borrow it for next to nothing and then buy all these other rising yields. So, of course, the yen is getting absolutely shellacked here. And what you see is that it is getting shellacked with the Nikkei, not inversely of the Nikkei. The Nikkei is also getting hosed. And what that's telling you is this has absolutely zero to do with comparative devaluation. Historically, you would think, oh, Japan, big island exporter, wants a cheap currency. Well, this entire rate hike episode has absolutely and clearly signaled this is no longer the case. Japan, why are they normalizing policy? Why are they strengthening the yen, as it were? Because they've decided that their export engine at this stage pales in comparison to what has happened to purchasing power domestically. They want to empower domestic consumers to buy things because the cost of living, if you think it's a crisis in Europe or the US, in Japan, it's out of this world because they import most of their energy, most of their food. So, and the yen has been getting killed. So their purchasing power of bare necessities is running away. So this is why at this stage, both the yen and the Nikkei are weakening together. If the Nikkei were rising, you'd say, well, the weaker yen will be a boost to exporters, yada, yada, yada. But that's not what this is. The Nikkei is sinking and the yen is sinking at the same time.
Dylan, we've seen some bottom fishing in other equity markets across seas. China, it's worked out this year. It worked out in Japan in early August. You think that it's a good idea to look abroad right now? If U.S. equities are going through their own trouble, should we be looking to an EWJ or an EWZ or a yada, yada, yada? Should we look to
I can't imagine. I just think that there's such a great case for the U.S. stock market. Why would you not stay in the U.S. stock market?
Because you can sell something like this and get convexity both from the dollar appreciation against the yen, because this is an ETF in
But
dollar
wouldn't you rather
terms.
own dollar-denominated bonds that have been selling off like nobody's business? Like, wouldn't you rather be putting on a long bond position in the U.S. right around now? Wouldn't
No.
you rather? You would not.
No, because I don't. Well, first of all, I don't think they're mutually exclusive. But for the bond, you just don't have any sign that this thing is reversing. Whereas in Japanese markets, you have a very clean break. And so momentum is occurring there. The move in EWJ today is in excess of 2%. Last I checked, the bonds have barely moved 0.25%. It's not, as a trader, that's not where the action is today, now.
To answer your question, Chris, I would not bother going offshore. I would take my chances with the U.S. bond. I mean, look at Tesla, right? As we speak, just an explosive move higher. I'm not sure why. I think that I actually think that resolving the U.S. presidential election and moving to a new president, full stop, regardless of who it is going to be deemed positive for the United States and the United States markets, regardless of who wins.
Most likely. Once you get uncertainty out of the way and people can benchmark that which is probably coming, that's probably right. But again, all of that does not preclude one from getting a little extra kicker to your U.S. dominance idea by shorting some markets outside of the
for sure.
Well, and that's what that's what I mean. I'm not buying the Nikkei, God forbid. I'm short.
But you wouldn't be long the U.S. stock market either. Like
not at the moment. Not at the moment. I think, but I'm certainly not against it as a fundamental idea. I think one of the more interesting things, and I'm going to talk about this on Macro Money today in more granular detail with charts and things ahead of the PMIs. If we look at why the U.S. is able to be so strong and the world is not catching it, why that demand is staying domestic rather than actually boosting the global economy, which has been slowing since May, even as the U.S. has been as strong as it is, because most U.S. spending is in services. And we see that in the inflation data. Goods inflation is negative at this point. There's no demand there. So if you look at the spread, we are now favoring services spending relative to goods spending by the biggest margin in almost 20 years. That could normalize, reshuffle the mix. That means more goods spending. That means more money going to foreign firms. and the U.S. could start to lift the global economy. Weakness in Europe, weakness in China would sort of fall away over time. That's one version of this. And that's a reason, I think, to be optimistic about stocks, to be optimistic about the global economy in general, unless this rise in yields kills everything first, because the rest of the world can ill afford higher rates, and a less dovish Fed means higher rates, not just in the US, but everywhere. And which way this goes at this point is a bit unclear. So at this point, I'm happy to be short outside the US because the US is doing fine. To then also be long the US on top, I would need to believe that US resilience will start to spill over. Maybe it will. We'll see.
Let's go back to some of the Mag 7 names here. Tesla is now up 7.4% after hours. One of the other big names that we like to keep an eye on, Apple, is off by 2.36% in today's session. It's one of the more significant losers here on an individual stock basis. There was a piece of research that was put out overnight from an Apple watcher, an analyst, this guy Ming-Chi Kuo. He has, over the years, proved himself to be a fairly reasonable, objective analyst regarding what's going on with Apple. To this end, he pointed out that it looks like the iPhone 16 orders were cut around 10 million units for the fourth quarter 24 into the first half of 25, with most of the cuts affecting some of the non-Pro models. So iPhone 16 production is being trimmed. This is not just a speculation that we heard about at the beginning of, what was it, September? We come out of that weekend, end of August, beginning of September. We have the story. Apple iPhone pre-sale orders are not as strong as expected. You got a few days of weakness there. Today, we're getting another similar type of event. So Dylan, you have been our, I would say, poster child for being bullish on Apple. Mm-hmm. What do you do after a day like today? How are you structuring your opinion in this market? You look at a 47 IVR. What's your trade here now moving forward through the election, through the end of the year?
I buy it. I think that this sell-off is an opportunity.
Mm-hmm.
I think that there was obviously I had higher expectations for the 16 in terms of the 16 as a Christmas, as the upgrade for the upgrade cycle, basically between September and Christmas on the 16, which clearly is not going to play out as fast as I had hoped, or was already reflected in the existing price levels, was basically a known, so had no relevance outside of that. But even as somebody who has interacted with the newest iPhones, I think they're better than expected. I actually think that the newest iPhones are a stunning piece of technology. And I think that the combination of that technology and the Apple advantage in terms of both brand and privacy are intact. So the only debate is, as always with any of these names, whether it's this or Tesla or anything else, is valuation. And so if it gets cheaper, then valuation is marginally improving.
We bounced into that 235 to 240 area a few times this year. We did so back in July and here again in October. It's been a lot of sideways chop. And I can see the imperative for people saying, guys, this really hasn't done much of anything. Why take a directional bet? Just trade it neutral or sideways. It's true, you could do that. But it's a 46.9 IVR. And so for an individual equity name, it feels like you may want a little bit more on the board there if you're going to operate in the typical Tasty manner. Dylan, if I'm someone who's bullish on stocks, there's a few things technically that I like to see here. Yes, even though it's been a rejection, we do find ourselves the uptrend off of the August. We could call it the September, but here drawn to the October swing low. We're bouncing away from that here today. So the thrust of the uptrend, dip buyers are still in full force. You can see it in the S&P as well. Perhaps Tesla's earnings themselves, coupled with hopefully a good earnings call from Elon Musk, leads to then a further extension of this. And I say hopefully because I'm long the NASDAQ. So if Tesla goes up more, it's probably going to draw in more longs. So I'm okay with a good Tesla earnings report here today. Guys, we make our way through the halfway portion of this show here on Overtime, and we usually like to go talk about the sectors and the rotation and what signs they may be revealing, reading the tea leaves of the market. For all the tea leaves last week that were saying, hey, this is good, cyclicals up, discretionary up, banks up, tech up, it's been the exact opposite kind of story here today. We've seen across the board ultimately that it's been a rough market. Let's start with XLK here today, of course, which is the big loser on the session alongside semis. XLK pulls back in. It does get a little bit of a tiny bounce heading into the end of the day, closing off at 228.48. You have SMH on the other hand. It's off by only 0.27%. Tech was off 1.41. Cyclicals, we talked about PEZ. It's not really a very liquid or highly traded ETF, but the past few sessions, it's down from near 108 down to 102.5. Talk about discretionary. Outside of Tesla's move today after hours, this is something that has been sliding from 200 down to 195. So the rotation hasn't been healthy. It feels like we've crossed the Rubicon of sorts about interest rates. When we think about our discounted cash flow formula, right? What do we really care about? If interest rates in the denominator are going up, well, then the only way for cash flows, the net present value of cash flows to remain stable, is if nominal cash flows increase by even more. And while interest rates have been going up for the past few weeks, stocks have been saying that's fine. We're getting more growth out of this. We're getting more growth than the rise in interest rates. Cash flows are going to increase. So yeah, prices can keep rallying. But as we tick through 4.25% today in the 10-year yield, it felt like something clicked in the market there for a bit. Right, we're now at 4.24% as stocks make their move off the lows during the day. Ilya, what's so sacrosanct about this 4.25% level? Is this a signal that the Fed is not going to be able to cut once 2024 is done? Like we're going to go back into a holding period?
I'm not sure that this is really something you can extrapolate on the basis of one particular level. I don't think there's any kind of automatic significance to 4 point this or 4 point that on the 10-year. I do think that the markets are interesting in their reaction function sometimes. When they decide to care about things and when they don't. I am, as ever, reminded of 2008, which was a formative year for me, where the market started to break down in the middle of July, apropos of nothing. Nothing happened in July of 2008. Everybody likes to point the finger at Lehman, but that happened months later. The initial start of the stocks sell-off happened months earlier. So the real question of why markets do what they do when they do, who knows? The evidence accumulates. What we can say, I think, with certainty is that yields have been powering higher for weeks, and stocks have been more sluggish. They have been unable to build as lasting of a momentum on the top side as bonds have built on the downside. That much, I think, is clear. It isn't that stocks have fallen apart by any stretch of the imagination. And I think that speaks to the idea that all of this is happening because of U.S. economic strength, which may yet spill over to the rest of the world and be a good thing. But at this point, the divergence is a threat because most companies in the major indices that we're talking about, NASDAQ, S&P, these are multinational companies that derive their earnings everywhere. Now, of course, mostly consumption is in the U.S. The U.S. is the world's largest economy. It is the most important piece of the pie. There's no question. But if you're getting into a situation here, and I think you are, where the rise in rates is giving markets some cause for pause, and the dollar is racing higher, and you face a corporate refinancing cliff next year, all of that together makes for an uncomfortable environment if the Fed is going to be hamstrung in cutting rates, and that's exactly what the markets seem to be signaling. If you look at the total tally for next year, it's shrinking. It's not shrinking by a lot, but the markets have backed away from between 1 and 2 cuts relative to where they were when the Fed announced policy last month, sort of depending on the day you look this week and last. So I think very clearly what you have here is the markets going, okay, if the U.S. economy is this hot, the Fed can't cut as much. If they can't cut as much, that means all this refi of corporate debt in the U.S. happens at higher rates at the same time that the Eurozone is shrinking, China is anemic and can ill afford higher borrowing costs. In fact, the global economy has been slowing for months. So that's not a time when the global economy outside the U.S. wants higher rates. Eventually, that goes into everybody's earnings. So that the markets are circumspect here isn't surprising in that sense.
Dylan, do high rates even matter to this market long term? Is this just a temporary hiccup?
Long term?
Sure. I mean,
3 months, 6 months,
guess,
an hour trade cycle.
Yeah, I mean,
Like,
for
over the
sure
next
they
3
do. Obviously,
yeah.
I mean, obviously they do. You know, I mean, it's not a question of do high rates matter to this market. It's a question of how much do high rates matter and where do they matter the most. But obviously they matter, and particularly in insofar as at the edge of the risk curve where risk-free rates are higher for longer, the riskiest assets have a smaller pool of capital to pull from. You know, do high rates matter to the Magnificent Seven? No. But do high rates matter in smaller cap, more riskier names? Sure. Do high rates matter obviously in banking and all the rest of that? Sure. You know, or anything that's capital intensive, or to Ilya's point with capital rollover. I think it's more interesting to speculate on how long rates can possibly behave this way. I'm with Sosnoff on the sense that I just think that there's a huge long bond position to be had here between now and the end of the year, because I think that rates are overdone.
Rates are overdone, or do you feel like you're also imbuing some of your political views into this? Like, you think that the market odds for a clean Republican sweep are overpriced? Because there's an outcome, right?
I do.
Where Trump wins the presidency and the Republicans take the Senate and Democrats still take the House. The Senate is gone. Senate seems like it's, if you have to make a bet on any of the 3 branches, right, or any of the 3 particular races here, Senate is the one where you could say this is going to go to the GOP. That's my highest confidence bet on the board. My second highest confidence bet is that the Dems are going to take the House. You guys said, who do you think is going to win the election before? I flipped the coin fell off the table. So even the coin can't decide. Right? I mean, that's really where I'm at. The polls have clearly been shifting in Trump's favor, and the betting markets may be leading what we're seeing in bonds. There's some evidence to support that. Maybe not. The poly market and these betting markets aren't perfect either. People have a short memory. Apparently, they forget that the political betting markets that were live in 2016 didn't have Trump winning, right? They had Biden winning. And I'm not saying that they're going to be wrong about Trump this time again, but they're not sacrosanct. The wisdom of the crowds obviously is valued, but they're not perfect. People make mistakes. If people and the wisdom of crowds didn't make mistakes, then companies like Enron wouldn't have lasted and their share prices wouldn't have floated to the highs that they did for as long as they did, because the wisdom of the crowd was there was nothing going on until the nefarious misunderstandings were revealed. Either way, though, ZB is falling. The dollar is rallying. Guys, is this the end of our precious metals run? Gold is in today, and this is quite the conundrum for me, guys. On one hand, it's a very clear bearish outside engulfing bar. We moved above yesterday's high. We're now below yesterday's low. On a closing basis, we're below yesterday's low. That's a key reversal because it's occurring at the highs. Happens to be the all-time high. That should be a slam dunk bearish signal, right? Well, back in mid-September, we had an evening star candlestick cluster pattern here, a 3-candle topping pattern at what at the time was all-time highs. And going into the Fed meeting, we had said at the time, let's wait to see if we break the momentum in this breakout. Let's see if we break the 1-week moving average. And the next day we didn't. We just got a big doji. Not exactly a sign of follow through to the downside with an evening star candlestick cluster. And then the discipline of just holding out that long and waiting proved to be fruitful. So today, there's a lot of downside. The 1-week moving average comes in at 2728.90. We're in at 2729.10. Ilya, what do I respect here? Do I respect the key reversal with the candlestick? Or do I respect the momentum with the 1-week moving average, which hasn't let me down in about 6 weeks?
I don't think this is giving you a convincing sell signal at this point, for the very simple reason that I don't have a very good reason for gold being up here in the first place. And so for me to look at this and say, oh, well, it's definitely going to fall off a cliff now, who knows? I would say the previous swing high, the point from which that little yellow flag resistance you've got there is set up, I would think that's your line in the sand. And it's not far away. If you get a close under that, you have a turn. And I would be perfectly willing to pay, in terms of market action, to sell under that level and have a little bit more certainty and get in a bit later, because then I would be led to believe that there is a sizable decline ahead, maybe all the way down to 2,500, 2,400, something like this. Let's say 25 to 25.50 as an opening bid, if that is taken out. But at this point, the risk reward is kind of off. You're kind of closer to support than you are to resistance. And somebody might have a good explanation for how gold even got here when the dollar has been getting stronger and yields have been getting stronger in tandem, which should be gold kryptonite. But I don't have a good reason other than maybe we'll look at Chinese reserve data that belatedly shows us they wanted to buy ahead of the BRICS summit this week because they wanted to make Putin feel warm and cuddly and not like he's being taken advantage of. But the entire situation, from what I can see at this point, doesn't line up, but for some sort of thing like that. So I'm not a convinced seller here.
If you feel that way about gold, how do you feel about silver, which had a 3.33%? Yeah, Dylan,
same thing.
This broke out a few days ago, and it's now back the 1-week moving average today. I keep referencing the 5 EMA, just a simple filter for when you're in a strong momentum state. Bounced right off of it today. We're holding above the prior highs that we had in May. Is this the plane going back to taxi to the terminal and letting any last passengers on before we finally take off?
Yeah, I mean, I don't know. As you know, gold is the biggest short position that I don't have, and so I speak with limited credibility, but I'm certainly inclined to have puts on both of these, maybe tomorrow morning. I just think the whole metal situation is a mess. It makes no sense to me. If I could do anything, I'd be short gold and long the bond.
You say it's a mess.
I can do anything, and I might do that.
What's the single asset class that you feel is most mispriced right now?
The bond.
The bond. Ilya, what's most mispriced right now? And don't you dare say stocks.
Stocks.
Oh, God,
Stocks.
I knew it.
Stocks.
Yeah, I know you'd feel that way. I don't know if I have an answer to that question now. I feel like everything that I'm long that's not deep in the money is underpriced, and everything that I'm short that is not deep in the money is overpriced, if that makes any sense. But I suppose every trader feels that way, right? Like, why is the yen still trading at double 65?
Otherwise, why would you have the bets that you have, right? Like, I'm a nervous dollar bull at this point, for example, because it's had such a run that now I'm not comfortable. Now I'm going, I don't want to give away any gains on the way out of this. It's extended significantly. It's at reasonable resistance levels. It might get stuck here. If it gets stuck here, that would line up with what Dylan is saying about the bonds. The bonds are at a similar level. They might bounce here. So I'm not happy, despite the fact that all of my current exposure is working well, because I don't want to screw up the exit. And whenever something works really well, you invariably start saying, okay, well, how do I make sure that I exit this well? How do I make sure that I keep this money? So I wouldn't buy more dollars here. I wouldn't sell the bond here. So I'm watching cautiously. I'm a little bit tilted short delta in equities because I still have my little triple Q put vertical, and obviously I'm at this point short Japan. That one's working. But I'm not terribly convinced one way or another of anything at this point. Those things that I have been convinced about have already made a big move, and now I'm very cautious about how much more of a big move I can expect near term.
What's your answer to that question, Chris?
I'm going to be holding because I find no reason to doubt the trend system that has worked so dutifully. Candlesticks have provided unclear signals in gold and silver recently, and trading the momentum as opposed to the candlestick patterns have worked out better, right? Doubting the efficacy of that potential top, like we'll treat it as a top if we get a break of momentum, and using the momentum weekly moving average as a filter served us well in mid-September. And so it's kind of like stick with what works. If it's not broken, don't fix it. This time I could be wrong. This could be the top for a while. We could be looking at the end of, say, geopolitical risk premia. The IVR here in oil is now down to 68.3, the lowest that we've seen since prior to Iran's attack on October 1st versus Israel. We know in April that there was a big reduction in geopolitical risk premia that saw gold and silver both take a hit on the chin. So am I open to the idea of cutting the gold longs and waiting to reload in a few weeks? Yeah, for sure. But I have to see a little bit more upfront right now. I have to trust the fact that this is it's worked so far, so we're not going to not trust it in the foreseeable future. Guys, both of you are oil bears. Tell me what's going on here. Volatility's coming in, prices off, but not substantially. Are we holding? Are we rolling? What's the game plan? Dylan, you are the most prominent oil bear.
I hate these areas. Because I only get really confident on oil when it gets all spun up on, World War III vibes, and then it sort of becomes more attractive, like that. You can see even whatever it was a few weeks ago. It's when it's in this sort of mid range where I don't have an oil position right now. I just don't have one. And if I was going to originate a new one, I'd sooner put on a condor or a spread of some kind on the IVR than try to pick a side, and then let the condor or the spread, fall apart on whatever side it's going to fall apart on, and then pick a direction. But at this point, it's hard for me to have a point of view.
Ilya, we're at the same exact price levels that we were at back on August 5th. A lot's changed since then. What should we be doing here in oil at these levels if we're deploying fresh capital?
I don't think that there is much that has fundamentally changed in the structure. We've talked about how we had that big gap down that broke lower, came back to retest the bounds of the gap, and today got stuck there. So in my mind, this is still something with a bearish bias overall. I'm still holding onto my bearish exposure here. I think if you wanted a kind of clearer way to get an actionable entry signal, if you don't have a position on now, I wouldn't necessarily enter one now if I didn't have it, but somewhere around 70.50, if you got back under that, that's the immediate resistance turned support that we popped over the past several days before we got stuck around 72 again. If we get back under, let's call it 70.50, I think that's a viable short down into 68, which is the recent swing low, and then we'll see. So I wouldn't layer anything on now, and I'm not adding anything at this point, but I'm still holding my short, and I'm bearish rather than the alternative.
Oil, I'm still holding on to those short put spreads, the 61.64. Would I put them on again today? No, because we're not close enough and the juice isn't worth the squeeze. Still about a 4-to-1 risk to reward, and that's not really the wheelhouse I like to be in if we're looking at a 60 to 70% probability of profit. I'd rather be compensated at a 2-to-1 or 3-to-1 clip in that neighborhood. So 68.3 IVR, there is a point to be made about oil prices. We reference this frequently, and I'd encourage people to, gosh, I'm going to be one of them, do your own research. And we can produce this ourselves, so quite frankly, we should. But there are studies out there that show the best predictor for oil prices at any time frame within 12 months is the current spot price. Don't use the futures curve. Don't use supply-demand models. Just bet on where things are today. We started the month trading right around 70. We're at $70 right now. We were at $70 at the start of August. We were basically at $70 at the start of June. We were at $70 at the start of February. There's a few months where we oscillate on either side of that, but supply and demand information is largely well known right now. And outside of shocks to the system, it's difficult to get the market moving if we're at a period where the U.S. economy is growing, but the global economy is sagging. It's that juxtaposition that leads to a lot of nothing. Chop, grind, risk go in, risk go out. Ultimately, oil kind of like $70 a barrel. So if we get a little bit more, I really do want to see 72, 73 to put on the iron condor again. This is just, we're deploying fresh capital here is not my bag. It's not my bag in natural gas either, which, you know, who knows what natural gas is ever up to. It seems to do its own bidding at any point in time. Guys, I want to close out one more thing here on Tesla because Tesla is continuing to go up. They have their actual earnings call. It's at 5:30 Eastern, 4:30 Central Time. So you can listen in after Macro Money, but don't listen in if it means you're not tuning into Tasty Live otherwise. Making sure I got that one right. Not going to encourage people to go listen to something else. But why do I bring this up? Tesla here, their earnings report, going through some more details as we're talking through the show, they made a good deal of money by selling automotive regulatory credits to other automakers over the course of the quarter. Their profit margin was bolstered by $739 million, according to CNBC. Why does that matter? Automakers are required to obtain a certain amount of regulatory credits each year. And if they can't meet their target, they can buy credits from companies like Tesla. By the way, this seems like a whole scam, like carbon credits. Never mind, which is excess credits because it only makes electric vehicles. By producing electric or zero-emission vehicles, they can acquire them from others who have credits to sell. And so because Tesla only makes electric cars, the company has plenty of excess regulatory credits and sells them at what is effectively 100% profit. Dylan, why on earth is Elon Musk, the guy who was a liberal champion a few years ago, all in for Donald Trump? I don't think it's because of free speech. I think it's because
he thinks it's his best chance to be president by proxy.
And make sure that this money continues to go into his pocket. You get rid of the EV regulations. You get rid of these credits.
He thinks Trump is a shockingly weak and easily manipulated puppet who, if he can get him elected, will ensure that Elon can do whatever he wants.
And the company
basically,
needs these credits.
They say that any good psychopath accuses others of what they're doing themselves. And if you listen to Musk and Musk's primary critique of the left, it's that they're puppets that are under the control of the deep state. And what he's saying is, I am the deep state, or want to be anyway, and I will control the president to my benefit. That's almost, to me, very transparently what's happening. And the rhetoric about free speech is obviously preposterous.
It's very interesting being someone who writes community notes on Twitter and reviews community notes and approves them or disagrees with them or this, that, the other thing. There are some people who are trying to make well-reasoned arguments out there. I got to say, I haven't seen a single community note stick to anything that Elon Musk tweets. They get community noted, trust me. And even when you
concede, but you're saying nothing gets published and nothing holds.
When something is community noted, there's a period where you're in a state of deliberation, where it's not just, it's the way that they do it, it's not just about the number of people who say this is a helpful note, it should be seen, or this is not a helpful note, it should not be seen. It's over time they learn what your biases are, what you say is helpful and what's not. And so you actually need a certain number of people that tend to disagree with one another in other community notes to actually form a consensus around this opinion, which is good. It means people of opposing views are kind of on the same page. I get why they do it that way. So when a community note is being deliberated, there's a little tag that appears underneath their tweet. And it says, this note is effectively being contested. Rate this note. Whenever Elon Musk tweets get the notes attached to them, within a few hours, all of the notes are disappeared. You can't even go view them on the tweets anymore. All of the comments are deleted, saying that this needs to be providing more context, or this is not true, or this is misleading. He's just pumping out whatever he wants to pump out. My For You page is totally Elon Musk everything, even though I literally don't interact with his stuff at all, ever. So yeah, I think that he's trying to buy the presidency, which, hey, listen, if I was worth $300 billion and I wasn't an American citizen, but I lived in this, I was an American citizen who wasn't born in America, and I wanted to be president one day, this is as close as you're going to do to get it. Right, Dylan? What other shot does Elon Musk have?
And it's like the ultimate challenge. It's like, oh, they say that America is a corrupt oligarchy.
Prove it.
Well, instead of like complaining about it, like, let's take advantage of that fact and buy it.
Right. Like, oh, these politicians are for sale. Might as well get me one myself.
Well, you don't say. Where do I place my order?
Having successfully cornered the silver market, Dylan, maybe we can corner some other markets together.
We can buy ourselves a president?
Probably not. Maybe like a local alderman. Like, let's start smaller.
Listen,
in any event, overtime is out of time. I say
we buy an alderman. I'm ready to buy a good Bedford alderman.
The overtime fund for not political corruption. Yeah, that's going to be good. Okay. Before we get an FEC violation,
overtime fund for not political corruption.
Free speech.
Overtime is out of time. We'll be back tomorrow, same time, same place as we are every Monday through Thursday. Of course, it's a Thursday show, which means it's abridged. The prediction trade is on Thursdays, 4:30 Eastern, 3:30 Central. But stick around here after this, after a brief break. Ilya's coming up with macro money. He's also back later today for The Price of Truth with Victor Jones at 6 p.m. Eastern. So be sure to stick around. Good luck trading. For Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. See you soon.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
I'm on the road for work quite a bit. In fact, I've been on the road crisscrossing the country for much of the last 25 years. Yeah, I've logged a lot of miles and met a crazy number of people along the way. Strangely, I remember emails and trades better than names and faces. So when walking through another airport this past weekend, someone with a familiar face stopped me to say, "Hi." He said he was a longtime Tasty fan who met me years ago at Traders Expo. Before I could say, "You look familiar," he told me his email address, and it was like we were old friends. I even remembered the last trade he emailed me about over 3 years ago. I'm not sure if it's a feature or a bug, but my brain is just wired differently. At Tasty, we have worked really hard to make finance fun and engaging for our clients and our employees. Much of our success has come from turning a generally perceived negative industry into a positive and challenging experience. So why does it seem that nowadays everyone is so angry and so negative? And it's not just in the financial world. People are angry everywhere, whether it's social media, politics, sports, news, entertainment, and even travel. People are mad about something. I always wonder why more people and more companies don't try to use more kindness, humor, and smarts. It's not that complicated. People think angry sells, but it really doesn't. Nasty is not a feature. What I've learned from years of traveling is that angry doesn't make you smart or rich. Angry just makes you into an insecure fool. Contrary to the mistaken old adage, nice people do finish first, and that is our lifeblood at Tasty.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got the need for speed? No problem. On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. tastytrade, make your move.
Who do I want to play me? I don't know her name.
For Liz?
Margot Robbie.
Robbie, however you
Oh,
want to
nice app, thank you.
Yeah. And to play me?
Oh, Gal Gadot. You want
Wonder Woman.
Gal
I said Marissa Tomei in the 90s for you.
Okay.
And I said Kristen Bell for me. And that's what she goes, she's
Kristen
5
Bell
foot tall.
is little. And so is Marissa Tomei. We're both like a foot taller than
Hey, we're short stacks. That's why I had to have somebody here.
I think we're better off with Margot Robbie and Wonder Woman.
What'd you say for me?
George Clooney.
Ooh!
You like that?
I
You like that?
put
I
Robert
put
De
you up
Niro for me, but I put Ryan Gosling for Mikey as well. So we got that. We got that in there. That was an easy one. I mean, you're
big Gosling boy.
It's almost a clone. Like you're just a slightly buffer clone of Ryan Gosling. If I could say so myself.
My ego might pop right now.
Yeah.
I'm just so filled.
I don't know who's gonna play me. I'll leave it at.
Pick something.
Who'd you write?
Throw Mama from the train actor. I don't know her name.
Who'd you write for yourself?
George Clooney.
That's what your son put for him.
Oh, see, we think
Who
alike.
did you write? Who did you write for that?
John Travolta.
I really like that George Clooney.
George Clooney's a good one, right?
Yeah. I mean, in passing, I've been told that I've heard things that I look as though I am, a George Clooney-esque look to myself.
Little Sally Pimienta.
I've been told a couple times, just here and there.
We got
And we are back. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And stock markets are a little bit wobbly today, even as bond yields slow down a little bit on their relentless march higher. And we are facing what is perhaps the first bit of really impactful macroeconomic data to hit this week. We've had a monetary policy announcement from the Bank of Canada over the course of today. That was the first big piece of news overall. It's been a quiet week on the macro calendar, but now we get some critical data finally with a big update on where the global economy is trending and which economies within that whole are doing well versus not so much. And that lines up with an incredibly interesting overlay to the story that we are having with U.S. stocks, with U.S. bonds, and paints a very interesting narrative for us as we look forward for what these markets are going to do, and of course, with knock-on effects to all things, most critically currency markets, where the U.S. dollar continues to power higher right alongside U.S. interest rates. So the first thing that we are going to do here is get a little bit of context on what all of this means, why it's happening, and what we can then, from those understandings, try to infer about what happens next. But the question that first and foremost is on our mind as we consider this is the U.S. economy going to help or hurt markets at this point? Now, the data that we're going to look at here over the course of the next 24 hours is the October batch of Purchasing Manager Index numbers from S&P Global. And these numbers are a very important indicator. They're very closely watched because they approximate GDP growth. And GDP numbers are only released quarterly, and that is already lagged. But then they're also released lagged in terms of how long it takes to compile them. So you might be well into one quarter before a first look at the prior quarter's growth is being made available in GDP data. The PMI numbers are monthly numbers. And as we can see here, we're still in October, and we're getting a first look at the October surveys. They're going to be revised in 2 weeks' time to capture any changes that might occur in further surveying. But these numbers very rarely deviate dramatically, first look versus the final outcome. And so this is a very timely, very good look, usually, at where the major economies are going, how they're trending, and what that might mean going forward. And the message from this set of numbers looks like, once again, U.S. outperformance continues and the rest of the world is struggling. Now, you get this contrast most acutely when you look at the composite numbers for the U.S. You can see here they're expected to hold at 54 for the composite index as we get ongoing resilience in services and the pace of contraction in manufacturing eases a bit, as compared to the Eurozone. The Eurozone, a comparably sized economy to the U.S. in aggregate. And we can see here these numbers below 50 indicate that we are going to get contraction in economic activity. The way the PMI numbers work is 50 is the center line where there is neither growth nor contraction. Above 50, economic activity is expanding. Below 50, it is contracting. The further you go above 50, the faster the rate of expansion. The further you go below 50, the faster the rate of contraction. So what you see here for the euro area is from 49.6 to 49.9, you contract for a second consecutive month, but the pace of contraction eases a bit. Now, why do we focus so much on the euro area and the U.S.? Well, if we consider the makeup of global economic growth, these are numbers as of 2023, they are showing us that the U.S., the Eurozone, and China are the largest three economies comprising over 50%, as a matter of fact, 58% of global GDP. And the rest of the world, the remaining 42%, are essentially vendors to the former three, to the large three. Think Canada and Mexico with the US, or think Central and Eastern Europe with the Eurozone, perhaps even the UK. Think the Oceania economies of Australia, New Zealand, but also Southeast Asia, the commodity exporters in Africa and Latin America when you're thinking about China. So what you find here is why these key economies are so important. And when you go down the list, you begin to see what the disparity in these numbers here seems to suggest. So steady for the US looks very good in context. In fact, it's been steady since the composite PMI index that subsumes both manufacturing and services jumped and hit a 12-month high back in May. It's basically held there ever since. That's not acceleration, but it's certainly growth at the top of the post-COVID range. If this was kind of the descent from COVID outperformance or post-COVID outperformance, growth surged as the economy was reopening. And then in early 2021, that surge cooled off as the catch-up ended. And so the pace of growth slowed. Going into the beginning of 2023 is where this digestion occurred. Obviously, in 2022, things also were slowing thanks to very quick round of Fed rate hikes being factored into people's thinking, if not necessarily into overall aggregate growth levels. And what you ended up with was a sort of renormalization toward the beginning of 2023, where this is the range at this point. And we're at the top of that range. So holding at about 54 here is good news for the U.S. economy. Compare that with what's going on in Europe. Last month, we unexpectedly shrank for the first time since January. And it looks like the next bit of data will keep us in contraction mode. So if we look back at this breakdown, the direction for the U.S. and all of the economies depending on it, and the Eurozone and all of the economies depending on it, is very, very different. Now, for good measure, let's take a look at China. And what we see is China has been essentially going nowhere for months. The overall index is stuck at 50. And lest you think that this is any different because these numbers are official Chinese government numbers from the China Federation for Logistics and Purchasing, CFLP, which is done in conjunction with the National Bureau of Statistics. That's the government in Beijing. The S&P Global version of these numbers tells the same story. There's a little bit more volatility in the recent months here. This upswing looks a little bit sharper and the downswing looks a little bit sharper thereafter. But those numbers too, S&P Global Caixin PMI numbers, they show that economy is at standstill, and we're not going to get their update for October this week. That comes a little bit later, but the story is the same. In fact, we can see the disappointed sell-off in Chinese equities after the recent announcement of stimulus that doesn't seem to do anything in the direction that the markets actually want to happen, which is fiscal demand creation, and instead are more inducements on the monetary side. All of those things clearly not lining up to boost growth in an economy that for 5 consecutive quarters now has experienced economy-wide deflation. The PMI numbers, of course, tell that story. There's no demand and things are stuck. So when, again, we look at the whole pie here, we have this part of the pie doing well and this part of the pie misfiring. Now, because the rest of this piece here depends on the former 3 for demand largely, you might expect that those economies that are doing relatively more business with the Eurozone or China might be harmed. Those that are doing relatively more business with the U.S. might fare better because all of this U.S. robustness is spilling over, perhaps. Well, not so much. Here is the global PMI data set, and we can see that here things have been slowing since May. Now, we're still growing, but barely so. We're almost significantly lower on this index now, about 52. That's down from closer to 54. And this is actually the lowest that we've seen it basically since the beginning of the year. So a significant downturn here. Now, needless to say, this raises a question. How come if the U.S. is doing so well and it is the largest piece of this pie, how come its outperformance is not fueling better global growth outcomes? How come this is a bigger weight on the downside than this is a catalyst on the upside? And some of the story surely is in what it is that the robust American economy is consuming. If we look at the latest PCE inflation data, we can get a flavor for exactly what's going on. Most inflation at this point lives in the service sector. Now, there was an upswell on the goods side. This is core goods right here, right out of the pandemic into the beginning of 2021. We, of course, know that when everything was on lockdown, tons of spending shifted from services, which couldn't be had during the lockdowns, and toward goods. That is, those things that can be put into a cardboard box and sent by, oftentimes, Amazon to one's doorstep. So there was an upsurge in goods demand, but that has since fizzled. This is implied, of course, because when we look at how much of a contribution services made to overall inflation versus how much goods contributed, we can see that there's obviously demand that's bidding up the price in services and not that in goods. So demand there is implied as weak. In fact, in the latest numbers, of the 2.2% overall year-on-year rise in inflation, services contributed almost 1.7%, whereas goods actually detracted about 0.1%. The price of goods is actually falling at this point relative to a year before. So this tells you an interesting story. It tells you that while the U.S. is booming, its consumers are mainly buying things domestically because the spending is focused on services. And U.S. imports are typically of goods. In fact, if we look at the top categories for U.S. Imports, it's cars, broadcasting equipment, clothing, computers. So, needless to say, not services. So while the U.S. is booming, it isn't booming in the places that would shift demand and uplift these economies outside of the U.S. Now, this is to some extent, from an optimistic perspective, a situation that portends improvement. We take a look at the split between spending on, or at least the price implied spread between core services and core goods from that same PCE data. Essentially, we're just taking the difference between this and this. And we can see that the tilt in favor of services is at this point way off the historical average, going all the way back to 1960, and is at the highest in almost 2 decades. To the extent that there might be some reversion to the mean here because U.S. economic growth is making U.S. consumers richer. In fact, wages are growing at almost twice the rate of inflation at this point, 4%, give or take, for wages, and as we just saw, about 2% and some change for inflation. If that is something that continues to improve incomes and affordability and starts to push U.S. consumers toward reshuffling their mix and buying more goods again, then this might shift and the uplift from the U.S. might extend out to more of the world economy. The pessimist would argue that before that has a chance to happen, higher U.S. interest rates are going to end the party. And we see that when we consider that with this upswell in U.S. economic activity and with now a run of quite a few better than expected U.S. economic indicators, be it the latest inflation data, retail sales data, employment data, we end up with the expectation that the Fed is going to be in a less firm position to cut rates next year. In fact, we can see the bond market is showing us inflation expectations are rising. The slope of the yield curve is steepening and is now near its steepest in almost 2 years here. The peak here is 19 basis points, and we're within a hair of that. That's telling us that long rates are going to be higher than earlier expected. And we see in that steepening the expectation that the Fed's calculus next year might not be as dovish as first it seemed when the Fed cut rates and updated its forecasts mid-September. The very quick rise in gold speaks to the same story. It speaks to reflation and probably the need for higher rates. Now, this is an issue for the world over at a time when, as we can see here, it is already weakening. And that's because when the Fed is guiding interest rates higher, and we've seen that, of course, already, then we get the possibility that we hurt the world economy with higher borrowing costs at a time when it can least afford. As a matter of fact, we know at this point that global interest rates have already started to tick up in response to what's been happening in the US, and that's because the US dollar is the ubiquitous unit of global commerce. And so when you end up with markets shifting to higher interest rates on dollars, that ends up being higher borrowing costs everywhere and on all economic activity for the most part writ large, unless you're North Korea or Iran, perhaps, maybe Russia at this point. So with that in mind, you have what is de facto tightening emanating out of the US thanks to its economic strength at a time when what the world economy needs is not that. In fact, most central banks are cutting, and many started doing so before the Fed. So which one of these versions happen if, as has been the case recently, U.S. economic data tops expectations, or at the very least locks in this disparity and says the U.S. continues to outperform by a long margin? Well, if we look at what the near-term price action suggests, here's the 10-year yield here. We can see since the beginning of September, yields have been sharply rising. This is the 10-year future here. And that, of course, reflects that same steepening of the yield curve we just saw. By contrast, if we look at what's happened to stock markets over the same time, they've edged up a bit, but nowhere near the kind of momentum that we see in the bonds, suggesting that stocks are somewhat circumspect of this rise in rates and may be worried that a less dovish Fed will end up breaking something here and making the situation worse. That, of course, bodes ill for multinationals that tend to make up the bulk of major U.S. stock indices. And so if we were to get PMI data that surprises higher here, yes, that would be tremendously good news for the U.S. economy by itself. But what it might suggest is that this divergence between the U.S. and everybody else is going to deepen, leading U.S. rates higher and leading global rates higher. And while that may be okay for the U.S., for the world economy, that might be very painful indeed. And stock markets might have to reckon with that. And this is is Macro Money for today. I'm Ilya Spivak. We're here every Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go thereafter. I'm on later today in just 30 minutes time with Victor Jones for the Price of Truth. I'm on with Chris for the Futures Power Hour show Monday and Friday. On with Victor again for with Tom for First Call on Sundays. Writing for the News and Insights portion of tastylive.com and commenting on the platform formerly known as Twitter at Ilya Spivak. Thanks very much for joining. Macro Money's back tomorrow.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
I'm on the road for work quite a bit. In fact, I've been on the road crisscrossing the country for much of the last 25 years. Yeah, I've logged a lot of miles and met a crazy number of people along the way. Strangely, I remember emails and trades better than names and faces. So when walking through another airport this past weekend, someone with a familiar face stopped me to say, "Hi." He said he was a longtime Tasty fan who met me years ago at a Traders Expo. Before I could say, "You look familiar," he told me his email address, and it was like we were old friends. I even remembered the last trade he emailed me about over 3 years ago. I'm not sure if it's a feature or a bug, but my brain is just wired differently. At Tasty, we have worked really hard to make finance fun and engaging for our clients and our employees. Much of our success has come from turning a generally perceived negative industry into a positive and challenging experience. So why does it seem that nowadays everyone is so angry and so negative? And it's not just in the financial world. People are angry everywhere, whether it's social media, politics, sports, news, entertainment, and even travel. People are mad about something. I always wonder why more people and more companies don't try to use more kindness, humor, and smarts. It's not that complicated. People think angry sells, but it really doesn't. Nasty is not a feature. What I've learned from years of traveling is that angry doesn't make you smart or rich. Angry just makes you into an insecure fool. Contrary to the mistaken old adage, nice people do finish first, and that is our lifeblood at Tasty.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
In the internet.
In the internet, okay.
On the internet, in it, in and around it. I'm all in it. How many fast stats would you like?
How many do you have?
I was worried you'd ask that question. Did you know there are more possible iterations in a game of chess than there are atoms in the observable universe?
Did not know. What else you got?
10 to the 120th power. That's a lot. About 90% of all physical money in the world, cash and coin, has traces of cocaine on it. And the
See, I don't think that's true.
The DEA says it's due to cross-contamination with cash-counting machines. What do you think about that?
What did you say? 90% of all money globally in circulation is covered in cocaine?
Physical has traces. You're blowing this way out. Physical money, traces of cocaine.
And you said cash and coin?
Cash and coin.
There's no cocaine on the quarters in your pocket. This is not true. This is like some sort of like internet myth. You got all this off the internet. This is not true. The DEA says all the money has cocaine on it.
U.S. Drug Enforcement Administration. Maybe
from the cash counting machines, like all the drug dealers, there's so many, and there's so much money being counted through these machines. It's all covered in drugs.
now you get it.
And no, none of that makes any sense, right? Because I suppose if we're talking about cocaine, you're rolling up $100 bills or whatever,
just,
$1 bills, just dollar bills.
What about like LeBron? Like you're just like
yeah, maybe. And
in the
that's
cash room.
I don't know.
You're just
all
in
right.
the cash room.
Even if this is even remotely like close to being true, it also means that wherever all these people are counting all this money, there's just all this cocaine everywhere. It's just kind of like
so you get
precipitating
it now. You
all
understand.
over. Yeah. Okay. What's your last stat before we get going here?
So you
Yeah, the
now we know
chat
you-
is also like that's the dumbest statistic ever.
You didn't have a number for me, but after that one, you've cut me off to 3.
Maybe.
All
Well,
right,
it depends on
let
what
me
your
pick.
third one is. You might get 4.
All right. The entire Bitcoin network uses
Relevant.
more electricity annually
Okay.
than many countries, including Argentina and the Netherlands.
What was that country, the first one?
Argentina?
Okay.
Argentina, Ryan.
Oh, okay. Oh.
And that is from the Cambridge Bitcoin Electricity Consumption Index. You believe that one? Since you don't believe the DEA.
Yeah, I believe that one, but I also think it needs context. You know, we were saying it as if it's a bad thing.
No.
Like, how much electricity does the financial system use?
I just thought it was interesting. That thing is running.
Did you think if I gave you a map?
No.
Not labeled?
Oh.
You could, or labeled?
Yep.
You think you could find Argentina?
1,000,000%.
You do? Okay.
Yeah.
All right. I'm curious what the chat thinks. We are live on YouTube. If you're not watching on YouTube, I don't know what you're doing because, I mean, again, no offense to tastylive.com. Great place to watch the show. There's just no live chat. You can't interact with us. We want you to
Need the
interact
chat.
with us. Yeah. Let us know if you think Glenn can find Argentina on the map. Also, let us know what are you going for? Or what are you going as for Halloween?
That's a good question.
Because I know you're dressing up. I know you have like multiple parties planned.
Well, that is a point of contention. I'm being pressured by girlfriend and her friends to host a party this weekend.
Oh, okay.
Which I don't mind doing at all.
Yeah.
We have a nice place for parties.
Okay.
But they
Party
won't,
palace.
if you will.
Yeah.
But they won't give me any specifics. And trying to wrangle, though, like they haven't thought any of the logistics out. They're just like, Glenn, throw a party.
Okay. Well, what
So
are you
I'm
going
like,
to go
yeah.
as? Because you have to dress up for this.
Well, see, that's
And
the
are
thing,
you
if I
going?
wasn't-
Are you going sexy or are you going scary?
I tend to skew not scary.
Ooh, sexy. Okay.
Your words, not my words.
Yeah.
Historically, Peaky Blinders is a good way to.
Ooh, like
you
a
know-
sexy gangster.
Yep, sexy
Yeah.
gangster. I've been in college, The Bachelor. You just suit, jacket, unbuttoned a little, maybe
No
too
shirt.
much. I wore a shirt, but then you go with a bouquet of roses, and then you're just handing them out.
Oh,
You
dangerous.
didn't seem pretty impressed by that one.
No, I'm very impressed. It's just if we go any farther down this path, Tom's gonna kick us off the air soon enough. I don't know. It looks like we've got some people in the chat that are showing up. What's up, Lone Sophos? Shelly's here as well.
All right.
New addition to the Tasty Crypto team.
Oh, there you go.
So Shelly's in the chat. We're here. Glenn, I'm excited for you this weekend in your Halloween party at the Palace. But let's talk a little crypto. What do you think?
Let's go for it. But
All
wait,
right.
first, are you going scary?
I'm not anti-Halloween.
Okay, but you're not.
I'm just not.
You're not pro. Yeah. All right, we can leave it at that. That's
Can
fine.
I'm not that old, but can you be too old for Halloween to some degree?
You can get less enthusiastic about.
Right. Like
maybe
there's definitely a certain age, I think, where it's like, oh, you're still dressing up.
Unless you're hosting crazy parties.
Sure,
You know what I'm
yeah,
saying?
yeah.
Like if you have the party palace and you're hosting
You gotta
crazy
dress up,
parties,
yeah.
then I think you can extend that life lifetime.
I guess I kind of left out a category. So you got sexy, you got scary on the other end of the spectrum, and then somewhere in the middle is funny, comedic.
Yeah, there you go.
Yeah. Which
that
that can
longest.
also very quickly get into extremely inappropriate territory too, right? I suppose sexy can. It all can. But all right, let's jump into the show, my friend. We're going to talk about crypto fundamentals here today after we just take a quick look at some of the price action. You had a great idea. I asked you earlier today, what do you want to talk about on the show, Glenn?
I said costumes. But my
talk a
second
little
answer,
Halloween. But you had mentioned, it might be interesting to take a look at how you think about different tokens, different blockchain networks. Like you have all of these things that one way or another you can participate in, you can invest in, you can trade. But how do you compare one token versus the other? Coin versus coin, blockchain network versus blockchain network. What are some of the metrics that we can look at? And then on top of that, what are some of the tools that we can use in order to perform this analysis? So we're going to break that down in just a second. Lone Sophos, real quick, though, says he's going to be a sexy Sosnoff for Halloween. It doesn't get any sexier than that.
Okay. Yeah. I said, I don't know. That could be.
Again, I don't want to go too far down this path. Like, what does that exactly mean, right? I guess, yeah, if you're dressing up maybe in another week or so, or I don't know, when is Halloween? It's only the 23rd.
It's next Thursday.
Yeah. Okay, next Thursday.
So we've got a tough split on weekends.
You're going to have to tweet at us or something, your costume or whatever.
There you go.
But I like that. Sexy Sosnoff. That's a good Halloween costume. Let's take a look at what's going on in the market, though, Glenn. We'll throw the slides up here. Got a little bit of a pullback. Seeing the same thing in equities, obviously. Looks like you had a jump in Tesla post-earnings here. But a bit of a sell-off, continuation of the sell-off. You got a steepening of the yield curve. You have yields moving higher. You have fears of potentially some sticky inflation.
Crazy.
And maybe the Fed isn't going to be as quick to cut as the market maybe anticipated just a little while ago. Spilling over into crypto, no surprise. Bitcoin down about 1.5%. If we throw up our slides, though, we've got 5% up still on the month. So we see a little bit of a continuation of the trend. It's nice to see, I think, that you've got positive territory on that 3-month basis there. So a little bit of a pullback, but we are still trading around those levels that we traded into, if you go all the way back to the end of last week and into the weekend. The outlier here, and I know you're enjoying this because I caught an earful about Ethereum earlier. I can never win with you and Frank. And you guys did not see Solana at the time that you were kind of, I don't know, I wouldn't quite say bitching me out, but complaining.
You wouldn't say that.
Complaining about my financial advice.
Curious. I'd say curious.
Yeah. What's happening with ETH, Ryan?
Need answers. Yeah, I don't know.
Yeah.
It's always so close to being hopeful, and then they yank the fishing rod right back. But you're right. The new favorite child is Solana.
Yeah, Solana up here, 12% on the week. Big move, up to 173. Puts us up 20% on the month, and on a relative basis, performing a bit better than Bitcoin.
Who else doing it like Solana? Nobody. Bitcoin is doing pretty well, but yeah, outperforming Bitcoin. There you go.
Yeah, and you can see that when we look at Solana versus Bitcoin at the bottom of the screen, up 13% on the week, 15% on the month, and then Solana versus ETH doing a little bit better there as well, up 23% on the month. We'll see if that continues or not, but looking at current levels of implied volatility and realized volatility, still about a $5,000 range for Bitcoin. When we look ahead over the next week, $224 range for Ethereum here, and still doesn't take you to some of those levels that we'd like to see in terms of ETH prices. We just have not been able to break above, call it 2,700 to 2,800 there. That has been resistance. Same thing for Bitcoin. Really haven't been able to break out and above 70,000, but certainly trading a bit better. So those are the expected moves for this. This is just a 1 standard deviation weekly trading range. We calculate that off of the spot price at the time. So in this case, we are using, at the time at 3:45 p.m., so a little while ago, 66,500 for our spot Bitcoin price, an implied vol of 56%. For ETH, we have an implied vol of 64%, up slightly from where we were when we did the show on Monday.
Yep.
And then for the rest of these, same approach, but we don't have a great implied volatility metric that we can derive from a liquid options market. So we use a 30-day realized. It's not perfect, but it gives you some sense of what you might expect here. So those are your trading ranges. As we continue, this has become a theme here on the show. Just looking at year-to-date performance, Bitcoin up 58%, gold up 31.6, almost 32%. Gold has done really well recently as well. S&P up 20%, NASDAQ up about 20%, Russell up about 9%. So if you've been invested in the market since the beginning of the year,
pretty good.
Equities, crypto, gold, there are obviously other things that you can invest in. But if you've been long, it's worked out for the most part.
A lot of options. Not today, but yeah, year to date, pretty good.
Yeah.
Gold, crazy. Still going.
Yeah. What are you seeing on the FX desk?
We're seeing just a lot of dollar strength, really for the past 2 weeks. That's been the story overall. And then most recently this week, you're seeing a lot of yield correlations play out. So when delineating specific U.S. dollar pairs, the highest correlation there is against the Japanese yen. And today especially seeing more widespread yen weakness. Other than that, had a Bank of Canada cut today, a jumbo cut. They got jealous of our jumbo cut, wanted their own jumbo cut of 50 basis points.
Super cut.
Maybe another jumbo super cut coming in December. We'll stay tuned. But yeah, I mean, nothing is staying surface level. It's just dollar strength on these rising yields and U.S. outperformance. U.S. dollar is, one could say, the Bitcoin.
Yeah, dollar dominance right there.
There you go.
Ladies and gentlemen, my quant. Glenn, let's talk about some of the ways that we can, I suppose, analyze, if you want to call it fundamentals, in the crypto market here. We've touched on this previously on some shows. I don't think that you and I have talked about this, but I know I've discussed this with Frank or at one point in the past, the infamous Mad Mike. But what to know? So similar to traditional assets, there is a degree of fundamental analysis that you can perform around crypto and digital assets, right? There's metrics that we can look at to get a sense of whether, I don't want to say one token is a better investment than another, but if you want to compare these things and you want to do it on almost an apples to apples basis, in the same way that if I look at a company and it does depend on the type of company or the sector that it's in the market, right? It doesn't probably make a lot of sense to compare, say, NVIDIA or Apple to an oil producer or a mining company, right? But in crypto, if we want to do a little bit of an apples to apples comparison, we can look at a bunch of different metrics. And there's also some tools that we can use that we're going to explore. So we're going to talk about that here on the show.
All right.
And these are not all of the things that we'll focus on. But I think high level, this is where, if you're new to this, where you might want to start, right? When we talk about options trading on tastylive, we talk about the concept of market awareness and the importance of different things like liquidity, being aware of what's happening with news or upcoming earnings announcements, implied volatility, correlations, right? So all the different ways that you might kind of look at the market.
Contextualize it.
Yeah. Exactly. Same thing here. So some of the metrics that I like to focus on, and you can break these down into even kind of more granular detail. But market cap, we'll talk about why that's relevant in just a second. Total value locked, on-chain activity, developer activity as well, which is important. And also, when you look at different protocols, I'll use Uniswap as an example. I want to pay attention to these and look at these almost through the same lens that I would look at a company in the stock market when I think about its business.
Generation.
Yeah. Right? It's not exactly the same, but in some cases, maybe I'm looking at a layer 2. It's going to be revenue or fees. When I'm looking at a decentralized exchange, revenue or fees. And so it's not perfect in terms of being able to look at this from this angle across everything. But if you have something that you're trying to analyze and there is a cash flow component to it, or there's a revenue generating mechanism, that's one of the things that you might want to look at. Or if you're trying to determine, is this real? Does this make sense in terms of real world use cases or on-chain use cases? And something has revenue versus something that doesn't, well, you might be more attracted to what has revenue, what's generating fees, because it's going to be an indication that you have users, right? That there's some activity that's occurring to generate this revenue.
Definitely.
Or these fees.
Now, is there, kind of tying it back to equities as well, do we think the crypto space, we can yet kind of delineate or use the lifetime of a blockchain's or an asset? Like, is everything right now still a kind of growth, or can we call Bitcoin kind of more of a stable? Do you get what I'm saying?
Yeah, I do. No, I think that's a good point.
Looking at like how early on they are.
I think so.
Okay.
But if you were to say, okay, I only want to look at things that have been around for a while, right? You might miss potential opportunities. You might miss those kind of growth stock opportunities, right? The new technology. In this case, right? What are the themes this cycle? If you're only looking at something from the lens of it's been around a long time, well, it also might just be dead money in that case. It might not be coming back, right? You had your first cycle, it ripped higher, peaked, and has come down 80%. And maybe it trades a little bit higher off of here, but it might not be what everybody's focused on.
But you would see that in one of these 5 metrics, perhaps revenue,
Absolutely,
fees come down.
Right? Because on the other side of that, if you have something that's been around a long time, it could just be dead. In that you're not seeing a lot of activity. You're not seeing a lot of codes or code commits or developer activity, right? You're not seeing a lot of users. So sure, it's still around, it still exists, but is it really all that exciting? And I'm not going to really pick on any companies. I'm trying to think of something I could use as an example. I suppose, okay, let's just take the lifetime of the company as the sole metric that you're looking at. You have IBM, you have Tesla, arguably both technology companies.
Yep.
IBM has been around a lot longer than Tesla. Are you more interested in IBM or Tesla as an investor, just personally?
Yeah, I'd say Tesla.
Yeah, right. And it has nothing to do with, it hasn't been around that long, right?
Yep.
And so I think you can kind of approach this the same way, even though some of this stuff, generally speaking, hasn't been around very long at all. The whole space hasn't been around.
But again, you could say that why you would prefer one over the other. You could look at developer activity. Maybe IBM has pivoted and they're doing a lot of high growth things.
Exactly. Yeah.
Then that's just irrespective of how long the company itself's been around.
Yeah, it's not just one metric, but looking at these as a whole, I think that you're able to determine then, okay, this might be a little bit more interesting versus something else. So let's start with just market cap. And there are a lot of different tools and services out there. You know, if you use the Tasty Crypto wallet application, we have this concept of token details. So if you you're looking at Ethereum, for example, you can drill down into it and you can see some of the fundamental information, some of the market data that's related to that. And that data in the application comes from CoinMarketCap. So we can jump over to CoinMarketCap, and this is a great resource just to get some understanding of where we are in the marketplace when I look at Bitcoin versus anything else. Or if I'm looking at 2 different DeFi protocols and I'm looking at the token that's in circulation, one might have a much larger market cap. It could be indicative of, certainly more participation, more investment in the space, but it doesn't necessarily mean that it's better. But you're going to likely see more stability, more liquidity, obviously. With more liquidity and more stability, you're likely to have less volatility, right? It's the same thing if I have a small cap equity versus some mega cap like Apple, right? And I also realize, excuse me, we're going to run out of time per usual, Glenn. But market cap is one way to look at it. And again, just basically comparing, the size or the value of the token, one versus the other. When we're looking at DeFi is also important. So you can think about this as the amount of capital. In this case, you can look at it in ETH terms, but most of the time we're going to look at it in terms of the price of ETH in dollars. So in dollar terms, how much capital is locked or staked or participating in some capacity as it relates to this protocol, this activity. When I look at Uniswap, right, we can see that there's about $5 billion in TVL. That's helpful when comparing Uniswap to other DeFi protocols, or more specifically, other decentralized exchanges, very similar kind of companies, if you will.
So all the value in there would have to transact again with the network to kind of get out That's what the locked meaning. They're in some sort of
Well, in some cases, it's representative of participation in the space, right? It's not necessarily on a per user basis, but on the surface, if I'm looking at something that's got 100, I'll just use some crazy arbitrary value, $100 billion in TVL versus $1 billion in TVL, that's likely an indication that there's a ton more users, use cases, probably developer activity, growth in the overall utility of the application, and something I might be interested in.
Right.
And it's not to say that there aren't other protocols or applications that can pop up that attract capital and see TVL grow or total value locked grow over time. But if today I'm just trying to compare two different things, higher TVL is going to be an indication, most likely, of a lot more users, and there's usually a reason. There is some value,
They're doing something
right,
there.
that there are more users. Same thing with on-chain activity. If you're looking at different blockchains, and there are a lot of different blockchain networks that are out there, right? I might be interested in not just the technical specifics of the blockchain, right? It sounds great. This is really fast. It's really cost effective, et cetera. But is anyone using it is probably the most important thing to understand.
And how is this measured?
So you can look at all sorts of different things, right? I could look at active wallet addresses on chain, right? If I have a blockchain network that has a ton of active wallet addresses, good indication of users. If I'm looking at what the blockchain network is being used for, right? Go back to Ethereum or Bitcoin.
So this can be more qualitative.
Is value being transferred across the network? Is there a lot of value or a little value? That might go into your analysis of whether or not this is a real thing. Because in a lot of cases, that's what it comes down to. There are great ideas, wonderful sales pitches, but does it have any real users, any real use cases? And as a result, is it likely to grow or not? Same thing with developer activity. Amazing sales pitch. But is anyone building on this? Because you think about this kind of network effect, right? More developers developing on chain for one reason or another. Maybe it's just a lot easier to develop on this chain, or you can do more with it, right? So then you can build more interesting applications. More interesting applications lead to more utility. More utility typically is going to lead to more use cases leading to more users leading to more fees, more revenue. So you can see how I'm kind of connecting this all together. And we got to wrap the show up. We'll dig into this a bit more. We didn't get a chance to talk about the tools, but there's a few that I like to look at. Token terminal will give you an indication of just about all of these metrics. DeFi Llama, we use that on the show quite often. We've got CoinMarketCap that we've talked about. Glassnode, we haven't really touched on yet, but we will get more into kind of on-chain analytics and some of the ways that you can kind of look at what's happening there, especially on Bitcoin. But these are, again, high level, a few of the metrics that you want to start with when you're analyzing a token, a protocol, a blockchain. We can kind of put all of these together as the same thing. Not all of the projects that you're going to analyze will have transparent data around some of these things.
Interesting.
It's not always going to be exactly the same or one for one, but this is, again, where I would start when you want to understand the fundamentals when you're looking at an investment or looking at purchasing one of these tokens.
Awesome. Cool. Yeah, I mean, that's more helpful than hearing your buddy Kevin talk about some altcoin. That's usually enough to get me in. So nice to do a little more research, get the fuller picture for what this token talk's all about.
Hey, if you got a buddy who's got some tips, I'd like to talk to him too. I need
It's
some
really
tips.
not. Yeah, it's not much.
Or that was just you were making that up?
He says one sentence.
It's like a hypothetical, or there's a real Kevin?
There is a real Kevin.
And he's got real tips?
Well, he's got me in Algorand right now.
Okay.
I didn't really listen as to why, but he said it with conviction, so I'm in.
Well, now you need to run it through this analysis.
Market cap, total value locked, on-chain activity. I'll grill him. I'll
Yeah.
give him a whole congressional.
Yeah. You know, like we used to say on Tasty Live, ask your financial advisor what the probability of that is. And if they can't answer that, you don't need that financial advisor.
All right.
You ask Kevin about the TVL.
I'll grill him.
Okay. And if he can't answer that, you don't need Kevin.
Okay.
No
All right.
offense, Kevin.
Sorry, Kevin.
If he's watching, yeah. All right, Glenn, that's going to do it for our show. Thank you, everyone, for watching. Thanks for participating in the chat as well. I will be back on Monday with my man, Frank Caberna. He has to redeem himself after last episode. And then I'll be back. I'll be back with
redemption.
Be back with my man, my quant, Glenn, next Wednesday. But that's going to do it for our show. Victor Jones is up next with The Price of Truth. So stay tuned. You don't want to miss it. I'll be back Monday. Until then, I'm Ryan.
I'm Glenn.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Oh, yeah. Tasty Nation, good morning.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time